Next year, so very much the question, or tightening rather, coming into next year, but generally central banks are perhaps setting up for at least ending their rate hiking paths or cutting paths, or even setting up again to have further moves to the upside, but just keeping an eye on really pretty range bound, actually. Again, just back into that holiday theme we see for FX traders. Commodities, though, is one of the big standouts so far in the session. And just some of the headlines we've seen, both spot gold and silver rallying to fresh record highs. Again, it's those bets around what the Fed does next. Geopolitical tensions as well are rising or factoring into this, because we actually have seen oil moving a bit higher, and that's with all of these events, geopolitical developments around Venezuela, but also the prospects or discussions that we see between the US, Kyiv, and also Moscow, Dave. But let's get more on what traders are looking for today. Bring in our Bloomberg MLI strategist, Mark Cranfield, who joins us out of Singapore. So, Mark, what's front and center for you in the session so far?
I think the good mood that you're seeing across asset classes today, and this Santa Claus rally getting back on track here, has really got a lot to do with what didn't happen last week. So going into last week was a big week for central bank meetings. We got through it all pretty smoothly. And the biggest risk to risk assets something going wrong before year end was really the yen. So there was some people were holding back a bit, thinking that the Bank of Japan meeting, they were expected to raise interest rates. And the uncertainty was, how would yen traders respond to that? Would there be a repeat of what we saw in 2024 when the yen, there was massive short covering after a BOJ interest rate hike, huge yen short covering. That triggered a massive sell-off across asset classes. Didn't last very long, a couple of weeks, but it was very, very damaging. Well, that didn't happen. We got through the Bank of Japan meeting, and actually the yen weakened slightly. Huge sigh of relief across markets, because all those people who've got carry trades on with the yen, all those who are using it as leverage for other things, they can all sit back and say, thank goodness it's out the way. We can get on with equities and commodities and all those other things. And that's what you're seeing today. Silver, platinum, all rallying hard. Equity markets in a very good mood. And bond markets pretty tame. So nothing really to get people too worried. So it's really a lot to do with the fact that the yen did not have a big rally last week, and it doesn't look as though it's in store for the near future either.
Mark, maybe just a little bit on that. So, I mean, the two-year Japanese bond yield, maybe just as an example of the broader melt-up we're seeing just about across the curve on JGBs. You know, 2 years up, 1.13. That's quite a spike. The 10-year, we took, I think, the 2% handle out last year. At what point, and I think you alluded to this just as you wrapped up there, that not anytime soon, but at what point do higher yields mean a stronger currency?
It's really about the pace and being reinforced by central bank language as well. So the issue here is that Governor Ueda spoke on Friday. He did say that it looks as though neutral rate is maybe a bit higher than people were expecting before. Instead of 1%, maybe it's closer to 1.5%, somewhere around there. The problem is he hasn't given any timeline about when he intends to get there. And it was a torturous process. Raising interest rates last week needed the backing of all the Japanese politicians, especially the Prime Minister. It took such a lot of work to get there, and he's suggesting there's a lot more work to do if he wants to raise interest rates again next year. So from a trader's point of view, you're telling them it's going to be a very long, drawn-out process. Inflation is still around 3%. Two-year Japanese yields are only just above 1. That gap is very significant. We've got a 2-year JGB auction coming up on Christmas Day, of all things. That's going to be pretty tough to get off the ground as well. So while you have the negative rates and they don't look as though that's going to change for a long time, that's not very encouraging for fixed income people. They like to see real yields. They like to see positive carry. In the long end of the US Treasury curve, you can pick up a little bit of positive carry. You cannot do that in the Japanese curve.
Okay, watching for Christmas. Santa Claus rally meets the Widowmaker. Mark, put it on your T-shirt. Mark Hanfield there, our MLive strategist in Singapore for us. I look at Chinese stocks, chip stocks specifically right now. So we have more threads up 2.5% off highs a little bit. Some of the fabs, as you can see on your screens, Cambricon, of course, designer 1.5% to the upside here. But the big news really on the weekend is really down to the top name you see on your screens here. The company introducing this new generation of chips aimed at reducing dependence among AI developers on NVIDIA. Min Min Lo, our China correspondent, is here on set with us to talk us through the new products and how they actually compare to what NVIDIA currently offers the market.
Yes, so Motorhead has introduced 2 new generations of chip, and the Huashan chips, named after a Chinese mountain, by the way. The CEO says that this chip is better than NVIDIA's Hopper series, the H100 and H200, and it's closing the gap with the current Blackwell series. So again, this is something that is incredibly significant for China because it is narrowing the gap with the US, and it also eliminates the reason for Chinese companies to buy NVIDIA chips after NVIDIA got approval to sell the H200 to China. The company Motorhead also launched this or announced the launch of this new graphics processing chip Lushan, which they say can have 15% or 15 times better performance on gaming. It also launched this new GPU architecture that can link 100,000 chips together in this supercomputer cluster. And that's said to be 10 times more energy efficient and have 50% increase in computational power as well.
That's the ideal scenario. There are bottlenecks that the company is facing. What are those bottlenecks?
Yeah, so a variety of factors. So one, of course, is the foundries. Right now, they still have limited access to the advanced lithography equipment. So SMIC, for instance, can only make their ability to make 2 nanometers or sub 2 nanometers chips are still very limited. And another factor is also that Motorhead uses its own proprietary computing software called Musa, which is positioned as an equivalent to NVIDIA's software called CUDA. So then companies wanting to use Motorhead chips, they have to adapt some of their software to integrate with Motorhead's technology. So there's a bit of an adaptation cost there. And of course, when it comes to that AI architecture linking 100,000 chips, that depends a lot on the interconnectivity, right? The hardware and the chips that allow them to communicate with one another, the end-to-end bandwidth, whether it can allow, smooth processing of huge amounts of data. All of that is very dependent on how it actually works when it's being implemented, and we don't have details about how that looks like yet.
It's interesting as well, I think, just on that point around capacity constraints. I mean, a lot of different chip makers in China have signaled that they want to increase production capacity next year. Huawei, for instance, Cambricon is signaling more threads now. But what about in terms of the geopolitical tensions as well? And this is a bit of a broader question, but we have seen these agitations maybe for the Pentagon list to be updated and to have more Chinese names added to that. What are we hearing on this front?
That's right. So we have Republican lawmakers lobbying for at least 19 more Chinese companies to be listed on the Pentagon list that would then suggest that these companies have ties with the Chinese military. So among them include DeepSeek, the robotics firm Unitree, Wuxi as well, which is a pharma company. Huahong is also on that list as well. And so it's pretty wide-ranging. Of course, it really depends whether the Pentagon will take into consideration what the U.S. Republican lawmakers are asking for. What it eventually does is it it doesn't result in a ban to work with these companies. Well, the Department of Defense can't work with those companies if they're on the list, but U.S. companies, I guess, for them, it's a warning signal about the risk of being associated with these companies. So it's going to be quite bad for these companies if they want to expand overseas or work with overseas suppliers. And I know, for example, that Hersai had once was one of those companies that got off the list. They sued the Pentagon, saying that they have no ties with the military. They got off the list, but then they were immediately relisted after that. And it really shows you how sticky that label is. It's been very hard to fight against the Pentagon.
Min Min, just a quick mention. Looking at Meituan, shares are up. I think we're up a fourth day. It's coming up on your screens for our viewers here. What do we know about the tightening oversight over price competition?
Yeah,
How does that work?
The Chinese regulators have come up with a new set of rules for the platform companies because they have a lot of power over these small mom and pop sort of merchants that list on their companies. So the new rules now state that these platform companies cannot require or place unnecessary restrictions on merchants to govern their pricing on other rival platforms, and they cannot punish these merchants by raising their fees or delisting their products or making their products less visible to consumers. So this is meant to protect the smaller merchants, to ensure fair competition. Part of the rules is also to ensure that promotions are clearly listed and there are no exaggeration of these promotions as well, so that consumers are not conned into buying certain things. So it's all about increasing transparency and protecting the smaller players to help stabilize their margins and create a sustainable growth for the sector.
Min Min, thank you so much. Min Min Lo, our China correspondent there. Just ahead here on the China Show, we'll have a look at fixed income markets, likely supply coming through in the offshore space, and the outlook for 2026 with CICC. That's coming up next. This is the China Show, and this is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
You know what? It's been a really good year if you're in emerging markets, not just in stocks, right? You look at currencies, you look at the terrible year the dollar's had, you look at the capital flows we've seen across EM, cross asset, right? So I think we have a specific measure here at Bloomberg that has a look really at capital flows in EM. So we've fantastic piece, and a shout out to our colleagues at Bloomberg News who put out the story for you. It's on the terminal if you're curious, by the way, what it looks like. But we put together the key takeaways on a graphic for you in this banner year for EM equity markets, right? The most capital flows in about 16 years, since 2009. It's not a coincidence that, of course, the dollar has been on the softer side. It's the worst year for, this is specifically the DXY, the DXY, in about 8 years or so. The fixed income has done very, very well. Credit, for example, and the spread over treasuries has tightened to the narrowest in about 11 years or so. And a measure of carry trade, well, profits tied to the carry trade are also back to the highest in about since 2009. So you can check that story out for clients, of course. It's on the terminal. It's also on Bloomberg.com. And that takes us very nicely into our next guest and the outlook for fixed income, given the macro outlook, and what does it mean for renminbi issuers going forward. Joining us here on set, Janessa Jha, investment banking MD and head of offshore debt capital markets at CICC. Good morning.
Good morning, David.
Very nice to see you. So, going into next year, the Fed's told us, well, they've cut thrice. They're not sure if they're going to go all the way. They're data dependent. So the dollar does remain relatively a higher yielding currency relative to, say, where we are here in the Asia Pacific. How does it affect your work? What are the big things that you're looking out for next year?
Yeah, well, thanks very much for having me, Davey. I'm very glad to be here. I think as a DCM banker in the market, my job is actually to create transactions and bring multi-currency deals into this market. What I've seen from this development of the interest yield curve here, as you said, dollars is on the path to do this interest rate cut, while at the same time, the convergence of the rates, the differential between the rates between different central banks and U.S. will be more and more clear into next year as the gap between this yield differential will narrow significantly, especially when the U.S. Fed, they cut rates maybe at a higher pace than the Central Bank of China. That'll actually closer the gap between these two central government yield curves. And I think that'll create more opportunities for these bond market. And we might see some comebacks of the dollar transactions from Greater China regions into this market, which has been decreasing significantly for the past 3 to 4 years. We had a outstanding volume of China DCM at roughly $1 trillion at peak in 2021. Now this figure has dropped significantly to more than $600 billion in the market. So the Greater China investors have a lot of reinvestment risk for them with this shortage of this $400 billion. So that's a trend I think we could watch for next year. Right. And in the meanwhile, because of the stability of the currency of the Chinese yuan and also the resilience of the economy that China has demonstrated, during this, the tariff situations this year, especially, I think the yuan markets will also be booming because the demand will not only come from the domestic issuers and investors, but also we see the diversifications from outside of China. For example, this year in the dim sum bond market, which is the offshore bond markets of Chinese yuan, we have seen a significant increase of international issuers worldwide from the Singapore, from the government of Indonesia, from Europe, like OTPP Bank, from Central Asia, like the Development Bank of Kazakhstan, the Kazmunayagas from Kazakhstan. All these diversified issuers came to Hong Kong to tap the dim sum bond market. I think it's a very interesting case to establish here. And also, if you look at some deals that happened this year in Hong Kong, one interesting deal is with the China MOF US dollar deal that we actually lead the underwritings of that deal. That
was the offshore deal, right?
That was the offshore deal.
Can we get more of that? More sovereign issuance next year in dollars?
I think China MOF priced a $2 billion USD bond in the market for 3 years.
Okay.
And then if you look at the credit spreads to US dollars, it's actually zero. So the deal was priced at Treasury plus 0 credit spreads for the 3 year and Treasury plus 1 basis point for the 5 year. With a total deal size of $4 billion across 2 tranches. If you look at the stats, even at a 0 spread, we attracted more than 40% of investors from central banks worldwide. And guess what happened in the secondary markets? The bond was traded below the Treasury in the negative 20 basis points, something like that. Some argue that was driven by the tax shield from the Greater China investors. But this links to another story from the Greater China investor side. As you know, the current interest rates environment was still China has a very low interest rates environment. So currently the 10-year CGB bonds in China is only like 1.8%, while the US 10-year Treasury is like 4.1%. So this
gap between these two rates actually creates a lot of demand from Greater China investors to diversify the investments in the offshore markets.
Okay, we've opened up a lot of doors. It's a lot of information. So one thing that stood out to me is, you could shed a lot of light on this, is across these multiple fronts, where does supply look to be the most active in the first quarter of next year? Which specific market, which specific currency under your specific watch?
I think within APAC markets, given, China has always been a very big player, which, accounts for, roughly 50% of the supplies.
Okay.
So I believe the trend will continue into next year, but you will see more and more issuers in the dollar space, but may not in the plain vanilla bonds, but also probably the convertible bonds, increasing the supply in the convertible bonds, given the upside of the equity stories, as well as the relatively high, yield in dollar. We're still sustaining the next year. And then we'll see a diversified supply actually for the dim sum bond markets, maybe from regions from Southeast Asia, from Middle East, from Central Asia. I think the logic behind for people to seeking for diversification is actually not only to get a cheaper funding source from the diversification into renminbi, but also to get a sustainable new currency market to borrow. For example, in the case of the government of Indonesia.
How deep is the investment pool? Just to ask you on that. Because they're tapping a new investor base, to your point, right?
Yes.
So how deep can that market get in terms of liquidity?
Yeah, that's a very good question, David. I think speaking of the dim sum market, it's still a growing market, and it's still at a infant or a baby stage as compared to dollars or euros or the, hard currencies markets.
Right.
But we have seen some really trend on the diversifications not only come from the international investors who has gaining momentum in playing in the renminbi bond products, but also the keenness of the domestic investors who are keen to deploy their capital from onshore to offshore. I'm not sure if you heard about the mechanism we call Southbound Connect scheme, which is basically the infrastructure that links the China market with the Hong Kong market via the CMU mechanism, and the onshore investors can therefore invest in the offshore bond markets, primarily in the CNH products, through this mechanism directly without any transaction cost. And we believe this pool of investments will further deepen next year. And this year, we're already seeing like 700 billion to 800 billion renminbi worth of capitals coming to Hong Kong to support the markets.
One more interesting that I hope you could talk about this is interesting for global viewers. The dichotomy between onshore rates where let's just call it they're very, very low, and the preference is certainly lower borrowing costs, against somewhat higher yield here in Hong Kong, but higher yield, of course, when you look at the U.S. What conversations are you having with your client in terms of, if a client is able to access both markets, what is the current preference, right, in terms of fundraising, and why? Offshore or onshore?
Yeah, I think my clients has two universe, right? One is those clients who are based in China. They're doing this cross-border bond raising or financings for their companies to expand either overseas, or they want to bring the money back to China for investments. And the other universe of my client base is actually international clients, like our Hong Kong clients, like our Southeast Asian clients, who are looking for diversifications. So I would say the behaviors tend to be very different. For the China clients that I can see, because of the lower rate environments in domestic markets, a lot of clients actually chose to refrain from doing US dollar financings anymore. They go back to the home markets and raise more bonds issuance in the domestic markets, because central bank has keeping this, loose monetary policies to keep the ample liquidity in the domestic markets, which provide a very lower funding cost and extension of maturity profiles for the domestic borrowers. However, for some of the borrowers who have international needs to diversify, or they have been offshore projects to invest and expand globally, they will still choose to come to the international markets to either issue a dollar bond or issue a dim sum bond, the renminbi bond, in the offshore markets, and invest those proceeds into their overseas projects.
Janessa, thank you so much for taking the time. There's lots more to talk about. We'll talk to you again next year.
Thank you very much.
Janessa Jade, looks like it's going to be busy, the pipeline there, her and her team. Investment Banking MD and head of offshore GCM at CICC. Just very briefly, a look at equity markets. We'll take a short break. Japan is up 2%. This is the China Show.
this is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Taking a look at some of the movers here, we are watching gold miners because we have seen metals rallying to a fresh record this morning. Gold at a new high, but looking at some of those miners moving to the upside. Also taking a look at what's happening with Honhai because its Foxtron vehicle unit has agreed to acquire the Taiwanese EV brand LuxGen. It is expected to help it expand out its EV ambitions. More ahead. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back. Just some news. This one has just come in. This is in Malaysia. This is with respect to the former Malaysian Prime Minister Najib Razak. So he's effectively lost a court bid today to serve out the rest of his prison term under house arrest. So a high court has ruled that this royal order that allowed Najib to be placed under house arrest was not valid, and that the king cannot decide independently of the Pardons Board. That's what we know so far. We'll leave it at that, and we'll bring you more details once we have more information on the case. But the former Prime Minister, just to say the headline, has lost his bid to serve out the rest of his jail sentence at home. Bell.
Yeah, and that is slated to end in 2028. Let's also take a look at what's happening in Japanese markets, though, because we are Moving through the morning session, and you're seeing quite strong gains here across the board, being led by the tech sector, and actually the SoftBank is one of the biggest standouts so far in the session. It does appear that not only have you got those tailwinds from the US session on Friday, where we saw an outperformance again of tech and stronger performance across the board generally, but also it's the Japanese yen story with weakness there that you're seeing at 157. So SoftBank, you can see we've got local media reporting that they are going to be developing AI with the private sector, or Japan is looking to develop AI with the private sector, and that does, of course, include SoftBank. SoftBank really already in the session doing well, given you saw the likes of Oracle up 6% on Friday, and both of those companies are working closely together on Project Stargate in the US. What else we're tracking is actually the maker of Mini Motors. That's Nidec this morning, because we do see the chairman of that company stepping down, or its founder stepping down from his position as chairman of the board. This does follow the discovery of accounting issues that damaged the reputation of this company. So his quitting is being seen as a positive for the business. Let's also shift, though, to the 7-Eleven operator 7 & I, because it's pressing its US convenience store business to deliver a faster turnaround as the retailer seeks a public listing of the unit. Let's bring back our senior editor, Reed Stevenson, joining us now from Tokyo. So, Reed, we've been discussing there's a number of different initiatives the company is taking for this, but just spell them out for us.
Yeah, essentially what 7 & I is doing is they're really trying to kind of get the U.S. business going again ahead of a planned initial public offering in the second half of 2026. Some of those initiatives involve boosting its private label presence, essentially. So 7-Eleven branded products in the stores which have a higher profit margin, larger format stores, better management of the supply chain. And really all of this is to sort of create an argument for potential investors that the business still has a lot of runway to go in, what is actually a kind of a tough environment for U.S. Retail at the moment.
Yeah, so talk us through then that sort of toughness we've been speaking about, for instance, the concerns around the health of the U.S. consumer generally, but what are the biggest challenges that the unit faces?
Yeah, I mean, there's kind of two fronts. I mean, first of all, everything is sort of related to inflation here. People tend to go and look for better deals rather than convenience when prices are high. So that's a headwind against, any convenience store operator in North America at the moment. But also there's a lot of competition. Many of them are getting into food, and so now you're beginning to compete with, fast food and other outlets. And then, dollar stores as well also have become sort of an alternate option for many people when they go looking for the things that they buy at convenience stores. So all of that is sort of a headwind, but essentially, the U.S. operation for 7 & I has sort of been, a headache for a while. They went after scale. That really hasn't delivered outsized returns. So what they're really trying to do is, improve the quality of the business, raise those margins so that they can really try and unlock value through this initial public offering that they're aiming for in the latter half of next year.
Yeah, so I guess up against a bit of a timeline now. That was our Bloomberg senior editor, Reed Stevenson, there in Tokyo for us. So, yeah, one of the big listings we'll track next year, Dave.
Something among many other things we're looking forward to there. Just an update here, some major stories we're tracking at this point as well, just to pivot the page here. Bloomberg has been told that the U.S. is, and this is on the Venezuela story, has been told that the U.S. is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. A source says that the Bella 1 tanker is a Panamanian-flagged vessel sanctioned by the U.S. Now, the attempted interdiction here follows the boarding then of the Centuries, that's a separate one, supertanker, early on Saturday, and the Skipper back on December the 10th. Now, President Trump's top economic advisor says a Supreme Court ruling against the administration's tariffs regime would create a major admin problem. Now, judges are currently weighing a legal challenge to the tariffs Trump has imposed on dozens of nations. Kevin Hassett says that the challenges of refunding those levies should deter the court from ruling in that direction.
we really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Now, U.S. Special Envoy Steve Witkoff says that Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. Now, he says discussions covered the existing 20-point peace plan, a U.S. security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. Now, the U.S. launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after killing 2 U.S. soldiers. Now, the U.S. Central Command said on Friday that fighter jets, attack helicopters, and artillery targeted ISIS infrastructure and also weapon sites. Defense Secretary Pete Hegseth posted an X saying the move does not mark the beginning of a war, but is a declaration of vengeance. Bill.
Yeah, and Dave, we're also tracking those tensions between Thailand and Cambodia, because Thailand's military has reportedly struck targets in Cambodian territory over the weekend, including bombing a casino and a bridge. The attacks come ahead of an ASEAN foreign ministers meeting that's scheduled for Monday, aimed at diffusing those tensions. But let's bring in our Southeast Asia managing editor, Katrina Nicholas, who's with us here in Sydney today. But yeah, I mean, we've certainly seen these tensions flaring between the two countries of late again. But what exactly happened over these last couple of days?
That's right, and this is fighting that's been going on for about 2 weeks now, with no sign of de-escalation. So what happened over the weekend? The Royal Thai Air Force carried out significant airstrikes on 2 targets inside Cambodia, an Ojek bridge that was described by Thai military sources as a strategic supply route, and also a casino complex that was hit on Saturday, with Thailand asserting that those sites had become bases to support Cambodia military operations. Cambodian officials have condemned those attacks as attacks on civilian infrastructure. Now, this conflict, as I said, it's been 2 weeks now. It's not showing any signs of de-escalation. It's displaced hundreds of thousands of civilians on both sides, about 750,000 now, and 40 people have been killed. And increasingly Thailand is framing parts of its offensive as a war on scam centres. So that muddies the waters somewhat. It's saying that some of these facilities, particularly the casinos that it's targeting, are linked to transnational cybercrime and fraud networks. That adds quite a complex security dimension to what fundamentally started as a territorial dispute.
Yeah, certainly adds a new implication, I guess, a new justification for their actions. But as we said, there's the ASEAN foreign ministers meeting coming up later today. What exactly are we hoping to see in that, and what's likely to be achieved, do you think?
Yeah, so all eyes today on Kuala Lumpur. That ASEAN Special Foreign Ministers meeting kicks off there in about 20 minutes for now. We expect it to last well into the evening until we get some resolution there. But this is, sort of being seen as the most tangible chance yet to secure a formal ceasefire and to halt this recent escalation. Diplomats hope the meeting will sort of reinvigorate dialogue after previous agreements have, of course, faltered, and at least, framing the talks as being really critical for regional stability.
All right, well, then we'll watch for the readout later on. Katrina Nicholas, thanks very much. That was our Bloomberg Southeast Asia Managing Editor, Katrina Nicholas there. And another political story that we're tracking today, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photographs or photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General, that's Todd Blanche, says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women.
And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Now, the latest release of the so-called Epstein files includes thousands of pages of pictures, phone numbers, and notes from investigations, but with many documents heavily redacted. Our Miles Miller has more on the release and also the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. Their records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
And that was Miles Miller there with the latest on, of course, the big story over the weekend. Right, just ahead here on the China show, Li Ka-shing, that's the Hong Kong billionaire, of course, is, well, a look at how he's really remaking his business empire as this shift across generations looms in his family business. More on that story coming up, and the deals, really, that could reshape the future of C.K. Hutchison.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Welcome back. You're watching The China Show. A closer look now at Hong Kong-listed CK Hutchison Group. It's set to enter the new year with really potentially some major changes, a series of deals pending. It could really reshape the future of the conglomerate amidst this looming generational shift. For more on the story, let's bring in our conglomerate's consumer and gaming reporter, Shirley Zhao, with a take today. So, yeah, I guess we'll start off with the year that's been and how that informs us about the potential major changes ahead.
Yeah, so Li Ka-shing and his family are planning basically 3 major moves for their flagship conglomerate, CK Hutchison. So they are considering an IPO for their retail arm, A.S. Watson, which is their biggest revenue contributor, and they are also considering options for their telecom businesses, including a potential listing as well as sales and mergers in some markets. And of course, they are planning to sell 43 ports globally, which account for the majority of their port portfolio. So if all these deals are completed, that would be quite significant because CK Hutchison would have already divested or spun off most of its core operations, and that could also grant the Li family a fresh war chest to fend off global risks as well as preparing for future opportunities.
It's more than a facelift, right? If these 3 simultaneous deals come to fruition, do we have I know some of these are fairly complicated, like the ports deal, for example, and we've covered that as well recently. But do we have a better understanding of when we might see these deals actually come to fruition?
So these deals all face pretty big challenges. So for example, the ports deal has angered Beijing because of the involvement of the U.S. investment firm BlackRock as a buyer. And President Donald Trump has come out and said that this is a U.S. win over the strategic Panama Canal because the 43 ports include 2 ports in Panama. So Beijing is unhappy, and CK Hutchison has invited a Chinese investor, China's biggest shipping company, COSCO, into the buyer mix in the hope of appeasing Beijing. But talks, we learned, that have slowed down recently due to the complexity of the deal. And CK Hutchison's executives have said that it's unlikely for the deal to be completed this year. And other deals involving telecom, for example, would often require antitrust scrutiny in terms of telecom mergers in some markets. And the retail arm listing, CK Hutchison has actually been considering that on and off since 2013, but it still hasn't been able to do that due to market volatility and valuation issues. So it's not easy to pull this off. But we learned from people familiar with the matter that CK Hutchison wanted to do these deals because they want to unlock value for CK Hutchison's assets. If you look at CK Hutchison's stock, it has really been trading at a steep discount ever since 2015, when CK Hutchison as a company came into being. And the Li family really believes that these moves can potentially reduce the discount and lead to a completely reshuffle of returns for shareholders, which of course include the Li family, which owns 30% of CK Hutchison.
I was actually going to ask you about the why, and because there could be a difference between realizing value by listing some units and a complete pivot in terms of, you mentioned, right, core businesses, and the fact that they're facing a lot of regulatory friction means that they've gotten into very central businesses, right? And I wonder whether it's simply unlocking value, or is there a major pivot away, strategic pivot into new businesses, and what new businesses could those be?
That's also a very good observation. So if you look at how Li Ka-shing built his empire, he developed really close relationship with major banks in Hong Kong as well as China's top leadership. And he utilized that relationship to expand globally. So by the early 2000s, he has already developed his empire into the world's biggest port operator, as well as the biggest Asia investor in the European telecom sector. But if you look at today's global environment where his elder son Victor is operating in, it's completely different. So Li Ka-shing's early bets in sectors including ports, retail, telecom, utilities, and infrastructure paid off because of globalization, because these sectors benefited greatly from globalization. But Victor today is facing a world where deglobalization is increasingly becoming the theme. So observers are saying that this is a good time for the Li family to monetize on the giant wealth that they have built over the past decade. And some observers are saying that this could lead to a sector change for CK Hutchison. But in terms of what other sectors CK Hutchison could invest in, or is there any other use the family is planning for the capital that they may accumulate from these deals, it remains to be seen.
There we go. The starting point, I guess, of how a conversation around how conglomerates remain relevant, agnostic of, or through generations, let's put it that way. Shirley, fantastic piece there. For our clients, you can check out Shirley's piece. It's on the terminal. It's also on the website for you. Shirley Zhao there, conglomerates and consumer and gaming reporter. A look at markets. We're coming off highs quite quickly. We're now flat in the Hang Seng Index. Plenty more ahead. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back, and here are some of the corporate stories that we're tracking today. President Trump has announced deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK come in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. Disney's Avatar: Fire and Ash has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. So, Dave, I think it's interesting because at the same time you're seeing that strength in the Chinese movie market, Chinese consumer stocks have certainly been one of the standouts to the downside this year.
Yeah, they have. And you got to wonder where spending 2 hours watching movies, if you think about it, the time spent watching movies is about the same time, if not shorter, than the time people spend nursing an already quite lukewarm matcha latte at cafes, right? And that's just to say 2 hours of paying something and doing nothing. I guess in some ways you could spend more. You could find a better time spending more for 2 hours, but that is just to say, of course, movie stocks are on the way down. And you know what? That's not a bad life, isn't it? Okay. We'll leave you with a look at Hong Kong listings today. Not the best day as far as debuts are concerned. It's been a fantastic year, though. And, yep, we will see you all tomorrow. Thank you for joining us today. You're watching The China Show.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. With Haslinda Amin on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Coming up, the US pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. We assess the impact with Geopolitical Futures Chairman George Friedman. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa Claus rally. The AI trade in focus as well, with China's More Threads unveiling a new generation chip lineup set to challenge developers' dependence on NVIDIA. And we'll get market insights for 2026 with SGMC Capital CIO Ed Gomez, who sees strong resilience in the technologies powering today's productivity gains. Also, India's institutional real estate investment topping $10 billion this year to set a second straight record. We'll take a deep dive into the outlook for the sector with JLL's Lata Pillai and Sonali Rawal from Anand Rathi Private Wealth. Well, we're keeping an eye on commodities, both gold and silver, both hitting fresh records, and this as rising geopolitical tensions enhance the haven appeal of precious metals. Oil prices also in focus today after Bloomberg reported that the US is still pursuing a third oil tanker near Venezuela. President Trump has been intensifying an oil blockade on Nicolas Maduro's government. For more, let's get to our oil trading reporter, Rongwei Neo in Singapore. So, Rongwei, talk us through what happened over the weekend. What are the latest details?
Well, so it's been quite an action-packed weekend with the U.S. administration boarding a tanker carrying Venezuela crude on early Saturday, as well as right now, as you've just rightfully said, Paul, it's in pursuit of a third tanker. So this is not exactly a surprise, as it comes right after the Trump administration has said that it will implement a blockade on sanctioned oil tankers carrying oil out of Venezuela. And of course, this comes as the U.S. administration is amping up pressure on the Maduro's administration, trying to cut off one of its most revenue-generating stream. Well, in this case, that's the oil trade. So once exports from Venezuela are curbed, experts expect that the oil storages in Venezuela will start to fill up, and eventually this would kind of cause or force them into closing several oil wells, which is of course expected to hit the Maduro's administration quite heavily. I do have to note that one of the surprises that we've seen over the weekend was actually one of the tankers that was boarded, Centuries, which was boarded on Saturday, was actually not on any official sanction list. And of course, the ship was actually, it has links to a Hong Kong-based entity, and this perhaps casted a spotlight on whether the US administration, apart from ramping up pressure on exports coming out from Venezuela, it also kind of hints at the fact that they could be possibly taking more heavy-handed actions further downstream, which of course includes the buyers of Venezuelan oil.
Yeah, you mentioned the importance of Venezuelan oil to Venezuela, but in a global sense, it only accounts for a tiny fraction of supply. So what's the wider impact for oil markets?
Right. So one of the interesting dynamics that Venezuela play in the global oil market is the fact that, of course, one, it's an OPEC producer, which means it's one of the major producers in the world, although that market share that it has once owned has slowly dwindled over the years due to several factors such as sanctions and whatnot. We do have to note that Venezuela is home to the largest known oil reserves globally. And of course, right now, it mainly supplies oil to two major countries, China as well as the US, right now with China taking the bulk of the oil. Of course, we have seen in oil prices today that it has edged up slightly, possibly on enhanced geopolitical risks and fears due to the additional tanker actions being taken by the US administration. But overall, in the long term, when I spoke to Chinese buyers, as well as wider observers of the Chinese market, it's not widely expected to affect supply, because this comes at a time where the demand coming out from China is low. Chinese private refiners mainly take in Venezuelan heavy, sludgier crude to create bitumen. And right now, the downstream market for that product is kind of weak as well.
All right, oil trading reporter Rongwei Neo there in Singapore. Well, our next guest is an internationally recognized geopolitical forecaster and strategist on international affairs, and he has briefed numerous military and government organizations in the US and overseas. Let's get to George Friedman, founder and chairman of Geopolitical Futures. George, thanks so much for joining us today. I just want to pick up on what Rongwei was saying there about the US pursuing this tanker. The Bella 1 says it was sailing under a false flag. How do you see Venezuela responding to this type of pressure?
Well, I don't think Venezuela is in a position to respond to anything. I also think that the amount of naval vessels in the Caribbean are far more than necessary for blockade, whereas the number of troops there are far less than is needed to invade Venezuela. Therefore, I suspect there's another dimension to this, which is cutting off Venezuelan oil heading to Cuba. The first ship that was intercepted was going to Cuba. And we are, I think, in the United States, putting pressure not only on Venezuela, but also indirectly on Cuba.
That's an interesting theory. Can you unpack that a little bit more for us? What's the motivation of the U.S. wanting to put pressure on Cuba at this stage?
Well, Cuba has always been a dangerous geography for us. At the same time, recently, after the U.S. threatened to send more missiles to Ukraine, the Russians signed a new treaty with the Cubans on defense matters. And there is a concern in some quarters of Russian missiles coming into Cuba again as they once did. And therefore, I think at this point, when the focus is on the Western Hemisphere rather than the Eastern Hemisphere, as Trump has split it, we want to more than deal with Venezuela, although that's part of the story, but also deal with the Cubans.
So a similar question then that I posed you about Venezuela. How do you see Cuba reacting to this pressure, if you're correct? And could Cuba not just source its oil from elsewhere?
It could possibly do so, but not very quickly. But the situation inside of Cuba is pretty bad. There's a great deal of poverty in Cuba. Frequently, electricity is unavailable for extended periods of time. There's a healthcare issue. And the Cuban government at this point is pretty weak and unstable in my mind. Therefore, this happens to be also a time not only to deal with the Venezuelans and the cartels, but also to deal with Cuba.
Do you think the U.S. is pursuing regime change in Cuba? And if yes, what would an alternative government look like?
Well, the United States has always wanted a regime change in Cuba, ever since the 1960s and the Cuban Missile Crisis. They were unwilling to pay the price to do it, but given how weak Cuba is right now, this might be a chance. The nature of the regime after that would be fundamentally, if possible, and not anti-American, as the Cuban is. And therefore, it would also send a signal to Latin America that when we speak about turning to the Western Hemisphere, we're turning our power on the Western Hemisphere.
The focus in on the front pages at least, is still Venezuela, however, and President Trump has described the Maduro regime as a terrorist organization. So is the same goal there to pursue regime change in Venezuela? And also the same question, if not Nicolas Maduro, who?
Certainly, they would like to replace Maduro. And for the same reason, the Russians have a great deal of influence with Maduro as well. He's very close to them, as well as being the source of shipment of drugs to the United States, most of those drugs being grown in Colombia. Therefore, there's a broader picture than just the Venezuelan question. And as to what will replace it will obviously be a very complex issue, But if the United States has the ability to overthrow Maduro, it will have the ability to install a pro-American government, partly.
What's your timeline for all of this reaching some sort of denouement? Because as Rongwei was saying, you know, if Venezuela's unable to load tankers, oil's just piling up on shore. It may lead to the need to shutter wells. What's the timeline in terms of how you see this playing out?
I would say weeks and months. The first issue being Maduro, and the second issue being how we have influenced Cuba, what we are after. If we are after basic undermining of both the Maduro regime and the Cuban regime, it'll take several months probably. But then
George, there's a few...
Venezuelan oil might start flowing again after regime change.
George, there's obviously plenty of other geopolitical tensions around the world that we need to discuss, also involving Russia. And I just want to talk a little bit about the progress of peace talks between Russia and Ukraine. I mean, the U.S. Special Envoy Steve Witkoff said there were productive and constructive meetings between European and Ukrainian counterparts in Florida. But is what was discussed there going to be in any way acceptable to Russia? Is this moving things forward at all?
Well, two things. The Russians have failed in their mission. Having fought for 4 years and only conquered this part of the country shows the weakness of the Russians. At the same time, Trump wants to make a settlement. Putin, on the other hand, cannot make a settlement after spending 4 years at war and countless Russian lives and barely taking any serious territory from Ukraine. Remember, most of that territory is not yet held by the Russians, by far most of it. And at the same time, when you take a look at the intentions of the Russians, they invaded the entire country, including attacked the capital in Kiev, and were beaten back. So I think the Russians have a real problem on their hands. Their military is not that strong. It has not succeeded even slightly in 4 years.
At the same time, they're also not going backwards, and Vladimir Putin's showing no sign of wanting to throw in the towel here. So what's your expectation for a peace process in 2026? And can it involve any ceding of Ukrainian land to Russia, which Ukraine would find unacceptable?
Well, at this point, the war has to end. The Ukrainians cannot push the Russians out. Russia has not shown the ability to advance forward. It's a frozen war. At the same time, the fundamental question is not U.S. politics or Ukrainian politics, it's Russian politics. The Russian economy is in very bad shape. The number of people who have been killed in the war are in bad shape. Now the Russians are recruiting people from Africa and other Asian countries to be in the military. That's not because their military is doing well. And so the question is, how long will the Russian public, the people around Putin and so on and so forth, allow him to extend the war because if it ends now, it ends in basic defeat for Russia, even if they hold this territory in Ukraine.
What's your outlook for European defense spending in this environment? And given the way you just characterized the Russian economy, how well positioned is it to engage in an arms race?
It's quite well positioned. The European Union's GDP is slightly larger than the Chinese. The question is, and this is the fundamental question we're facing in the world, does Europe unite and create a single European army and a single European government, or does it remain in various shattered relationships with each other, different, unable to reach a certain end? The fundamental question is, when you say Europe, Europe is a continent. It's not a nation.
Yeah, indeed. There's not always alignment on every issue. Even if peace were agreed, however, how can a guarantee be reached that Russia's not going to try again, potentially within the decade, to carve off another piece of Ukraine?
The Russian army has showed itself incapable of conquering a much weaker country. The threat of Russia that exists, which the Russians really want to maintain, is that somehow he's going to throw forces in all over the place and threaten Europe and threaten other areas. Given the performance of the Russian army in Ukraine, that's pretty unlikely. So we continue to feel that the Russians are somehow capable of very many things that they're really not capable of. They couldn't take Ukraine.
All right, George Friedman, founder and chairman of Geopolitical Futures. Thanks so much for joining us today. And let's stay with geopolitics. Thailand's military has reportedly struck targets in Cambodian territory over the weekend, including bombing a casino and a bridge. Bloomberg's Southeast Asia managing editor Katrina Nichols is right here in Sydney with us for more. So, Katrina, bring us up to speed with the latest developments over the weekend. And I've got to observe, striking a casino seems like an odd move.
It does. It does on the surface of it. That's certainly true. So we've got reports that the Thai Royal Air Force carried out airstrikes on at least 2 significant targets inside Cambodia. One was the Ojek Bridge that's been described by the Thai military as a strategic supply route. And the other, as you mentioned, is a casino complex and some other facilities, and they were hit on Saturday, with Thailand asserting that these sites had become bases to support the Cambodian military operations. Cambodian officials, meanwhile, have condemned those actions as attacks on civilian infrastructure. The conflict, which really began escalating again earlier this month, it's well into its second week now, has involved heavy artillery and drones on both sides, and now has displaced hundreds and thousands of civilians, about 750,000 on both sides, and 40 people have perished in the clashes. As you mentioned, casino is a somewhat random thing to be hitting, but Thailand has increasingly framed part of its offensive as a war on scam centres and linking some of the facilities that it's been targeting, particularly these casinos, to transnational cybercrime and fraud networks. And that adds a pretty complex security dimension to what essentially started off as a territorial dispute.
Now, we've also got ASEAN foreign ministers meeting today to try and broker an end to this. How realistic is that outcome?
Yeah, well, today all attention, of course, swings to Kuala Lumpur and the ASEAN foreign ministers meeting that kicks off there right about now, actually, and is expected to last several hours. This is seen as the most tangible chance yet to secure a formal ceasefire and halt the recent escalation along those disputed borders. The diplomats hope the meeting will certainly reinvigorate dialogue after previous agreements have faltered, and they're framing the talks as being really critical for regional stability.
President Trump's previously taken an interest in this conflict. Is there a role for the US in helping broker an end to it?
Well, of course, earlier this month, President Trump did call the leaders of both Thailand and Cambodia and urged them to stop the fighting, and indeed said that this would help de-escalate the situation. Now, that didn't happen. The fighting just continued on. You have to wonder whether those peace negotiations are linked to tariff and trade discussions. The Prime Minister of Thailand, Anutin, certainly said that was not the case. But let's see if the US weighs in again.
All right. Bloomberg Southeast Asia managing editor Katrina Nichols there. Next up on Insight, the Trump administration defends removing an image of the president from its latest release of files tied to Jeffrey Epstein, saying the move was to protect victims. Much more ahead. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome back. You're watching Insight. Here's another story we're watching. The Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files includes thousands of pages and pictures, phone records and notes from investigations, but with many of those documents heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously officially sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
That's Bloomberg's Miles Miller. Let's take a look at how Asian benchmarks are tracking at the moment. Pretty good day to close out, the final trading week of the year, effectively, the final full one anyway. We've got the Hang Seng Index better by about 1/5% there. Stocks in South Korea performing particularly well, better by 1.7%. We did have some numbers out of China a little bit earlier for the 1- and 5-year loan prime rate. Those were both unchanged. A little bit later on, we're going to have CPI numbers for the month of November out of Hong Kong as well. Now, we've got an ongoing rally happening in gold, fueled in part by ongoing geopolitical tensions linked to what's happening with the oil price as well. As we were discussing earlier, the U.S. is now in pursuit of a third oil tanker, this one, the Bella 1, which the U.S. accuses of sailing under a false flag. That blockade off the coast of Venezuela intensifying, and it will soon start creating problems for Venezuela, as if it's unable to load tankers, oil's going to start piling up onshore, potentially leading to shuttering of some wells. Still to come, Chinese chip maker More Threads unveils a new generation chip lineup. It's a fresh challenge to NVIDIA. We'll have details of that story next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back. You're watching Insight. Here's a quick look at where markets stand. We do have China going on a lunch break. Japan is coming back online as well. So we're seeing pretty much a strong risk-on sentiment across the region at the moment. The Nikkei better by almost 2% at the moment. We've got Chinese stocks doing pretty well as well. The CSI 300 better by 0.8%. The Hang Seng also moving higher by 1/3%. If we take a look at the yen there towards the bottom of your screen, 157.45, pretty weak. It has been range-bound, but we did hear from the Japanese Finance Minister Katayama signaling concern over rapid one-sided FX movements. And this was after we didn't also get a lot of guidance from Governor Ueda on Friday about where the neutral rate in Japan lies after we had that 25 basis point rate increase, which pretty much everybody was expecting. Now, a lot of the action happening in the precious metal space again. Gold has captured a fresh record high, right now trading 4,389 an ounce, and is taking other precious metals along for the ride as well. Silver advancing also just shy of $69 an ounce now, and even platinum performing pretty well, advancing an 8th straight session, and it's cracked 2,000 an ounce for the first time since 2008. Well, China's More Threads has introduced a new generation of chips aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's get to our China correspondent, Min Lo, with more on this. So, Min, tell us about More Threads' new chip and how it compares with NVIDIA's product.
Yeah, so More Threads is launching 2 new chips, the Lushan and Huashan, which are named after Chinese mountains. The Huashan chips are meant for AI inferencing and training, and the CEO says that it is better than NVIDIA's Hopper series chips, including the H100 and H200, and that it's closing the gap with the current Blackwell architecture. So this is pretty significant because if China already can do better than the H200, that eliminates the need for Chinese companies to buy from NVIDIA, even after the company had gotten that approval from the Trump administration to sell to China recently. More Threads also unveiled a new generation of chips for graphics processing. That's the Lushan chips, which it says is able to perform 15 times better than before. It also unveiled this GPU architecture that could enable the linkage of 100,000 chips in a supercomputing cluster that is supposed to be 10 times more energy efficient and have 50% increase in computing capacity as well.
So what are the implications for NVIDIA in China here? Because, Jensen Huang's already said that he doesn't expect to sell anything there. Is that going to be the case for the foreseeable future after these developments?
Well, it really depends because the Trump administration has given the green light for NVIDIA to sell to China. But the problem is the Chinese government hasn't really provided a clear guidance to its own companies whether or not they will be allowed to buy from the U.S. because the previous round, the H20 chips, the Chinese government had basically told its companies not to buy. We know the Chinese government has been meeting with Chinese tech companies to assess their need for the H200 chips and asking them to justify in some sense why they want to buy from NVIDIA as opposed to homegrown chips. And I think More Threads, by offering something that is equally advanced or if not better than the H200, it really reduces the chance of China approving the H200 for purchase in China. So question is what is next and whether or not NVIDIA would push Trump to allow for the Blackwell series of chips to be sold in China, but that we know has gotten quite a bit of pushback from U.S. lawmakers so far.
Yeah, there's also getting pushback in terms of listing some of these names as, relating to military production in China. What are House Republicans saying about this?
That's right. So Republican lawmakers have been lobbying the U.S. government to add 19 new companies to a Pentagon list that would list these companies as Chinese military companies. So among them include DeepSeek, the robotics firm Unitree, some of the firms that you see on the board there. Wuxi is a pharma company, Xiaomi as well, RoboSense. So these are pretty wide-ranging sectors that are affected. The implication is the Department of Defense will not be able to start new contracts or renew contracts with these companies. But for other regular companies, it also sends a signal, right, a warning signal for them about the risk of associating or working with some of these companies. So certainly this is something that could worsen ties between U.S. and China. And it's very hard to get off this list because we know that Hesai, for example, the Chinese LiDAR company, has been one of those that had sued the Pentagon for including it on the list. And it claims that it does not have relationship with the Chinese military. It successfully got off the list, but then it was immediately relisted. And that shows you the stickiness of the label and how hard it is to really challenge the Pentagon on this.
All right, Bloomberg's China correspondent Min Min Lo there. Let's get some more market insights from Ed Gomez, CIO of SGMC Capital, a multi-family office. Ed, thanks so much for joining us, and I do want to start on some of these themes in the tech and AI space. First off, we always mention AI in the same breath as a potential bubble. Can this rally continue? Are we in bubble territory? Can you give us the case for each potential scenario, and which do you believe?
So the way we look at bubbles, clearly there is a lot of enthusiasm for anything which is AI, and that in itself is problematic. At the bottom of the markets in 2022, 2023, people were talking about AI, but not too many people were interested in buying because you had just gotten into a massive decline in the NASDAQ of around 30%. Today, you say AI, and everyone's willing to throw money at almost any project. So clearly, projects which will fund fairly weak technologies, sometimes borderline fraud. Investors have to be very, very clear about what they're funding. But when you have companies which are delivering very, very solid products, services, and have a very clear sight into what the future will hold, not just for themselves, but the overall wave of technologies, then yes, valuations could get stretched, but most of these companies will bounce back from any kind of sell-off.
There's also a monumental amount of spending going on, and we have a chart on the Bloomberg terminal that illustrates this. Hyperscalers are seen spending another $500 billion in capex over the next 12 months. That's $500 billion. Okay, they're building out, but do you have any concerns about this? Some of the circular deal making that sometimes seems to be involved, or questions about where all of this money is coming from?
I think, before I answer those, what exactly is this going to fund? So yes, it is going to fund physical infrastructure. There are going to be chips, there are going to be data centers, there are going to be cooling solutions which are put in place. And all of those obviously have a limited life cycle. You also have the entire debate about, whether these are being depreciated or amortized appropriately or not. And, that it does require some amount of thought. But at the same time, a lot of this is powering, and if you look at the OpenAI information which has come out just overnight, they're willing and able to sell more and more paid licenses, whether it's in the enterprise space or in the personal commercial space. So you have a lot of take-up for this, and a lot of this is powering massive amounts of intelligence creation as well. If you look at what DeepMind is doing, and the entire team at Google, their ability to fold proteins and crack problems which have been intractable for decades is just a testament to the power of these technologies. So clearly there's a build-out which happens, but at the same time there's a lot of positive development in terms of deployment of the technologies as well.
When you're looking at allocating investment to this space, in geographical terms, where do you look? Do you prefer the US names, or are you looking more towards Asia, Japan, Korea, and China as well?
The bulk in the U.S., just for the simple reason that the information flow from American companies, disclosures, CEOs speaking to analysts, as well as CEOs speaking to the media broadly, it does provide a much richer backdrop on which to base estimates or to base analysis. When you're looking at Japan, South Korea, and Taiwan, I think they're extremely interesting areas, and we do have some exposure to those names as well. But the bulk of our investments are currently in the U.S.
You mentioned transparency there, and I brought this up with Min Min a moment ago in terms of Jensen Huang's remarks around NVIDIA sales into China. I mean, he's not expecting any. Do you consider that that's going to continue to be the case for the foreseeable future?
In the short term, yes, absolutely. Jensen would love to sell to China. He's been making a very, very strong case about how the U.S. gets stronger by allowing NVIDIA technologies to proliferate. So clearly, it's a large market for NVIDIA. It was until the geopolitical problems started emerging. But at the same time, there's a lot of take-up of NVIDIA's technologies, regardless of whether the China piece kicks in or not. Our belief is that NVIDIA is, and Jensen Huang says this himself, you're looking at companies producing chips, which are great, but you also need to now consider NVIDIA as an AI factory and factory equipment manufacturer rather than just chip maker, because the entire ecosystem has gotten so complex. In terms of connecting data centers, in terms of connecting chips. We were talking about Micron earlier as well, in terms of the ability to connect and deliver the high bandwidth memory which is needed. So it's not just one product, it's not just one chip, it's the entire ecosystem. And let's not forget CUDA, which is their software coding platform, which allows optimizations to be made on those chips. So we're not really concerned about NVIDIA and demand at that point in time.
You mentioned, just to get back to your point about transparency, yes, the same level of transparency isn't there with these Chinese chip makers as you enjoy in the United States. But what is your outlook for more threads, Cambricon, DeepSeek, and others? I mean, particularly in mind that the U.S. keeps looking to try and to squeeze these Chinese chip makers on national security grounds.
Absolutely. It's a massive minefield, just the geopolitics of it all. And, AI chips is the current bugbear. Earlier it used to be soybeans, or earlier it used to be some other kind of product. But we don't see this go away for a long time. Donald Trump has his style and his agenda. The Chinese Communist Party and Xi Jinping have their agenda. And, we don't take sides on that. Each country is always going to be pushing for its own advantages. So, the competition overall for consumers at the end of the day is clearly great, because what that means is you have, as you mentioned, DeepSeek as an open source models, which puts pricing pressure on all kinds of other proprietary model owners and developers. So that's great news for consumers. It also means it's great news for proliferation of these technologies across the economy. So it's not just technologists and technology companies which are using this. You have manufacturing companies, eventually, which will be able to squeeze out efficiencies in their entire supply chain or operations on the back of strong and powerful models. So, we look at that, and the competition is a massively positive development.
All right, Ed Gomez, CIO of SGMC Capital, is sticking around. And when we come back, we will get his insights on emerging markets like India, which has become one of the calmest stock markets in the world. Keep it here with us. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back. You're watching Insight. Let's take a look at how Indian markets are tracking at the open. Seeing a risk-on sentiment here as well. The Sensex better by 0.4% in the early going, tracking much of what we've seen around some of the other major Asian markets this Monday. Also, the rupee back below 90 against the greenback. We did see the Reserve Bank of India rather enthusiastically getting involved in FX markets, and the RBI is going to be holding a $1 trillion rupee two-day variable rate repo auction starting today to inject liquidity as well. Right, let's get back to Ed Gomez, CIO of SGMC Capital, still with us. Ed, thanks for waiting. And I do want to start on some of that rupee strength, relatively speaking, or really dollar weakness is what I want to talk about, because we've got some of the big houses, JP Morgan, Morgan Stanley among them, seeing a lot of optimism for emerging markets in 2026 due to a weak greenback. Are you part of that club?
The long EM trade has been on, and there is some amount of correlation with the overall tech trade. And you do the correlation versus the Nasdaq has been pretty strong. But in general, just the demographics of countries like India are so positive that the government just needs to put in place the effective infrastructure which allows the rest of the country to go about just doing business, and that's what they're doing. So yes, we're very comfortable with Southeast Asia demographics as well as India. Those are markets that we really are building on positions as we build as time goes on.
That said, though, we've seen a lot of foreign outflows leaving India, certainly towards the last quarter of this year. Why is that happening, considering, as you say, that the longer-term growth story is a rather compelling one?
I guess some of it is just rebalancing to the extent that global investors, are also getting sucked into what might just be the sexiest trade out there, which is AI, right? So to the extent that India is a more infrastructure play, more financial markets play, a more consumer-related play, yes, there is a very, very strong component of technology. There's a lot of economic activity which is in the technology sector as well, but that doesn't necessarily get captured in the markets. So we'd expect that some amount of those outflows would be related to rebalancing of portfolios, into like I said, the sexier part of the overall market story as of right now.
So when you're looking across emerging Asia in 2026, which market offers the most compelling growth story to you?
India for sure, and some of the recent elements of news which have come through about the hyperscalers investing hundreds of millions of dollars into India in terms of offices and hiring. That's going to be a big driver. You also have the recent news on the insurance companies being allowed to operate 100% owned entities out of India. It was earlier 74%. Already had a fair amount of control, but now it's like full control. That's going to drive investment. Again, like we mentioned, the demographics of the country will dictate that insurance is going to be a massive need in the coming years as the middle class just grows and delivers more economic prosperity. So that's going to be another area which is going to be very, very strong going forward. The banks in the financial system, just in terms of the credit lending, just given the propensity of the consumer to borrow money to buy, whether it's automobiles or even housing, is going to deliver massive amounts of economic growth as well. So we're looking at more less in the tech sector in these markets. We like Indonesia as well, so that's another market which is a strong favorite.
And what's your approach to China as well? Because, we discussed the positive story around AI in China, but at the same time, the country's still grappling with a serious deflation problem and an ongoing rolling problem in the property market as well. So how do you approach China as a market?
We tend to stick with some of the safer names, and we also tend to play the indices. We don't want to get involved at this point in time in terms of trying to find, the best stock in each sector. We're happy to play the index futures, options on the index futures, because that can give us the upside, without getting into micro-named risks, which suddenly pop out of nowhere. With China, equally optimistic. To the extent that the government focuses on a pro-business stance, we think the country can deliver, phenomenal gains for investors. But just at this point of time, we just prefer playing the indexes for portfolios.
All right, Ed Gomez, CIO of SGMC Capital. Thanks so much for joining us today with your insights. Well, the Adani Group is planning to invest more than $11 billion in its airports business by 2030. It's looking to bid for nearly a dozen new terminals, upgrade infrastructure, and expand into aircraft maintenance as well. Let's bring in Bloomberg Conglomerate's media and telecom reporter, PR Sanjay, for more. So, PR, what are the details of this planned investment by Adani in India's airports?
So, Adani Airport Holding, the holding company of airport conglomerate, has huge plans. They want to invest at least $11 billion in next 5 years. And there are a lot of details. In fact, they want to successfully launch the new Navi Mumbai International Airport, which will be taking off. The first commercial flight will be taking off from December 25th, the Christmas day. And they also want to go for an IPO between 2027 to 28. And this IPO is relying to three things. One is successful commercial operation of Navi Mumbai International Airport, and self-sufficient operations of the airport business as itself. And they also want to complete the city side development, including Aerotropolis, which will be giving more focus on retail, hospitality, etc. So that's one. And they are also looking at MRO opportunities to help the entire aviation landscape of India. And they hinted that they would want to get into the aircraft manufacturing opportunity. They say that it is very early. They are not actually tied up with any partners, but that will be done through a partnership model. It is like slightly early position at this time, but they're hugely pinning hopes on airport operations, and airports would be the unit which will be demerged out of the conglomerate and will be taking wings of IPO.
So tell us about some of the features that will be being worked on as well, because this would really look to take India's airport infrastructure, propel it well into the future.
Well, I think that's a great perspective, because what Navi Mumbai International Airport would do is it will be, first of all, taking a lot of stress from the Mumbai International Airport. And India, as an Indian aviation, very badly need a hub, because it's a growing market, but it doesn't have a proper hub. So Adani would look at creating a hub with an anchor airline. For example, on Air India or Indigo, etc., could be an anchor airline. They would want to make Navi Mumbai International as an airport, because Mumbai Airport was always operating out of a 1.5 runway. Now, Navi Mumbai will be having 2 runways, and have already appointed a consultant for the 3rd runway, which means this Navi Mumbai International Airport will be like a very key critical milestone for not for just Adani, for Indian aviation as well, considering the plans and considering the Aerotropolis and IPO and financing plans what we are picking up right now.
Pia, can you also tell us about Adani's plans to expand in nuclear energy as well?
Oh, that's an interesting thing. That is another foray from the port to power conglomerate. They want to build small modular reactors. Adani's would be first among the private players which would be getting into this new landscape, which government has most recently okayed it. But it's Adani doesn't have that kind of a capability to run the plant. So what we are picking, what sources are telling us, India's Nuclear Power Corporation of India Limited would be running. They will be the operator, and the research wing of Department of Atomic Energy, Baba Atomic Research Center, would be designing these small modular reactors. And at the end of the day, Adani's might be getting some flexibility to sell the power generated out of this ambitious small modular reactor atomic plants.
Yep. All right, Bloomberg Conglomerate's media and telecom reporter PR Sanjay there in Mumbai. Still to come, Andrew Collier will share his views on China's property crisis as embattled developer Vanke enters a critical day, just hours now to avoid default. We'll also get the outlook for India's real estate markets as well. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. when you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate. And they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
Welcome back. You're watching Insight. Let's take a look at how Asian markets are performing at the moment. Pretty well. A lot of green on the screen. Looks like we're heading into a year-end rally. The only thing that's a little softer is the Japanese yen, but we see the Nikkei having a good day, better by 2%. Even the Indian rupee strengthening, back below 90 against the dollar. Precious metals in particular having a moment. Gold and silver both hitting fresh records. Silver now not far off $70 an ounce. Crude prices rising, as well as we have the United States continuing to pursue a 3rd tanker off the coast of Venezuela that it accuses of sailing under a false flag. Well, it is a pivotal day for Chinese developer China Vanke as the grace period for its December 15 bond payment deadline expires. If creditors don't agree to an extension, Vanke could be tipped into default. Let's get to our managing editor for Asia Equities now, Lianting Tu. So, Lianting, when do we expect to have the results of a vote?
Yeah, the vote already should be in by 10 o'clock Hong Kong time, but actually the filing will come out much later in the day because the votes will be tallied. And so we expect something after 4 p.m. Hong Kong market close, but it could come out late in the day. So we're all prepared for that. But overall, the whole vote is really about whether to grant Vanke a bit more time to forestall a default.
So what's the expectation of that? Is Vanke going to get the time that it's looking for, and how likely is a default? And if there is a default, what's the fallout going to be?
Yeah, specifically, as you said, there's going to be a vote on whether to allow Vanke to delay the bond payment on that 2 billion yuan bond by 12 months, or to give it until January 28th to renegotiate terms with its creditors. So overall, if Vanke ends today without a deal or an agreement to extend the bond or no payment, then really, I think bondholders can potentially call default default on Vanke. And if there's indeed a default, I think it's just going to be a further shakeup in sentiment among investors in China's real estate sector, because Vanke is a state-backed real estate developer, and it used to be the biggest in China. And Shenzhen Metro, its big state backer, used to really committed to backing Vanke, but suddenly halfway it reduced its commitment. So that is sending a very strong signal among investors whether those state-backed real estate developers really has that state backing when they really need it.
How much could bondholders and creditors potentially lose here?
Yeah, it could be a lot. If you look at the bond prices, those onshore bonds are already trading at around 20 yuan. So that is a drop from about 80 yuan just about 2 months ago. So you can see people are already pricing in about 20% return. And Vanke, in addition to a lot of bonds, it also has a lot of bank loans, which are actually pretty much backed by its property assets. So bank holders obviously will be a little bit more senior to bondholders. But yeah, if you look at bond prices, it's really not trading with much value left.
All right, Bloomberg Managing Editor for Asia Equities, Lian Ting Tu, as we await the publication of that vote. Our next guest has been closely watching the China property crisis, including Vanke's situation and the lack of bailouts. Let's get insights now from Andrew Collier, Senior Fellow at the Harvard Kennedy School. Andrew, if you were a betting man, how would you say that today's vote is going to go? And is Vanke going to get more time to come up with the goods on that bond?
My guess is that they're not going to win on this vote. I think bondholders have decided that there's no point in extending and pretending anymore, that they might as well take the hit now and see if they can restructure the debt and get something out of it, rather than letting this sort of foolish scenario continue. So the real question is, what's the attitude of the central government? That's the question. The central government appears to have taken the view that it's up to the provinces to handle all these problems. And given the lack of revenue in the provinces from the collapse in land sales, the local governments in Guangzhou and elsewhere, and also companies like Shenzhen Metro, are basically saying, look, we're out of money, so we just cannot help anymore.
So just to be clear, you're expecting to hear of a default this afternoon?
Yes, I think they'll probably be driven into default. Now, it's possible they'll try to figure out some sort of compromise, but I don't quite see what that is, because most of, as Lanting probably knows well, most of their assets are tied up with other commitments, and so there's a limit to what they can really offer to bondholders at this point.
Is default in some ways potentially the best option here? Because, Bloomberg opinion columnist Xu Liren was writing last week that, it'd be better just to get this over with rather than eventually all the assets just shrink away to nothing.
Well, I'm concerned with the long-term future of the Chinese economy based upon the collapse of the property market. I've just finished a book, and essentially the downturn is taking a 31% hit in GDP. And this kind of scenario, even if they're not listed companies with bonds, is occurring all across the country, where there's defaults of all sorts of natures, and then or non-payment of goods. And I'm getting concerned both about the potential for unrest in parts of the country where they've run out of money, and also what's the impact on the banks. Most people, analysts, dismiss that problem because they say that loans are less than 10% of the loan book, property loans. But they're not factoring in other parts that are related to property, including the local government financing vehicles, which have at least $9 trillion of debt, which is about 12.5% of GDP. So there's a huge problem that the central government is washing its hands of, and I think they're going to be in an awkward position in the future.
Yeah, I want to touch on the social unrest question in a moment, because that's an interesting point that you raise. But in terms of, let's assume you're correct and there is a default later today, what is the contagion risk? Do you feel that next week we might be seeing stories about banks being in trouble?
Well, that's the key question. Now, the central government has the ability to slow roll defaults in the banking system. They've been doing this for several decades. So they will step in quietly, and there may be, in some cases, for a local bank, there might be some sort of merger, or for a state-owned bank, like the Bank of China, where I used to work, there could be something where they delay payments within their system. So that contagion risk won't be like the United States financial crisis, which rolled through in a matter of basically months and then, squashed mortgage holders and then moved on. That's not the way it works in China. So the control of the banking system will be less of a short-term contagion risk, but more of a steady downturn.
Yeah, banks obviously too big to fail in this case, but what isn't too big to fail in the wake of contagion risk from a banker default?
Well, you've got, obviously Shenzhen Metro is in trouble. Shenzhen Metro is maybe a state-owned firm, but it's a local state-owned firm, and I think it's got private interests in it. So it's not really going to be defended by the Beijing. It'll be defended, if anything, by the Guangdong government or the Shenzhen government, both of which have, 10 or 15% annual decreases in revenue from the collapse of land sales. So they're not really going to be interested in bailing out Shenzhen Metro. So then that's going to affect a lot of other people. And, eventually, remember in the 90s, with the SOE restructuring, 60 million people were made unemployed. That was a huge number, and they never really got their jobs back. We're starting to see that kind of contagion in terms of layoffs throughout the economy, but it's just not being reported, and it's all being quietly buried away.
How difficult is it for Chinese property developers to raise money at the moment in this environment?
Well, it's near impossible. Because basically everybody knows that the money will be used to pay back previous debts, and there's not a lot of construction activity. So I don't think a lot of people, I met a developer here in Hong Kong with mainland assets, and they were sort of saying, well, we're just trying to figure out when to sell. So I don't see a lot of capital raising occurring. Certainly with the international markets, I don't see a lot of that going on.
Do you think there's any end in sight for these property market troubles? Because it feels as if it's been circling the drain for an awfully long time now.
It has been circling the drain for a long time. Even since the construction boom 15 years ago when I used to run around China, I kept thinking, what's the demand for all this? You've had something like a $14 trillion drop in valuations, at least for the property market as a whole. Now, at some point, they'll get down to a level from, the peak was 1.6 trillion billion square meters of construction around 2020, and they have to get down to somewhere like 500 or 600 million square meters, but nobody really knows what the bottom is. But, by 2026, you could see the decline slowing down, but we're still seeing a 14% annual drop in investment by the property sector, which is pretty significant.
Well, I said I'd like to circle back to the social unrest question. This feels like a good time to do it because, of course, the property market very closely linked to consumption, consumer sentiments, personal wealth as well. If things do start to get worse following a banker default, what do you anticipate is going to happen?
Well, Beijing so far, as I said, has steered clear and doesn't believe that there's that risk. Otherwise, they would have stepped in. I was told that to bail out Shenzhen Metro, the Shenzhen government cut the salaries of its workers in order to save cash for the bailouts. So that's an example in one of China's wealthier cities. Obviously, if you got laid off by a state firm and you owned your apartment for 20 years, you had a good 10 years of gains, so you're still in the money on those. So certain parts of the country, their attitude is, okay, it's bad, but, we'll live. But, these layoffs are in across different provinces, and they can be buried within the local governments and their security forces. So up to a certain point, you can have significant pain that's just not being reported or dealt with by Beijing.
So we've been talking a lot today and on other shows previously about the bright hope offered by AI investment and how China's tech sector is performing. Would you expect that this might be a way out of the mess?
Well, certainly there are some great companies that have been developed under the very, very intensive state investment schemes and EVs and DeepSeek and so forth. However, according to the official data, Tech as a whole is about 9 or 10% of GDP, and property at its peak was 31% of GDP, including infrastructure. So it's questionable how much that can replace that. And the second issue is, let's say you have this booming EV sector, which you do. First of all, you've wasted a lot of money to get there. The estimate is around $200 or $300 billion. And second of all, that depends on exports. And you could have increases in Africa and Southeast Asia, but the big markets in the US and Europe are obviously getting more protectionist. So I'm skeptical that they're going to be able to export the way Japan did basically in the 90s. And Japan also was able to move capital to the United States and build auto factories. That's not going to happen under the current regime in the United States. So it's pretty tough to see how tech can really replace property. I mean, the main thing is you've got to start essentially defunding the state sector and letting private companies start to develop their own internal markets and rebalance to the consumer, which is not happening.
Well, if it's tough to see how tech can replace property, I've got an even tougher proposition for you. I mean, Chinese policymakers have long been wanting to rebalance the economy more heavily favoured in terms of domestic consumption. Can that be achieved as long as the property market is in such a parlous state?
Well, that's the first problem. I mean, there's a shortage of money and tax revenue for local governments. And the second problem is you're sitting there in Beijing and you've got all these elites who are tied up to the state system. You've got huge ministries, you've got huge state banks, and you tell them, look, we're going to start defunding you. Imagine how that would go over. It's not going to go over well. So, and I think Xi Jinping believes in state-directed investment. So he's perfectly happy to double down on funding chips and AI and other forms of technology. So I don't see any chance of that happening, even though the Central Economic Work Report claimed that they were going to try to rebalance. I just see no evidence of it yet.
All right, Andrew Collier, Senior Fellow at Harvard Kennedy School. Thanks so much for joining us today. Now, in other news, former TikTok CEO Kevin Mayer says he's confident the US majority ownership plan for the social media platform will unfold seamlessly. Mayer also told us it's a show of faith in Oracle, which is among the companies leading the joint venture.
I think it works operationally. I think having a company like Oracle, a very trusted company run by Larry Ellison, who's a trustworthy figure, obviously, being in the center, in charge of looking after and securing that U.S. data, that's crucial. And I think they're licensing the algorithm from China, so ByteDance will still own the code, but I do think this license will take another instance of the algorithm, all the code, put on Oracle servers, and then trained on the U.S. data that Oracle alone has access to. So I think it's going to end up having a vastly different feed and sort of content algorithm than you'll see around the world. So I think that will work. And I think that ByteDance will, is now below 20% ownership, 19.9% ownership. That's a substantial difference from status quo. And I do think that ByteDance has an operational role commercializing TikTok, selling ads, making sure e-commerce works and all the other commercialization factors. But really, it will be run by a U.S. board and it'll be a separate U.S. company.
Kevin,
it works.
It works, but the proof is in the pudding as to whether the algorithm is as powerful. How do you see, as someone who's in charge of content development and wanting to get your content out there in a marketing capacity, do you have confidence that it will be as good without ByteDance as heavily involved?
Well, I think it probably will be. There's a lot of intricacies and a lot of AI, right? That's the word of the day, in that code. And I think that code base being kept intact is crucial. I think had they tried to recreate a new algorithm from scratch because of security concerns, that would have been exceedingly difficult. That has taken years and years and thousands of engineers in China to develop this very sophisticated AI recommendation engine. So the fact that they'll have access to that, it will remain interoperable with all the other TikTok instances around the world. I think that matters quite a bit. And I think just retraining that same code base, that same algorithm with US data should provide a very robust solution. I think it will be seamless.
That's former TikTok CEO Kevin Mayer speaking there with Bloomberg's Caroline Hyde. Up next, Seven & I's US arm faces pressure from the top to shape up in 2026 as it gears up for an IPO. We'll have the details next. This is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything. Welcome back. You're watching Insight. 7-Eleven operator 7&I is pressing its U.S. convenience stores business to deliver a faster turnaround as the retailer seeks a public listing of the unit. For more, let's get to Bloomberg senior editor Reed Stevenson in Tokyo. So, Reed, tell us, Stephen Dacus wants improved performance ahead of this potential IPO. What does improved performance look like? What's he chasing here?
Yeah, indeed. I mean, the whole point here is to try and unlock value ahead of, offering a listing or new shares to investors. Essentially, what he's trying to do is improve margins as well as sales in an environment that's, pretty tough for all retailers in the U.S. Inflation is really hitting people's wallets. And of course, for a while, 7&I had chased a scale there with the acquisition of Speedway and Sunoco gasoline stations. But now he's really sort of pushing this message where they're trying to do several things. Number one is improving, the mix of private label brands, which have higher profit margins. Two is larger format stores, focusing on food as well. Three, cutting costs. And then finally, many of these outlets are in fact gasoline stations or petrol stations, and so essentially try to cut out costs because they're effectively buying at the end of the downstream market, trying to go upstream and capture some of the profits there as well. And so that's really just a message he's putting forth, to investors as well as probably the company itself as it operates in the U.S.
So in terms of pursuing some of those goals, how challenging is it in the current economic environment?
Yeah, it's no easy feat. I mean, you have competition coming from really all ends of the spectrum. When you're talking about 7-Eleven outlets, a lot of the focus is now shifting toward food. That means you're competing for essentially against fast food outlets there. And then on the other end, a lot of consumers are going to like dollar stores and opting to buy goods there. And so really it's about delivering convenience but also value as well as food. Something that obviously 7&I has done extremely well here in Japan, and what they're really trying to do is do that in the U.S. as well.
So can you tell us a little bit about the timeline for this potential IPO and any factors that could either bring that forward or push it back?
Yeah, so the second half of 2026 is what the company has indicated. Now, when we spoke with Stephen Dacus, he said they're not on a schedule and they want to see improvements in the performance first before they embark on an initial public offering. So we're just going to have to see how things play out for the company in North America.
All right, Bloomberg senior editor Reed Stevenson there in Tokyo. Let's take a look at how U.S. futures are tracking at the moment. We are, of course, seeing somewhat of a decent rally in the Asia-Pacific at the moment. So we've got U.S. futures currently, if you just bear with me for a moment. E-mini futures are looking a little bit better to the tune of about 0.25%. NASDAQ futures also pointing higher as well. Dollar weakness continues to emerge as a theme after we did have the Fed ease very much as expected at its meeting. January meeting very much up in the air, and of course that could be clouded somewhat by another potential government shutdown at the end of the month, which might lead to some more of those Swiss cheese data reports that we were talking about last week. However, for the moment, looks like we're heading towards a Santa Claus rally in the US as well. Well, Amazon Robotics says it's preparing its workforce for how tech and AI will impact hiring and career paths. Its chief technologist told Bloomberg that the company is already using physical AI and robotics at scale to help employees.
When we think about robotics, and you think robotics and physical AI at scale, when you ship millions and millions every day, just 1% of exception handling can kind of eat your lunch. So any tools that we have to help us with the exception handling, maybe one of the systems is not picking up a particular object right. So that learning needs to be propagated manipulation systems, or maybe a mobility system is having some bottlenecks because of the way the inventory is stored inside of the building. People have really good skills of critical reasoning and critical thinking and using common sense. So tools that allow them to understand the situation better, perceive their environment better through the use of robotics, and then have truly physical agents to help with that in concert with our employees is going to allow us to deal with all the exceptions that we see, every day, especially at peak.
Hey, Ty, just got about a minute left here, and I know we've talked about this with you before, and I think it's a fair question. You guys have addressed it about the impact on your workforce, and I wonder if it's smarter to think about maybe not that what you guys are doing in terms of automation, or other companies for that matter, that it means doing away with workers, but maybe it means that you will have to hire fewer workers in the future. Is that fair?
Well, first of all, Carol, any question you ask is fair. So I think it is fair to always ask those questions, and we should always kind of, have the mindset of people first, and which we do inside of Amazon. So what are we doing specifically for our employees? And I'm really proud of this. We're building better machines for them. We're listening to them. We're iterating on our designs. We're rolling out a tool set for them to use that every day at scale, a scale that's almost unimaginable when it comes to what we've done inside of robotics. We're upskilling them. We have a $2.5 billion pledge that we call Future Ready to prepare 50 million people for how technology will impact and change not only the nature of work, but also what their everyday lives. And we're also creating a safer environment with our robotics, eliminating the repetitive, the menial, the mundane, allowing machines to do the heavy lifting and the repetitive actions, and allowing people to work with them in order to use this beautiful thing here.
Still to come, we'll take a deep dive into India's property markets as investments hit a fresh record. JLL and Anand Rathi Private Wealth Management are going to join us for that discussion next. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back. You're watching Insight. The Indian government has pushed through far-reaching policy reforms in the final parliamentary session of the year, and that's as Prime Minister Narendra Modi seeks to bolster the economy in the face of trade headwinds. For more, let's bring in South Asia political reporter Swati Gupta. So, Swati, we've heard about some of these changes and the involves of loosening up the nuclear industry, the insurance industry as well. Can you give us the details on some of the announcements and others?
Yeah, so India had its parliament session this month, and they pushed through quite a few bills, including the one which opens up the nuclear sector to private firms and removing some of the liability clauses that it has had for years, which have made it very difficult for investment to come through in that sector. And the second bill that they pushed through was allowing 100% foreign investment for insurance companies. So now global firms, which were earlier capped at 74%, can completely own an insurance company. So that will, both these things will allow hundreds of billions of dollars to flow into the Indian market and actually boost the economy, which is much needed at this point.
Yeah, so why the urgency? These are being pushed through in a very short time span.
So India has not had a very good start to the year. It is still in very protracted negotiations with the US on a trade deal, and it is right now under 50% tariffs, 25% of which is a penalty imposed by President Donald Trump for importing Russian oil. So this will lessen a little bit of the hurt that India is feeling. In addition, the government has also made a few other changes to its tax regulations, as well as reformed some of the labor codes that we have. So making things a little bit easier, improving the ease for doing business in India, and also removing a little bit of the burden on the taxpayer.
Can you give us an update on the progress, if any, on trade talks with the United States? And in the absence of that, India has signed a number of other free trade agreements this year, right?
Yeah, so actually there is not a really big update on the US-India trade talks. They are ongoing, as are the trade talks with the European Union. But India has been pushing for a little bit of diversification. So they are right now, they've just signed a trade deal with Oman, and there is a deal with New Zealand that is going to be announced soon. But at the moment, it doesn't look like we're going to have a trade deal with the US in this year. So this will definitely now slip into the new year.
All right, South Asia political reporter Swati Gupta there. Let's take a look at how Indian markets are tracking, broadly following the risk-on sentiment that we're seeing across the Asia-Pacific at the moment. We've got the benchmark rising in early trade. Gains in private banks and Infosys. We see the bank index better by about 0.5%, but Infosys is leading the gains in the Nifty 50, up more than 2%. So we've got almost all of the stocks on the index are better at the moment. Well, India's stock market has become one of the calmest in the world, prompting a rethink of strategies among players in the derivative space. Bloomberg's Savio Shetty joins us with more from Mumbai. So, Savio, why has India's stock market remained relatively stable? And this is in spite of the heightened geopolitical tensions and also, as Swati was saying, a long delay on this US trade deal.
Hi, Paul. Thank you for having me. This is on regards of two things. One is the amount of FII selling that we've had this year. Foreign investors have sold, but that has been almost seamlessly swallowed in by domestic investors. We've had almost $17 billion sold by FIIs, and domestic investors have pumped in almost $80 billion. India doesn't seem to be the market anymore that gets affected by big, strong news. We've had geopolitical tensions. We've also had the ongoing trade deal, but yet it seems that we don't move more than 1.5% on either side. The current streak is also quite long. I mean, it's almost the longest since 2023. A part of it has also got to do with the number of option contracts that have been culled. Weekly contracts by the regulator have been culled, and currently we have only 2 of them in the market. So I think it's a combination of like some kind of maturity in the market and a lot of option contracts being culled.
So which trading strategies have been most affected by these market conditions, and how are traders repositioning in response?
Yes, that's an excellent question. Ideally, any strategy that has to do with selling of volatility, because volatility is already so suppressed, would lead to dire losses. So you would, I mean, previously you would have volatility at 13-14%, you would have a short seller coming and selling in. With volatility at 10 and at times even 9.5, most of the volatility selling strategies have now gone out of the window. We may see, I mean, in our talks with experts, we may see a return of trend following strategies where you have a sustained trend for more than 2-3 months that can take place. But in general, people are moving more into options buying rather than option selling, because in options buying, if you have low volatility, that tends to make it a very profitable entry point.
Well, we've seen a regulatory crackdown from SEBI. How has that impacted options trading volume?
There has been a huge impact. We've had options daily average turnover in notional falling by almost 35%. This is the first time it's ever happened since data that goes back to 2017. It's clear that India's option market is no longer what it was, say, a couple of years ago, or even for that matter last year. But we've seen some kind of pickup in the last 3 to 4 months. All of this hinges now on what happens to weekly options contract. We've had the regulators saying that there will be a consultation paper that comes in soon. The drift seems to be that weekly options are here to stay for now, but only time will say what happens in that regard.
All right, Bloomberg's India Equities option reporter Savio Shetty there. A new report from JLL says India's real estate sector is expected to reach an unprecedented milestone in 2025, with institutional investment soaring to more than $10 billion. That is a second consecutive year of record performance. Domestic institutional investors make up more than half of the share, while private equity players fuel the momentum with a 30% contribution. Well, let's get some more on India's property investment outlook with JLL's head of India Capital Markets, Lata Pillai. Also joining us is Shanali Rawal, International Business Head at Anand Rathi Private Wealth Management. Lata, I'd like to start with you and talking about the report you just released. A lot of records broken. Can you just run us through some of the highlights, the things that stood out for you?
Hi, Paul. Thank you for having me. I guess the fact that from the last 4 or 5 years, barring last year, I guess on an average, the investments, foreign investments or institutional investments into the country on real estate hovered around $4.5 to $5 billion. Last year broke the trend at around more than $8 billion. And this year, I think we've crossed it and reached $10.4 billion. And I think what is really interesting this year has been the emergence of the domestic institutional investment, which is more than 50% of the investments that has happened in the country. A few interesting highlights here would be the fact that bulk of the investment is in the form of equity and also in core assets. And office remains the dominant sector where the investment has really come in.
So office remains the most dominant sector. Can you tell us about how some of those other sectors are performing?
Always residential used to be the preferred sector that we saw investments coming into. Indian domestic residential business is a build-to-sale business, and you had a lot of investors looking at coming in for the development piece. You also had a bunch of public market issuances made by domestic developers, which actually increased the participation on the QIP side. And last year, that's what we saw a lot of it happening. This year, interestingly, there was takers for the office REIT stock, which is basically the public market platform for office assets. And this was what was really found a lot of investment interest. The other sector which saw interest would be the retail side. Again, there was a platform on a REIT platform on retail assets, and one saw participation in that asset class as well. The other one which finds a lot of favor is the logistics piece. Traditionally, the logistics piece has seen a lot of interest from foreign investors as well as in this particular space. And interestingly, on a platform basis, the largest investment that happened this year was on a data center platform, which was put together by a couple of very large international investors and a very large player in the sector in the country.
Shanali, I want to get to you as well and just get your view on how India's real estate market as a sector has performed this year compared to the rest of the market.
So with the real estate, there's always more of a concentrated rally that we end up seeing. Essentially, it's more, as Lata was mentioning, on the commercial side. So the rental yields play a very big role on the real estate investment as an investment. And on the residential side, you don't see too much of rental yield. It's more 6 to 8% on the commercial. And that's where, there has been some amount of uptake with the GCCs coming in and the logistics and the warehousing and the institutional investors showing interest more on the commercial space. You saw India's top 8 cities having about 16.3 million square feet of net office space absorption in the Q3 of 2025, and that's a 35% year-on-year growth. So what we look at in this particular year, Compared to the equity markets, the commercial real estate has definitely done a little bit better. But this is also a trend of the real estate market. There are pockets of very high returns, and then there are also pockets of very low return. So it's a lot more volatile. So if an investor really wants to unlock this return, you have to get the right instrument as to which part of the commercial. Getting that right is quite key on the real estate sector, and which is contrary to maybe when we're looking at the Indian equity markets. Indian equity markets is more broad-based and more consistent, dependent a lot more on the fundamentals. If you see 5-year cycles of the Nifty comparing it to the realty index, you see the Nifty ending up giving double-digit returns on almost all sectors on all time frames of 5 years that we have. Whereas the realty index, there are certain time frames that it would do negative and highly negative, and there are certain time frames that you have got highly positive. So it's a lot more volatile is what I would say.
Yeah, well, as Lata was saying in the JLL report, I mean, we've had back-to-back years of consecutive records now for domestic investment. Considering how this sort of plays to the broader growth narrative in India, do you see that trend continuing? Can you tell us about your outlook for real estate?
So our outlook for real estate remains that it would be in concentrated segments of commercial and office spaces. The big cities, when we are looking at residential real estate, that would have muted growth because there is demand in the smaller ticket size projects, but you don't see a lot of them coming in the big cities. The focus is more on the bigger ticket sizes in the larger cities, and that we think that has reached its saturation point. There is a lot more supply than what is the demand, but the office spaces in tier 2 cities and commercial, that's where the opportunity lies, and it's more concentrated in those. There would be in tier 2, tier 3 cities in the residential space, but again, very, very pocket dependent. So overall outlook for real estate would be more on the commercial side and the focus on the commercial segment. So it's segment specific. You could see some.
Lata, I want to take it back to you because you did mention the enthusiasm from domestic investors, but how much interest is there from foreign investors in this sector, and are there barriers to entry?
No, Paul. I guess, while 52%, if you look at it as a percentage terms, it looks like domestic seems to be taking the lead. But I think there has been a substantial growth of almost 18 to 20%, even on the foreign capital that came into real estate. So, in fact, one feels particularly optimistic that, the interest that we see is, and, one thing which I would want to mention here is that couple of things. When an investor comes into the country and make investments in any sector, they are looking for reasonable exit options. And that is something which has been provided very interestingly by the REIT space, especially on the commercial real estate piece. Many investors who have been making investments here have been able to get profitable exits and been able to do substantial sizes of exits from the market because of that. And I think that is what is fueling the continued optimism of foreign investments. And last year, if you look at 2025, almost 66% of these investments of $10.5 billion has happened in the last 2 quarters. That is after we had certain political uncertainties, certain macroeconomic headwinds. I think there was a slowing down in the first 2 quarters, which really kind of the last 2 quarters have really seen that being abated and investments coming through. Few other things which I would like to mention here is the development of the REIT platform, has really helped in building the confidence of investors, both domestic and otherwise. Recently, there was a regulatory change that was made that actually classified REIT investments as equity. What it really does is higher market participation in this particular asset class. You will see, index funds also being able to invest into this particular asset class. This is an asset class which allows investors to invest into commercial real estate, as Sonali mentioned, with the liquidity that usually an equity market provides. And that is really what has attracted the interest. And you have found a lot of takers for this. And as far as the other sectors, sorry.
I was just wanting to bring Sonali in on that point as well, because there are plenty of opportunities for foreign investors to get involved in the Indian growth story. But this is something we've been raising a lot on Bloomberg recently. We have a chart to show it as well. Just the amount of foreign capital outflows, particularly in the last quarter of 2025. But as you were saying, the longer-term narrative around India's growth is a solid one. Do you see foreign investors making a return next year, particularly as the US dollar softens?
So when it comes to the foreign institutional investors, there's a lot of factors that end up playing out, and I think one of the biggest ones remains geopolitical uncertainty, and I think the big factor of the return will be the US-India trade deal. That is the single largest risk, I think, that we have for the equity markets or the India growth story, because all of the domestic factors are there. There is domestic growth that is taking place. There are consumption measures that have been put in. There you are seeing domestic institutional investors coming in, investor behavior completely changing, looking at growth and not just fixed income assets, which used to be in the past. So if you have to look at it, all of the ingredients are there for the growth story to unfold. What lies is the external factor of coming into a conclusion. It's the uncertainty of what's going to happen and how it's going to play out is what is been spooking the investors. And of course, with growth coming in the US as well, having good yields there, that has also obviously led to some amount of capital continuing to go back. This 2025 was, as earlier was mentioned as well by Mr. Shetty, that we've seen $17 billion go out, but the domestic growth of $80 billion has really led to a lot of the equity markets staying buoyant. 2026 could be a year of reversal, but again, a full 100% or a 90% conviction isn't there until we get some amount of clarity on the US-India trade deal.
Okay. Lata, just before we let you go, I'm curious, was there anything in your report about investment in data centers in India?
Yes, of course. I guess that is something which has caught the interest across the world, and India is not to be left behind here. As I mentioned, this year as well, there were large investments made by an Asian fund. Most of the data centers are development of data centers because there aren't too many assets which are built which can be traded. So it is primarily in the development sector and, the development side. And you have investments and a platform, as I mentioned earlier, of almost 11 billion that has been set up to build data centers in different geographies across the country. So data centers remain a big area of interest, both by domestic as well as foreign investors. More so foreign investors, I would like to say.
All right, Lata Pillai of JLL and Sonali Rawal of Anand Rathi Private Wealth Management. Thank you both so much for joining us. We have more ahead. This is Bloomberg.
this is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back. You're watching Insight. Here are some of the stories we're following. Cambodian media reports say Thailand's army shelled Cambodian territory on Sunday, including strikes on a temple. Earlier, Thai media quoted the military saying F-16 fighter jets launched Friday night bombing raids on a Cambodian casino and a bridge being used as an ammunition supply route. The reported attacks come ahead of an ASEAN foreign ministers meeting on Monday. China has criticized the latest U.S. weapons sale to Taiwan, saying it raises the chances of conflict between the two superpowers. The U.S. last week approved arms sales worth up to $11 billion, including missiles, drones, and artillery systems. China's foreign ministry says arming Taiwan puts the island's people on a powder keg. The U.S. launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 U.S. soldiers. U.S. Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defense Secretary Pete Hegseth posted on X, saying the move does not mark the beginning of a war, but is a declaration of vengeance. Bloomberg's been told the U.S. is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. A source says the Bella 1 tanker is a Panamanian-flagged vessel sanctioned by the United States. The attempted interdiction follows the boarding of the Century's supertanker early on Saturday and the skipper on December the 10th. All right, amid all this geopolitical tension, we are seeing tailwinds for all the commodities you see on the board there. We've got Brent above $61 a barrel, gold and silver both hitting fresh records, silver up 3 1/3%. Before we go, here's a look at tomorrow's show. We're going to get the macro and markets outlook for 2026 with BCA Research Chief EM Strategist Arthur Budagayan with a focus on trade tensions between the US and China. That's it for Insight. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa rally. The US pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And Axios reports that Israel's warning the Trump administration over Iran's missile exercise, saying it could be preparing for a strike on Israel. We're live in Jerusalem with the details. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basechi. A very good morning to you. We are nearly there, and we actually have traders pretty optimistic towards the end of the year. Taking a look at how these markets are faring this morning, and we have futures pointing higher stateside and already seeing gains in the Asia session. They are lower futures in Europe, however, but flip cross asset, and we've got gold and silver at record highs this morning on the geopolitical tensions, oil up 2 on the Venezuela blockade. And if we just take a look as well at the 10-year US Treasury yield, 4.16 is where we are right now, ahead of the US growth data coming out later on this week. And really, though, JGB yields are where you want to be focusing, so we'll bring you more in that in just a moment. I mentioned that oil's higher on the Venezuela story. Let's take a closer look at the big picture in 2025, because actually you've got crude set for its biggest drop since 2017. Peace in Ukraine, a hopeful possibility, and the oversupply concerns dominating as well. So we're perhaps looking more for a floor than a ceiling when it comes to the oil price. Largest annual drop since 2018 as per that chart. Now let's get over to Asia for a look at how markets there are faring. We can go to Min Min Lo, who's waiting for us in our Hong Kong studio. Min Min.
Hey Lizzie, we are firmly in the green in the Asia session here, and certainly it seems like we could be set up for a center rally after all. After the volatility that we saw last week, we did see dip buyers come in on Friday night in the US session to stabilize the tech sector, and certainly over here in Asia, it seems like the tech sector is driving the stocks up, especially on the Kospi, the TAIEX, the Nikkei as well, up by close to 2%, and that's really being supported by the yen as well. We did see yen continuing to weaken after the BOJ rate hike last week. Investors not convinced with Ueda's commentaries that he's going to continue hiking rates fast enough. And some analysts are saying that 160 on dollar yen could be in sight as futures contracts point to more demand for shorting the yen. And you can see the yields here also rising across the curve. The 2-year yield is now at the highest since 1997, and that really doesn't bode well for an upcoming auction of the 2-year bonds on Christmas Day. So we'll be keeping an eye on that. Lizzie.
Okay, Min Min, good to see you. Thank you so much. Min Min Lo in Hong Kong there. Now, for more on the markets, Abdul Qadir Hussain, MD for Fixed Income Asset Management over at Arkham Capital, I'm pleased to say, joins me now. Good morning to you, Abdul. I want to start with your outlook for 2026, because it looks like you're cautiously optimistic, at least when it comes to the US economy. What are the biggest risks into the next year?
Yeah, I think the biggest risk clearly, I think, is the market sort of underpricing inflationary risks. I think that most people are quite complacent that the Fed will cut at least once, if not twice, next year, and that inflation is well under control. I think if that narrative somehow changes and you start seeing inflation reaccelerating, that could cause significant volatility not only in rates markets but also overall in risk markets. So I think that's probably our biggest thing that we're watching out for. Obviously, some of that is also going to be dependent on what happens with the Fed, and if you get a dovish Fed and how that sort of plays into term premiums. So the rates market is probably the main area we're looking at.
But you're not worried about Fed independence, are you?
No, I don't think we are. I think, for us to think that the Fed is going to do something unconventional like, Turkey a couple of years ago, I think that's clearly not going to happen. If the data is pointing towards, tightening monetary policy, I think the Fed is going to do that. It might do it with a lag. It might do it, in a more dovish manner, but I don't think they would go unconventional. So I don't think that, Fed independence is an issue at this point.
Okay, and when do you expect artificial intelligence to deliver serious productivity gains? And do you expect that to come with job losses? How much equity volatility do you expect is needed to get there?
Yeah, I mean, I think that, that AI, it has, several areas where it can impact, I think, next year. Obviously, equity valuations, and if you do get any kind of correction on that, is going to be an issue. Productivity and sort of how it feeds into inflation. And the third area where it, I think, has a big impact, at least as far as fixed income is concerned, is the supply. You have significant debt supply, potentially coming out of, not only out of direct AI, tech companies, but also out of power utilities that are building out infrastructure to meet the demand for power. So if you get significant issuance out of sort of the AI sector, that's going to affect some of the crossover demand that's going to come into the EM space and spreads in EM. So I think we're looking out at multiple areas. Obviously, if you do get that correction in equity valuations, that's also going to potentially cause rising spreads in the EM space.
Okay, well, let's turn there next, specifically to Saudi Arabia, because it's been one of the busiest issuers in emerging markets this year. You've got oil prices softening, as we were just discussing, also budget pressures mounting. How much sovereign borrowing do you actually expect in 2026?
Yeah, so in 25, they had about 67 billion across the entire spectrum. So sovereigns had about 20 billion, and the rest of it came from banks and GREs and corporates. I think we're going to get at least as much, if not, 5 to 10% more across all of those sectors. So somewhere between 20 to 25 billion directly from the sovereign, and potentially somewhere between 45 to 50 billion across the rest of the universe. So it is, it was almost 45% of total issuance out of the MENA region in 25, and I think it's going to be, at least that much in 2026.
And beyond the sovereign, how active do you expect the Saudi Public Investment Fund and its portfolio companies to be in debt markets next year?
Yeah, I mean, I think, you know, the sovereign is obviously trying to get the companies to fund themselves and to come to the markets themselves. And you saw that particularly in the banking sector in 25. You're probably going to get, you know, issuance again across PIF, across Aramco, potentially across Saudi electricity, and plus the sovereign. The question obviously is going to be how much does the market take before it you know, starts sort of really widening spreads, and that's where, you know, my concern about a lot of issuance in DM markets comes from, because one of the sources of demand in 25, which caused spreads to remain tight, with crossover investors from DM. And if that happens to go away, then that could, you know, be one of the headwinds for a lot of Saudi issuance.
Well, yeah, are you seeing signs that the market's getting concerned about how much Saudi paper's coming through?
Well, I mean, 25 you didn't, because like you said, oil prices actually, you know, fell significantly in 25, and yet Saudi spreads, even despite the record issuance, tightened significantly. But that was primarily due to huge inflows into EM ETFs, in demand from Asia, crossover demand, and also Qatar and Kuwait exiting the MB, which sort of directed some more flows into Saudi. I think we're still confident about EM inflows inflows into EM ETFs in 2026, but a little bit less confident about crossover demand, and you know, potentially you do have UAE potentially exiting the index, so that could also cause some flows. But you know, and also with JGB yields, which you mentioned earlier, going higher, Asian demand potentially also could be at risk. So if you do get weakening in Asian demand and you do get weakening in crossover demand, then you could see some spread widening if Saudi issues as much as it did in 2025.
All right, great to get your take. Abdul Qadir Hussain, Fixed Income Asset Management Managing Director over at Arkham Capital. We thank you so much. Now, to a look at some of our other stories we're following this morning. President Trump's top economic advisor says that a Supreme Court ruling against the administration's tariffs regime would create a major administrative problem. Judges are currently weighing a legal challenge to the tariffs that Trump has imposed on dozens of nations. Kevin Hassett says that the challenges of refunding the levies should deter the court from ruling that way.
We really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Meanwhile, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General Todd Blanche says that it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Coming up, we turn to White House geopolitics. U.S. President Donald Trump intensifying a blockade on Venezuela as the U.S. is said to be pursuing a third oil tanker. The details next. This is Bloomberg.
bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, oil prices are in focus today after Bloomberg reported that the US is still pursuing a third oil tanker near Venezuela. President Trump has been intensifying an oil blockade on Nicolas Maduro's government. And for more, we can bring in Bloomberg's Stephen Stapczynski. Stephen, good morning. Just bring us the latest on the scale of the blockade and how much it's actually choking off oil. How much pressure is this putting on Maduro's government?
Well, this is putting a lot more pressure than it was just before. So for those just catching up, the Trump administration had basically taken a sanctioned oil tanker a bit back earlier this month, and that was seen as their operation. The blockade would be for sanctioned oil tankers. Not all of Venezuela's oil is sent on sanctioned tankers. There are a number of dark fleet vessels that have not been sanctioned by the U.S. Now, over the weekend, this has changed. The Trump administration boarded a vessel that was not sanctioned, and now they're pursuing another one that hasn't even loaded any crude yet. So this is certainly them trying to put a maximum pressure on companies to not be able to at least export or take any of Venezuela's crude that is sanctioned by the United States. Now, the small caveat, of course, is that Chevron has a waiver to allow them to export some of it. So it doesn't affect everything, but it is going to affect essentially most of it.
Okay, so where does it leave oil prices in the context of oversupply pressures as the bigger picture?
You know, Venezuela, it's not an enormous producer in the grand scheme of things. They have very large reserves, but they're only producing less than 1% of global demand. So if the Trump administration were to bring all of their exports down to zero, yes, you would probably see a knee-jerk reaction where you would see an increase in prices. People are trading on sentiment. Maybe there will be a mixed match between what China has to buy and they have to find other supplies elsewhere. But in the grand scheme of things, it doesn't really affect the global supply balance because the market is facing quite a large oversupply going into 2026. Demand hasn't really increased more than that supply is being added to the market. OPEC Plus is adding barrels. U.S. supply is very strong. There are other countries as well adding more. And so when you look at the larger supply-demand balance, even if you remove these barrels, you might see an increase in prices for a few days, but we are going to be trending likely downward, according to banks and analysts, just because there's so much more supply than there is demand, especially going into next year.
Okay, so Brent at $60 a barrel right now, but Venezuela, as you say, not the biggest player in terms of the broader oil market. But this, of course, hugely significant for the Venezuelan economy. Where does the pressure leave the Venezuelan economy?
I mean, yes, so that's the bigger impact, right? This is the Trump administration putting maximum pressure on the Venezuelan leadership. This is them likely trying to push for regime change. This is hurting them where they need the profits the most, and that's oil. And that's one of the ways that they were able to get real currency, real dollars, real anything to try to prop up their economy. But without this, their most valuable export, they're in big trouble. So where does that put them? What does that leave the current government? And this is going to put them on the back foot, especially if the Trump administration continues with this pressure, if they look at potential military strikes. This is them really tightening the noose around the current government.
All right, Stephen, thank you so much for that latest update. Stephen Stopczynski there, we thank you. Coming up on the programme, President Trump expands the US travel ban, adding new countries and tightening entry restrictions. We'll bring you that story next. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's 5:20 a.m. Well, President Trump is expanding his travel ban, adding new countries to a growing list of nations facing full or partial entry restrictions. The White House says that the move is aimed at tightening national security and migration controls too. For more, we're joined by Bloomberg's Anthony Osei-Brown. Anthony, just walk us through how the Trump administration's expanded this travel ban. What are the new restrictions here?
Yeah, so basically the new restrictions are around, they are basically to partial and full travel bans. And the partial bans include include the immigrant and non-immigrant visas. And then there are full family unification visas that have gone on the ban. So it's quite extensive now. A lot of nationals may not be able to travel to the U.S. under these new travel restrictions, and it's far more expensive than the 2017 visa ban. From 7 countries in the 2017-2022 visa ban, we now have 39 countries fully included in the travel bans.
And to what extent was this inevitable, expected, and how much is it the product of recent events?
Well, I think it's always been expected. Trump had hinted several times that he's looking at this direction. What he needed was just a trigger, and the trigger was the killing of the U.S. Marine by an Afghan national, and that just triggered his decision to expand the travel ban. So it was inevitable. People knew that this was coming, and what's the excuse? They just needed an excuse to make it happen, and the excuse was the killing of the U.S. Marine in Washington, D.C., and I just gave him a reason to expand the travel ban and included several countries, which is now based on national security concerns. His main argument that these countries have poor security visa vetting processes, and so it makes it likely that what's it called, people with bad security intentions could easily get into the United States. So he's going to use this as an excuse to get them out of the U.S.
And I say this only partly tongue-in-cheek. To what extent will it affect the World Cup?
Sadly, no. Not much, because most of the countries, like we have 26 countries in this travel ban, coming from African countries. These are countries that would naturally not have had much opportunity to go and watch the World Cup because most of them are poorer. They would rather watch the World Cup from their home countries on televisions and everything. Yeah, but it takes some shine away from the World Cup because people will not feel the enthusiasm for watching the World Cup will be lowered by the fact that these countries are banned from going to the World Cup physically to watch it. Not that many of them would have gone there anyway to watch these countries, but yeah, it takes away from the celebration of the World Cup, which is supposed to be a global event where everybody is included. But then it's going to the World Cup is now going to take place under the shadow of certain number of countries banned from entering the US. So that's to the extent it will affect it. But in terms of attendance, I think most of these people from these countries would not have attended the World Cup anyway, physically in the US, or possibly the US would not even have given them visas to attend. So, yeah, but yeah, it just casts a shadow over the whole World Cup event.
Okay, Anthony, good to see you. Bloomberg's Anthony Osei-Brown there. We thank you for that update on the travel ban. Now, for a look at some of the other stories we're following this morning, Nigeria has secured a $500 million loan from the World Bank to boost lending to small and medium-sized businesses. The facility will be managed by the Development Bank of Nigeria and includes credit guarantees to businesses considered too risky. The World Bank says that the program could mobilize nearly $1.9 billion in private capital and support 250,000 firms. Elsewhere, Fitch has cut Gabon's credit rating deeper into junk territory, citing rising debt risks and mounting pressure on government finances. The ratings agency downgraded the nation's long-term foreign currency rating for the second time this year to CCC-. Fitch says it assumes no new support from the IMF in its base case scenario, citing obstacles including the government's expansionary fiscal policy and accumulation of external arrears. Well, checking in on these markets, we've got futures pointing higher stateside. Already we saw the gains in the Asia session. They continue with the MSCI Pacific Index up 0.9%. We had that rally in US stocks on Friday. European futures, however, pointing south. Euro Stoxx 50 futures down 0.2%. And if we flip over to your Treasury space, we have the 10-year yield up 2 basis points at 4.16. The 2-year up a basis point at 3.48, and at the long end, the 30-year at 4.84 right now, up 2 basis points. As we look ahead, of course, to that growth data stateside later on this week. Also, just checking in on oil. Of course, we were discussing the competing currents in the oil market with Stephen Stapczynski a moment ago. Brent now up 0.9% at $61 a barrel. We have the intensifying blockade on Venezuela. We also have hopes of a peace settlement for Ukraine, but the big picture really is the oversupply concerns, and that's set to be the dominant theme into 2026. But coming up on the program, we are going to take a look at Bitcoin. Bitcoin bracing for more swings with $23 billion in options set to expire, really putting pressure on the crypto markets on edge to end the year. Well, that conversation with Yoni Assia, founder and CEO of eToro, coming up next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa rally. The US, meanwhile, pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And Axios reports that Israel's warning the Trump administration over Iran's missile exercise, saying it could be preparing for a strike on Israel. We're live in Jerusalem with the details. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Jemana Versace. Welcome to the programme if you're just joining us. You've nearly made it. We're nearly at the end of the year and things are looking optimistic as we head towards it. We've got futures pointing higher stateside by 0.2% on S&P E-minis, lower here in Europe, down 0.2%, but already we're seeing gains in the Asia session of about 0.8%. We had that rally on Wall Street to end last week. Let's see if it continues into Monday's session. But flip the board over to the cross-asset picture, and you've got silver and gold at record highs on the geopolitics that we've just been discussing. Gold up at $4,405 a troy ounce, up more than 1.5% right now. We have oil up to $61 a barrel on Brent, as we've been discussing Trump intensifying that Venezuela blockade, and the 10-year US Treasury yield there not doing too much at 4.16 as things stand. Of course, we look out for that US growth data later in the week. But the real action in your bond space is happening over in Asia. So let's get over to Min Min Lo. She's in Hong Kong with a look at how Asian markets are faring. Min Min.
Hey, Lizzie, Asia markets largely in the green today, but we're watching the chip stocks in particular in China because Mothreads, that's a company that debuted on Shanghai Star Market a couple of weeks ago, had announced over the weekend at a company event that they are launching 2 new generation of chips, including an AI chip that is better than NVIDIA's Hopper series chips, the H100 and H200 chips, and is closing the gap with the current Blackwell series, and that is a significant development development for the domestic substitution theme in China, and it really eliminates the need for Chinese companies to buy from NVIDIA. And here you can see most of these chip-related stocks, SMIC up by 7%, Hua Hong as well up by 5%. But we're also watching 19 other companies that U.S. lawmakers are calling the Pentagon to list as Chinese military companies, and some of these companies are private companies, the likes of DeepSeek, for example, the robotics company Unitree. Here you can see Wuxi AppTech, that is a pharma company. Goshen is a lithium battery company. So pretty wide-ranging sectors that are affected. If Pentagon does list them as military companies, it means the Department of Defense won't be able to work with these companies, and it also sends a warning to other companies trying to collaborate with these companies. It is a blow to some of these companies if they get listed when it comes to any plans to expand overseas or work with overseas suppliers. Lizzie.
All right, Min Min, great to see you again. Thank you so much. Min Min Lo there, out of Hong Kong. Now, Bitcoin set to end the year lower despite a risk-on period for stocks and demand for havens like gold. Around $23 billion worth of contracts also set to expire on Friday, threatening to amplify the already elevated volatility in the crypto market. So we've got the perfect guest for you on this very subject, and that is Yoni Arcia, CEO and founder of eToro. Really good to see you, Yoni. Thanks for joining us this morning. You're very, very optimistic, it has to be said, when it comes to Bitcoin. People talk about the UAE as the Wall Street of crypto, but you go further. You've saying that Abu Dhabi is going to be the global hub. So just talk to us about how close we actually are to that.
Well, first of all, I think this was a very good year for the crypto, Bitcoin, blockchain narrative in general. What we're seeing right now is actually capital markets copying the crypto markets. With a very strong sentiment across tokenization, across a lot of people recently. I've just been to the Abu Dhabi Finance Week. People are talking about the tokenization of real estate, of private markets, of public markets. We've seen this year capital markets copying crypto markets, moving 24/5 and now moving 24/7. Abu Dhabi, the capital of capital, has always said that they wanted to take a significant part in that transition into the digital asset economy and the digital space, which we're definitely seeing scaling up across the world with more than 400 people now with digital assets. And now we're seeing also the US saying that they want to lead in crypto, that they want to see US capital markets moving on chain. So we're seeing a lot of trends right now happening from capital markets into crypto markets.
Well, hold on a minute, Yoni, because you've got Bitcoin heading for its worst quarter since 2022. It's set to end the year lower, as I say, despite the general risk attitude in stocks and the demand for havens like gold. I'm interested why you see it as the digital gold in that case.
Well, I've been in crypto since 2011. Luckily at eToro, we caught it very early on the intersection of finance and technology. So we actually looked at Bitcoin back at $5 per Bitcoin in 2011. Then we saw it rise to $1,200 and listed it on eToro back in 2013, just moments before it crushed back in, I'd say, the first crypto enter in 2014. So we've seen several cycles into the crypto markets, into Bitcoin price. I would generally say in capital markets, when everybody's expecting something, an asset to move in a certain direction, in many cases, sometimes it might surprise. So I think a lot of people are surprised while this the friendliest administration in the US to crypto, a lot of developments in the technology part of the crypto space and Bitcoin space with recent even tokenization on Bitcoin, to see price actually slide this year on Bitcoin and generally in crypto markets. People are talking about the cycles, of course, of the crypto markets. But my view on capital markets and Bitcoin markets is always a long-term view. I have no doubt that this is a correction eventually into higher prices in Bitcoin and into the transition of more than $100 trillion becoming digital assets over the next 20 years.
Okay, so a long-term view. You had Eric Trump telling Bitcoin Miner 2024 that you're going to see Bitcoin hitting $1 million. How long-term is that view? Is that sort of talk helping the market, or is it just fantasy?
I think it's helping the market. I don't think it's fantasy. I think if you look today at, and it's a great time to look at the market cap of gold and silver right now, hitting all-time high. I remember my grandfather talking to me about buying gold in the 70s for $50. It's coming up to $5,000, I think, with $4,400 right now. So that's 100 times on gold since the 70s. So I think deflationary assets like Bitcoin, like gold, are actually positioned to grow over time, basically reversing, or reversing the correlation to inflation, which has been growing in recent years, especially in COVID. So I do think Bitcoin represents digital gold. We need to remember gold has been with us for 5,000 years, powering a lot of the global commerce. Bitcoin is with us only about 15, 16 years, powering the digital economy of a new generation of Gen Y, and even more than that, Gen Zers and Gen Alpha, who are more crypto native. And I think people are looking at Bitcoin as their digital gold, but that's younger generations who are going to amass over $100 trillion in the next 20 years. But right now, the vast majority of assets in the world are still held with central banks, financial institutions, and people over their 70s.
All right, Yoni, we'll see where it goes in 2026. But for now, good to see you. Yoni Asia, founder and CEO of eToro there. Well, for more of these stories, looking into the intersection between wealth and power in the region, do sign up to our Mideast Money newsletter. You can find it on Bloomberg.com. Well, the United Arab Emirates state oil company ADNOC, meanwhile, has secured $11 billion in financing to develop massive offshore natural gas fields. We can go now to Bloomberg's Stephen Stapczynski for more. Stephen, hi again. Just talk us through why ADNOC's ramping up supply against what we've already discussed, a backdrop of looming supply gluts.
Yeah, I mean, I think ADNOC's view is they're not looking at the short-term sight on the market, right? The global liquefied natural gas market, global gas markets are facing a glut of supply that will push down prices, that will keep prices lower probably through the end of the decade. What ADNOC has strategically been doing is look at, okay, where can we find ways to get into this market like our neighbor Qatar? Qatar is the world's biggest exporter of liquefied natural gas. They've made a fortune doing it. They've locked in long-term contracts, and they've been doubling down on the fuel. They're looking to expand their capacity more than 50% over the next 5 years. Now, ADNOC is taking a very similar approach. They're looking at the future beyond oil, right? Oil, peak demand for oil, depending on who you ask, could happen this decade. Chinese demand as well isn't showing up. Prices are lower. Now that goes to natural gas. They see natural gas as the transition fuel. It's something that's going to backstop intermittent renewables. And they just actually pushed forward recently something called the Ruwais LNG project. It's one of their biggest gas export projects that they push forward, and they're also trying to find customers for that. At the same time, they want their economy to run on gas as well. So overall, they just see gas as the option at home, as also abroad, as they see it as the fastest growing fossil fuel, and that's why they're really kind of tripling down into it. We've been seeing.
Okay, so who's involved in the financing then? How's it going to be used?
Okay, so we've got quite a few folks involved. So first off, they've brought in Italy's Eni as well as Thailand's PTT to be among those who are arranging the financing. The banks include, of course, Abu Dhabi's Commercial Bank, Abu Dhabi Islamic Bank, and the Agricultural Bank of China. Those as well from abroad include Citigroup, Standard Chartered, and as well as UAE's largest lender, the Abu Dhabi Bank, and Emirates NBD rather. And now the way it's going to be used is for financing this project to produce 1.8 billion cubic feet of gas a day. Now that's going to backstop declining production elsewhere, and it's going to help them not only be able to keep their current levels, but also push forward with the expansion of LNG exports.
All right, Stephen, appreciate all your reporting this morning. Stephen Stapczynski there. Thank you so much. Well, we're going to stay in the Middle East next. Coming up, Israel warning the Trump administration of an Iranian missile exercise. We'll be live in Jerusalem with the details next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Axios is reporting Israel has warned the Trump administration that an Iranian Revolutionary Guard Corps missile exercise could be preparations for a strike on Israel. Prime Minister Benjamin Netanyahu is expected to travel to the US later this month to meet with President Trump. It comes as talks on the phase 2 of the Gaza peace process are slowly advancing, with US Secretary of State Marco Rubio saying that the next step should be naming a board of peace.
The next step here is announcing the board of peace, announcing the Palestinian technocratic group that will help provide daily governance. And then once that's in place, I think that will allow us to firm up the stabilization force, including how it's going to be paid for, what the rules of engagement are, what their role will be in demilitarization, and so forth.
Let's go now to Jerusalem and speak to Bloomberg's Dan Williams. Dan, good morning. We had Witkoff meeting with senior officials from Egypt, Turkey and Qatar to advance the talks on the second phase of this Gaza plan. What do we know about those talks?
Well, we have a reading from Witkoff himself, a statement he put out at the end of those talks, saying effectively that those powers, it's worth remembering that when it comes to Egypt and Qatar, these are long-term mediators between Israel and Hamas in Gaza. Turkey is on the periphery. It wants to be a stakeholder. That is resisted by Israel, given tensions with Ankara going back well over a decade. Nonetheless, these are 3 significant US-aligned powers in the region, and according to Witkoff, they basically affirmed that phase 1 had proceeded largely as planned. They affirmed the need to move to phase 2. These would seem to be baby steps. Hard to know exactly where this is going, but all parties we've spoken to have indicated that that will firm up, or is expected to be firmed up, toward the end of the month, when the Israeli Prime Minister Netanyahu is expected to also in South Florida at Mar-a-Lago with the US President Trump to discuss prospects for moving to that phase 2 of the Gaza plan.
And you'll be at that meeting in Mar-a-Lago. What's on the agenda?
Not much discussed publicly so far. In fact, officials are saying they're still trying to work that out. But it would appear, especially given from what we just heard from Rubio, that appointing the Board of Peace is really where all this begins and from which all of this flows. This would be the Supreme Oversight Committee, headed by Trump himself. We're told he's looking for other serving national heads of government or heads of state to be there alongside him. Underneath the board of peace would be a so-called executive board, potentially with the former British Prime Minister Blair, with Witkoff himself. Beneath that, a CEO, and beneath that, the Palestinian technocratic government, that interim government that would run day-to-day activities. So a quite complicated, stratified system in place there. However, when you ask officials involved in this whether there's some room for skepticism about whether this will go ahead, they point out that just 3 months ago, no one thought there could be a ceasefire in Gaza, a recovery of the last living hostages, in fact, a recovery of all dead hostages held by Hamas since the October 7th attack, with the exception of one body yet to be recovered. There was also a UN Security Council resolution endorsing the Trump plan just a couple months ago. So they look at these achievements as markers of how, with quiet, patience, and with hard work behind the scenes, more can be achieved. I think that will become clearer toward December 29th, when and if that meeting goes ahead. It's worth noting the White House is yet to formally invite Netanyahu, yet to formally announce the meeting will go ahead, but the Israelis are treating it as a given. So while much of the world is away on Christmas, New Year's vacations, there will be hard work being done at Mar-a-Lago to push ahead this Gaza plan.
Okay, well, we appreciate all your hard work. Bloomberg's Dan Williams, excellent coverage. We thank you so much. Now, for a look at other geopolitical stories we're following this morning. Israel's finance minister says that the Security Cabinet gave legal status or authorized 19 West Bank settlements. In total, he says the government has given legal status or authorized 69 West Bank settlements in the past 3 years. Meanwhile, the US launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defense Secretary Pete Hegseth posted on X saying that the move does not mark the beginning of a war, but is a declaration of vengeance. And US Special Envoy Steve Witkoff says the Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. He says discussions covered the existing 20-point peace plan, a US security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. Well, coming up on the programme, China's More Threads is unveiling a new generation chip lineup set to challenge developers' dependence on NVIDIA. The details next. This is Bloomberg.
Coming to you live from Kuala Lumpur, the whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
In Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Verdon in London, where it's 5:52 a.m. Well, China's More Threads has introduced a new generation of chips aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's get more with our China correspondent, Min Lo now. Min, hello again. Just talk us through what these new products do. How do they actually compare with NVIDIA's chips?
Yeah, so More Threads had a company event over the weekend, and they unveiled two new generations of chips. They're called Huashan and Lushan, named after Chinese mountains. So Huashan is an AI inference and training chip that the CEO says is going to be better than NVIDIA's Hopper series chips. So that includes the H100 and H200 chips. And he says it is closing the gap with the Blackwell series chips. That's the latest line that is available from NVIDIA. So this is a very significant development because we know that NVIDIA just got approval from the Trump administration to sell the H200 chips to China. China hasn't yet given a clear guideline to its companies whether or not Beijing will be allowing companies to buy from NVIDIA. But this breakthrough shows that there really isn't a need for Chinese companies to rely on NVIDIA here because they can already make chips that are better than that. So certainly an important development. The company says that it will enter mass production for these chips as soon as next year. It also unveiled the Lushan chips, which are for graphics processing. The company saying that it has 15 times better performance for gaming. It also unveiled this new GPU architecture that could allow the linkage of as many as 100,000 chips together to form this supercomputing cluster, which again the company says is 10 times more energy efficient and can increase computing capacity by 50%.
Well, it all sounds very impressive. What stands in the way, then, of More Threads closing the gap with the US?
Yeah, so one big challenge is that there is still all these restrictions when it comes to chip-making equipment, the lithography machine. So More Threads, for example, rely on foundries such as SMIC to produce its chips, and it's really being capped by what SMIC can do, right? Because SMIC's ability to make 2 nanometers or sub 2 nanometers chips is still very limited at this point, and that's what TSMC is already working on. So that's one. Number two is that More Threads is built upon its own proprietary computing platform. So it has its own platform called Musa. NVIDIA has its own called CUDA. So companies that have built their software around NVIDIA's chips and architecture will require a fair bit of adaptation to be able to integrate to the More Threads system. So there's a bit of transitional cost there. And when it comes to that supercomputing cluster, a lot of it is going to hinge upon connectivity. When it comes to the network sort of fabric, these are the hardware that allow the chips to sort of talk to one another, the end-to-end bandwidth to ensure that there is enough server capacity to crunch a huge amount of data. How reliable that entire system is still untested at this point. So that's something to continue watching.
And of course, we know that US lawmakers are calling for more Chinese firms to be listed under the Pentagon's list as military companies. So we shall keep an eye on that. For now, Min, really good reporting. We thank you so much. Min Lo there, our China correspondent. Well, let's check in our last couple of moments here on these markets. We've got futures pointing higher stateside, up 0.25% on S&P E-minis, even higher for Nasdaq futures, up 0.4%. Eurostock 50 futures, though, in the red as things stand, not following the moves in the Asia session. The MSCI Asia Pacific Index up 0.9% at the moment. And just looking into your bond space, we have the 2-year Treasury yield up a basis point at 3.48%, the 10-year up 2 basis points at 4.16, and we do keep one eye on oil as well. Brent up more than 1% at $61 a barrel. Of course, we continue to monitor this blockade on Venezuela by the US. But that does it for Horizons Middle East and Africa. I'm Lizzie Burden in London. Do stay with us for Daybreak Europe. Oliver Crook is coming up next. This is Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Gold, silver, copper all hit records highs while stocks rally in Asia as investors bet on a strong finish to 2025. Oil gains as the U.S. intensifies a blockade on Venezuela with the Coast Guard in pursuit of a third tanker after boarding another vessel this weekend. Plus, the Trump administration defends the decision to remove several photos from the latest release of the Epstein files, saying it was done to protect the victims. Well, happy Monday morning. Let's get a check in on the markets this morning. Looking at the futures here across Europe, down just a little bit, about 1/5 of 1 percentage point there. Eurostoxx futures down about 12 points. The FTSE futures, similar story, down about 1/8 of a percentage point this morning. S&P, on the other hand, up about 1/4%. That adds to the rally we saw on Friday. S&P futures up almost 1 percentage point, erasing all the gains of the week. That continues into Monday. Same thing for NASDAQ. NASDAQ rallied hard on Monday, up 1.3%. That continues into the session again this Monday morning. When we go across asset to see what else is going across the asset spectrum this morning, we are looking at gold at a new record high, 1.5 percentage points up. That is the new record for gold. You have $4,400 a troy ounce, and Brent crude also catching a bid after what we've been seeing off of the shores of Venezuela. A third tanker, we understand, in pursuit by the U.S. Coast Guard. U.S. Treasuries, on the other hand, up a little bit this morning, about 4.16%, and Bitcoin catching another rally about 1 percentage point. Let's see how the Asian market session is faring with Min Lo in Hong Kong.
Hey, Ollie, it is a happy Monday indeed here in Asia. We are seeing green across the board, and it did seem like after the very volatile week last week, the dip buyers came in to stabilize the market, especially the tech shares, and it looks like we could be set up for the center rally after all. The tech shares gaining and driving up the Kospi, the TAIEX, the Nikkei up by close to 2%, and the Nikkei as well is also supported by the weakness in the yen after the BOJ rate hike on Friday. Despite the FX chief from Japan this morning warning against excessive FX moves, we continue to see the yen at the weakest end in about a month. If we flip the board, you can take a look at where the yen is, I believe about 157 level, and some analysts are saying that 160 could be in sight for dollar yen, just given how futures contracts are pointing to more demand for shorting the yen. And here you can see the yields pointing up across the board, the 2-year yield hitting above 1.1%, the highest since 1997, and that doesn't bode well for the upcoming bond auction, 2-year bond auction taking place on Christmas Day. So we'll be watching that. But what else we're watching in Asia also, if you flip the board, is More Threads, because that's a Chinese tech company that over the weekend unveiled 2 new generations of chips that it says is going to be better than NVIDIA's Hopper series, the H100 or H200 chips, and is closing the gap with the Blackwell series of chips. And here you can see big gains across most of these chip stocks in Asia. SMIC up about 6.3%, Hua Hong as well up by 5%. Ollie.
Thanks very much. Min Lo in Hong Kong with the wrap-up of the Asian markets. Now let's take it to the commodity market. Oil prices are in focus today after Bloomberg reported that the U.S. is still pursuing a 3rd tanker near Venezuela. This as President Trump intensifies an oil blockade of Nicolas Maduro's government. For more, let's bring in Bloomberg's Stephen Sapuchinsky with the latest of what's going on there off the coast of Venezuela. Stephen, if you could just for us illustrate the scale of the sort of Venezuelan blockade right now and how much oil is now at risk.
Yeah, so I think earlier this month we had the Trump administration seize a U.S. sanctioned oil tanker, and then he put a blockade saying that they were going to also be stopping any other sanctioned oil flows. I think there was a wide expectation that that means unsanctioned vessels or maybe even empty vessels would be fine to continue going to Venezuela as long as they weren't leaving the area. But over the weekend, Trump stepped that up again. They seized a non-sanctioned non-sanctioned vessel carrying Venezuela crude, which the U.S. said is carrying, sanctioned fuel. The U.S. has sanctioned those oil exports, so they were able to board that vessel. And then now they're pursuing a 3rd vessel, which is not carrying any oil, but it's on its way to Venezuela. According to analysts and those who follow the market very closely, that 3rd vessel is seen as part of the shadow fleet and has ferried sanctioned oil in the past. So overall, Trump's effort at setting up a blockade is going to likely fall down to whether or not other ships are willing to try to take that risk. The risk is that they could be boarded, that they could be seized. And if that does happen, that's going to reduce Venezuela's oil exports quite significantly. Now, the impact on the market so far, I think it's more of a shock and bang sort of thing, and you're seeing prices kind of jump a little bit because of that as a knee-jerk reaction. But when you actually take a step out and look at the fundamentals, the oil market isn't really that affected. Venezuelan crude makes up less than 1% of global demand, so even if you take a lot of it off of the market, especially since we're going to an oversupplied oil market next year, more so than we are at the moment, there's ways to find alternative supplies. So to summarize, yes, Trump is ratcheting things up. Yes, there is an impact on prices right now, but in the long term, the market is likely going to be able to find replacements.
So, Stephen, it's a pretty muted reaction in terms of the impact that it's going to have on the broader oil market. What kind of impact is this happening on the Venezuelan economy? How much pressure is being brought to bear on Maduro? Do we have a clear picture of how much pressure this instigates?
Yeah, I mean, this is a much larger impact on Venezuela itself, their economy, and the leadership than it does on the broader oil market. Venezuela needs that crude, those crude sales, far more than the Chinese need it, for example, purchased through shadow fleet vessels. Now, they need this because they need the currency, they need dollar, they need some way to prop up their economy, some sort of sales to help them there. So according to analysts, if this were to continue, this would be a huge hit on their economy. It could lead to more inflation. It could really hurt their coffers and also put further pressure on a government that's under attack by the U.S. government. So when you look at that all together, it does seem like the Trump administration is aiming for some sort of regime change, and this is their way of doing it through at least economic means.
Well, Bloomberg's Stephen Sapuchinsky, thank you so much for bringing us that latest off the sort of coast of Venezuela there and how much the impact will be on the oil market. Taking from oil to gold and silver. Gold and silver both hitting record highs amid heightened geopolitical tensions as U.S. President Donald Trump intensifies the blockade on Venezuela that we were just talking about. For more on that and the hopes for a year-end rally, let's bring in the Bloomberg MLive strategist, Ven Ram. So, Ven, is the Santa rally on? Can we call it at this point in the year?
Morning, Oliver. Good to be talking to you. I think that, there is definitely a Santa rally in the works, especially if you look at commodities and U.S. stocks. I think what is happening with commodities is interesting because it is usually the gold that kind of sets off silver on a rally. But this time around, it's the other way. It's silver surging higher and higher on the back of the supply squeeze story, and that tail is wagging the dog, which is gold. And gold has gone up to a new record today as we speak. So I think that, gold is going to go further as well, perhaps in the first quarter. Why do we say that? Because there's seasonality in gold. In the first quarter, in 17 of the past 20 first quarters, gold has rallied because that ties into the seasonality of a heightened wedding demand in India and in China for the Lunar New Year sales. So that augury holds well for gold and silver in the first quarter. And of course, stocks. There's no reason to be selling U.S. stocks at the moment for traders because there's the story of artificial intelligence propping up valuations. So it does look like Santa is coming to the markets this time.
And part of that story is, of course, what the Federal Reserve is expected to do next year. We've had some comments out of the Cleveland Fed saying that maybe it's time to take a pause and see where things go. What do you expect from the Fed next year, and how much is that playing into both the rally on commodities but also the broader equity market?
Well, the Fed has outlined one more rate cut in 2026, according to the December 2025 dot plot. So if they take it to heart, I think that we should be getting just about one or probably two rate cuts, depending on how the labor market functions from here on. We had one very low inflation print in November, but that has been distorted by sampling issues. So it would be hard to read into that, which is what Beth Hammack mentioned over the weekend. So I think that, if you look at average PCE inflation, Oliver, this year, it's been hovering around 2.8%. So with Fed rates already at 350, there is not much of a case for them to keep going lower and lower. And for them, they may want to preserve the level of restriction in the Fed funds rate. So I think that, the Fed is going to be restrained, not be able to cut rates as much as investors think they will be able to cut rates. But gold and silver, to your point on gold and silver, I think they are their own trajectories. I think their rallies have gone far beyond what would be mandated by rate cut expectations alone. So there is an element of speculation there. So I think that there is no incentive for traders to take too much money off the table there.
Well, Ven Ram, thank you very much there. Gold and silver decoupled from the Fed. M-Line strategist Ven Ram, thank you very much indeed. The Trump administration has defended the decision to pull several pictures from the latest release of the documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files include thousands of pages of pictures, phone records, and notes from investigations, but many of the documents were heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
Bloomberg's Miles Miller there for the latest on the Epstein file release that we got there on Friday. Let's get to the week ahead and all the things that we were watching this Christmas week. On Tuesday, we're going to get that delayed U.S. GDP third quarter reading. The expectations are for a print of 3.2 percentage points there coming in on Tuesday. Also on Tuesday, the Euro area new car registrations. We have seen some really impressive numbers from U.S. EU car registrations in the last couple of months. We're expecting that to continue. October was up about almost 6% in terms of the sales. We're going to wait that a November number a little bit later in the weekend, watching very closely the electric vehicle sales alongside that as the EU stepped away from some of its climate targets on combustion engines. And on Wednesday, U.S. jobless data, Christmas Eve, U.S. jobless claims. We're expecting those to continue to signal limited job layoffs. Bloomberg Economics estimates initial jobless claims to come in at 223,000. You can get a roundup from all the stories you need to know on your what's going on today on this edition of Daybreak. We're focusing obviously very much on the silver rally, the gold rally, everything that we're seeing there, and obviously what's going on across in the commodity space as well as in oil. As we understand, the United States is pursuing a final tanker there off of the coast of Venezuela. Terminal subscribers can go to DAYB Go. Coming up, we'll dive a little bit deeper into the crypto markets as Bitcoin sells off into the close of 2025. Are there brighter days ahead? We'll ask the CEO of crypto analytics firm Kaiko. That's next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Daybreak Europe. Let's get into the crypto sphere a little bit here today. Crypto is set to end the year lower despite a risk-on period for stocks and demand for havens like gold increasing in the last couple months of the year. The cryptocurrency is headed for the fourth annual decline in its history, and the first that didn't coincide with a major scandal or industry meltdown. To dive a little deeper into the market, we are joined now by Ambre Soubiran, the CEO of crypto analytics firm Kaiko. So, Ambre, thank you so much for joining us this morning from Paris. We'd love to get your perspective on sort of what is driving crypto at this point. When we thought, or I thought at least, I had some understanding there was a coupling to gold. We have that massive sort of decoupling into the end of the year. What's going on?
So I think the decoupling is more an indication that crypto, and specifically Bitcoin, is now its own asset class. We've seen a very significant shift during the year and a fundamental change in the types of flows we're seeing in the crypto markets. Earlier in the year, we've seen a lot of participation in ETFs and digital asset treasuries, and that pushed market depth to record high, as well as provided some form of liquidity floor. That has somehow withdrawn in the second half of this year, but it was more a signal that institutions are shifting from momentum buyer to price-sensitive allocators. And I think this is more an indication of the industry maturation rather than a weakness. And what we're seeing in the markets is basically deeper order books, tighter spreads, and lower volatility.
And so how do you account for that sell-off in the last couple of months?
I mean, first of all, there's a correction, just a natural correction from the second half of the year that was very strong. Then we have seen the October 10th crash, which was quite significant. We've seen $2 billion worth of Bitcoin that was liquidated on the markets, and this is not something we can completely ignore. However, I think it's important to point out that the October 10th crash didn't break the market, right? It was more like it provided a reset, and it wiped leverage for a while. It flushed out the leverage. It controlled, it tightened the risk controls, and I think the investment became slightly more conservative, especially when we look at leveraged derivatives markets. That being said, it didn't retract any of the investor demand. I think it just transformed, a fundamental shift from the investors in how they become more kind of balance sheet risk-focused investors and rather just momentum buyers.
And so you've taken us through some of the lessons I think we've learned, some of the things we've learned about Bitcoin and cryptocurrency in 2025. Looking into 2026, what do you think are the catalysts that are going to be really driving the crypto trade going into next year?
Yeah. So we're seeing mostly three main trends, I think, that we're going to be driving the crypto prices as we enter in 2026. The first one is obviously all of the institutional inflow that is broadening the buyer base, and that is about durable buyer base, right? We're talking about identifiable institutional participants that are investing from balance sheets, and that, I think, is a structural change in the nature of crypto markets. So institutionalization is one of them. The second one, which I think is a very interesting trend, is perpetual futures. This is still driving somewhere around 60% of Bitcoin volume is driven by perpetual swap trading. And this is going to be interesting to see how it plays out over 2026. It's important to note also that most of the perps volume is concentrated on a single trading venue called Hyperliquid, and they're getting increased competition, and we're going to see that evolve. Now, the third interesting theme in 2026 is stablecoins. And stablecoins, we're going to see how that kind of moves into a more durable settlement layer for on and off-chain, and how that becomes a structural piece of the market infrastructure. We've seen this year record volumes for USDT and USDC. And I think we're going to see large-scale stablecoin adoption. We're seeing regulatory clarity around stablecoins, and that will be a very important trend as we get into next year.
And in the things you're sort of looking for catalysts for next year, I didn't hear President Trump. How important is the President of the United States and him making crypto a sort of priority? Do you consider him still to be one of the catalysts here, and what could he do to support the market? And do you think that it's still a priority for him in his administration?
I do think it's still a priority for him. I think he did, completely create a release of the pressure, of the fear pressure that institutions had doing anything remotely related to crypto. He did that in a way that created some volatility and confusion about a year ago. But when we look at where we are a year from from now, it's been overall very positive for the space, and we've seen much more regulatory clarity coming out of this. And I think getting into next year, it's we're past a point of no return when it comes to regulation and institutions interacting with crypto markets. And that has also released all of the pressure around initiatives about using blockchain as a technology, and this is all we hear about tokenization. Recently we've heard about the native tokenization on-chain of U.S. treasuries. I mean, we're seeing now so much more than just crypto, and a lot of that is due to the current administration around views around crypto and blockchain in general.
And I'd like to end on a very sort of unfair question, which is, where do you see Bitcoin ending the year next year, if you could make a call on that?
I've seen a bunch of assumptions around 200, 250, and I would agree with that.
Okay, well, thank you so much. Ambre Soubiran, CEO of Kaiko, joining us this morning from Paris. Thank you very much. Coming up, talks between the U.S. and Ukraine described as constructive, but still no deal to end the war. More on that later in the program, and this is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The U.S. president's most senior economic advisor has warned of, quote, administrative problems if the Supreme Court rules against Donald Trump's tariffs and orders refunds. Speaking to CBS's Face the Nation, Kevin Hassett said he's confident the Supreme Court will find in the government's favor.
We really expect the Supreme Court is going to find with us. And I also think that if they didn't find with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
And Spanish Prime Minister Pedro Sanchez has suffered a large defeat in a regional election. The People's Party won 43% of the vote with 29 seats, while Sanchez's Socialist Party won 18 seats. Support for Sanchez has been eroded in recent months by scandals and graft investigations, leaving the government increasingly isolated politically despite Spain's strong economic performance. A group of private equity firms led by Permira and Warburg Pincus have agreed to acquire Clearwater Analytics. The deal values the investment in accounting software maker at $8.4 billion, including debt. The private equity group also includes participation from the Singaporean state investment company Temasek and key support from Francisco Partners. And coming up, Russia threatened legal action if its assets are used in the fund to fund Ukraine's war. More on that next. This is Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Gold, silver, and copper all hit record highs while stocks rally in Asia and investors bet on a strong finish to the year. Oil gains as the U.S. intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding another vessel over the weekend. Plus, talks between the U.S. and Ukraine described as productive and constructive, but President Zelensky says the signals from Russia remain, quote, only negative. Getting into a little bit of the cross-asset picture here this morning as we head into this morning of trading here in Europe. We are looking at futures for the European stocks 50, up about 1/5 of a percentage point, almost a quarter there at 5,778. FTSE futures 100 down a little bit, just a hair down about 1/8 of 1 percentage point. Where the real action is the S&P futures and the NASDAQ futures building on those gains on Friday. S&P futures were up almost 1 percentage point on Friday. They wiped out all the losses that we had seen on the week. That builds again today. NASDAQ futures up almost 1/2 percentage point. We saw them close up about 1.3% on Friday, so that rally continues into Christmas week. When we look across the boards, across asset and the rest of the sort of market, gold, of course, hitting a record high for the year, once again beating what we saw back in October. $4,400 a troy ounce is what we're looking at this morning, up 1.4 percentage points. Brent crude catching a bit of a bid after those headlines we're seeing off of the coast of Venezuela. U.S. Treasuries, for their part, up about, let's call it 2 basis points this morning, and Bitcoin also catching a bid, up almost 1 percentage point this morning. Moving on to Ukraine, the U.S. Special Envoy Steve Witkoff says talks with Ukrainian officials from Ukraine and Europe were productive and constructive. Meanwhile, the U.S. U.S. Secretary of State, I should say, Marco Rubio, says that the U.S. is still hoping for a deal that satisfies both sides.
Only a negotiated settlement gives us the opportunity to end this war. A negotiated settlement requires 2 things: both sides to get something out of it, and both sides to give something. And we're trying to figure out what can Russia give and what do they expect to get, what can Ukraine give and what can Ukraine expect to get. In the end, the decision will be up to Ukraine and up to Russia. It will not be up to the United States. So that's the role we are trying to play in this, and that's why you see so many meetings going on. This is not about imposing a deal on anybody.
Well, Bloomberg's Jill Desis is in Hong Kong. Jill, thanks so much for joining us this morning. We know that these conversations and many of these negotiations have sort of moved underground in terms of what their actual content is since we saw that 28-point plan initially. Do we have an idea of what was discussed this weekend, excuse me, and how much progress was made?
Yes, Oliver. Well, what we've heard from the U.S. side, at least, is that they did discuss that, 28-point plan. Of course, that's something that obviously the initial plan put forward by Witkoff was met with quite a bit of resistance from the European side. But although Zelensky and the Europeans did counter with something, so it does appear that there was something in sort of the gist of a multi-point plan that was discussed at this meeting. They also talked a lot about U.S. security guarantees for Ukraine potentially. That's something that we did get an inkling of about a week or so ago, might be something that is moving forward the needle a little bit, that the Europeans were maybe more satisfied with the U.S. being more open to the idea of sort of Article 5 style security guarantees for Ukraine. And then they also discussed more about the economic development for Ukraine. So, obviously really, really big picture topics here that are being discussed, a lot of which has had, a significant amount of movement in the last few weeks. So, the fact that we've got these sides saying that these were productive, constructive talks does indicate that at the very least, there does seem to be some negotiation on some of those finer points when it comes to the main things that we're looking at, this idea of a, multi-point peace plan, and then obviously, also talking, a little bit more about those security guarantees.
Yeah, we also got an offer for trilateral talks that would include the United States, Ukraine, Russia, possibly the Europeans. Do we have a clear idea if we're at a point now where that is sort of an appropriate measure? Do we think that can happen, or is there any other kind of sequencing we need to be paying attention to for the next couple of days?
Right, Oliver, I think, it's actually, unfortunately, still a little bit vague at this point. So what we heard from Zelensky last Friday as these talks were about to, sort of get underway, was that, he was saying that it was really sort of contingent on how the outcome of the U.S.-Ukraine talks went to, whether or not he thought that they could actually get to that point where you're looking at some kind of a trilateral. The latest we heard from Zelensky on Sunday was, effectively that, they were in discussions here, but obviously, as we've been discussing this idea of maybe Russia being the sticking point here. It could be possible that we get something, but I think at this point, obviously there's still some of these pretty major sticking points. Zelensky is not willing to give up a lot of these territorial considerations that Russia obviously wants, and something that the U.S. has been trying to negotiate on. So it does seem like that does continue to be a sticking point, and I haven't heard anything out of the talks so far, whether this weekend or prior, that really indicate that we've seen any sort of a true meaningful breakthrough there. Obviously, Donald Trump himself has gotten, incredibly involved in these kinds of conversations, meeting with Zelensky, meeting with Putin. Whether we actually see something that results in sort of that three-way meeting, I think we just don't really have as much info as we'd really like from the outcome of this meeting, as promising as it is for them to say that talks have been productive, to actually see whether or not we've got a trilateral meeting in short order.
Well, Jill Desis, thank you so much for your time this morning out of Hong Kong for the update there on those discussions that took place over the weekend in Florida. The Russian president, meanwhile, has threatened legal action if international reserves are seized. Vladimir Putin was speaking after the European Union decided against tapping those Russian frozen assets and to help fund Ukraine's war effort.
We will protect our interests. Where? Well, first of all, in the courts. We will try to find a jurisdiction that will be independent of political decisions.
Well, For more on this and what we saw out of Europe on Friday, we're joined now by Elena Rybakova, non-resident fellow at Bruegel. Elena, thank you so much for taking the time this morning. I'd like to get into some of the sort of big news we got out of the Europeans last Friday. We do have a 90 billion euro loan that will go to the Ukrainians, what they are calling, a major breakthrough, and obviously that is for Ukraine, which we know was running out of money in the first quarter of the year. First, let's just set up what the significance of getting that money to Ukraine is and where that puts Ukraine going into 2026.
Well, the IMF estimates Ukraine's financial needs about $65 billion over the next 4 years, most of that coming up in the next 2 years. That is the big issue for the moment. And this money goes a long way to be able to deal with that. Then we have the issue of military needs. The military needs are significant as well, about 60 billion per year. And this money, 90 billion, covers Ukraine for about a year and a half.
And looking at what the actual deal was and what was struck there, I mean, I was at the meetings there on Thursday and into Friday morning, and I was covering it. I did not have a very clear idea of how exactly this was working. We understand that it's joint debt. It's going to be backed by the EU budget, but at the same time, it's kind of backed by the Russian assets. So you have European leaders saying that actually this is not a risk that the European Union and member states are carrying, and yet they still seem to have kicked the can down the road on what to do with those Russian assets. What is your understanding a couple days out from this of how this is actually going to work?
Well, it still remains very confusing. We'll look forward to more comments from the European Union members, from the member states, as well as from the European Commission, because the article says at the moment 90 billion against the budget headroom in the EU. So it's common borrowing against the budget headroom. At the same time, the 3 smaller countries are exempt. So in the unlikely scenario where Ukraine sort of defaults on the loan, then the 3 smaller countries will not be liable for this money. So we're looking forward to hear more about the details. However, it's not surprising we don't have all the details because the European Commission European member states had to come up with it at the last moment. And therefore, it's also a very big deal. Let's remember the common borrowing in the EU. We've had it during the COVID period, and since then it's been very small. So it is a big deal for European Union to go ahead with this.
And thinking also about what it tells us about European risk appetite and how, to what degree they seem to have been intimidated by Russia, potentially by the Trump administration. What do you think it tells us that they decided to not go for these Russian assets?
Well, it tells you that the European Union is still very afraid to have a confrontational stance with Russia. And I think it's more important about sort of fractures in the European Union. Some countries are closer than the others towards Russia, and therefore there are more pressure points to apply to these countries.
And also looking at the Russian economy itself, I have a simple question for you, but it's actually a pretty complicated one, which is 4 years into this war, after all of these sanctions that we've seen on the Russians, how is the Russian economy faring? Do you have a clear idea of that? This is something that you study very closely. And looking into 2026, on what footing is the Russian economy?
Well, the Russian economy is in recession at the moment. It's unlikely we will actually see the numbers that will show negative growth, but for this last half a year of 2025, Russian economy has stalled. Most likely there will be either zero growth or maybe very marginal growth for the year as a whole. Next year, it's a big breaking moment for the Russian economy because they're running out of funding, not enough to stop the war, but they're running out of this sort of cyclical boost to the economy, and they need to find a new way to expand production, and been struggling with that.
And looking at the sort of peace negotiations, is this a moment at which the Russians can sort of afford to end the war? They've sort of basically geared their entire economy to be a wartime economy. Obviously, when you reshape an economy to that degree, stopping a war the next day is going to have a major impact. Do you think that that is why, part of the reason the U.S. administration is so insistent on having them come back to the global economy, because that is a sort of necessity for the Russians if they are to end this war?
It is a necessity for them, but let's not forget that the geopolitical objectives have been much more important for this administration than any economic objectives. Yes, that would be critical for them to reintegrate back into the global economy, but they have strengthened their ties with China, and I think the economics at the moment is subject to the geopolitical objectives.
Do you think there's anything the United States could do to force them to the negotiating table? Could those, for example, Lindsey Graham sanctions, those secondary sanctions that put, 500% tariffs or whatever it is on any country buying crude oil, buying natural gas from the Russians, would that be enough to bring them to the negotiating table?
I think pressure on the Russian oil and gas exports is the key measure to try to slow down the economy and their ability to finance the war. However, it is not the secondary tariffs. It's rather the secondary sanctions on the financial system that can make it or break it on the oil and gas exports as well as the export controls.
And it seems the Europeans have managed to get themselves sort of a seat at the table, maybe a seat at the kids' table in these sort of negotiations. Do you think there's anything left for the Europeans to do that could actually earn them a seat at the actual table here?
Sorry, could you go ahead? I just sort of had a break in my connection.
No, I was just wondering if you think there's anything left for the Europeans to do to earn themselves a seat at the table in terms of these negotiations. Is there any room for them on sanctions, Russian assets, anything else?
I think Europeans have the critical role on the shadow fleet, as well as developing their own ability to do secondary sanctions, as well as being part of the negotiations with backing up Ukraine in these negotiations.
Well, Alina Rybakova, thank you so much for your time this morning, non-resident fellow at Bruegel there for the latest update on the assessment of the Russian economy and the path forward for Ukraine. Coming up, we'll discuss how AI is transforming cities next year and the role of entrepreneurs in innovating towards net zero. Will 2026 be the year of autonomous cars? Our next guest thinks so. That's next, and this is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food, I never had this ingredients never used in Japan. Kind of like a wow, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. Never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make novel style.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Last week, the European Union rolled back plans to phase out combustion engines by 2035 in the latest challenge to the energy transition. It caps a year in which the COP Climate Summit achieved so little that it was rated 2.5 out of 10 by Bloomberg NEF, competitive category for least productive years on climate technology. My next guest argues that it won't be politicians who will solve the climate challenge, but rather it will be entrepreneurs. Tommy Standlin, thank you so much for joining us, co-founder, general General Partner at Giant Ventures. Thank you so much for joining us this morning. Let's deal first with this question of climate. Is this sort of the mirror in which the kind of climate ambitions sort of died officially? Is there more going on beneath the surface that we should be aware of?
Well, you mentioned COP. I've been going to COP since COP 15. I think it's now COP 30, 31, and we're still no closer to the politicians sorting this issue out. And I think the reality is no action is going to be taken by the UN or by politicians. But there is incredibly meaningful action being taken by entrepreneurs all around the world. And this was the year, I think, 2025, where in some ways climate died a death in terms of economic interest. But that is so completely different to what's going on under the surface. I think climate's had a rebrand. So the same technology companies which are performing extraordinary feats are now rebranding themselves as American dynamism companies, or they're working on AI. But the reality is, I believe the climate is warming, whatever the man in the White House may say. And I believe, therefore, that if we get anywhere close to decarbonizing the global economy, that is the biggest investment opportunity of the century still. But what's happening is that the companies which require a green premium, they require governments or customers to pay more for climate action, are not going to win.
Is there a way in which, and this is maybe doing some acrobatics to try to build the sort of climate narrative here, but in the way in which sort of AI, all this energy generation that is required for these data centers, for running these AIs, particularly in Europe where you have a continent that is basically very poor in natural resources to generate that energy, could that be a catalyst that actually builds the argument for renewable energy in order to run these things?
I think that's absolutely right. You know, everyone talks about AI, but the fundamental requirement for AI is clean and cheap power. And that is the big opportunity for the renewable sector. We've been here before in, you know, the clean tech 1.0 boom and bust, and everyone was saying what a disaster that was economically. But actually that produced solar and wind, which is now some of the cheapest energy in the entire world. Solar is, you know, the cheapest form of energy, and you can have enormous success in powering data centers, not just from those type of renewables, but also companies like Radiant, who we backed at Giant, who have signed up $1 billion deal with a data center to provide cheap and clean nuclear energy. So it is a massive opportunity for green tech to be part of the solution to AI and not be left behind.
Now I want to get into some of your kind of bold calls here for 2026, saying that 2026 is the year for physical AI, going out of the chat box and into what?
Absolutely. So I think, you know, so far this year, your viewers will have been using AI to generate images, to maybe make presentations, do legal work, and that's all really exciting, using chatbots for that type of thing. But I think what's even more exciting is how AI is going to transform the physical world. And I think you'll see companies like Cusp AI in London, who are using AI to discover new metal organic frameworks that can redesign things like semiconductors or electric vehicle batteries. Those type of companies are going to not just transform industry, they're going to completely redesign it from first principles. So I think 2026 is the year that AI kind of gets out of the chatbots and into the physical real world to start fundamentally redesigning it. And that is an enormous economic opportunity.
And you think that 2026 is also the year of the autonomous car? It will be driven around in 2026. Is that going to be just in the United States, where it's going to be a little bit easier regulatorily, or are we going to see that in Europe here as well?
Yeah, well, so Waymo is coming to London and Tokyo in 2026. And I think, you know, there's a classic quote about technology, which is the future is here, it's just not evenly distributed. Right. In San Francisco, a quarter of all ride shares are done by Waymo, more than Lyft now. And it's almost zero outside of San Francisco. So if you go to San Francisco, it kind of feels like the future's arrived. It hasn't yet here in London, but it's coming in 2026. And I think you'll start to see very quickly cities feel completely transformed. And by the way, autonomous vehicles can save, you know, 1 million people die every year from car accidents. That can be completely transformed through autonomous vehicles.
You also see coming of age for European tech. I feel like we've heard about that for a couple of years now. Why is this year different?
So I think that the year just gone is actually a really important year, where we've seen some very, very large rounds for AI companies, but also companies like Revolut. Revolut hit a $75 billion valuation this year. So in Europe, we've always had the technical talent. We've always had enough venture funding, actually, in the last few years. What we've really missed is those big success stories, which get to very large scale. And when companies like Revolut get to $75 billion, that created 200 millionaires so far. Those people become not just angel investors in the next generation, they become fantastic founders themselves who go on to start companies. At Giant, we backed a number of ex-Revolut founders who bring the rigor and the kind of dynamism from that company. And so the role models and the trickle-down effect of talent and angel investors, that takes a lot of time. And yes, we've been talking about European tech for a decade plus, but it does take time for the big winners to emerge and then for this sort of second-order effects to trickle down. And we're starting to see that now.
And I'm wondering if you have a view on European tech, particularly on the continent of Europe, and particularly now with with this European Commission that is theoretically supposed to be cutting back regulations, supposed to be sort of generating more investment into the private sector for European tech. Do you see that as something that's going to actually make a difference? Is it come into your thinking at all in terms of what the Europeans want to do?
Yeah, well, so we've got a view at this, John. We invest 50% Europe, 50% US, and our US friends are often laughing that the only thing that Europeans are good at innovating is the little bottle cap lid which stays on top and annoys everyone. Actually, I think there's far more going on than that.
Many memes on there, yeah.
Many memes. But the reality is, Europe minted 28 unicorns this year so far already. So there is enormous progress in technology, and I think we have every bit of a right as the US, particularly on AI and physical AI, at the intersection of technology and some of our big industrial incumbents.
Well, Tommy, thank you so much for joining us this morning. Greatly appreciated there for a view of tech going into 2026. Tommy Stadlin there, co-founder and general partner at Giant Ventures. Excuse me. Now some other news making stories this morning. A power outage across large parts of San Francisco on Saturday led to major disruptions with Waymo's driverless cars freezing mid-journey, potentially some of the risk of those autonomous cars. Passengers who were in those Waymo cars at the time said they were confused by pedestrians crossing at junctions where traffic lights had failed. The Tesla CEO, Elon Musk, says his company's robotaxis were unaffected by the power cut. An engineer has become the first wheelchair user in space, blasting off with Blue Origin. Severely injured in a mountain bike accident 7 years ago, Michaela Benthouse rocketed away from West Texas on Saturday with Jeff Bezos' company. The launch marked the 16th human space flight for Bezos' tourism company, using New Shepard, a small craft built to send people to short distances at the edge of space, as well as to conduct research missions. Disney's Avatar, Fire and Ash, has debuted as the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title film this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. Plenty more coming up. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. We are looking at a couple of charts here to close out the day for us here on Bloomberg Daybreak Europe. The rally in the MSCI Asia Pacific Index, you can see just gathering steam here into the end of the year. And you really think about where we've been this year. This absolutely cratered out back in April, back in Liberation Day. No sign of turning around ever since then, really rallying until the end of the year. And moving along to the commodity space, we're looking at precious metals. Gold has been what we've been talking about. We've got a record high there, but there's another metal that is outperforming even gold. That's rallied 25% in the last 10 sessions. That is platinum. You can see it there, absolutely reaching for the skies there, actually beating gold substantially over the last year, up 118%. Gold up only about 70%. We're also considering, as we close out the year, the dovish year that we've seen from these central banks and the sort of rate cuts we've seen across the board, going from the ECB, 100 basis points there, looking at the Bank of England, another 100 basis points, Bank of Canada, another 100 bips, and the Federal Reserve coming in at 75. Some pretty active debates about what's going to happen next year. And of course, the BOJ, really of these major central banks, really the only one to have raised rates by 25 basis points this year. Looking at the futures heading into today's session and opening trade, we're seeing stocks in Europe down a little bit there, about down 1/5 of a percentage point. Similar picture for FTSE futures, down about 10 basis points. But again, I think where the action should be focused and what we're watching very closely, S&P futures building on that rally on Friday, up almost 1 percentage point on Friday, wiped out all the losses, and the NASDAQ up almost another 1/2 of a percentage point after gaining 1.3% at the end of last year. And we'll be speaking a little bit later to Fed Governor Stephen Myron on surveillance at 1:30 London time. That's it for Bloomberg Daybreak Europe. Opening trade is up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Oil gains as the U.S. intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding a second vessel over the weekend. Gold and silver hit new highs thanks to geopolitics and rate cut bets as supply concerns, tariff fears and strong demand drive copper prices to a new record. Plus, Japanese yields rise amid speculation the BOJ may need to raise interest rates more aggressively to curb yen weakness.
Okay, good morning, Anna. Good morning, everybody. Let's put all of that into numbers and talk about where we sit with these markets this Monday morning. Eurostoxx 50 futures are actually down, which is interesting because US futures are higher. Are we going to see that discrepancy closing? The Japanese bond market, epicenter of the action, I would argue. Japanese 10 years north of 2%. When was the last time we were north of 2%? Oh, yeah, 1999. Is the BOJ going to have to move earlier? We're going to talk about that in just a minute. And pick your commodity this morning. I picked gold, but there's plenty to pick from. Gold is up by 1.84%. As Anna says, fresh records. So gold and silver, copper's on the move. Gold and silver and the precious metals complex are moving higher. But actually, in some ways, the geopolitical story could be in oil. That's also moving higher. We've got a lot to talk about on all of those fronts. I picked gold. It's up by 1.85%. But we're going to be spending a lot of time in this show talking about commodities. So let's get it going. The countdown to the opening trade starts right now. Monday morning, good morning. Pick your commodity. Gold, silver, oil. Let's start with oil. Talk about what is happening in Venezuela. The Trump administration is after a third tanker, part of the dark shadow fleet that we've talked about in relation to China and Russia and Venezuela. The grip is tightening around Venezuela. What impact is this going to have? Are we expecting higher oil prices? And if so, how does that feed through?
Yeah, and we are seeing slightly higher oil prices just this morning, up by 1% then, guys. 61.13 on Brent. We dipped below $60 a barrel last week as we were watching that glut story play out, but then putting a floor under it with this geopolitics. And that continues to be the case this morning. So there's the Venezuela story. Yes, they're after this Centuries tanker. That's the one they boarded, over the weekend. Now they're chasing another one called Bella 1. This is a country that has the largest reserves in the world, but it doesn't export very much right now. What it does export goes to China, and that is the target of the Trump administration right now.
The question is, what message does this send to others that use the shadow fleet as well? Is this also an attack on Russia? Does this have any impact on Russia? What does it do to this kind of secondary market that exists in global oil? And how does it, which actually hasn't changed very much. What you've seen over the last few years is a kind of shuffling of the decks of where oil comes from and goes to. And that has changed quite significantly. You've seen this kind of rewiring process. If you start taking some of these ships out, and taking them to the United States and effectively locking them down, does that change the market for Russian crude? And how does that change India's story and China's story when it comes to crude?
And we are seeing some news flow surrounding the Ukraine story and Russia in that context over the weekend. And on Friday, we saw for the first time a Russian shadow fleet tanker being attacked in the Mediterranean. So this is taking things to another geography. And this was by Ukraine, of course. This was an empty oil tanker, so not at risk of spilling. But we've also seen Ukraine striking a Lukoil facility in the Caspian Sea. So there is a step up in that kind of attempt to fight back by Ukraine as the conversations over the weekend in Florida continued between the United States, Ukraine and the Europeans at least.
So let's talk about what signal does this send? And let's fold in some of the other kind of metals that we've already mentioned. Gold is up and silver are up. They're up partly on geopolitical concerns. They're up partly on kind of this liquidity story surrounding what is happening with this market and also concerns about lower rates. There's a kind of various things moving gold and silver. Copper, I think, is a much more interesting story as well. And what you're increasingly seeing is a sort of balkanization of the copper market, which takes me back kind of to the oil market. You're seeing kind of segmentation. There's this balkanization. The copper market is now so strategic that it's becoming a critical asset in the way that I just wonder whether Venezuela kind of fits into that narrative as well. I don't know. Copper's going higher. There's clearly an electrification story that surrounds that. You've got fresh records there. You're going to see a lot of choppiness next year because you're going to see a different price in London and New York and Shanghai, and that's going to be really interesting to watch as well. But what does it tell us broadly about inflation? And I think that's the kind of the step back moment. Is all of this basically signaling that there's a lot of people out there trying to hedge the inflation narrative.
Well, that's interesting, isn't it? Because for a lot of when we were worrying about what it would mean to put sanctions on Russia at the start of the Russian attack on Ukraine, we talked about balkanization, about the world falling into different camps, and that would be inflationary broadly. And there has been a conversation about inflation over the last couple of years, of course, but there's also been downward pressure because of increasing supply from OPEC Plus on oil prices. So that has been actually the dominant theme of late, hasn't it? That negativity around the oil price because of OPEC Plus. But yes, you're right to highlight everything that's happening in precious metals. We're seeing the highest levels on gold and on silver since 1979. We're also seeing the highest levels on copper since 2009. So incredible moves that we're seeing there. Whilst we're thinking about inflation, let's talk about yields, shall we? And what's going on with Japan, but not just Japan, the global yield narrative.
So let's start with Japan and talk about Japan. You've got the currency chief in Japan out voicing his concerns about the fact that we've seen a rate hike but the yen falling. And there's talk now of intervention. We're chasing the 60 level. The market's clearly going to target that. What are the Japanese going to do? I think that's the question this morning. So we've got a weaker yen. What do the Japanese do next? Do we just see verbal intervention? We've already got that. The market, I think, was probably expecting that. Do we see further and earlier rate cuts coming through? And I think that's the real question. That takes you to your yield story. If we see rate hikes, make sure I get that the way around because it seems anomalous. Yes. If we get rate hikes, how much further do the Japanese go? And does that change the narrative with relationship to other bond markets as well?
Yes. Well, what do they need to do to change the narrative around the yen? Because we've seen the yen disconnect from that yield story quite considerably over 2025. So even as we were waiting for these hikes to come through from the BOJ, there was a thought in the markets that, well, there were other things at play when it came to dollar yen. And certainly the yen was not getting a benefit of that sort of interest rate conversation that was happening in Japan. So will they need to come back with more? And we certainly see yields on the move as a result of that. But the global story you nod to is really interesting because on Friday we saw Germany and France, the yields there up by 4 or 5 basis points. Not a huge amount, but this is slowly ticking through. And there was a lot of talk about a stronger Germany. The Bundesbank had a report out talking about a stronger German economy. And if that starts to go global, we've got Treasury yields higher again this morning. If that starts to go global, the US 10-year has struggled to go below 4%. It has done a little bit, but will it start to come back? It seems to be the conversation on the Markets Live blog this morning. And what will that do to stocks?
Yeah. Do you get let's talk about 30 years. What happens to the German 30-year? What happens to the US 30-year? Is the US 30-year potentially going back towards 5%? 5% really matters in the States because mortgage rates have been coming down. The rest of the world doesn't fix in the same way that the US does in terms of the back end of the bond market. Are we going to see that potentially coming through as being a factor into 2026? I don't know, but it feels like the bond market is still setting up other asset prices for some potential shocks. When you get to 5%, you get back to 5% on a US 30-year. What does that do to stocks? What does that do to some of these commodity trades?
And we've asked a number of times on this programme, what happens to the Trump administration's desire to get rates lower if putting somebody more dovish in the seats at the Fed doesn't quite deliver it because the back end of the bond market has just not been listening to front-end rate cuts.
It won't, and probably will continue not to do so. We're going to discuss all of this with Isabel Mateas Ilaga. She is going to be joining us very shortly, BNP Paribas Group Chief Economist. Start with Japan. We'll move on from there. Ben Haddad, France's Minister for European Affairs, has much to discuss with us this morning as well. We'll talk French politics. We'll also talk about the European picture with Ukraine, and there's lots. Europe has a lot to decide at the moment. William Sells, Global Chief Investment Officer at HSBC Private Bank and Premier Wealth, will be joining us, and Tom Athram, Fortnum & Mason's CEO, in full Christmas mode. He doesn't want Fortnum's just to be about Christmas, though. We'll talk to him about what that looks like into 2026. Fed Governor Stephen Myron will be joining Surveillance at 1:30 p.m. London time.
Let us tell you what is coming up this week. I mean, it's Christmas week, so not as much as usual is the short answer. But tomorrow we do get US GDP data. We also get US jobless claims on Wednesday. That's pretty much where it stops in terms of the data points. So that's exciting. Tuesday, Wednesday we'll deliver some news. Then on Thursday and Friday we see markets closed substantially here in Europe. Of course, we'll get trading over in the United States on Friday. I was looking at some Bloomberg Economics research guy around the Trump administration and all the things you thought were going to happen going into 2025, some of which did and many of which did not. And some of the outcomes for markets were not as Bloomberg Economics had anticipated that they would be. And they said that the lesson from this is to not underestimate, thinking about GDP growth coming this week, not to underestimate the supportive factors for growth in the States, AI, deregulation, taxes. And we're going to hear a lot about all of those as we go into next year.
Yeah. The recent data just tells you you've got an economy that's actually doing okay. The labour market looks okay. Beth Hammack's been talking about this as well, talking about the fact that actually the labour market data probably is all right. The US economy looks like it's in okay shape. How much growth do you need to get, though, to continue to see stocks moving higher? And I think, again, that's a difficult one. You've priced in an awful lot of growth so far. You've priced in an awful lot of AI. How sensational does this data need to be to deliver what we've just seen again next year?
And what does the link between the economy and jobs need to look like before the consumer starts to respond a little bit differently? That'll be certainly something we'll pick up with some of our guests.
What else do you need to know? You need to know that the M&A story continues and seems to be gaining some traction. A group of private equity firms led by Permira and Warburg Pincus have agreed to acquire Clearwater Analytics. The deal values the investment and accounting software maker at $8.4 billion. That's an enterprise number, i.e. it includes debt. The private equity group also includes participation from the Singapore state investment company Temasek and support from Francisco Partners. The US Special Envoy Steve Witkoff says recent talks with officials from Ukraine and Europe were, quote, productive and constructive. According to Witkoff, the group discussed the development of the existing 20-point plan, the US security guarantee framework, and the economic development plan for Ukraine. The Ukrainian President Zelensky agreed that negotiations were constructive, but noted that signals from Russia remain, quote, only negative. And turning to France, the cabinet there is set to meet today to present a special law that will allow it to roll over next year's critical spending and taxation plans. That's after the 2026 budget negotiations were postponed into the beginning of next year. The Finance Committee of the National Assembly says it will review the special law on Tuesday, i.e. tomorrow, making adoption likely this week. This is a story again for next year. We just feel like we're pushing that French story out, and we'll get Mr. Haddad's take on this a little bit later.
Yeah, absolutely. Really interesting to get his perspective on what's going on. We will get the cabinet they're meeting today, and as you said there, the context is here that they have this special law in France, which means you can roll over last year's budget if you fail to agree on a new one, and that's basically what has happened here. Then we will get the National Assembly, or part of it, adopting this loi spéciale tomorrow, and so it looks as if you don't go into a US shutdown. Is the way things work in France, but it doesn't mean that you've got agreement on next year's budget, and those budget conversations will then carry on into next year. And what will that do to the spread?
So 2027 is presidential. Are we just going to see another year of huge volatility with French politics? Are we going to have a budget? We're not going to have a budget. We're going to have a government. We're not going to have a government. How much is this basically what we can expect to carry on after that kind of failed parliamentary election? And that 2027 presidential election, the period just in the middle just looks like chaos. But I don't see anything that changes that next year.
And what does business do in the meantime? What does the economy in France do in the meantime? We'll speak to Isabelle Mathias-Delago about that subject, as well as many others when we get to her shortly. Coming up on the programme then, Europe's luxury leaders are seen widening their growth in 2026 despite uneven consumer sentiment and a stuttering recovery in China. We will get into the retail story throughout this programme. Plus, defence stocks have been on a roller coaster ride this year. We'll check in on those names at the market open as Ukraine peace talks see some progress. Is it progress that will stick to that sector in the trading day today? Up next, traders keep a close eye on the yen amid volatility in Japanese assets. If you have questions, if you want to get involved in these conversations around the desk or with our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back. This is the opening trade. It is Monday, the 22nd of December. The answer to the question is not quite. Are we nearly there yet? Not quite. No, we haven't quite made it to the end of December. There's still quite a lot of news to talk about this morning, and we have a flat picture on European equity futures, but there's a lot on the move, and we'll certainly be watching what happens with basic resources and all the metals that are listed here in Europe, Guy, because we have some new highs on gold, silver, copper, everything this morning.
Commodities are really interesting, and they tell you something about what the inflation narrative is looking like, maybe going into 2026. And the fact that gold and silver are rocketing higher, copper's rocketing higher. Maybe you've got a floor being put under crude as well, which will sequentially matter next year. All really interesting as we think about kind of what inflation does. Then you think about what you're seeing in the bond market, this kind of steepening curve story that you're seeing here in Europe. You've seen it in France and Germany last week, as you pointed out. You've got the US curve kind of steepening up as well. What happens in Japan next could be really interesting around all of this. So let's talk a little bit about that. When was the last time that the Japanese 10-year was north of 2%? 1999. That's quite a significant date, isn't it? Anyway, that's where we are now. We're at the highest levels in 26 years. But the significant thing here is that you've got this incredibly weak yen. And the expectation is growing that not only are we going to see verbal intervention, which we've had this morning, maybe you'll see actual intervention, but you also may see further and earlier rate hikes coming through from the Bank of Japan. So let's talk about that, and then we'll fold in all the other stories. Isabel Mateos Ilagos, Group Chief Economist at BNP Paribas, joins us around the table. Good morning.
Good morning.
Is the BOJ going to have to go earlier than the market thinks? The market thinks 6 months, next hike. Is it going to have to be sooner than that if we keep seeing the yen doing what it's doing?
I think this could very well happen. I'll give you two other data points to add to your partying like it's 1999. 95. Last time the BOJ rate was at 75, was below 1.
Yeah.
So and it was the first time since World War II. So that's a pretty big deal. But I'll give you another data point, which is the labor market. According to the Tankan survey that we got last week, is at its tightest since 91. And so I think the BOJ is facing a situation where I think the market perceives that it may be getting behind the curve. Now, we heard from Governor Ueda that they're not behind the curve and they don't want to be behind the curve, but I think that's the debate. And the reaction in the yen market to the rate hike from Friday, I think that was the signal. The market fears that the BOJ is going to fall behind the curve, and they can't really afford to, especially with a government that is adding fiscal stimulus into the economy. So our forecast is also that they wait another 6 months, but the risks are definitely towards an earlier hike than.
Is that what so is the messaging coming through the yen? Because as Anna pointed out, you've got this divergence between the yen and what is happening with the rate story. The yen is what is the yen? What are the signals that we are getting from the yen? Because the yen is weakening. Yeah. Is that the market basically saying get on with it?
Yeah, I think that's the signal. And also you have to think it's you know, the BOJ is still very heavily involved in the bond market, so the signals you're getting from the bond markets are a bit muffled.
Yep.
The signals you're getting from the FX market, of course, are a lot cleaner unless the government steps in to intervene. But it's a delicate point in Japan for monetary policy, and they also have to manage the politics, of course, and I think that's why they may have wanted to show that they're not eager to go too fast, but if the market is putting pressure on them, then maybe that makes it easier also for them to move a little faster.
Yes, that's certainly the politics with the new Prime Minister very much in play. Isabel, very good to see you. So how do you think about the global rates narrative going into next year then? If we have Japan hiking, they've been going their own way for a little while now, but the big gaps between these interest rate hikes and coming from a really low level, but a different narrative. Then in Europe, things seem to be in flux, maybe the ECB on hold. There's an expectation the Fed keeps cutting, it seems, and the Bank of England maybe does a little bit more. How do we make sense of this sort of diverging picture?
Yeah, so actually it's not, well, on one level it is diverging in the way that you described. On another, it isn't, because really what you have is an ECB that, even though President Lagarde doesn't like to talk about neutral, basically has reached neutral, sees inflation at target through its projection horizon without an interest rate cut. So it's at neutral. Bank of England, Fed are still above neutral, so they're going to cut a little bit more. Bank of Japan is still below neutral. They're going to raise. So actually everybody's converging to neutral. And frankly, the emerging market picture is not all that dissimilar. So it's a picture of everybody going back to neutral, each with their own path. And the ECB, as you said, is already there. At the same time, you've got still a lot of government borrowing happening, in some cases increasing very significantly, for example, in Germany, which is going to impact the European yield curve. So this process of longer end going higher is probably one that's going to continue. Already was one of the big stories of 25, except in the US, but we expect to see more of that in 26.
And what will be the role of Germany in all of that? This report last week from the Bundesbank suggested, I think it was the second quarter of 2026 was when we really start to see the fiscal impact on the growth story kick in Germany, and maybe leads us to higher yields as well. What's the broader takeaway from that German story for you?
It's a very positive takeaway for Germany and for Europe. I mean, already this year we will have seen Germany finally break out of this no growth picture that it had been in since the pandemic. Really, we're expecting around 0.3% growth this year, and then a big jump to 1.4 next year. That will be a very significant lift for the whole of Europe. You know, whether it's more in the second quarter or the exact quarterly pace, you can debate. We're actually seeing some momentum already in the German economy, and of course, the more the government spending comes out, the more it will percolate through the economy. And also very interesting to see in the growth fund announced last week, the idea of really leveraging private sector investment as well. So it's not going to be just a government spending picture. There's also an acceleration of the plans to really mobilize private spending. So it's going to be very positive, and sure, it's going to drive up long-term yields somewhat, but the way we look at it, it's overwhelmingly positive. The benefits to growth far outweigh the impact on yields.
So here's my question. How long can the ECB stay on hold for? What's the average gap between holding rates and raising rates? Is 26 the year we get a rate hike from the ECB? Is 27 the year we get a rate hike from the Fed? When do we start? Because markets are discounting mechanisms, right? When do we start thinking about rate hikes? Because if we're done with rate cuts, the next logical thing to think about is that.
Guy doesn't like standing still.
No.
I think central banks quite like standing still.
I'm sure they do for now, but history doesn't tell us they do it for very long.
Look, the thing is, our forecast, ECB forecast, everybody's forecast is for inflation to go slightly further down in 2026. So that's not an environment where you're going to want to think about raising rates. So they're going to start to think about raising rates
so a rate hike
further out in 27. Probably more a second half story. But it very much depends how quickly this growth acceleration in Europe materializes itself. If we're not optimistic enough, we're already optimistic, but if we were to see a faster rebound, you could hit capacity constraints maybe earlier in 27. It's possible. Also, let's not forget right now we're expecting energy prices to continue to be a disinflationary influence into next year. But energy prices, a lot of things can happen. So, but in the central scenario, the rate hike is a second half of 27 story, not earlier than that.
Yeah, could we have different signals coming through on energy? Oil prices going lower, but electricity very different, and a scramble for that, for everything AI and data center related. Yeah. Depending on your reliance on these different sources, that could read very differently into your inflation figures.
That's right, and in fact, it's interesting when you hear ECB policymakers talk about their thought process. They're increasingly trying to push a picture of, well, let's think about inflation ex energy, because energy is volatile and it's got nothing to do with really the health of the economy. And that's tempting. You can see why they would say that. And I think indeed it's important to keep an eye on what's happening to inflation in services, which has been stickier than expected, what's happening to wages. So far, the picture is very reassuring and is really a picture that signals an ECB that's going to be entrenched at 2% for some time, but of course need to keep an eye on that.
So can I park the central bank story in 2026? Is it the Fed's going to do what? Is the Fed going to cut once, twice? Is the Bank of England done? Is the ECB done? The BOJ maybe delivers a couple of hikes? I don't know. Where does the action come from in central banking in 2026?
Yeah, so I think central banks are probably going to be less at the center of the story than they were in the last few years, and that's okay. That means the economy has gone back to where it needs to be, and you let the private sector do its own thing. But to answer your question, yes, Fed probably cuts one more time, Bank of England cuts one more time, and that's that, and then you move on to other stories.
Isabel, thank you very much. That sounds fun. Isabel Matias-Ilago joining us from BNP Paribas. We'll be back to talk about metals. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Know how
the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back, everybody. This is the opening trade, 30 minutes from the start of the European equity trading cash session. And the futures picture looks like this. We have European equity market futures pointing a little lower. Interesting to see what happens with London. We are expected to go lower, but oil prices are higher. Some commodity prices have touched new all-time highs. So we might see some outperformance by those basic material-related sectors, even if London does, as futures suggest, backtrack a little bit. But we're flat to negative, Guy, then, when it comes to the futures.
Let's talk about bonds. This is where I think the commodities and bonds, I think, is where the interesting story lies, maybe this Monday morning. Look at what's happening in Germany. Look at what's happening in France. Yields are continuing to push higher. Italy, nothing moving yet. But the story comes out really of Japan today, where you now got the Japanese 10-year JGBs at highs we haven't seen since 1999. We're north of 2%. The yen is down hard. Is that sending a clean signal, as we just heard from Isabel, to authorities saying, actually, maybe we need to see further rate hikes coming through and maybe more aggressively? That's the narrative this morning. There is a spillover effect. There's connective tissue that joins all these bond markets together. And that is what we're going to watch for, I think, quite carefully in 2026. What happens with the Japanese bond market? What happens with the story going into the Treasury market? Adam Linson joins us now from Bloomberg M Live to talk about all of this. Good morning, Adam.
Morning.
Let's talk about what's happening in Japan today. What message should global bond markets take away from the JGB picture?
Yeah, I mean, I think the path of least resistance is for yields to keep climbing higher. I mean, I know the currency's been sending mixed signals. It's kind of been detached from what we're seeing in long-term yields. But if you look globally at the moment, everything is just creeping higher. So JGB yields creeping higher because of rate hikes. In France, yields are climbing higher because of the fiscal situation there. We saw the Bundesbank report on Friday out of Germany. That's added upside to global bond rates. And then we saw that kind of hawkish hold from the cut from the Bank of England last week, which is all adding upward pressure. And I think the interesting thing here is the outlier potentially is, what's going on with the Fed. They're looking to be cutting rates, but as we've seen throughout this cycle so far, rate cuts don't necessarily equal downside in yields. And I think there's a lot of potential for the US to potentially get swept up in this. And, I mean, if you take the US, for example, as well, one of the main themes in this year has been fiscal largesse. And I don't think that's something that's necessarily going to be going away. We're heading into a midterm election year. The Republicans aren't polling particularly well. And, we may see a situation where Trump needs to kind of pull the fiscal levers to try win the electorate over. We've seen things like tariff checks, for example, be touted. Yes, we got the Supreme Court ruling, which could potentially cause some issues, but the administration is still confident that they're going to be able to enact those. And as you mentioned in your introduction as well, from an inflation standpoint, one of the main inputs is energy. We've seen climbs in energy prices because of Venezuela. And then if you take things like copper, gold, silver, those metal prices are all climbing higher as well. So I think globally, the path of least resistance is for yields to keep climbing higher.
Okay, so that's the global narrative. And then homing in on the US, you think curve steepness is what's going to dominate the conversation, will it, in the first, quarter?
Yeah, I think we're in a bit of a macro dead spot at the moment. We're not really going to learn anything for the next few weeks. It's not until we have the inflation and labour market reports for December that get released in January. I don't think we're going to learn anything there, but I think they'll probably skip in January. We'll probably get a cut in March. There's potential for another later in the year, which could add some pressure to the front ends of the US yield curve. But even if it is relatively anchored, for the reasons I mentioned, I do think there is potential for back-end rates to climb. And also, I think, certain issues like Fed independence haven't gone away. I mean, that's been incredibly thematic throughout the year. But one thing I'm kind of, looking at is, okay, if Trump has his person in the chair and they're not able to enact his rate-cutting agenda, what happens then? The pressure that he put on Powell this year could be even more intense on whoever, gets the top job next year.
Let's talk a little bit about kind of how this impacts other markets. You get higher yields. What do equities do? What are the spillover effects?
So I think, the obvious, way to look at this is the AI trade. That's the one, everyone is getting increasingly nervous. We've seen some of the wobbles over CapEx plans. You've seen the likes of Oracle get hit. And I think, the AI trade is clearly maturing, but we're getting to that point where investors are wanting to see more returns on their investments. And if that's in the, kind of taking place, an example where, rates are rising, those pressures are only going to probably intensify. And one of the positives for the US equity market we've seen over the past few weeks is we've seen increased participation from small caps. Well, that's obviously a positive, but the one thing small caps don't want to see is increasing yields. So that could potentially, pose some headwinds for the US equity market at the same time.
The start of this year was dominated by the dollar weakness conversation, Adam, but then things have not been as weak of late. Second half of the year was not quite that narrative. And emerging markets have done quite well out of that dollar weakness story. What does the next year look like when it comes to the dollar, do you think?
I think I'm probably a bit more optimistic than most people. I think, the dollar will probably struggle against currencies like the Aussie dollar, which has got a strong hiking case, and it's got some of the commodity story backing it as well. But I think, if you've seen the example of the Japanese yen, it's if you take the dollar index, a part of that is a trade against the Japanese yen. The yen just cannot catch a bid. It will take authorities to meaningfully intervene, and even then, I don't think it's guaranteed. And also, a big part of the dollar index basket is the euro, and I'm not quite as optimistic as many people are. I think the Eurozone economy has been resilient, but I don't think it's necessarily going to run hot, and I still really don't see the case for the ECB to be hiking rates. It's not like Japan, where they're trying to escape from negative interest rates and zero interest rates. The deposit rate's at 2%. They don't necessarily need to keep hiking rates and support the currency. So I'm probably a bit more optimistic on the dollar than many people are.
It's going to be an interesting year ahead then. Adam,
Certainly.
nice to see you. Thanks very much indeed. Adam's going to be here the next few days. We'll get his take on some of the other markets that we need to be watching. Adam Linton from our M Live team. Let's kind of connect what we've just been talking about with the yield story into what is happening with equity markets. Defence stocks are the obvious connection. I think that's where Louise is starting this morning.
Stocks are key on the mind this morning. This is obviously after talks between US Special Envoy Steve Witkoff and Ukrainian and European leaders. They met and they spoke of constructive talks around ending Ukraine and Russia's war. So they're saying, this quote from Steve Witkoff saying, "Our shared priority is to stop the killing, create conditions for Ukraine's recovery." So some potentially positive movements on those talks there. So we'll be looking at the key defence stocks across Europe. So Rheinmetall, BAE Systems, Saab, Leonardo, the usual suspects. Obviously, they've been booming on this rise in defence spending. So we'll be watching them closely on the back of those talks developments. Next up, we're looking at mining stocks. This is after commodities rallying globally. So gold, silver hitting record highs. Oil is also gaining. Copper is also rising, reaching about 12,000 a tonne. So we'll be watching some key mining stocks in Europe on the back of that. We're watching the likes of BHP, Rio, etc. And then finally, we're moving on to Telecom Italia. So Telecom Italia, they've approved a proposal to convert savings shares into ordinary shares. You can see they've already had a great past year, up over 100% in their share price rises. They're saying this is all part of simplifying their capital structure. So, if it goes ahead, it could reduce costs, it could improve liquidity. And you can see the analyst ratings already, 13 buys, only 6 holds and 2 sells. So already quite positive for the stock on that, but we'd expect this to potentially rally on the back of this news today.
Louise, thank you very much. Our equities reporter, Louise Moon, with the latest on some of the sectors and individual stocks we're watching. Coming up on the programme, we will head back to the French story. We talked about this a little bit earlier in the programme, as France's cabinet meets later today to discuss a special budget law. They failed to agree a new budget for 2026, and now they need to roll over the 2025 budget. We will speak to Benjamin Haddad, the French Minister for European Affairs. We'll have that interview for you next. This is Bloomberg.
cidade estava sitiada.
Isso eu começo, eu tremia. Não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Monday, the 22nd of December. We're nearly there. 18 minutes to go until the market open. I'm talking about Christmas, of course, not the market open. But this morning, it looks like it's going to be a slightly negative open, which is interesting because actually you've got some fairly interesting action in the bond market, but you've also got US futures actually tracking a little higher.
Yes, you do. So there's a little bit of divergence taking place there. The bond markets this year have been certainly focused to some degree on what's been going on in France. So let's talk a little bit as the year comes to a close about that. This year has witnessed a French government embroiled in near constant turmoil. At the heart of the crisis is France's outsized debt, its beloved social safety net, and what many see as the economic imperative in scaling that back. In this Bloomberg Originals weekly documentary, we lay out the political minefield faced by President Macron, the grave stakes for the country's economy, and what might need to happen to break the deadlock.
In 2019, France watched a national treasure go up in flames. Now, there's a fear that the structures holding up French politics are starting to catch.
There is clearly a problem with French public finances.
Further worsening of the budget deficit. France's political crisis deepened today.
Most French citizens adore their nation's system of social safety nets, but those programs have become increasingly unsustainable. France has the euro area's largest deficit, massive debt, and every attempt at reform has ended the same way.
Surprise resignation from the Prime Minister.
4 prime ministers in 20 months.
We're heading into our 5th Prime Minister now in 2 years.
French politics is in a bit of a mess. It really is an unprecedented crisis.
Benefit reform sparks this. Unions break out the flares, and fragile coalitions collapse under the strain.
France is currently characterized by political blockage due to a very difficult public finance situation.
What people talk about is sort of a gradual sort of suffocation of France's ability to deal with its fundamental economic problems.
History suggests that at this point it's more likely that only a shock can force change. The question is what or who would deliver it?
And viewers can watch the full-length weekly documentary via the terminal or on the Bloomberg Originals YouTube channel. That was just a short section of it. Really interesting watch. Lots to talk about then with our next guest. The French cabinet is set to meet today to present a special law allowing it to roll over vital spending and taxation after budget negotiations were postponed to next year. I'm pleased to say we're joined by Benjamin Haddad, who is France's Minister of European Affairs. Minister, thank you so much for joining us. Lots to discuss in the wake wake of that European meeting, European leaders meeting at the end of last week. So lots to talk about there. But let's start with the French situation. In the very here and now, the cabinet is set to meet. We're going to see the special law employed and probably a rollover of this year's budget. How worried should investors be about the inability of France to pass new budgets?
No, look, the truth is we passed a few weeks ago the social security budget thanks to a compromise at the National Assembly. I want to underline this because this was unprecedented the last 3 years, where we managed to pass through the 49.3 article of the Constitution, the budget. This time we managed to find a compromise on social security, and we're hopeful that we will find a compromise on the budget at the beginning of year 2026. Now, as you know, in France, we don't have shutdowns. What we do is when we can't find an agreement, we have the special law that rolls over the budget from last year. This is what we will do this week, but we will need to find a compromise between the political forces at the beginning of 2026. That's what our budget minister said yesterday. You know, when you look at the politics, at the end of the day, we're in a very similar situation to the countries around us. For a long time in France, we were used to having absolute majorities in parliament. This is not the case anymore. Now we need to do what our neighbors have had the habit of doing for decades, which is putting political forces around the table and finding consensus, finding compromise, building coalitions. This is, first, once again, this is what we've done on social security. This is what we will need to do on this budget.
Okay, so Minister, how long will investors have to wait to see fiscal consolidation bringing down the budget deficit in France?
Well, so our budget minister said yesterday we will hope to find a budget before the end of January, because indeed, as you said, we need to tackle deficits, we need to reduce our debt, we need to tackle public spending, as well as answer some of the key funding needs we need to face, like the continued increase in defense spending, which is included in this budget. But France will keep its trajectory of reducing its deficit to 3% by 2029. This is the trajectory that we've laid out with the European Commission, with our partners, and it's still clearly our objective to keep this on track.
Minister, good morning. France is struggling to make headway. Europe is definitely struggling to make headway. Last week was a really bad week for Europe. Not only did Europe fail to deliver on this idea that we could use frozen assets to help Ukraine. That didn't happen. The Mercosur deal also didn't get signed. People around the world are looking for leadership from Europe, and Europe can't deliver it. Why was last week so bad? Why can't Europe agree to speak with one voice and deliver on the policies that it has promised? Why can't Europe deliver that right now?
I strongly disagree with this assessment. I strongly disagree with it. If you look at the European Council, we managed to find a unanimous agreement to give funding to Ukraine through Eurobonds, 90 billion euros, that gives Ukrainians the visibility to continue to fund their defense needs in the next 2 years. We could have ended this European Council with no agreement on Ukraine. The most important thing is to defend our security and to defend Ukrainians against Russian aggression. And this is what we've been doing. We found an agreement, 90 billion euros, to give visibility to Ukrainians. Now, the vehicle, at the end of the day, is secondary to the main purpose, which was precisely to give them the funding needs that they were asking for. And we've agreed, by the way, a few days before, on keeping the frozen assets immunized for the constant 6 months to 6 months renewal. So we also found an agreement on this. The frozen assets will stay frozen in Europe as long as Russia doesn't pay reparations. We've agreed to keep working on what we could do with the frozen assets, but the most urgent needs was to answer the defense and economic needs of Ukraine, and this is what we did with this historic decision.
But the
90 billion euros for Eurobonds. We had done this during other crises like COVID, and we've managed to do this for Ukraine.
Okay. Minister, the view is that Europe wasn't brave enough. The view is that Europe didn't have the bravery necessary to take Plan A. And I appreciate that we got Plan B, but we didn't get Plan A because Europe was too worried to be able to deliver on that. What does that? Why doesn't Europe have more bravery? We're facing a threat. Why doesn't Europe have more bravery to take a big step?
But this is not the view.
And agree to use these frozen funds.
But ask Ukrainians what they think about this. This is not the view of Ukrainians. Ukrainians are fighting bravely every day against Russian aggression. What they needed was the visibility to be able to continue to fund their defense needs. And this is exactly what Europeans did unanimously. We stepped up. We managed to find an agreement on 90 billion euros. This is a huge amount of money, and this is a historic responsibility. Now, you had a plan A, as you said, by using the frozen asset, not seizing them, by the way, but using them with European guarantees. This was a very complex scheme that raised legal questions from some member states like Belgium and others. And this is why the most important was to find unanimity. This is what we do at the European level. We find the consensus among 27, and we managed to find a scheme to be able to answer the needs so that we will continue to provide the support to the Ukrainian army, continue to increase the cooperation between the European defense industry and the Ukrainian defense industry, as well as the economic needs of Ukraine. I will tell you, in this negotiation, Vladimir Putin thought that we would divide, thought that we wouldn't step up, and for the last 4 years now, we've constantly stayed united. We're the first provider of aid to Ukraine. We're working with Ukrainians also on the security guarantees that we will provide after a ceasefire. So this is, Europeans stepping up for their own security. As for Mercosur, maybe if I can answer the other part of the question, what France has said is always clear. We're not against free trade in general, of course not. But when you trade, you need to ensure a level playing field and stop being naive. You cannot, for example, allow products that are fabricated with pesticides, with food additives that are forbidden in Europe, to enter the European markets. And this is what we've told the Commission with other partners like Italy. We've said we need a level playing field. We need to make sure that we have reciprocity on norms, that we have safeguard clauses to protect against destabilization of markets, that we have effective controls. The Americans do it, the Chinese do it. There's no reason why Europeans should not control the products that are getting into Europe.
Those things might be true, Minister, but this conversation about Mercosur has been going on for more than 2 decades. Why, and now there is a proposal to get to the bottom of it in January. Why will January be any different to December?
Well, because hopefully we expect the European Commission to be able to answer these demands. You've already seen some progress on shaping a safeguard clauses that would protect, it's a break that would protect against too many imports destabilizing a market. We've already seen some work on reciprocity of norms through mirror clauses. We should have effective control starting in January. We're also waiting for the Commission to answer the call of farmers of countries like France, Poland, Italy, and others to also step up on the common agricultural policy and make sure that we have the same level of revenues, the same level of payments through the cap in the next European budget, in the next MFF, as we have in the current one. So these are very...
The Fed should be supporting growth.
But you're less encouraged by what's going on in the labor market, is that correct?
I mean, what's there to be encouraged about? All the jobs growth is basically coming from healthcare. I mean, that was true in the last number as well. Cyclical industries are still slowing. And you have to look at, to me, it's important to kind of think about, sort of an add-up exercise, looking at the underbelly of the jobs market. And, where's the jobs growth coming from? We talk about record high profit margins. A lot of that's driven by tech. That's not a big driver of employment. You look at the margins for home builders. Home builder profit margins have been eroding. I mean, it's very challenging to keep buying people down at, at the rates that they've been doing. That opens up risk for residential construction jobs. What about mining? Oil prices are down. You think oil rigs are going to hire mining workers or lumber? Lumber prices are down too, right? So there's a lot of this sort of focus on how, I think tariffs are weighing on employment. But the truth is, in things like oil and lumber and housing, I mean, prices are down and there's no hiring going on. So I think by sort of putting all the onus on the White House, I mean, you're absolving the Fed in that regard, and I think that that's a mistake. I think there are things the Fed can do to support growth.
Do you think the economy is weak because of what's going on in the labor market? I mean, Neil's not exactly pointing out a rosy picture when it comes to jobs and employment.
No, he's not. And as I've said before, I think the Federal Reserve is too tight. I think it's our job to balance prices in the labor market, and I think that we are not doing a great job of that at the moment. I think lower rates are appropriate. And I think, look, one of the key factors here is that monetary policy hits the economy with lags. right? Most people think those lags are about 12 to 18 months. That means right now, we got to make policy for 2027. And I think there's an excessive data dependence at the Federal Reserve because that makes you very backward looking. There's a lot of people who say, I want to see it in, I need to sort of see this ABC in the data, right? But the data are right now giving you information from July, right? It's very backward looking. And in some cases, because of the lags and shelter that we talked about earlier, the data are giving you information about 2023. Right, not now. So we need to be making policy for 2027. We should not be making policy for 2023 in the rearview mirror. I think it's really important for us to be forward-looking about what developments in inflation and the labor market are. And I think that sort of paying attention to overly data dependent means you're too rearview mirror driving. And I think that's an accident for missing turns.
Do you think that there are things the Fed can do outside of rate cuts to help revive labor market conditions? I mean, we see this morning, JGB yields have exploded. I mean, I think, there is an open question about how much rate cuts would actually bring down longer-term rates, right? So have you thought about balance sheet tools to kind of pull down longer-term interest rates?
I mean, not at present. I still think we're in a relatively vanilla economic environment where lower front-end rates will pull lower back-end rates down over time, all else equal. Now, of course, all else is never equal, but the type of regime you're describing where you cut the front-end rate and that sort of causes the back-end rate to sell off, that tends to occur in places where there's, worries about fiscal solvency and liquidity, and I don't really see any of that when you sort of look around. I think we're in a very normal environment where lower front-end rates would support the bond market.
Governor Stephen Myron, thank you so much. A bonus round because Neil Dutta of Renaissance Macro decided to join. He was excited to get your views. Both of you gentlemen, I wish we had more time. We're out of time today. And thank you to David Gurr, who's
happy to be here.
Who's headed off now to his much-deserved vacation. I'll be with you the rest of the week. Jonathan is still on paternity leave. Lisa's off for the week. But coming up tomorrow, Paul Christopher of Wells Fargo, Moina Mahan of Edward Jones, Vincent Reinhardt of BNY, and Dan Skelly of Morgan Stanley. This was Bloomberg Surveillance. Markets this morning pointing to an optimistic start to the week. It is the second to final week of the year. S&P 500 futures up more than 0.4%. Good morning.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
All right. Kicking off the holiday week, 30 minutes until the start of trading. I'm Matt Miller.
And I'm Bonnie Quinn, stepping in today for Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Netflix strengthens its financing behind the Warner Brothers bid just as Paramount ups the ante. Larry Ellison personally guaranteeing over $40 billion as the takeover fight intensifies. And NVIDIA is said to be eyeing a mid-February AI chip shipment to China pending a sign-off from Beijing. So geopolitics fueling a commodities rally. Oil jumps on a Venezuela risk as gold and silver hit records.
So much going on this holiday shortened trading week. There's 4 days, but there's going to be a lot of trading, plenty of liquidity out there. As you can see, NVIDIA, one stock I'm keeping an eye on, up 1.8%. Maybe we're continuing this rally that we had for the last 2 days of last week. NVIDIA among stocks leading markets higher after a report. It's told Chinese clients it does aim to ship its second most powerful AI chips to China by mid-February.
All right, so obviously that's a stock that we're watching very closely. Also watching Paramount Skydance. It sweetened its offer for Warner Brothers today. Larry Ellison agreeing to personally guarantee $40 billion in equity financing for the proposed $108 billion takeover offer for Warner Brothers.
So let's bring in Bloomberg Tech co-host Caroline Hyde now for more on this story. So Caroline, this is getting really interesting. What I'm curious about is how long can this continue on, given that shareholders aren't voting until the middle of next year?
I mean, this is such a Hollywood drama, and we're living in it blow by blow. Now we're going to get real nitty-gritty details of basically Larry Ellison's wealth, of the trust. He says it's going to be irrevocable. I will not be able to start selling off bits of my assets. Largely, that's in part backed by equity shares of Oracle in and of itself, which is a share price that's been under pressure of late. But basically, he's committing, because that was the vulnerability of their offer. Remember, there is more on the table coming from Paramount in terms of financial money than there is coming from Netflix. But Netflix doesn't want the whole shebang. It doesn't want CNN. It doesn't want the cable networks. It just wants the streaming in the studios. And so from their part, all along, we've seen Warner Brothers say Netflix's offer is better, but also because the clarity of the financing. The clarity of the financing was pretty clear from Netflix. Now they're also managing to piece together what long-term financing looks like. They had bridge loans in place, BNP Paribas, HSBC, some of the banks around that. Now they've already got a revolving credit facility in place for $5 billion. They got 2 $10 billion loans on track. Therefore, we know that they're going to be syndicating, looking back to syndicate about $34 billion worth. You then look over to what Paramount's been doing, and they've basically been saying, my dad's really rich, and he's going to be able to afford this. But then they were like, but what are the details of his wealth, and how set in stone is that? Oh, and why you've been leaning on maybe Tencent at one point? Remember, the Middle Eastern investors? At one point, it was even Jared Kushner as well, who's then since dropped out. So all of this was just more anxiety around the real financing power of Paramount Skydance. And now with this, they're trying to say, look, we are good for it. Up to $40 billion worth is going to be guaranteed by Larry Ellison himself, one of the wealthiest people in the world. But also, they're saying if this deal doesn't get done, we'll give you even more money, $5.8 billion if it gets cancelled.
So, but other than upping essentially the breakup fee and matching the breakup fee that Netflix has already offered, They haven't increased the payout to shareholders. So that's still to come, right? Sweetening the bid.
Exactly, and I think that's what many have felt, is that it's being it all comes down to how much do they value the cable networks at, and seemingly a different price than what David Zaslav thinks he could get if he spins them off. And so all of this comes down to whether or not they're going to up the actual amount. We've heard time and time again on the tech show, people coming in going, don't underestimate the competitive nature of the Ellisons and the willingness they will do to actually bring more money to the table. Maybe this, Vonnie, is the answer to your question, how long does this run? Maybe we do start to get an even more sweetened deal. But as you say, they are extending the tender offer as well out to January 21st, which is a little bit longer than they had. They're going direct to shareholders here, so it's up to the shareholders to decide, how much value do I put on these cable networks?
Yeah, now, does it matter what's getting taken? So if Netflix doesn't want part of it, but, you know, Paramount will take that, does that have to factor in as well?
I guess it does from a regulator's perspective as well. I mean, also the key issue for many is the relationship the Ellisons have with the administration. And some of the reporting out there has been that, it's not been unknown that perhaps the administration would like a new owner for CNN and the like, so maybe they do want to see Paramount Skydance take out that sort of part of the business. But more broadly, I think that when it comes down to monetary value, clearly David Zaslav thinks that there's more money to be got from these cable networks. Remember, for Paramount, the cable networks are actually basically where a lot of the profit was for the business to begin with.
Okay, I want to switch topics really to NVIDIA, because for the last few quarters, when the biggest company in the world, the biggest chip maker in the world, has come out with earnings, it always puts a 0 in its outlook for China. Yes. And now we know that they actually, or there is reporting, according to Reuters, that they actually are getting ready to ship chips to China.
And boosting up production, maybe as soon as second quarter of 2026. The big issue in the room still there is, what is the government of China going to say? They still haven't got sign-off. It doesn't matter whether Jensen wants to get the H200s back up and running. If China's not going to be able to actually buy them because the government's going to limit them, that is the problem. But these are really sophisticated chips. They're far more powerful than the ones that China is currently getting access to, even though they didn't want the H20s. Maybe we will see some work around the H200s. It's interesting as to how this all just fits in geopolitically as well. Maybe we're getting near an actual sign-off for a TikTok deal. All of this is small incremental steps, and a big part of the relationship between US and China is China's access to the most sophisticated semiconductors. So we've got to see whether Beijing does indeed come in and say, yeah, you can start your production, and actually maybe we'll buy them.
Yeah, it's a little bit of theatricality as well, right? And as you say, maybe a tiny bit of leverage. You know, do we change our mind on these NVIDIA chips, even though we want them secretly, because that way, you know, maybe the TikTok deal will get done faster, or what have you. Caroline, how much incremental revenue would this actually be for NVIDIA? Would it be enough to make analysts maybe revise price targets, or to bring in new investors?
Yes. They have talked about the total addressable market being tens of billions of dollars. Up to 50 billion is what they could immediately start accessing if they're allowed to start tapping. China was their second biggest market before they were shut out. This is significant for the analysts, but because we've seen time and time again, Jensen B. Conservative said, I'm factoring in 0 in terms of my sales. Analysts haven't been able to upgrade their absolute outlook in terms of price targets or indeed revenue throws. So I think this would be a significant growth trajectory for NVIDIA if they're able to turn the tap back on.
Well, they're certainly expecting to, according to Reuters. Caroline, thank you so much. That is Bloomberg Tech co-host Caroline Hyde. Commodities surging this morning as well. Oil prices jumping after the U.S. Coast Guard pursued a third oil tanker off the coast of Venezuela as part of President Trump administration's crackdown on the Maduro regime. The escalating geopolitical tensions also sending gold and silver prices to records. Bloomberg Intelligence senior commodity strategist Mike McGlone joins us now from the Miami Bureau. Silver has been outpacing gold all year, or for most of the year anyway, Mike. What has this particular trade got to do with? It's not just geopolitical tensions, is it?
No, it's about everything. The key thing, inklings I have in gold and silver now, is the old mantra, you're supposed to be selling when they're yelling. These markets are so far stretched above most moving average, say 60-month moving average, that you can only compare them to 1979-80. Now, they went up much higher, but gold's peak that period, $800, bottomed around $200 in 2000 or so, and it took decades to get above those levels. Same's in silver. The significance is what's happening this year is all these markets going up, with crude oil going down, is a significant global recessionary trajectory. The key question is, does that continue to next year? So I'm really worried that precious metals are getting way too expensive. Typically, investors at these levels have to wait decades to recoup their money, even though it can go up a little higher. And crude oil is getting cheap, but it's bouncing on reasons that most prudent traders are looking for reasons to sell at higher levels.
Is crude oil going to continue getting cheap as we blockade Venezuela? I know it's not a huge contributor to the global market, but it's something, right?
It's something, maybe 500,000 barrels a day, all of it's going to China. So, Matt, it's really insignificant. But if there's a regime change in Venezuela with some of the world's largest crude oil reserves, you know what that means. More supply, Trump's mantra goes the right way. And it's already happening. So crude oil right now, which is around $57 a barrel, was the average price in 2019. We've gone back to that level. It's basically the break-even cost. And typically you have to get below those break-even costs for an enduring period to put in the bottom. Same things happen with natural gas and the average gasoline price. They're all heading lower. Now, they're supposed to bounce. The question is, are they enduring? I think the bounces will meet selling as we see this major thing. And the number one factor for all these commodities to go higher is the U.S. stock market has to keep going up, and volatility is very low there.
All right, Mike, thanks very much. Bloomberg Intelligence Senior Commodity Strategist Mike McGlone there talking to us about the new highs that we're hitting in precious metals, the drop in oil. Joe in the control room also pulling up MapGo, which shows you the blockade around Venezuela, but also shows you the wealth of oil tankers on the sea right now. There's just so much oil floating on the water that I don't know how much higher you can expect to see prices go. In terms of futures, you saw the green on the screen there. We do have S&P futures rising 0.5%, maybe a little bit of a Santa Claus rally kicking off here, 0.75% on the NASDAQ, and the small caps gaining as well.
And let's look at some other movers on our radar as well, Matt. A group of private equity firms led by Permira and Warburg Pincus in advanced talks to acquire Clearwater Analytics in a more than $8 billion deal.
Cintas has submitted another offer to acquire UniFirst for $275 a share in cash, including a $350 million, I guess we're calling this a reverse termination fee now. This is the breakup fee.
And Harbour Energy agreed to acquire LLOG Exploration for $3.2 billion, marking the UK company's entry into the Gulf. And these are not small deals, Matt.
Yeah, coming up, Wall Street bulls are charging into 2026, causing some concern for other investors. But mostly, they're just all bulls. We'll talk about that next. This is Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. Democrats are threatening legal action after the Justice Department missed a deadline to release all of the Jeffrey Epstein files. Lawmakers say the DOJ is violating a bipartisan law by slow-rolling, heavily redacted files, calling it a cover-up. The department says more documents are coming, citing volume, victim protections, and court limits. The partial release has reignited political fallout ahead of the midterms. And nearly a year in, New York City's congestion pricing experiment is delivering results. Traffic in Manhattan's toll zone is down 11%. Pollution is falling, and the MTA is on track to beat its $500 million revenue goal. Fears of economic harm have not materialized. Foot traffic, storefront occupancy, and sales tax revenue are all up, making the program a potential model for other U.S. cities. And Tesla's electric doors are raising new safety alarms. Bloomberg has found at least 15 deaths in the U.S. over the past decade where people were trapped in burning Teslas because doors wouldn't open, with more than half of the deaths occurring since late 2024. Regulators are now investigating, and Tesla says it's working on redesigns and new automatic unlocking features. And just in, Trian and General Catalyst are out to buy Janus Henderson for $49 a share. This Janus deal, according to Trian and General Catalyst, expected to close mid-2026. Trian and General Catalyst, this bid that they're submitting together values Janus Henderson at about $7.4 billion, Vani.
Yeah, and don't forget the activist investor Nelson Pelson Trian has been involved. It's been an investor in Janus since the late part of 2020. So this is really interesting. The investor group is also including the Qatari investment group as well. So let's talk a little bit more about this now with Bloomberg Markets Live Managing Editor Christine Aquino, as well as the market at large. But this is a massive deal. General Catalyst and Trian taking Janus Henderson, an asset manager, private. I mean, do they need access to the funds that, you know, Janus Henderson would have in reserve?
Yeah, I mean, I can imagine, Vonnie, that the private equity group is very much interested in the funds under management by Janus Henderson. And it really just speaks to kind of the broader evolving just the landscape of finance, right? We have seen a lot more institutional investors, the likes of pension funds, for instance, playing with the idea of diving into private equity, where of course there's a lot more reward potentially, but also potentially a lot more risk, just because of the fact that the companies involved in this space very differently structured from publicly traded companies. But you know, there's a wall of money out there, right? Like waiting to be put to work, especially now that we're kind of potentially seeing a shift in the interest rate landscape as well. And so, yeah, you have to imagine that you know, the interest in fund assets under management with Janus, very much of interest among these types of companies, private equity, and conversely, the investors with Janus as well, potentially interested in those assets as well.
Yeah.
Of course, there is a lot more M&A happening, a lot more IPOs, animal spirits are up, and investors, strategists are bullish, right? We have a story on the Bloomberg showing that there's really tightly clustered targets all headed in the same direction.
Absolutely, Matt. And really to be expected, right? Because it really has not paid off to be a bear in really the past decade when it comes to the equity market. Over the past decade, we've seen the S&P 500 deliver annual gains for, what, 7 out of the last 10 years. And the years that it did deliver annual declines, it was really more because of external shocks rather than whatever's going on with the market exclusively. And, you know, very interesting, actually, the forecasts we're looking for around an 11% gain for the S&P 500, which is half of what we've seen over the last 2 years. So you could argue, actually, maybe they are bullish, but a little less so than the last couple of years.
But it's a little bit terrifying, though, right, Christine? Because, you know, all those fragilities that have been out there for the last several months are still there. Very few of them have been resolved. So the tariff uncertainty is still there. We don't know what the SCOTUS decision is going to be. You know, the effects of the One Big Beautiful Bill, we don't know what that's going to be next year. The data is a little distorted, if not stale completely. So how can analysts be so sure?
Well, I mean, Vonnie, again, right, like just kind of the expectation for that much of a gain, which is, when you put into context of the broader S&P 500 moves that we've seen over the last few years, it is a little bit less, right? And so the bullishness has been tempered, and you're absolutely right. So many risk events here, and I think that is what kind of is causing a little bit of that more subdued outlook. I mean, when it comes to the Supreme Court decision on tariffs, very much a focal point for markets next year. We have seen, though, from the latest Markets Pulse survey that my team does, that people are optimistic about the potential for the removal of those tariffs. So the expectation is that the S&P 500 is more likely to go higher if we do see, in fact, the removal of those tariffs, probably just because of an improvement to risk sentiment.
Hey, what's the MLive team have planned for the holiday? How do you staff up through, well, I guess President Trump has wanted to make Christmas Eve and Boxing Day holidays as well.
Don't worry, Matt, we're going to be around. I'm going to be around personally, keeping the lights on. But no, I mean, yeah, I think, you know, these days actually are the most dangerous in some ways when it comes to the market movements. I mean, a few years ago, I remember, what was it? December 24th was the biggest day for equity volatility a few years back. And so we're coming to that point in time where volatility is low. You have much fewer players. And that is when there is greatest potential for markets to gyrate wildly, especially if we have any sort of unexpected risk that's playing out. So don't worry about it. We're going to be around. Call on us if you need anything.
And the NASDAQ wants to go to 23 hours a day trading, right?
Yeah, 23 and 5, yeah.
All right, Christine, thank you so much. That is Bloomberg's Christine Aquino. Coming up, Morgan Stanley's Andrew Slimmon says he's seeing late cycle behavior in markets, but the question is whether the bull market euphoria lasts months or years. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
A visual.
And the analysis you need.
China's not going anywhere, nor are we.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I don't see a recession in the near term, in part because we are adjusting our policy rate by lowering it, which is appropriate. My view, as I've described, is that a variety of shocks that hit the economy, including changes to the population growth rate due to changes in the border policy, have pushed what we call the neutral rate down, and that policy needs to adjust downward to reflect that downward shift in neutral. If we don't adjust policy down, then I think that we do run risks of rising recessions.
Fed Governor Stephen Myron on Bloomberg Surveillance there. Well, joining us now is Morgan Stanley Senior Portfolio Manager Andrew Sliman. So in spite of what Governor Myron says, Andrew, what do we get next year in terms of rates? Because it would appear to most people that central banks around the world are pivoting and that maybe some of them are even done.
I don't think Andrew, can you hear us? Can you hear me?
I can hear you now. Yeah, great.
All right. So, sorry, we lost touch with you for a second there. We were just listening to Stephen Myron. Understandably, he thinks the neutral rate is far lower than where we are now, but that the economy is hot. It's the hottest economy in the world, right? Do you think that the Fed needs to cut more in order for us to get the double-digit earnings most of Wall Street is expecting?
No, I don't. Look, and I'm a portfolio manager. I'm talking to companies all the time. I don't sense weakness out there. I don't think earnings growth, which should be very strong next year, 14% earnings growth, is predicated on Fed cutting.
That is real strength. 14% again.
That's the problem, though, right, Andrew? Because what if the Fed does cut? I mean, there are two penciled in, and you've got, doves like Myron wanting even more than that.
Yeah, I mean, look, Ronnie, the number one rule of investing is don't fight the Fed. I mean, it's on page 1 of the investment handbook. It is one of the reasons to be optimistic on 2026 for equities.
So, but are you worried that this economy then runs too hot, that we get inflation that's too high, that we get valuations that are also too high, or do you think 100%. Something keeps in check?
100%, Matt. You're dead on right. You combine two risks there. One is the speculative elements come back in the market, which is what we saw earlier until really a washout in November, and that inflates a bubble, and then bad news comes along, maybe bad news we don't know about, and that causes a correction. And then secondly is what you said is inflation comes back and the Fed has to pivot. I think that's a real risk. I'm not sure that's a risk in 2026, but I think that's definitely a risk.
Andrew, what if we start seeing negative payroll prints? And that's not out of the question.
100%. However, I would point out, Vonnie, that in the late 90s, the S&P, doubled before the dot-com blow-up, and we had multiple payroll negative prints. When you have big technological advancements, job growth stalls. That's not that unusual. So I don't think that will derail the stock market.
All right, Andrew, we're going to keep you with us. Opening bells on the other side of this break, and then more with Andrew Sliman there from Morgan Stanley. Quick check on futures kicking off this Christmas week, looking at gains on the S&P, 0.5%, 0.8% for NASDAQ futures, and the small caps gaining as well as we hit record highs on gold and silver, and we see oil recover a bit from the tumble it's taken lately. Stay with us. This is Bloomberg Open Interest.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. And because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are moments away from the start of trading on this Monday, kicking off the shortened Christmas trading week. If you're looking for volatility, you may find it in lighter trading today. S&P futures up 0.5%. Actually, futures haven't moved much at all. NASDAQ futures up 0.8% as well. You hear the opening bell. If you look at the New York Stock Exchange, we see Michael Rafferty from Direction with his team ringing the opening bell. They have a bunch of leverage and inverse ETFs that have been very popular. And this reminds me that ETF IQ is on today. It's Monday. It's a show I used to anchor, but Scarlett Fu now is there with Eric Balchunas and Katie Greifeld. Looking forward to what they have coming up today at noon. If you look at the NASDAQ, you've got Byrna, less lethal, ringing the opening bell. They sell essentially guns that don't kill people. They're like hard plastic pellets that are excruciatingly painful, or chemicals like tear gas that incapacitate you for 30 or 45 minutes. They're in a good mood. The stock has not done well at all.
You got way too excited about those explanations, can I just say, Matt?
I spent too much time on the website today, and it's a fascinating, I guess,
pellets, yeah.
Technology is one word for it, but the stock has done poorly. It's down like 40% this year, and no matter what time period, I wasn't cherry picking. It's just been a bad stock for investors.
You were in pellet picking. All right, that's Byrna. I'm keeping an eye on Janus Henderson for one. Trian and Catalyst, General Catalyst, that is, will buy Janus Henderson for $49 per share. CEO Ali Dibaj will remain in his role. The deal expected to close by mid-2026.
And Paramount Skydance has, in some ways, sweetened its offer for Warner Brothers today. Larry Ellison has agreed to personally guarantee more than $40 billion in equity financing for the proposed $108 billion offer for Warner Brothers. They've agreed to raise their breakup fee to that of Netflix, $5.8 billion, but they haven't increased the bid, really. So it'll be interesting to see if that kicks off. Just one piece of the huge M&A picture on this Monday morning. Let's bring back Morgan Stanley Senior Portfolio Manager Andrew Slimman. Andrew, the animal spirits are alive and well at the end of 2025. A ton of M&A, a lot of IPOs. Does this continue solidly into 2026?
Well, Matt, what's fascinating is normally the big winners, the animal spirit stocks, they do great in November and into the first half of December, and then they peter out as all the tax loss selling and the losers, it gets washed away and they start to rally. But that's not what's happening this year. The momentum stocks got clocked in November, and you can see now they're coming back, roaring back, and the losers of the year, the defensive stocks, that had caught a bid earlier in November, they're fading. So yeah, I think you're getting a return of kind of the more speculative elements late in the year. That's pretty bullish.
Andrew, Micron's earnings, was it enough? I mean, obviously it was enough to turn market sentiment for the moment, but was it enough to change the whole narrative around the AI bubble and how, circular financing might be a problem and so on?
Yeah, I mean, Vonnie, so what's interesting is when companies that have to do with semiconductors or AI, when they report their numbers, they all say the same thing, which is demand's off the chart. So when we focus on fundamentals, I think the stocks do well. It leads to the group doing well. But in between those earnings season, that's when the anxiety about a bubble or too much spending or, circular investments, that's when the group trades off. The good news here is the more people worry about a bubble, the less likely a bubble exists because it keeps valuations down. And most of these stocks trade at very reasonable valuations, all the very big stocks. So I think it's a good thing.
Why is that? I was looking at the GICS sector groups on the S&P and sorting them by market cap and by price earnings multiples and market cap weighting price earnings multiples didn't change the weirdness that I saw, which was that energy and utilities are cheap right now. Even the hyperscalers and IT are like middle of the pack in terms of how expensive they are for next year's estimated earnings. I would think in an AI bubble, those groups would be the most expensive, but they're not.
100%. You nailed it. Look, the S&P forward PE on the tech sector is lower today than it was at the beginning of the year. And so bubbles include excessive valuation. Anyone that says we're in a bubble, I say, well, you must have really thought that last year when the valuation was higher. The answer is that the E has done very, very well. The dangers of looking at PEs is people put too much emphasis on the estimate, the denominator, and with energy, it's lower. So it looks cheap, except energy's done poorly because it turned out that energy prices have come down more than people expected.
Andrew, does it give you pause at all to see gold above $4,400? And then you also have the likes of silver at records, platinum above $2,000, copper nearly at $12,000 a ton?
Yeah, I mean, that worries me. But I will tell you this, Vonnie, look, I've been doing this a long time. I go around, I speak to clients and investors. In the last 15 years, I would say when I give presentations and then people raise their hand in the audience, the first question I have is, I'm worried about the stock market because of the deficit or the dollar. And if you pulled your money out 15 years ago because of the deficit, it would have been a real problem. My point is, I don't know how to qualify that other than the fact that it's not about the weakness in the dollar, it's a weakness in, fiat currencies. And I think it makes sense to have a portion of your investments in hard currencies that aren't dependent on politicians being fiscally disciplined, which they largely are not. But at the end of the day, I guess the losers are fixed income investors who are, currency denominated.
Yeah, it's the dollar. We've been calling for the demise of the dollar for so long, and regardless of the profligate spending in Washington with no guardrails to speak of, it hasn't fallen more than 10%, really 12% max from the peak. Do you see that drop continuing, or is it?
I mean, I think the dollar has been weaker. That helps foreign markets, especially emerging markets. But the key assumption you made there is that other politicians in other countries are going to be more responsible, and therefore their currencies will do better versus the dollar. I question that. So that's the point of why gold, I think one of the reasons it's going up is that all currencies are depreciating. Maybe our dollars come down a little bit more versus others. But I wouldn't make a big bet against the dollar. I don't see it going up with all the liquidity we have coming in next year, and that will bode well for other parts of the world, especially emerging markets.
So, Andrew, what do you say to somebody who's taken some nice profits this year, has money to put to work into the new year? Where should they put it to work?
Well, I mean, first of all, we had a big downdraft in April, and that created a wonderful opportunity. I know that in the midterm year, you tend to get a downdraft, and people will say it's the end of the cycle or excessive or some point. And I'll be counseling people again to take advantage of that. We will get a correction at some point next year for reasons we don't necessarily know about. But I suspect we'll start the year relatively strong, and it will pull money in, and then we'll get a downdraft, and people will panic and want to sell. And that's just the opposite of what you should do.
All right, Andrew. Hope everybody's listening out there. That is Morgan Stanley's Andrew Sliman.
Can I also add, Merry Christmas, Andrew. And thank you so much for all the time that you spent with us this year. Hopefully we get you back on Open Interest soon. Again, Andrew Sliman there from Morgan Stanley. Let's get a check on what's going on in the markets right now. We are only about 10 minutes into the session, but looking at gains about 0.4%. So we're up about 30 points right now on the S&P 500. This is the move screen, I think, the most dynamic way to look at stocks on the Bloomberg or at indexes on the Bloomberg. You can see the breadth is very positive to the upside. 370 stocks gaining, only 132 down. And the NVIDIA story, Reuters reporting earlier that they're going to be shipping more chips to China than previously expected, helping that stock up 1.2%. Not a huge jump, but it adds 6 points to the S&P 500. Tesla also doing well on a story that the pay package, believe it or not, Elon Musk's massive pay package before he had a really massive pay package has been okayed in Delaware by a high court there. Meta and Palantir up as well. Apple, Microsoft, Google, Broadcom, Netflix, all to the downside. So this chunk of the Mag 7, if you'll, I guess, grade 8 if you want to include Broadcom, is a weight on the index today. So even though breadth is overwhelmingly to the upside, watch this space because it could drag us down. Here are the GICs. These are the S&P 500 industry groups that we watch. Energy is the biggest gainer on the day. And as I said, it's also one of the cheapest industry groups. Actually, I think the cheapest if you look at forward PEs. And, Vonnie, this is an interesting point because I was listening to Lori Calvasina earlier on Bloomberg Radio, and she was saying she's just traveled through Europe and she's had client meetings across the U.S. People want cheap right now, and that's definitely what energy is.
Not easy to find it in markets like this, that's for sure, Matt. Coming up, it's not just stocks climbing. Oil happens to be rebounding today amid geopolitical tensions in Venezuela, Ukraine, and the Middle East. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Time now for our top calls. Somehow the analyst action in focus this morning. First up, Clean Water Analytics. It is getting an downgrade, actually, at Oppenheimer after it agreed to be acquired by Permira and Warburg Pincus, and that's a group of investors that are leading that. Oppenheimer saying the deal likely caps any further upside and leaves little chance of a competing bid, given the buyer's scale and financial strength. Next up, Loop Capital upgrading Ollie's Bargain Outlet to buy, saying investors are underestimating its sales growth. The firm says rising consumables driving more traffic and highlighting the company's strong positioning as shoppers trade down this holiday season. And finally, Citi is putting Marvell Technology on a positive catalyst watch ahead of CES, saying meetings with management strengthened confidence that AI data centers will drive accelerating sales growth into 2026 and beyond. The firm expects CES to showcase stronger networking adoption, helping Marvell win next-gen AI business. Matt.
I'm excited for CES. It's just a couple weeks away, which is, by the way, usually that's a technology show, right? It's turned into a car show now.
Yes.
In Vegas. So very cool stuff for sure going to be coming up. Optimism for a year-end rally in equities is growing after dip buyers late last week supported a rebound in U.S. stocks. We're also seeing a jump in commodities with gold and silver touching all-time highs. Not sure if that's optimism. While oil rebounds on geopolitical tensions, that definitely is not optimism. Let's discuss it all with Bloomberg News macro strategist Michael Ball. It just seems like everybody wants a Santa Claus rally. Am I right in feeling that?
Yeah, and look, we got through all the catalysts at the year end, which was sort of this wonky data, which we didn't put a lot of credence into after the Fed basically said they would be ignoring it. Once we got above 6,800 on SPX, we sort of cleared this area now that's much more positive. And as vol comes down, sort of systematic buying increases, we're just melting up. And there's not much to really stop that unless we get something unforeseen, which obviously is always possible.
And we had triple witching Friday and so on, so all that's out of the way, right? Is volume, any way decent at all?
Yeah, I mean, it's where you would expect it for the holidays. Triple witching was a big deal. We had a lot of positioning around that 6,800, 67 on the SPX. And of course, I'm using the S&P as our proxy for risk in the equity market. But the Russell continues to outperform too, which shows this rotation trade on hopes of a better first half growth pulse is still there. But also AI came back. Some of the Gemini news last week, as well as some of the clarity in Oracle and what was going on with these data centers, helped kind of alleviate the concerns specific to that pocket. And as we know, with the market cap being so heavy, it's a big part of the tape.
What do you make of the run-up in gold has been insane to watch. Just, relative to previous moves, we have never seen like anything this steep since the 70s, as we were hearing earlier from McGlone.
Yeah, like a building story all year, right? Which is really now taken off as sort of speculative fervor, because obviously we know we have the central bank buying, we know we have
having
the
gold
inflows.
up 70% in 1 year is just nutso.
And silver even more. So again, there was a fundamental story, and I actually pushed back on the debasement. I think that's part of it, but the real flows were there, both from retail and institutional buying, and now you have the stable coin guys and some of the treasury departments and corporate buying gold. But if I look at the option market, and this is what really scares me, we're at 100% for call skew for some of this stuff on GLD and SLV. there's options are just basically telling you there's no one really left to buy these. It's so expensive to take upside position that you really have to have this miraculous story come in to get paid out.
And then there's the Federal Reserve, right? There's 2 cuts priced in for next year, but literally anything could happen because we don't have data, we don't have the name of the next Fed chair, and those dots could just go anywhere next year, and that could totally upend this market too.
Absolutely, and I think it's going to be interesting in January when we start to get the real data again. But I will point out that gold and silver weren't really moving around when we started talking about Warsh and Waller more, showing they decoupled from this kind of Fed independence fear, which I thought was very telling in a lot of ways, because it made sense when we were talking about Hassett and thinking about, well, maybe there'll be more cuts and it'll be a deeper cutting cycle as we think about our star falling further. But that's not the case right now. There's kind of an even odds now, Hassett still being a favorite, but when you look at Warsh and Waller and combining them, it should be a more neutral take on the Fed, and that shouldn't be so pro-gold. But yet here we are, new highs again today.
I thought it was interesting to see Hammack out, I think in the Wall Street Journal, saying essentially she thinks that we're already below, maybe we're already below neutral, and that the labor market isn't as weak as people say. By the way, I have these long conversations with ChatGPT about markets, and the AI bot tells me that the bond vigilantes are back. But I'm looking at a 10-year Treasury right now, still 4.16. You know, I'm looking at 2s, 10s, still 66 basis points. I mean, it doesn't really feel like. I say this because you bring up, you know, the
Fed worries,
the Fed concerns and guardrails and debasement and gold. Like, it doesn't feel like the market cares at all about Fed independence.
Yeah, like we're steeper marginally over the last few weeks, but certainly not at some kind of worrying level, or the velocity is what I'm really watching. We've stayed in these ranges as far as levels for yields, but also the curve itself hasn't materially decoupled from anything that we've seen recently. So yeah, it's just not there. And I don't know why that is in a lot of ways, because to your point, there's a lot of cross narratives that should be pushing that higher. And it's a very popular trade, but maybe because it's year end, people are like holding off on that.
All right, well, we'll see what happens to inflation and inflation expectations next year, and if that changes anything. Michael, thank you so much. That is Bloomberg's Michael Bull.
I will start calling you now, Bonnie.
Please do.
Instead of talking to ChatGPT about it on my commute home.
Just don't bring your burner weapon.
No, I will not bring a non-lethal weapon from Berna. We will be right back with more on this holiday rally. This is Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks. Rallying on this Monday morning. We're looking at S&P 500 up to 68.65, so up 0.5% and just about 50 points away from an all-time record. Actually, 40 points away from that. NASDAQ right now up 0.6% at 25,500. Taking a look at what's going on with NVIDIA, it often it moves the direction of these indexes. Right now, it's up 1.2% on a report from Reuters that it is delivering chips to China, or preparing that, as well as expanded production. Micron also up more than 3% after a fantastic earnings report, or an earnings report at least that investors considered fantastic. Last week, it continues its rally higher. Paramount up 5.5% after Larry Ellison coming out and saying he will back the Paramount bid, at least $40 billion, the equity portion of it, with his own private wealth, and that they'll raise their breakup fee to $5.8 billion. Janus Henderson on a buyout offer from Trian and General Catalyst. Chevron right now up 1.7%. Oil is up this morning as the U.S., I guess, continues to track and hunt down a third tanker from Venezuela. And then Clearwater Analytics. We've been talking about this one all morning. There's a deal here, Vani, that's driving the shares right now higher 8%.
Yeah, exactly. And we'll get more on it, Matt. It's an $8.4 billion deal in total. Clearwater being taken private. Let's welcome in Bloomberg Deals editor Fareed Salool. This is a really circular story because these same people brought Clearwater public just a few years ago, right, Fareed? Explain to us what happened.
Yes, right. Well, first of all, thank you for having me. It's weird to be in the penultimate week of 2025 and still talking about multi-billion-dollar M&A, but here we are, and that's testament to the year we've had. You're quite right. These companies know this company well. They were invested in it, I think, in about 2000. They helped take it public in 2021, and now they're back in the game, taking it private again. I will defer to portfolio managers at Warburg and Permira on the rationale, but from the outside, this looks like a kind of classic case of a private equity firm going after a software as a service provider. Private equity loves those companies. They generate stable, recurring revenue from loyal clients. And in the years since they've gone public, they've been moving more into AI, which of course is something we know that, you know, it's a game everyone wants to be involved in right now. And so Permira and Warburg are back for another crack.
I just got to ask about M&A in general. You have a lot of experience covering deals, and I know that there are certain times of the year, Labor Day weekend, for example, where M&A reporters have to be like hitting the mattresses, right? All the news is coming in.
Yeah.
Is that not the case over Christmas? Do they give you a break, or do they try and rush deals before year end?
Well, there is usually a bit of a rush, but they also do, you know, they do give us a little bit of time off around the week before Labor Day, like that kind of end of August period, and the end of December, usually quiet periods. That's not been the case this year. It's just been full steam ahead, and yes, so there is sometimes an opportunity to get things done before the end of the year, and this year we're seeing it. Yeah, we're seeing that play out.
So Clearwater went on a buying spree and bought a whole bunch of companies, and sort of it grew itself, right? And now it doesn't just provide back office services, also middle and front office. Does it have competitors? Is this, you know?
Well, I think what's interesting about that buying spree is it's something that they've done since going public. And I think what that has meant is they've taken on a little bit more debt. This has caused some investor concern about that leverage, and the stock has been under pressure because of that, right? That gives them an opportunity, these private equity firms, to come back in and buy it back cheap. Yes, we've also seen an activist investor get into the stock. Starboard's there. It clearly thinks the shares are undervalued, but it remains to be seen whether it's happy with this offer.
Fareed, great having you on the show. I know you're incredibly busy today. Fareed Salool there from our deals team, and there's a lot going on. Coming up, Lori Calvasina of RBC shares her 2026 outlook at the desk. This is Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Christopher Cruz in Washington. The leaders of Denmark and Greenland aren't pleased with President Trump's appointment of Louisiana's governor as special envoy to the island. More on that from BBC's Rachel Wright.
Since his re-election, Donald Trump has repeatedly staked the U.S.'s claim to Greenland, not ruling out military force to take it from Denmark, even though the two countries are NATO allies. His latest move to appoint Jeff Landry as special envoy to the Arctic island has really angered both the Danish foreign minister and Greenland's prime minister, who said the island would decide its own future.
Denmark's foreign minister is going to summon the U.S. ambassador to lodge a protest. American forces are chasing a vessel sailing off the coast of Venezuela. CBS's Willie James Inman has that.
The U.S. official now says the Coast Guard is in active pursuit of a sanctioned Dark Fleet vessel that is part of Venezuela's illegal sanctions evasion. If it catches up with the tanker, it would be the third such seizure this month.
Why was a 60-minute story on an infamous prison in El Salvador pulled from last night's show? In a statement to the New York Times, CBS News editor-in-chief Barry Weiss wrote, "My job is to make sure that all stories we publish are the best they can be. Holding stories that aren't ready for whatever reason, that they lack sufficient context, say, or that they are missing critical voices happens every day in every newsroom. I look forward to airing this important piece when it's ready." More from CBS's Jim Crisula.
In a scathing social media post, 60 Minutes correspondent Sharon Alfonsi wrote that when a segment, quote, fails to air without a credible explanation, the public will correctly identify this as corporate censorship. Alfonsi went on to say the story was screened 5 times and was cleared by both CBS attorneys and Standards and Practices. CBS News has issued a statement saying the story will air in the future after additional reporting.
Get a flu shot, says Dr. Amanda Kravitz, a pediatrician in New York.
This flu season is no joke. We are seeing more cases than we would expect for this time of year. Specifically, we're seeing influenza A, and within influenza A, we are seeing a subtype or variant called H3N2. There are tons of these cases throughout the country, and it is causing a very, very severe flu.
The CDC estimates there have been 4.6 million flu cases across the U.S. since the flu season began. About 1,900 people have died from it. The Powerball jackpot for tonight's drawing will be an estimated $1.6 billion. What would these Bostonians do if they win?
I'd go to Brazil. Party. Maybe some nice jewelry for them. Maybe a watch. Definitely an island. And just retire. Somewhere in their Caribbean. Somewhere warm.
The Dow is up about 0.25%. This is CBS News. A city in central New York State stands to make a lot of money by fining drivers who speed through school zones.
The city of Syracuse installed 33 speed cameras in school zones back in October. In November, city officials say they issued more than 21,000 tickets for speeding or going through red lights near schools. Syracuse.com reports that at $50 a clip, drivers will fork over more than $1 million. The city could have really hit the jackpot back in October with some 83,000 violations. The city used that month as a grace period, sending out warnings instead of tickets. Peter King, CBS News, Syracuse, New York.
The city gets 2/3 of the money. The rest goes to the company that operates the cameras. France's National Postal Service and its banking arm have been knocked offline by a suspected cyber attack. Package deliveries and online payments have been affected. Christopher Cruz, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. You head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Scarlett Fu, Paul Sweeney here with you for the Bloomberg Intelligence program for the next 2 hours. We're going to start off with Ira Jersey, checking in with him, Bloomberg Intelligence, U.S. rate strategy. What's the Federal Reserve going to do with some of the economic data we've been getting here? Brian Jacobson, he's the chief economist at Annex Wealth and Management, get his thoughts for these markets and for this economy. Brian Campbell, he's the leader of the Conference Board's Governance and Sustainability Center. He's got some new research on CEO turnover, firings, along with activist campaigns. That's becoming a bigger thing. And we're talking all things sports with Randall Williams, Bloomberg Business of Sports reporter. Crazy day in the NFL yesterday and in the bowl games as well. So we got a lot coming up over the next couple of hours. Let's kick it off with Lisa Mateo and a Bloomberg Business Flash. Lisa.
You got it. In the S&P 500 erases its December loss, while oil and gold on the rise. Let's start with the S&P 500, up 0.4%, 27 points. The level 6,863. The Dow up 0.2%, 106 points, and the Nasdaq rising 0.5%, 121 points. Over to the yield space, we have the 2-year 3.49%. That's up 1 basis point. The yield on the 10-year 4.16%, and that's up 1 basis point. Commodities in the spotlight, gold and silver hitting records. We go to COMEX gold up more than 1.5% at $4,454 an ounce. Silver up more than 2%. Oil climbing after the U.S. stepped up that blockade on Venezuela. Right now we go to Brent crude up more than 2% at $61 a barrel. The Bloomberg Dollar Spot Index weakening by about 0.3%. Let's check in with shares of Warner Brothers Discovery. They're up nearly 3%. that after more news surrounding its bid from Netflix and Paramount Skydance. On the Netflix side, well, they've refinanced part of a $59 billion bridge loan to support its potential acquisition of Warner. We look at Netflix shares, they're down more than 1%. And then on the Paramount side, Paramount amended its bid, including offering a personal financial guarantee by Oracle chairman Larry Ellison. Paramount shares, they're about 6%. In other news, we have NVIDIA shares on the rise, up nearly 1.5%. Reuters reporting the firm has told Chinese clients it's looking to ship its second most powerful AI chips to China by mid-February. And finally, the information reporting that OpenAI, will they squeeze better margins out of its paid products this year as it races to hold on to that AI position. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Phil and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, and we're streaming live as well. Let's get a look at some of the stocks on the move today. We can do that with Christine Aquino from Bloomberg News. Christine, what are you looking at?
Well, Paul, I'm looking at Netflix this morning. So ticker NFLX. Those shares are slightly down today, down more than 1% now. So just accelerating some of those earlier declines. So the latest on that, of course, is that we know that Netflix has apparently refinanced a $59 billion bridge loan with cheaper and longer term debt. So this is part of its efforts to strengthen its offer for Warner Brothers, right? Because it is still at least favored by Warner Brothers leadership as an acquirer. So last week, apparently, Warner Brothers told its shareholders to reject the Paramount bid in favor of its original agreement with Netflix. Warner Brothers saying that Paramount's offer is, quote, inferior and inadequate, and said the deal's financing was too risky. Now, of course, the latest in Paramount, we know that Larry Ellison is stepping into the fray. He's personally guaranteeing about, what, $40 billion in equity financing for that offer. So we'll see if Warner Brothers leadership changes its tune, but it seems like Netflix at the moment is the front runner still.
All right. Well, this is something that we know Warner Brothers had been pushing for a while. So it looks like Paramount Skydance submitting to that. M&A Monday, Christine. So there's some news on the deals front.
Exactly, Scarlett. Just because it's the second to last Monday of the year does not mean that M&A Monday stops today. It is Janus Henderson. So those shares are up. Ticker JHD. Shares up more than 3%, 3.4% actually. So really accelerating those opening gains. And the latest on that front is, of course, Janus Henderson saying that it agreed to be acquired by Trian Fund Management of Nelson Peltz fame and General Catalyst for $7.4 billion in an all-cash deal. So that works out to be $49 per share. So we know, of course, that Trian, this is just the latest in their steps to overhaul Janus Henderson, essentially, right? They've been an activist investor for about 5 years. And we know that previously they moved to oust previous management, pushed the fund to stop bleeding clients. And so I suppose it makes sense in some way that they're now moving to fully acquire the company. Trian does already own about 20% of Janus Henderson shares. So, you know, seems like a natural step. But investors clearly liking it. The shares up more than 3.4%, as I mentioned.
Janus was one of my favorite clients back in the day out there in Denver. Great commission generator. First Starbucks I ever went to was waiting to go into a Janus meeting in Denver. Across the street, I had no idea what a Starbucks was, how to order, what's a mocha, what's a venti, no idea.
No one knows that still.
No one. I'm not much better
I'm hoping you've worked out your Starbucks order
double
now.
short mocha, I'm good there.
But you know that Janus Henderson as a firm and as the industry has changed so much since I'm sure you visited them.
Yeah, they merged with Henderson. Henderson's was one of the best money managers in the city of London. So, but both kind of growth at a reasonable price. That's kind of their investment philosophy. Newmont.
So shares for that company very much on the up today. So ticker NEM. Those shares are up 3.2%. Of course, very much benefiting from the record highs in both gold and silver. Newmont, of course, is a miner dabbling in both of those metals today. And so we've seen both gold and silver set for their best annual performance in more than 4 decades. So that's quite major. And we're seeing demand really coming from all sides here. We have investors who are looking for havens, looking to gold, looking to silver as a way to just seek a little bit of safety in these markets. But then we've also seen both institutional investors, ETF investors piling into this space as well. You know, for various reasons. I think it's a little bit of diversification, and ETF investors obviously seeing the rally that's been very durable this year, wanting to get in on that. So yeah, and Bloomberg Intelligence weighing in on this as well, saying saying that, they're looking at the premium for Newmont's shares versus its net asset value. So that's keeping up with Agnico, which is the leader in that gold mining space. Good operational performance, according to our analysts.
All right, very good. Christina Aquino, Managing Editor for Markets Live, Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Market Drivers today brought to you by Harvard Business School Executive Education, a world-class learning experience for aspiring and established change makers. Prepare for the next elevation for your organization and for yourself. Learn more at hbs.me/breakthrough. All right, we got some economic data last week that the markets were looking for in terms of the labor market and inflation. We got some more coming up here. The question is, how are our good friends down at the Federal Reserve kind of digesting all this? For that, we go to Mr. Ira Jersey, and we're going to get a sense of what his thoughts are there. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. Ira, where do you think the Fed is these days in their thinking about this economy and where they need to go?
Yeah, they were all over the place. So what you didn't mention, Paul, was that we had a ton of Fed speak last week, too, and we actually had even more this morning. So you definitely have two camps that have been built in here, and one is the more dovish side of the aisle, who think that, hey, we should be cutting interest rates at least a little bit. You even had Williams, the president of the New York Fed, who's the vice chair of the FOMC, so presumably has a little bit more weight than the rank and file members. So he said that, like, hey, we can go, we don't have to go quickly, but we're going to ease. So that suggests to me that maybe a January skip is perhaps the base case for now, but then more easing later, so March, April, once we have a little bit more data and we can see, have the rate cuts that we've already had actually work to stimulate the economy or not.
So the division inside the FOMC is not new. This is something we've seen over the last couple of rate decisions, but we do know we're going to get a new Fed chair starting in late May, because that is when Jerome Powell's term as Fed chair ends. Put together the division within the Fed and this timetable for new personnel at the FOMC, and whether we should be paying attention to all this Fed speak.
Well, I think you have to listen to all the Fed speak, but you have to take it holistically, right? You can't just take one member and say, oh, that's exactly what they're going to do, because it is a committee, and that's what we have to remember. When the new chair comes in, President Trump has said he's going to announce a new chair in January. Presumably that person is going to take Stephen Miron's seat, and if that's the case, then the Fed chair-elect will be in for both the March and the April meetings, and so therefore we'll have some time around the table, but we'll make a few speeches as the Fed chair, and we'll be able to see, or as a Fed governor, I should say, and so we'll be able to see, is this person really very dovish, or are they not very dovish? Presumably they'll be more dovish than Jay Powell has been, but at the same time, again, that person is only one of the 12 members who actually votes on the policy decisions.
Well, if Stephen Miron's going to be replaced, do we need to pay attention to what he says? We already know what side of the dovish or hawkish camp he lands on.
Well, yeah, I mean, he's just, the most dovish person on the committee, and you usually get those extremes, right? You get one or two really dovish or relatively hawkish members, but it's that middle ground that you have to look at. So that's why someone like a Williams, for example, is important to listen to, because, he's voted, he hasn't yet dissented one way or the other, but, if he's saying that, hey, we're not going to necessarily cut in January, you have to take that seriously.
Ira, do we know what Jerome Powell's going to do once he steps down from the chairmanship?
As far as I know, he hasn't said what he's going to do. A lot of former Fed chairs either take a role at one of the think tanks in Washington or go into academia. Those are two of the typical paths. I wouldn't be surprised if Jerome Powell maybe even just retired and wound up being on a lecture circuit or something like that instead of having a day-to-day type of job.
Yeah, commanding six-figure paying fees, right?
Yeah, exactly. A couple board seats, a couple of speaking things. That's the way to go. I mean, who needs it? Ira, thanks so much for joining us. Appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us there. Again, looking at the M&A trade today that just kind of got my attention. Tryon buying Janus Henderson. Tryon advised by Jefferies Group, and Janus Henderson advised by Centerview Partners and Goldman Sachs. So, again, the bankers, I think it's going to, when all said and done, I think it's going to be a good M&A year. I mean, there seems to have been a lot of transactions, a lot of announced transactions.
A lot of not as much in the financial sector as you would have thought, given how much people were talking about the consolidation needed. We're overbanked in this country, and certainly the big SIFI banks can't do much about it because they've got regulatory concerns. But when you go down a size and you're looking at regional banks, you would expect to see a lot more in M&A.
Yeah, a buddy of mine, he works at an investment bank that focuses on regional banks. He's put off his retirement a couple of times because he's just too busy. They're just they're just too busy. He can't let go. He's making too much money. So he said, I'm going to stick around and
there are worse things.
Write some of these tickets here. So we'll see how it goes. All right, we're going to have more coming up on a Bloomberg Intelligence program. We got the markets trading higher this morning. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We've got tech stocks powering some gains. NASDAQ futures rising about 0.5%, 116 points. We take a look at Micron Technology. Their shares up more than 2%. Oracle shares up more than 2.5%. Most members of the MaxF Mega Caps also advancing. We go to the S&P 500, up 0.4%, 30 points. The Dow up 0.2%, 141 points. Precious metals rallying. Geopolitical tensions, expectations of more Fed rate cuts. We go to news. Spot gold right now, $4,417 an ounce. That's up more than 1.5%. Shares of gold miner Newmont, they're also higher. They're up more than 2%. Silver up more than 2%. Silver miner Core Mining, their shares rising nearly 4%. Oil higher as well. We have Brent crude rising more than 2%, $61 a barrel. The Bloomberg Dollar Spot Index, that's weakening by about 0.3%. Over to company news, we have Uber and Lyft. They're each teaming up with Baidu to test out some driverless taxis in the UK. Uber shares up 3.5% almost, and Lyft shares up nearly 5%. And Rocket Lab shares up more than 6%. The company won a contract to design and manufacture 18 satellites for the U.S. Space Force. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Lisa Mateo with our Bloomberg Business Flash. You know, we are on course for a third straight year of double-digit gains in the S&P 500. It's been a pretty remarkable run, Paul, since the end of 2022. And if you look at Wall Street equity forecasters, they are now looking for an 11% gain on average in 2026 as well.
Yep.
So a fourth year of double-digit gains. The question is whether these lockstep views are concerning or not. Let's bring in Brian Jacobson. He is chief economist over at Annex Wealth Management. And Brian, is this a contrarian sign that everyone is kind of expecting the same thing? They're all similarly bullish? Because if that's the case, everything is kind of already priced into the market.
Yeah, I think it's healthy to be skeptical like that, because when everybody is bullish and for the same reason, it leads me to believe that maybe that's already priced into the markets, right? I mean, the markets are forward-looking now. There can be a big divide between what Wall Street strategists are saying and what actual investors are doing and reflecting in positioning. For years, I was a strategist, and oftentimes, you know, what I would say, people would politely nod, but then they'd go and do their own thing anyway. So, you know, perhaps strategists aren't exactly a representative sample of investors out there, but it does lead me to be a bit more cautious about at least the near term, thinking that we're with high valuations, we have some vulnerabilities in the market, room for disappointment. It's just a question of when might that happen and from what level, because even if we get a 10 to 15% drawdown in the markets, is that from 10% higher from here, 20%, or is it at the current levels? And that's where people need to have, you know, kind of express that in their portfolios. And right now, we are just expressing in our portfolios, still bullish about the long-term outlook, but a little bit cautious to make sure that we're not over our skis in terms of the sector exposure or even the thematic exposure in the portfolios.
Brian, after the sell-off in markets in risk assets earlier this year with the rollout of the tariffs, everything's kind of bounced back and making new highs, except the U.S. dollar. The dollar's still down 8-9% from early 2025. What do you make of the dollar here, and what do you make of the dollar in 2026?
Yeah, I think that there's still more room for the dollar to weaken. Doesn't mean that it's going to be weak. When we look at the long-term chart, you know, trade-weighted value of the dollar, especially relative to emerging markets, is incredibly strong. But even for the broader basket trade-weighted dollar, it's still strong, even if we weaken an extra, 7 to 10%. And I don't think we're going to see 7 to 10% this year, but maybe something closer to half of that. So I'm anticipating some weaker dollar, basically driven by a Fed and a new chair who's coming in, who's going to be biased towards cutting, and other developed market central banks who are probably at the end of their cutting cycle, so you get that interest rate differential. But then also in terms of the fiscal situation, really, it's not getting any better. And I think, in fact, it could deteriorate in 2026, which could be one of the big surprises, is just with the one big beautiful bill, how that had the incentive to have investment in property, plant, and equipment and research and development for businesses. I think the Congressional Budget Office is grossly underestimating how much corporations are going to make use of that. In their projections, they're basically saying $350 billion in tax expenditures, so basically the deductions, over the next 10 years. We'll probably get that next year, right? So that's probably a one-year forecast more than a 10-year forecast.
Well, speaking of the role of Congress and congressional estimates through the CBO, we have a midterm election year next year as well. At what point does that start to become something that investors are positioning around?
I think that at least based upon the midterm years that I've looked at, using like the French famous database that they have going back to 1926, midterm election years, like the median, when you kind of map it out by month, it really looks like investors take this kind of let's wait and see until around October, and then you basically get kind of a rally as you go into the election, because with democracy, you give people what they want, and that's usually a good thing. Doesn't always have to be a good thing for everybody, but at least, for the average person who's voting tends to be a positive. And so I think that there will be that cautious positioning throughout. It's probably going to be amplified this year just because of the focus on affordability. And that can really, I think, highlight some of the policy differences between the different parties, right? In terms of affordability, is it about income or is it about what you're spending the money on? If it's about income, is it more pro-growth or is it more pro-distribution? If it comes to prices, is it more about competition or is it about controls? And those are really stark choices. And I think that could introduce some volatility into the markets and leave investors kind of waiting on tenterhooks until we get a little bit more clarity about what the likely outcome is going to be.
Brian, how do you guys think about, as you look forward to 2026, U.S. investing versus non-U.S. investing these days?
Yeah, I'm still a big fan of non-U.S. investing. We had a great year this past year. It's rarely a one and done when it comes to that, just when I've looked at the pattern as far as international performing the United States. And so I'm thinking it could be another good year for international investing, especially when we fold in my view on the dollar. Because if you're a dollar-based investor in the United States, if you invest in the foreign companies, you're also getting their currency along with it, and that could just be gravy on top.
Okay, so when you put it all together, we had talked about the dollar being a weaker, not weak, but weakening in 2026. How do you think about what that means for multinationals' earnings and small caps earnings? And I bring this up because there's so much focus on the rally in U.S. equities broadening beyond the Mag 7 and the biggest 500 companies.
Yeah, I think that it really does favor still the multinationals who have that foreign footprint, because we know that if the dollar weakens, it actually benefits them from a profitability or pricing perspective in those foreign economies. But I think what tariffs really taught people is that small cap companies also source a lot of their inputs from foreign countries. So that could drive up their costs even more if we get that drop in the dollar. So even though I like the valuation story for small and mid cap, I still have to tread carefully in terms of what's their cost structure, because if the dollar weakens, that means their costs go up.
Brian, thanks so much for joining us. Appreciate getting a few minutes of your time. Brian Jacobson, he's Chief Economist at Annex Wealth Management, joining us via Zoom from Brookfield, Wisconsin. Earlier today, Federal Reserve Governor Stephen Miron said the U.S. Central Bank risks sparking a recession unless it continues lowering interest rates next year. He spoke this morning on Bloomberg Surveillance with Anne-Marie Hordern and David Gurr. Let's take a listen.
It is true that the shelter stuff was somewhat distorted by some of the quirks of recovering from the shutdown, but it's also true that the shelter data were distorted for most of the year because of really long lags with which shelter inflation is calculated. If you look at market rents, they've been running at about a 1% rate for about 2 years now, right? That's not indicative of any price pressures in housing whatsoever, but it takes a really long time for measured shelter inflation to catch up to that, just because of various quirks of the statistical measurement process that I got into in my speech last week. So I do think there was maybe some downward bias in last week's print, but at the same time, there's been tons of upward bias in data for the entire year, and it's inappropriate to say, okay, well, we have to adjust for the downward bias, but we're going to accept the upward bias. That itself is a deeply biased position. We got to be clear about both.
Well, do you feel like, yourself included, but do you feel like members of the Fed are cherry picking what about inflation they like or dislike?
Well, I mean, I think that for the last few months, we've had data come out in accordance with, I think, my view of the world. The inflation data have steadily come in cooler than expectations. The unemployment rate has poked up, potentially above where people thought it was going to go. And so we've had data that should push people into a dovish direction. And I think it's somewhat problematic if you see those data coming out and you don't adjust your policy prescriptions in a dovish direction. What does that say about the reactiveness of policy to the economy? I think it reflects very poorly upon the institution.
At the end of that speech at Columbia, you nodded to the fact that recessions are inevitable. Fed's job is to kind of forestall them as much as they can. Policymakers' jobs are that. I'm very curious, when you look at the labor market in particular, the rise that we've seen in the unemployment rate, that's kind of rise we've seen customarily before recessions. How do you assess the risk of there being a recession here in the near term when you look at the labor market, for instance?
So I don't see a recession in the near term, in part because we are adjusting our policy rate by lowering it, which is appropriate. My view, as I've described, is that a variety of shocks that hit the economy, including changes to the population growth rate due to changes in the border policy, have pushed what we call the neutral rate down, and that policy needs to adjust downward to reflect that downward shift in neutral. If we don't adjust policy down, then I think that we do run risks of rising recessions. I don't think it's too late to prevent that, and so I think it's important that we keep on adjusting our policy rate down. But at the moment, it's not my base case, in part because I think that we ultimately will end up continuing to adjust interest rates down.
All right, that was Federal Reserve Governor Stephen Myron speaking earlier today on Bloomberg Surveillance with Bloomberg's Anne-Marie Hordern and David Gurr. And Mr. Myron had a 2 basis point cut in his forecast in the dot plot. He says now that they've moved 75 basis points, the next time he may bring that back a little bit. He's not sure to just 25%. 25 basis
when you look
points.
at that dot plot, it's clear which one is Stephen Myron's dot, right?
Yes.
It's way on its own at the very bottom there. The noteworthy thing here is that you have a lot of Fed speakers in the last couple of days speaking up. And of course, there's a lot of division within the FOMC, as we discussed with Ira Jersey. But you look at the calendar over the next 2 weeks, no Fed speakers on the calendar whatsoever. There's some FOMC minute meetings. Good.
Yeah.
On December 30th, but that's about it. It's going to be pretty much quiet from the Fed.
Yeah, I think it's like that time of year here. So again, the question for the January meeting is, will you have had enough information to form an opinion about whether to move rates or not? Or do you wait to later in the year? So I'm just looking at the calendar, which you go to Fed Go, F-E-D Go. So we got a January 28th meeting, and then March 18th, and then April 29th. So that's kind of the cadence of the next few meetings. And we will get a lot of data, or a fair amount of data, before the January 28th meeting. But will it be enough for the Fed to impact its opinion, or does it choose to wait to a later meeting?
And we have settled into this pattern of 3 rate cuts and then a pause, and then 3 rate cuts and then a pause. So right now, the betting seems to be among market participants that the Fed will stand pat in January and then proceed sometime after that, maybe as early as March, but certainly by April.
Right, 1 to perhaps 2 rate cuts. Looking at the market here today, a little bit of green on the screen here. The S&P's up 30 points. That's about 0.4%. The Nasdaq's also up about 0.4%. The Tom Keene VIX decidedly below 15. That gets your attention there. That is quiescent, as someone once told me. 10-year Treasury up a couple of ticks here, 4.16%, kind of right in line with that trading range. It seems you've talked to the Ira Jerseys of the world, kind of 3.75, 4.25, somewhere in that kind of range is kind of where the 10-year's been. Bitcoin gets a bid here, just under $90,000 per token. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks higher on this holiday shortened trading week. For planning purposes, let's get right to it. Markets close early on Wednesday for Christmas Eve. The stock market will shut at 1 p.m. Wall Street time. Bond markets, they close an hour later. And markets close Thursday for Christmas Day, resume regular trading on Friday. All right, so let's get to the S&P 500, rising 0.3%. Same for the Dow. The Nasdaq up 0.2%. In the yield space, we have the 2-year, 3.50%. That's up 1 basis point. The yield on the 10-year, 4.16%, and that's up 1 basis point. We have COMEX gold up more than 1.5%, $4,462 an ounce. Brent crude, $61 a barrel. That's up more than 2%. The Bloomberg Dollar Spot Index now weakening by 0.4%. Bitcoin up about 1.5% at just above 89,000. Over to company news, and Nelson Peltz's Trian Fund Management, General Catalyst, they agreed to buy asset manager Janus Henderson Group for about $7.4 billion. In other deal making, a group of private equity firms led by Permira and Warburg Pincus, well, they've agreed to acquire software maker Clearwater Analytics. It's a deal valuing the company at $8.4 billion, including debt. We take a look at Clearwater shares, they're up about 8%. And finally, JP Morgan considering offering cryptocurrency trading to its institutional clients. Sources telling Bloomberg it could involve spot and derivatives trading. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Scarlett and Paul.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, it is a crazy time to be a CEO. New research from the Conference Board provides insights onto two big trends. Number one, CEO turnover. I think it's going up. And number two, CEO targeted shareholder activism. And again, we just had that Trian acquisition of Janus Henderson. They were shareholders, so they said, we're going to buy this whole thing outright. So it's happening out there. Brian Campbell joins us, U.S. Center Leader for Governance and Sustainability at the Conference Board. Brian, talk to us about CEO turnover. Is it rising, and if so, why?
Sure. I think, Paul, thank you for having me. I think the trend is that it is up, and we are seeing definitely more CEO transition, partially driven by what may have been longer delayed CEO transitions. When you think back to the pandemic and the volatility since then, companies kept people in positions for longer. And I think that, coupled with regular transition, is showing a spike.
So making up for some lost time, which makes sense. Where do we see this happening the most? Are they big companies, smaller companies, companies that are lagging behind in terms of performance? And if so, by what metrics are we looking at performance?
Sure. Thank you, Scarlett. I think what we're noticing is a trend that's across the board, and in fact, a spike in well-performing companies as opposed to just poor-performing companies. So I think that's the news part of this, the takeaway. And then I think what you're also seeing is we would view this as a shift in corporate governance, more of a proactive approach at the board level.
Female CEOs are twice more likely to be targeted by activists. Wow. What's the data show there?
Well, I think what we're seeing is that twice as likely to be targeted would be reflective of what the data shows. And then from the market's perspective, it's possible that activists are targeting women CEOs because they're more likely to cooperate, may play into other stereotypes, but definitely the trend so high that it is notable.
Well, I guess one exception to that is what's happening over at Lululemon, right? Because Elliott has a stake in Lululemon, and it has now become the biggest shareholder in that company. Calvin McDonald, the male CEO, is on his way out at the end of January, and they're eyeing the former CFO of Ralph Lauren, who is a woman.
Yeah, all right. We'll see. So CEOs, when I look for a CEO, if I'm the board, do I prefer an internal candidate or an external candidate, and is that changing?
Historically, it was an internal focus. We are seeing a shift toward external, and I think that just layers into where we are from a volatility standpoint in the markets generally and what companies are facing between the economy, inflation, and activist activity.
Brian, what skill set is most valuable for a board right now when they're looking at a new CEO? I would imagine that during the pandemic, you wanted someone who is very familiar with supply chain logistics. And even so, in the era of tariffs under Trump 2.0, that would be something that's really, really important. But have we seen certain skill sets become kind of paramount and then others become less important?
Sure. I think the skills matrix that a board focuses on when looking at potential candidates has certainly shifted. Crisis management is a key skill set that has to be present in the current environment. The ability to adapt and be flexible in spite of moving targets. And that was not necessarily the case a decade or so ago.
And DEI, that no longer matters, or is it still there in the background?
We would say it's definitely relevant, but not as prominent as it was, and companies are not speaking about it quite as affirmatively as they were in the last few years.
That didn't last very long.
How long did it last for, like a year or two?
I don't know. It didn't seem like a flash. There you go. Talks about compensation. What's the latest on CEO compensation? Because a lot of folks feel like the stock-based compensation, while it aligns the CEO with the longer-term growth, they tend to set targets that are kind of short-term. If you meet this earnings or this cash flow, this revenue, boom, you get this monster stock award. But that's always been the case, I guess.
Sure. I think what you're seeing there are boards focused on their own accountability. They're under pressure to drive performance, and they need the CEO tied into that. So certainly when you talk about the activist side of it, you've got the Lululemon piece. But then when you think about traditional board orchestrations of CEO roles, recently Coca-Cola announced that in March they're going to have a new CEO, Henrique Braun, who's coming in with 30 years of experience. This is part of an orchestrated change. So definitely new opportunities within structuring and governance. And then I think the compensation package there is more tuned into the longer-term performance at the company versus maybe an external candidate where there's a comp package that lures them to the company.
Brian, I'm sure you guys have done this CEO's report, this research report a couple of times now. What surprises you the most in this latest edition? What did you not anticipate?
I think what we're seeing in the background, and we're certainly hearing it from the members of the conference board anecdotally, is the shift in corporate governance to a strategic orchestrated CEO succession plan. So that's new. I think the CEO seat has always been a quote unquote, potential hot seat, but definitely more so orchestrated planning, boards being accountable and trying to plan that succession. And then also including CEOs on the exit, keeping them on the board to continue that institutional knowledge. So opportunity there as well.
Well, so it used to be when they were out as CEO, they were just gone from the board completely and persona non grata.
Right, and I think it's part of that strategic building of a continuity plan that will continue to perpetuate the institutional knowledge and keep some help for the new CEO transitioning into the role.
How about succession planning for a CEO these days? Because, I followed for a long time the Walt Disney Company, and they had a great succession plan in place until the CEO blew it up at the last moment, and now it's been 10 years and kind of screwing around with Mr. Iger. How important is succession planning?
It's critical these days, and I think what happens now is you've got pipelines of potential candidates, internal and external, which is new, and then also being able to transition in case somebody who is in the wings waiting for an opportunity decides that they're going to leave and take an opportunity elsewhere. Companies need to be flexible, boards need to be adaptable.
Well, Paul, to your point, now they have James Gorman, the former CEO and chairman of Morgan Stanley, leading the succession planning over at Disney because he himself had done such a good job planning for his succession at Morgan Stanley.
Yeah, unfortunately, they lost at least two, maybe three serious, outstanding executives.
And some time.
A lot of time, yeah. But I guess if you poll Disney shareholders, they'll be like, hey, Bob can stay in his office as long as he wants. That's how good he is, how good we believe him to be. What's the big thing that CEOs need to be focusing on these days? Is it simply maximizing shareholder value or stakeholder value?
I think that's a critical aspect of it. That will always be there. At the end of the day, though, I think it is building out that more robust skill set toward flexibility, adaptability, crisis management. The current volatility that we're seeing out there, I think, is the new normal. So CEOs need to adapt.
All right, very good. Brian Campbell, U.S. Center Leader for Governance and Sustainability at the conference board here. Looking at the markets here, we still have a little bit of green on the screen here. The S&P is up 32 points. Pretty much near its intraday high here. That's up about almost 0.5%. NASDAQ up 97 points, about 4
But you notice what is really outperforming today is the Russell 2000.
Yeah, absolutely. Small cappers.
Up 1.4%. Maybe it's a little bit of playing catch up after lagging behind. Every time it looked like the Russell was going to overtake the S&P 500 in terms of returns, it falls back.
Yeah, and we had Lori Calvasina on for RBC Capital Markets, a longtime small cap investor. She's slightly more bullish on the small caps, but not jumping in both
We've been
feet.
here before.
Yeah, exactly. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Larry Ellison here. I think this Paramount Skydance thing just gets more and more interesting all the time. Warner Brothers Discovery had accepted Netflix's bid, so that's kind of where the path we were going down. And of course, there is a competing bid from Paramount Skydance. The values are kind of comparable, $30 a share. There's a lot of assumptions you have to make, but generally pretty comparable. So then it just becomes a question of who's got the best regulatory outlook, number one, and number two, maybe whose stock do you want to take, whose cash do you want to take, how do you want this pro forma company to be capitalized? But Paramount just stepped up here with Larry Ellison, basically, well, not basically, guaranteeing his equity contribution. That's $40 billion. That's a big issue that's been addressed by Larry Ellison, because that was a big issue from Paramount Skydance.
But I guess from Warner Brothers' perspective, it took a while to get to this point,
Yes.
and it shouldn't have from where they sit, because this is something that they were looking for from the get-go.
Yep.
And there was some confusion, there perhaps some miscommunication. David Ellison also agrees not to revoke the family trust. The Ellison family trust owns about 1.16 billion shares of Oracle stock, so that's just something to keep in mind there. In addition to this sweetened bid from Paramount Skydance, they have boosted their termination fee, what they would pay to Warner Brothers.
That's big.
To $5.8 billion from $5 billion. That sounds like a lot. I mean, I don't recall any kind of M&A offer where the termination fee has gotten to the range of $5 billion.
Yeah, it is. That is a big, and as a percentage of the deal price, it's on the high end, and I think that reflects the fact that, you know, there is a lot of potential regulatory risks.
Yeah,
there, so
yeah,
trying to
yeah.
account for them. So.
I mean, there's regulatory risk whether you look at Netflix or Paramount Skydance.
Yep, absolutely. So we'll stay on top of that. I tell you what, it's been a big year for in 2025. Buying sports teams.
Everyone's doing it.
Yeah, I don't think they ever go down. I rarely see like a down round, for anything major. You never see that.
And that's just major. You can also talk
Yes.
about the smaller stuff too,
Yep,
right?
absolutely.
Pickleball teams
Yep.
or spin-off golf leagues or
Yep.
spin-off pickleball teams.
I know, it's just amazing out there. A lot of cash out there. Vanessa Perdomo joins us. She's Bloomberg News Business of Sports reporter. Vanessa, again, we've had a lot of deals. I mean, the Celtics, the Lakers. I mean, there's been a lot of deals out there. I guess there's just this insatiable demand for these professional sports teams.
Yeah, it's been an unbelievable year for sports acquisitions this year, and we've seen the biggest ones ever. Like you mentioned, the Lakers, the Celtics. The Lakers go for $10 billion, and I don't know if anyone would say that's overvalued, but it's most certainly extremely high. And like you said, we haven't seen anything go down. And like Scarlett was saying, the smaller acquisitions, women's sports is one of the other huge things we've seen this year. The Atlanta, Arthur Blank just bought an Atlanta soccer team for $165 million franchise fee, and the NWSL was buying at $2 million just 5 years ago. So these deals are absolutely insane, and I just think they're going to keep going up. And obviously, the NFL will never ever slow down, but women's sports is another big one.
And you have a lot of funds now, institutional funds, looking to increase their sports assets because they see it as an asset class in and of itself, right? It's not correlated with the equity market, with macro trends beyond the cost of borrowing, but it's not tied in lockstep with some of these other markets.
Yeah, exactly. And I think that obviously we saw the private equity was able to get into the NFL just last year. We've seen a good amount of deals there, but there were 6 funds that were approved to be part of the NFL, and only 2 or 3 of them have actually made deals. So what we're going to start seeing in 2026 is those other ones get really heavily involved and start getting into the Dolphins, the Seattle Seahawks, these other teams that are looking for institutional capital to. It's all about buying a new stadium, making a new stadium, and being top of the line there.
So what's the next hot area, do you think? I mean, again, we were talking maybe women's sports has begun. But there's so many leagues out there for lacrosse and this and that and Formula One. And I mean, what are you guys looking for 26?
Well, personally, I'm looking at in 2026, I think that women's volleyball is going to be the next big, huge asset class. Right now, there's 2 leagues that are competing against each other right now.
There's already 2 leagues.
There was 4.
Oh my God.
There was 4.
Okay, this is after consolidation.
Yes, this is after consolidation. There was 2 that came together, so they're 2 competing at the same time. There's a 3rd one that competes in the fall. That we will see further consolidation in that. I believe there will be 1 league eventually, and both of those leagues though are consistently adding new franchises. Both of them have added 3 to 4 new franchises just in the last few months. So we're going to start seeing those finally have valuations, I think, in 2026.
Is there a New York-based volleyball women's team?
There is not. The volleyball teams are actually very heavily focused in college markets because college women's volleyball is huge.
Yeah, I tell you, the Big Ten they take it so seriously. They pack in like the Penn State basketball arena, packed for the women's.
And these are feeders for the Olympic teams as well.
Yes, exactly. Which is another interesting thing when you're looking at what we saw again in this year in sports was, the NIL house deal that got turned over, and we're seeing more money go into sports and college athletes get paid. Women's volleyball players will now get paid because, like you were saying, they pack those arenas, so it is a revenue generating sport, and it's probably going to be one of the highest Olympic generating sports for college.
All right.
Who knew? Thank you so much, Vanessa Perdomo. She is our Business of Sports reporter, and of course, you'll want to listen to Vanessa and Michael Barr and Damian Sassower on the Bloomberg Business of Sports podcast, available every weekend.
Good stuff. All right. So yeah, I mean, I think the women's volleyball, I get all my Penn State stuff pushed to me, and it's not just now the football. It's like football's over now. Now it's volleyball and all this kind of stuff, and so we'll see how that goes. But again, the values associated with those sports teams are just extraordinary. And again, I rarely, if ever, see a down round here. You may lose on a cash flow basis owning these things on an annual basis, but boy, when you do sell and do monetize, you make huge returns. S&P up 30 points. NASDAQ up 105 points. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from Bloomberg Intelligence. Paul Sweeney and Scarlett Fu here. We're at the Bloomberg Interactive Brokers Studio in Midtown Manhattan on this holiday-shortened week. A lot to get through on this M&A Monday. And we're going to start with the latest on the bid for Warner Brothers Discovery. You've got Netflix in one corner, you've got Paramount Skydance in the other. Stephen Flynn, he's our senior credit analyst, will join us to talk about Larry Ellison personally backing this Paramount bid for Warner Brothers Discovery. We're also going to check in with Derek Flackle. He is BNEF's lead U.S. policy analyst to discuss power demand and data centers. Those data centers need a lot of power, and what everyone's saying is that the check on growth in those data centers is going to be whether we can supply the power for that. Following that, we're going to get in to the markets with RJ Gallo, senior portfolio manager, fixed income at Federated Hermes, where the bond vigilantes, are they going to come out in 2026? And then we're going to end things with Nikki Eckstein, Bloomberg Global Travel Editor, on the 25 best places to travel in 2026. I know Paul has a couple of places on his calendar already penciled in, starting with the Caribbean, right?
Yes, in January.
Okay, so we'll find out whether those are some of the hot spots in 2026. But first, let's check in with Charlie Pellet for our Bloomberg Business Flash.
Thank you very much. You just alluding to data centers, got word of a breaking deal right now. Alphabet buying Intersect. It's an energy provider for data centers. Developing story headline right now on the Bloomberg Professional Service. We got you covered. Working the story here at Bloomberg right now, we got Alphabet shares lower, little change, down less than 0.1%. This on a day when the Dow, the S&P, NASDAQ, all advancing. Right to the markets here. Back to work Monday, as Scarlett mentioned, holiday shortened trading week. S&P right now up 30, 68.65 where we stand. That is a gain there of just about 0.4%. Dow Industrials up 189, up by about 0.4. We got the NASDAQ Composite Index up 104 now. NASDAQ higher by 0.5%. The Bloomberg Mag 7 Index up 0.5%. And also the 10-year currently trading 4.16%. The 2-year yield 3.50%. Gold rocketing higher. Look at that, up $90 the ounce, 44.29. Yes, a record there, up by 2.1%. Silver surging 2.5%, 68.87 on silver. West Texas Intermediate crude also gaining up 2%, 57.64, and Bitcoin up 1.9%, 89,810 on Bitcoin. As for the overall market backdrop, Brian Jacobson is chief economist at Annex Wealth Management. He was interviewed this morning on Bloomberg Intelligence.
With high valuations, we have some vulnerabilities in the market, room for disappointment. It's just a question of when might that happen and from what level. Because even if we get a 10 to 15% drawdown in the markets, is that from 10% higher from here, 20%, or is it at the current levels?
Brian Jacobson of Annex Wealth Management, interviewed right here on Bloomberg Intelligence. Paramount Skydance has sweetened its bid for Warner Brothers Discovery, including offering a personal financial guarantee by Oracle chairman Larry Ellison, as he seeks to beat out a rival bid from Netflix. Right now, we do have Paramount Skydance shares today. They are trading higher, surging 7%. Oracle up 1.8%. Warner Brothers Discovery, the focus of all of this, up 2.6%. Netflix, meanwhile, down by 0.9%. Again, recapping, stocks higher. S&P right now up by 0.5%. And again, repeating the headline on the Bloomberg Professional Service, Alphabet to buy Intersect, an energy provider for data centers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. Appreciate that. We got Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Yeah, Charlie had that story about Alphabet, really interesting. Buying this company Intersect, which provides data center and energy infrastructure solutions for $4.75 billion in cash, plus the assumption of debt. Google already owns a minority stake in Intersect from a previously announced funding round. They're saying, the company's saying the acquisition will enable more data center and generation capacity to come online faster while accelerating energy development and innovation. There you go.
Taking matters into its own hands.
Yeah, exactly right. If you can't build it, go buy it. So, all right, let's see what's happening out there in the world, see what some stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Norma Linda. Nora, what are you looking at?
Well, let's kick things off with one of the biggest stories of the day. We've been talking about this all morning. Of course, we've got our eyes on Warner Brothers Discovery. We are hearing that Paramount Skydance amended its bid for Warner Brothers Discovery, and they're actually having Larry Ellison, the chairman of Oracle, personally backing this bid here. A guarantee of $40 billion, $40.4 billion in equity financing for Paramount's proposed $108.4 billion offer for Warner Brothers Discovery. This really has been an evolving story. I feel like it's been a bit of a back and forth, tug and pull here if we think about Netflix and Paramount Skydance. Looking at shares of Paramount Skydance up more than 7% as the best performing stock in the S&P 500 on a percentage basis. Netflix shares, though, sliding down about 0.9% right now as we speak. And Warner Brothers Discovery, which we know is really the center of this entire discussion, those shares are up about 2.7% right now.
All right, number two?
Number two, I've got my eyes on the tech space as well. I'm looking at shares of Marvell Technologies. This is ticker MRVL. We're seeing shares up about 1.3%. This is after Citi opened a positive catalyst watch on the company. This is a chip maker. This is ahead of their conference. It's a tech conference they're going to be having next month in Las Vegas. They're saying that they expect Marvell and peers to highlight growing adoption of scale-up networking, including co-packaged optics at the CES conference, which likely will help this company, Marvell, to win Trainium 4. So we are seeing a bit of a positive upswing here for the company. Shares, though, down on a year-to-date basis by about 23%.
Rocket Labs.
Rocket Labs, this is in the aerospace sector. We're looking at shares of Rocket Lab, this ticker RKLB. They're up more than 8%. The company won a contract to design and build 18 satellites. This is the company's largest single contract to date. So we are seeing shares up about 8%, but on a year-to-date basis, the stock has really been on a tear, almost up about 200% so far this year.
All right, good stuff. Norma Linda, Bloomberg Television markets correspondent Norma Linda. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's talk a little bit more about this. Larry Ellison personally backing the Paramount bid for Warner Brothers. It's something Warner Brothers was looking for, and they appear to have gotten it now. Stephen Flynn is Bloomberg Intelligence senior credit analyst here and is in studio with us. Great to see you, Stephen.
Thanks. Good to be here.
Break it down for me. What does it mean when Paramount Skydance says that Larry Ellison, the chairman of Oracle, is offering a personal financial guarantee of $40.4 billion in equity financing? If something falls apart, what are they going to call upon Larry Ellison to do?
Well, this is an important step because mid-last week, the Warner Brothers board recommended shareholders reject the tender offer by Paramount for $30 a share. And they listed a list of reasons why. And one of them was that there was no personal guarantee from Larry Ellison. And now the company, Paramount, has addressed that this morning with a number of amendments to their tender offer.
But that means he's putting his equities up at stake, right?
Yes,
as collateral.
and they confirmed that they hold 1.16 billion Oracle shares. And if you look at, an Oracle share is about $194 or so, that's about $225 billion. So that is obviously a large amount of value there. And the fact that he's personally backing it is something that Warner Brothers was looking for.
Still, a pro forma Paramount Warner Brothers, it's going to be highly levered, isn't it? Talk to us about the debt profile there and how do you view it?
Yeah, so it gets very complicated. So a pro forma, Paramount Warner Brothers will be highly levered. You're talking, mid 4 times leverage overall. And that's accounting for a significant number of synergies that we're giving them credit for. So if you look at expected EBITDA for Paramount, expected EBITDA for Warner Brothers, and then you add on top of that what they're targeting is $6 billion of annual run rate cost savings. It'll take them a few years to get there, but if you say pro forma, we'll give them credit, the company's still highly leveraged at about mid 4 times.
And X that, it's above 5 times.
Oh, clearly, yes.
Yeah,
If you-
so, I mean, come on.
Yeah, and well,
You're a
it's important.
credit guy. You're not giving them credit for the synergies, are you?
Well, you have to give them some credit, but you really want to see it done.
I mean,
see
as an equity guy, I'm all in on the synergies.
we usually are a little
Yes.
bit more negative. Well, what's important too is how they break it up. So part of the commitment they have on the creditor side, right? So you talked about Larry Ellison and some other equity providers providing over $40 billion of equity capital. They also have a $54 billion secured bridge commitment. And now that's secured. So if we assume that that debt is ahead of all the existing debt that's at both Warner Brothers and Paramount Skydance, and again, you give them credit for synergies, you're talking about pro forma leverage through the secured debt of about 3 times. Now, there's a possibility that you could get that investment grade rated using Charter as a comparable. So if we look at Charter, which is one of the biggest cable companies out there, they owe almost $100 billion. Of that, about $70 billion or so of it is secured bonds and loans that are IG rated, and they're about 3 times levered. So if we use that at a comp, maybe you could get to investment grade ratings from at least 2 of the 3 agencies to qualify for investment grade for that $54 billion, which would be very key to financing.
All right, I know we're talking about Paramount, Skydance, and Warner Brothers as the principal players here, and Netflix if you want to get into that side of the bid too. But I'm curious, and this might be a dumb question, Larry Ellison now personally guaranteeing the equity financing. There's a lot of questions about Oracle and its debt overall. We've seen the credit default swaps on its debt rise. That's the cost to insure against a possible default. Does the fact that Larry Ellison is committing to backing a large portion of the money needed for the deal, does that affect Oracle's credit rating at all? Would a credit investor and analyst look at that and think,
No, well, don't forget, Oracle still has a massive equity market cap, right? And the stock is traded every day. So the market is telling you every day what they think the value of Oracle equity is worth, right? And he has, again, the $1.16 billion of shares worth about $225 billion. And that's what the market's saying it's worth. So that's what a credit investor would look for, that comfort, or I'm sorry, an equity investor at Warner Brothers Discovery saying that that is backing up his $40.4 billion.
and a credit investor wouldn't worry about that part of it?
I don't think, indirectly you could have some concern about it, but I don't think directly you would.
The average credit investors that you talk to at Warner Brothers, which deal do they prefer?
Well, it's complicated. You would argue that, it's interesting, is the Warner Brothers bonds were investment grade rated, right, through through half of last year, or half of this year, 2025. And then they were by far the worst performing, huge negative total return. They went into junk. They were fallen angel in July, and now they've bounced back in one of the better performing high yield names because of all this speculation of some sort of takeout. In either case, the bonds are probably better off than they would be without it, but there's still some concern. So if they go with the Paramount Skydance deal, there's a chance they could be behind all that secured debt that we talked about, that $54 billion of secured debt. But you have all that equity capital coming in that's supporting the overall company, which would give you support as a bondholder for Warner Brothers. Now, the problem with the Netflix deal is that if you're a bondholder, you're probably left with the global networks, which is going to be spun out before Netflix comes in and buys the studios and streaming operations. And that company will be relatively highly levered with a declining business. So I'd say it's pretty close, but maybe you'd lean a little bit towards Paramount Skydance.
Really? All right. I wouldn't have thought that. You guys are getting soft in your old age. Back in my day. All right, Stephen Flynn, thanks so much. Appreciate it. Stephen Flynn, senior credit analyst, Bloomberg Intelligence. Again, we had a really cool piece of news today. Alphabet, Google, going out to buy basically an energy company to power some of their data centers. And that takes us right to our next segment here. How is the U.S. going to pay for all this energy in the AI era? Derek Flakel, lead U.S. policy analyst for BNEF, joins us here. He's down there in D.C. So it seems, Derek, that one thing we kind of know about AI is it's going to take a lot of power. And A, do we have that power in the U.S.? And B, if not, how do we get it?
Excellent question. And the short answer is right now we don't. And getting it is going to take a lot of changes in the regulatory side, but also on the financial and financing side. So look at the Mid-Atlantic market, PJM, where I'm sitting. They recently had an auction for new capacity hit a price cap. That is to say, it went as far as it could possibly go up just on Wednesday of last week, precisely because there's so much challenge getting new power on the grid in order to match the demand profile of data centers. Now, one key element here is that to some extent, understanding how much of this data center demand is real, how many projects are, seeking out multiple places to build, is a little bit uncertain. And secondly, while there are, some potential benefits associated with this, if you increase the overall amount of load on the grid, the amount of power customers, you can spread the fixed cost more broadly. But if you're building new things to meet data center demand, which is usually about 24/7, likely to increase the peak load the grid system is sized to, that means you're going to need to build more infrastructure, not just generation, but wires, transmission, and distribution to get that power to the customers. So right now, a lot of different states and regions are trying to apportion those costs primarily on the data center or especially hyperscaler customers who have a really strong preference to get on the grid fast and can kind of afford to pay those costs. But obviously the devil is in the details, and the regulations are still being worked out both federally and on the state and regional level.
Yeah, this is happening all simultaneously. And keep in mind, we're in the early stages here of the AI build out and of all these AI data centers up and running. What does this mean in terms of costs borne by consumers?
Right, so that really depends on the particular state and region in which it's falling. In a lot of the U.S., we have these quote-unquote deregulated or unbundled power markets where transmission is handled and costed at a regional level, and then each individual state, and this is true in all cases, has the authority to confirm what retail rates you and I are supposed to pay as ordinary customers, and also to segment those so that, say, industrial customers or business customers pay different rates. So in a lot of cases, they're trying to create new retail rates for data center or large load customers, which require them to pay for all of these new grid upgrades themselves. That somewhat mitigates the cost that's sort of socialized to the rest of us of paying for this new power supply. But the devil's really in the details, as I was saying, right? So some of these projects might not always materialize, and then if that's the case, what guarantee do you have that the data center or other large load customer is going to pay for it? Increasingly, states and regions are requiring money up front, letters of credit, other forms of financial commitment that really guarantee that even if the data center appears more slowly than expected, uses less power than expected, that developer is still kind of on the hook for that cost. And that, of course, introduces some financial risk on the part of the developers and the hyperscalers themselves.
Derek, about 30 seconds left. Are consumers' power bills going up because of AI?
Partly, yes, but it really strongly depends on the region. In California, it's more about disasters and those kind of grid costs. In PJM, where there's a capacity market that's really based on like data center demand far exceeding what's going to be built, their cost is going up. And in the future, we might see the data center cost go up in various states, even where it's not happening now.
Yeah, there's that inflation picture shaping up.
Yep.
Even as we look to the Fed to start cutting interest rates or continue cutting interest rates.
Yep.
All right, thank you so much. Derek Flackel is a BNEF lead U.S. policy analyst to discuss power demand and data centers. We know that the data center build-out is only in the early stages right now. More to come in 2026 and beyond.
Yeah, I think if you, most people will be like, I don't want my electric bill going up. Here in the state of New Jersey, we just had a governor's race where
it was all hinged on it.
That was issue number one for Mikey Sherrill, the person who won the race, saying I'm going to look at this issue really hard day one. So that seemed to resonate with voters.
Yeah, I mean, I just look at my Con Ed bill every month and gives me heart palpitations.
There you go. Con Ed, I haven't heard that one. There you go. S&P up 42.6%. We are higher this morning across the board. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Alphabet has agreed to buy clean energy developer Intersect Power for $4.75 billion in cash, plus its existing debt, marking one of the largest deals by the tech giant in its push to dramatically expand its data center footprint to power AI. Shares of Alphabet today, they are higher now by 0.5%. It is an update for the Dow, the S&P, and NASDAQ. Holiday shortened trading week, but right now looking at a gain for the S&P up 42, up 0.6%. Best level of the day at 68.77. The Dow up 270, up 0.6%. NASDAQ up 143, also up 0.6%. The Bloomberg Mag 7 Index climbing 0.6%. 10-year 4.16%. The 2-year 3.50%. Gold now up $100 the ounce, up 2.3%, $44.39 on the precious metal. West Texas Intermediate crude up 2%, $57.66, and Bitcoin up 2%, $89,900 on Bitcoin. JP Morgan Chase is considering offering cryptocurrency trading to its institutional clients as large banks around the world deepen their involvement in the asset class. Now, sources told Bloomberg the Wall Street giant is assessing what products and services its markets division could offer to expand its footprint in cryptocurrencies. For JP Morgan, whose boss Jamie Dimon had earlier dismissed Bitcoin as pet rock, the move highlights how Wall Street is starting to consider it less as a fringe investment. Dimon's latest stance has been more pragmatic. The Dow, the S&P, NASDAQ all advancing. S&P right now up by 0.6%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Looking at the Bloomberg Index browser, INGO on the terminal. Fixed income had a very good 2025, generally high single-digit total returns there for across the space there. Let's check in with our fixed income specialist, RJ Gallo, Deputy CIO, Global Fixed Income Group at Federated Hermes, joining us via Zoom from Pittsburgh, PA, where they're still basking in the glory of yesterday's Steelers win. RJ, you guys had a great year in 2025, the fixed income space here. What's your outlook for 26?
Yeah, well, that was a nice Steelers win since you went there. It was harrowing in the end there for sure.
Yep.
The outlook for 2026. First, hopefully the Steelers, we're in good shape to make the playoffs, but that's not what you want to talk about.
Yep.
On fixed income, look, we had the Ag and the Universal, the Aggregate Index and the Universal Index, each up about 7.1, 7.4%. I mean, that's a really nice year for bonds. And I think it's important to note that the pain and the frustration and the nightmares that the surge in inflation produced for bond returns in the past did ultimately set us up for much better returns going ahead. And this year is a manifestation of that. You get income and price improvement. You can put up over 7% in a diversified U.S. bond portfolio. Very, very attractive for fixed income investors. For 2026, we think the Fed might ease a couple more times. I wouldn't be shocked if we get down lower into the 3% range for the Fed funds rate this calendar year. As a result, there's probably a little bit of price upside at the shorter end of the curve, but the curve has been steepening a lot. It's interesting that the 30-year Treasury yield is actually up on the year on a year-to-date basis. As of right now, it's up 6 basis points on the year. That might be surprising to some people, while the 2-year is down 74 basis points. That curve steepening is apt to persist in 2026. We think you could probably get mid-single-digit kind of bond returns. because your starting yields are still quite a bit elevated compared to they were a number of years ago. But I don't know if we'll put up 7% again on a diversified basis.
RJ, how are you thinking about international influences? We know the Bank of Japan is raising rates, although it did kind of temper some of those expectations moving forward, and the yen sank as a result. We know that there's easing from the ECB and the BOE. What does that mean in terms of demand for U.S. Treasuries from global investors?
Yeah, it's a great question. For so long, Japan had sort of been viewed to be in a quagmire. Low growth, difficult demographics, very low yields, and as a result, the institutional capital in Japan was often a source of demand for bonds in the rest of the world. Now that the home yields in Japan have been rising because inflation has clearly returned to Japan, and the Bank of Japan has had to deal with that by raising interest rates, and you have the highest level in the JGB yield in decades. I think it's a natural point to consider that more of that capital will probably stay home in Japan. So less exported capital, a little less demand for global fixed income from Japanese institutional investors. I think that's a little bit of a bond negative, if you will. Helps to support the prospect of higher yields elsewhere. Ceteris paribus, holding all else constant. Of course, not all else is constant. The U.S. economy is still doing pretty well. Inflation's probably is elevated, but on its way back down. And as I noted before, I don't think we're going to see the Treasury yield plummeting this year. We don't think the Fed's entering into some sort of ease to fight a recession when the economy's in likely pretty good shape in the very near term. I think the event risks that we're a bit more concerned about is the prospect of misinvestment, inadequate returns on the AI investment, and whether or not that causes an overall crisis of confidence at some point in the future. Hard to say. When you're in a bubble, it never feels quite like it, but you worry about it. And that continues to be a worry for us as we look forward into next year.
How much credit risk do you want to take in 2026? I understand spreads are very tight here, but you kind of got paid for that in 2025. I'm not sure about 26. What do you think?
Oh, you're right. There's no doubt that high yield outperformed here in the U.S. Investment grade also outperformed. Spreads continue to remain tight. So you got the extra carry and some price appreciation to boot. In our overall allocation up and across the fixed income sectors, up and down credit quality spectrums as well, we've been a little underweight, and that has not helped our relative performance. Fortunately, we had very successful calls on the significant yield curve steepener this past year. As we look forward, we remain a little bit underweight, meaningfully underweight in U.S. high yield because the valuations there are still very tight. The event risks linked to AI, which I mentioned earlier, plus some prospect of asset deterioration within sort of the private credit framework, which can leak its way into the financial system, certainly into the banking system, remain event risks to watch. Again, we're not calling for some blow up, but it's quite possible that we'll see spread widening on a tactical basis that could cause us to reevaluate the current underweight. But for now, we remain underweight, up a little bit in quality, looking to take some risk in other parts of the marketplace. We have project and trade finance, which is a unique vehicle here that we're very excited about here at Federated Hermes.
Well, let's just stay with credit for a moment, because banks currently dominate credit market issuance, and that is now shifting over to tech, given the hyperscalers' need to finance all that AI infrastructure. I guess my question is the market ready for that? Are the buyers ready to step in, do the due diligence on debt that's long dated for technology that's very fast moving?
Yeah, absolutely. I think that the prospect of a supply-challenged market, the intersection of supply and demand gives you the price, gives you the yields at which you can clear the market. Demand for fixed income has been pretty good. The prospect going forward that we're going to have such large demands for capital from the private sector related to AI, from the continuing large budget deficits we have here in the U.S. and in other sovereign governments, it's quite possible that just the supply pressures alone could result within the credit space widening out credit spreads as investors just can't take down all the available debt. The uncertainties around payoff periods on new technologies, that's a constant theme. It comes and goes over the decades. It was a big question in the 90s, and we know ultimately there was some misinvestment in the 90s that we had to pay for with the dot-com bust. Are we going to relive something like that now? It's hard to say, But I wouldn't be surprised if simple supply pressures with that uncertainty lingering over the capital markets could drive spreads wider in the corporate space in the next 6 to 12 months.
RJ, thanks so much for joining us. We always appreciate getting a few minutes of your time. RJ Gallo, Deputy CIO, Global Fixed Income at Federated Hermes here. All the analysts and strategists are out there with their 26 look-ahead kind of preview. How about for travel?
Love it.
Think about where folks are going in 2026. Nikki Eckstein joins us. She's travel czar for Bloomberg Pursuits. She joins us here via Zoom. Nikki, what are the hot areas for 2026?
Yeah, thanks so much for having me. We've got 25 different destinations that we've identified as being particularly compelling for the year ahead, based off of everything from new hotels to new airlift, flight access, airport expansions, infrastructure growth, or sheerly something in the zeitgeist. And, we've got all corners of the world, places you've heard of, places you haven't heard of. I personally am dying to go to a little place called Barreal in Argentina.
Oh.
That sounds great. Tell us a little bit more about Barreal and what in particular stands out.
Yeah, so Barreal is a place that even our Buenos Aires bureau has not heard of too much. So that gives you a sense of how obscure it kind of feels on the tourist map. And the reason that I'm really excited about it is because it's actually very close to Mendoza, which means that it's easy to get to, but uncrowded. And it has this incredible concentration of jaw-dropping landscapes. You've got the jagged Andes Mountains, and then you've got these national parks that are literally filled in lunar-looking plains that filled in over ancient lakes. And there are these wide flats where you can go land sailing, a sport I never knew existed, where you can sit in these cool bare bones metal chassis and effectively sail your way across the land at 75 miles per hour. It sounds thrilling and beautiful, and I'm dying to do it.
What else jumped out at you this time?
So people are constantly asking where in Europe they should go next, right? Like, we keep hearing about the crowds in Rome, the prices throughout Italy, France, even London. It's hard to find a hotel under $1,000 a night if you're a luxury consumer. I've experienced it. It's hard. So we uncovered a couple of kind of next level places. In Spain, there's a region called Extremadura that is really poised to pop. It's just got little boutique hotels at the moment, some of them run by the area's best restaurateurs. So that's really exciting. And it's becoming a bit of a destination for art lovers as well, thanks to some local patrons who have invested in some really incredible collections. And then we're really excited about Corsica as well, which is an island that's both French and Italian speaking in the Tyrrhenian Sea. And it's got these beautiful, charming fishermen towns, all the pastel colors that you associate with the Mediterranean, a lot fewer crowds, really, unique local foods, wine culture, all that good stuff.
I'm already picturing myself in these places. Nikki, thank you so much. Nikki Eckstein is Bloomberg Global Travel Editor, joining us from New York. And of course, be sure to check out that feature on the Bloomberg.com website. They also have a domestic pick, and that would be the Ozarks in the U.S. Come for the art, stay for the thrills. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. And this Bloomberg Business Flash is brought to you by Harvard Business School Executive Education, a world-class learning experience for aspiring and established change makers. Prepare for the next elevation of your organization and for yourself. Learn more at hbs.me/breakthrough. The Dow, the S&P, NASDAQ, all advancing right now, holding close to session highs on this back-to-work Monday, holiday shortened trading week. Christmas coming up later in the week with the S&P right now up 40. Gain there of 0.6%. S&P at 68.74. The Dow up 240, up 0.5. NASDAQ up 136. The NASDAQ Composite Index up 0.6%. Your 10-year, 4.16% with the 2-year right now, 3.50% on that 2-year. We've got spot gold up $99 the ounce, surging 2.3%. Right now, the precious metal record 44.38. West Texas Intermediate crude up 2.1%, 57.70, and Bitcoin getting a boost this morning, up 1.8%, 89,749 on Bitcoin. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets, and on surveillance this morning, she told us she gets why investors are experiencing jitters.
I actually think all that skepticism is actually really healthy. I'd be more worried if we had, sort of euphoria. And don't get me wrong, I talked to some of the Kool-Aid drinkers. I talked to some people who are really euphoric, and that is one of the things that is feeding jitters in some of that other camp. But it takes a lot of different voices to make a market, and we've got a diverse one right now.
We got those voices covered. Lori Calvasina, RBC Capital Markets, interviewed this morning on surveillance. Deal news. Cintas has proposed a renewed takeover bid of UniFirst Corp, worth about $3.96 billion in equity, in another attempt to buy out the rival uniform maker. Right now, we have got shares of Cintas. They're up by 2.9%. UniFirst surging 17.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Podcast. We were just talking about travel in the last segment. Where do you go? I like the analysts who covered like the travel industry, like cruise ships, theme parks.
And you're going on your first cruise trip.
Going on my first cruise next fall, to France. So that'll be interesting. Jody Lurie actually does this. She actually does this for a living. She's a credit analyst for Bloomberg Intelligence. She follows a lot of the leisure sectors of the economy. Think theme parks and cruise lines, that type of stuff. Hotels, casinos, that type of stuff. From the credit perspective, because remember, debt is soft. Equity is soft. Debt is hard, right? There you go. Jody, let's talk just about the cruise lines here. It seems like people are cruising back again. If Charlie Pellet's any, sign of that. How are they performing?
So the cruise lines always have a dedicated base, but cruising is sort of interesting because it's only 2% of the travel industry. Right. It really is such a small portion of it. Where we've been watching is for those new to cruisers, which I don't know if I'm necessarily convinced that they're going as often or they're attracting the new to cruisers, but the cruisers are still very much cruising and they're spending more than the average consumer.
They're also spending more than the people who go to theme parks, according to your research. And partly that might be because the cruise line industry attracts a different kind of customer than the theme park industry. Theme parks skews younger, cruises skew older.
Easy.
Which would you prefer if you are an operator? Which would you prefer if you're an investor?
So we don't make full recommendations, but I will tell you a couple of things based on our research findings. So first of all, you have to think about how people book cruising versus how they book theme parks. Mm-hmm. So when you're talking about cruises, they book far in advance. They book a year or two well in advance. And what the cruise lines have been doing, particularly post-pandemic, is they've been locking people in on the drink packages, on the experiences. They've been giving these steal of deals, excursion ideas. And when you get on the boat, it's more expensive. So people say, okay, I'm going to book my cruise, but I'm also going to book this, the snorkeling, and I'm going to book this, I'm going to book that. The ones that I definitely want to to do. They also book the drink packages, which, I think you can go either way on that personally, because I don't think I drink enough, but maybe other people do. And it really sort of just helps their cash flows. Now, theme parks, people book much later. They are younger. They are lower income than the U.S. median household. And the key for them is they can get people in the door. They can get them with season passes, or they can just get them for the one-day pass, but they're not necessarily convincing them to spend in park the same way.
But there's higher volume in theme parks, right?
There's pretty high volume in theme parks, but if they're just paying for the admission, it might not necessarily cover the cost per se. Right, they'll get in the door, but they have high capex, they have high cost in general, and they have all the employees that they're paying for.
Six Flags, that's a theme park that got some local Jersey flavor here. Six Flags Great Adventure. How's the capital structure for these theme parks?
They are high capex, so high capital intensive companies.
Yep.
They have
They're always
high
putting in new
lever
rides and
right,
bigger
exactly,
rides.
and similar to cruise lines. So where we sort of see it interesting is theme parks and cruise lines are constantly, they have to get the new experience in, right? So they have to spend not just on maintaining their products, so not just maintaining the ship or maintaining the ride, they also have to get new ones in. So people say, I want to go to Great Adventure because I want to ride Superman, right? So they do this to get people excited, draw them in so that they're going. I mean, the biggest example that I don't cover Universal or Comcast, but Universal's new theme park this year was a big driver to Florida. It wasn't as big as expected necessarily, but it was still pretty big. Now, if you're talking about the regional theme parks, it's a little bit more difficult because people aren't necessarily planning these long-term vacations around Great Adventure.
Do the theme parks attract more domestic consumers than the cruises? I mean, I'm just curious in terms of the sustainability and the stability of your customer base.
So it depends on the brand, because if you look pre-pandemic and now going into a few years post-pandemic, the cruise lines, they segment. So Norwegian, most of their customer base is US. They're US customers. When you get to Royal Caribbean, it's a little bit less. I think it's about 80% for Norwegian. I'm doing this off the top of my head, memory. But 80% Norwegian, you get to about, it's like 70 or 65 for Royal. And then you get to Carnival, and it's even less than that. It's closer to half. It's not quite half that are US versus international. They have a much larger international presence. Brian Egger and I, my equity counterpart, we were on the AIDA, which is one of their brands that they market to international customers, specifically in Germany. And it was a 133 round the world cruise.
Nice.
They were stopping in New York for the day, and they brought a bunch of us equity and credit nerds, and took us around the ship, and everything was in German, as expected, because most of their customers were German. So Carnival has a much more diversified customer base. If you talk about theme parks, SeaWorld or United Parks, as they go by now, their Florida parks, which make up about half their revenue, is international about 10-20%. But when you get to Six Flags, it's much more domestic.
We were off the Amalfi Coast last fall.
Whoa, fancy.
And I saw this big yacht that's like either navy blue or black. And I said, who owns that? He said, it's the Ritz-Carlton.
The Ritz-Carlton, yes. I actually
They
know
have
somebody
their-
who went on it.
Just parked in.
Those are small, though. I mean,
They
small
are.
in terms of the
Term
number of
relative
people
to,
there.
like, the
500
world.
people, yeah.
I mean, that looked pretty cool.
Yeah, that's for the people who want to be on a luxury yacht, but don't want to actually own a luxury yacht, right? The joke about
I
boats
see.
is bring on another 1,000, right? My mother-in-law likes to always say that. And that's why it's called boat. So, but the thing about cruising is that there's a perception about who the typical cruiser is, right? It's the older people who are retired, who like to bring basically the Catskills on the water. But really, I mean, it's changed over time. And what's interesting about our credit research and our travel survey that we do every half a year is we're seeing that it's actually really, really spread out. If you look into the buckets that we've segmented, it's really, it's 1/3 of each. So it's 1/3 18 to 34-year-olds, 1/3 that like middle age group, and 55 and older, 1/3. So it's really not specifically the older.
All right, very good. Jody, thank you so much. We appreciate that. Jody Lurie, she is Senior Credit Analyst for Bloomberg Intelligence, following the leisure part of the economy, and I remember them just being big issuers in the beginning of the pandemic, and were they smart in hindsight. S&P up 38 points, that's 0.6%. The Nasdaq's up 130 points. It's about 0.5% here. Russell Small Capper's up 1.7%, leading the way. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Tesla, stock's hitting 52-week high, all-time high, and that's despite some news out there that, and Bloomberg News is out with an article today, 15 people have died in crashes where Tesla doors won't open. We see it reported all around, but it doesn't seem to be impacting the stock at all. Let's check in with Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. Steve, there is this kind of, what I think for any other auto company might be a little bit of a concern if they've got some, some product deficiencies that are leading to serious injury, maybe even death. That would be an issue. Talk to us about it in the context of Tesla.
Yeah, it's unfortunate that there's a few people that got hurt from this severely, but it's an industry-wide problem. It's not only Tesla, but obviously Tesla sold the most EVs, in the U.S. and many parts of the world. So the impact on them is much greater. This is related to the electronic door handle that actually becomes inoperable in certain situations. For example, in accidents, it's been trapping people in these vehicles in dangerous situations. Again, it's unfortunate, but I think the regulator understands that it is a it is an industry-wide issue. Tesla and many other EVs. The Chinese regulators are on this as well. And the EU regulators are actually looking into this and likely to follow, whatever, US or China does.
These seamless door handles, and I'm not sure what the term is, but I've only encountered them with Tesla vehicles. Are they on other vehicles as well, other manufacturers?
Yeah, they are. The one that comes to mind is actually Rivian, and I'm pretty sure there are others. There are others. The reason why they're flush to the door is really to improve efficiency, aerodynamics. As you know, EVs, they're trying to squeeze as much as efficiencies and miles out of the battery. So they've made them electronic, so they don't come out until you touch them, or when the 12-volt battery is operable. But in accidents, these things, wires get severed or battery gets that battery breaks, and these things don't pop out, and you can't really open them.
Yep.
Even when they pop out, you can't open them.
Interesting. All right, let's step back and look at this Tesla story holistically. I mean, it's had a wild ride, up 22% year to date, but it's been all over the place here. What's the narrative around Tesla these days, Steve?
Yeah, it's an interesting story. The stocks are trading like over 300 times PE. Look, I think people are really bullish on their future on robotaxi, and to a certain extent, Optimus robot, the humanoid robot. Personally, I'm not as optimistic as others on the Optimus robot. I think it's a longer-term thing, but robotaxi could be a more immediate contributor to Tesla's bottom line. They have rolled out in some parts of the U.S., mostly in the southwest region of the U.S., and they have planned to actually expand this beyond those regions. I think one positive news that actually came out a few weeks ago, and social media has been reporting some of this, is that the safety monitor is actually starting to be removed from those vehicles. And actually what it means is that that's a huge hurdle that's taken off the table, that allows Tesla to actually scale their robotaxi at a faster rate than anticipated. So that's a really positive. The second positive is regulations. If NHTSA comes through later in 2026 and comes out with a federal rule on autonomous vehicles, that could remove another hurdle for expansion for Tesla's robotaxi and even Waymo's self-driving taxi.
So is that the new metric, I guess the deployment of these robotaxis, is that the new metric that's really driving the story here and the stock, as opposed to how many Teslas are being delivered and at what profit?
Yeah, I think so. The way I look at it is twofold. One is if you look at economics, right? If you look at the bare bone Tesla Model Y, it's costs about $45,000. It's probably less than that for them to make it. If you do some calculations on using that vehicle as a ride-hailing service, the payback period could be a year, maybe less than a year. So from an economic standpoint, that makes sense. Now, the other thing we look at is, if we're deploying these robotaxis out there, that actually will put, the throughput of their factory will be even higher. That means lower unit costs per vehicle, good for consumer, but also great for profits long term.
Yep. All right, Steve, thanks so much. Appreciate it. As always, Steve Mann, Global Autos and Industrials Research Analyst at Bloomberg Intelligence, on the ever-evolving Tesla story. Now it is evolving from the EVs to robotaxis, autonomous driving, AI, all those good things that people seem to be willing to pay up for. Again, the Tesla stock, 52-week high today and an all-time high as well. So cruising right along there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment, with the S&P up 42 points, the Dow up 260 points, and the NASDAQ up 140 points. That's about 0.5% for both. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Peter King. If you're already at your holiday destination, congratulations. Well done. If not, though, look out for the rest of the more than 122 million travelers this week. CBS's Chris Van Cleve is at Los Angeles International.
AAA and the airlines expected the weekend to be an especially busy start to this long travel period. But it wasn't easy for flyers in particular. We saw more than 25,000 delays, more than 1,300 cancellations. We expect conditions to improve as people are traveling today. But we are watching some storms on the West Coast. The FAA says that could lead to delays at San Francisco's airport. They're also watching for delays at Newark.
They say the wheels of justice move slowly in the case of the Jeffrey Epstein files. It involves the release of 500 fully redacted pages. Here's CBS's Scott McFarland.
The Department of Justice says it is working on removing redactions, but must report to Congress in the coming weeks what's been redacted and why.
Senate Minority Leader Chuck Schumer is expected to file a bill to force the Justice Department to release all of it. The federal government says it's giving illegal migrants more incentives to leave the U.S. Correspondent Nicole Skanga.
The Department of Homeland Security is announcing it has tripled its exit bonus for undocumented migrants who voluntarily self-deport back to their home countries by December 31st, from $1,000 to $3,000 plus. DHS says qualified participants will also receive free airfare to their home countries and be waived of certain civil fines or penalties.
When it comes to buying Warner Discovery, a billionaire with strong ties to CBS may believe he's just made them an offer they can't refuse.
Billionaire Larry Ellison is offering a $40 billion personal guarantee to a hostile takeover bid for Warner Brothers by Paramount Skydance, which is run by Ellison's son, David. CBS is owned by Paramount Skydance. The amended proposal from Paramount Skydance amounts to $108 billion. The board of directors of Warner Brothers wants shareholders to accept a competing buyout offer from Netflix. Jim Crisula, CBS News.
Well, fans are sending get well wishes to this singer. Barry Manilow says he's having surgery after a cancerous spot was found on one of his lungs. He's had bronchitis for weeks. Says all he needs for a good recovery is chicken soup and a lot of I Love Lucy reruns. On Wall Street, the Dow is up 270 points. This is CBS News. NASA hasn't said much about this past weekend's countdown rehearsal for the flight to send 4 humans around the moon, but in a social media post, Commander Reed Wiseman says the Artemis 2 practice run went well. He and his crewmates could fly around the moon as soon as early February. Well, in this country, people are lining up to try for that nearly record $1.6 billion Powerball jackpot. Nobody's matched the numbers for the last 45 tries. And you could still play for another huge jackpot, even though it's overseas.
If you've got the internet, you have a chance to hit it big. It's time for El Gordo, the fat one. And the cash prizes this year total billions in U.S. money. Not only do school kids sing out the prize numbers, the lottery is open to people all around the world. There's no single winner, though. The prizes are awarded in a complex share-the-wealth system. Allison Keyes, CBS News.
And I'm Peter King, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
We're stalking another tanker. Welcome to the Monday edition as the U.S. military chases an empty oil tanker trying to flee the Caribbean as we speak. We'll get the latest on the Venezuelan blockade from Bloomberg's Nick Wadhams here in Washington. It is a ghost town in D.C. today, but congressional leaders are trying to cook up an agenda for when they get back and maybe even avoid another government shutdown. We'll have some important news from over the weekend when we talk to Nathan Dean, the senior policy analyst at Bloomberg Intelligence. And the Epstein files have started coming out, but no one is happy. We'll talk about the backlash with our political panel, and it's all after we look at Wall Street with Charlie Pellet. He's got the latest on the markets from World Headquarters in New York. Jingle bells on Wall Street, Charlie. Not bad today.
Indeed, not bad. Potentially might see a record soon. We have got the Dow, the S&P, NASDAQ, all advancing. S&P up another 42 points today, up by about 0.6%. Right now, we are very close to session highs with the S&P at 68.77, a gain of 42, again, up 0.6. Dow Industrials up 0.5. NASDAQ Composite Index up 138 on NASDAQ, a gain there of 0.6%. The Bloomberg Mag 7 Index higher by 0.6%. 10-year currently yielding 4.16%, with the 2-year 3.49%. The price of gold surging 2.3%, a record $44.37 on gold, up $98 the ounce right now. West Texas Intermediate crude up 2.3%, $57.85 on WTI. Bitcoin up 1.2%. A Bitcoin right now, 89,156. So bottom line here, S&P 500 index set for an 8th straight up month, with over 400 of its shares rising as the gauge approaches a record. But one of the big questions heading into the new year is the health of the consumer and potentially how that could play out with retailer earnings. It all comes amidst the backdrop of tariffs and how much it is costing retailers. Sucharita Kodali is a principal analyst at Forrester Research.
With respect to tariffs, it is something that really has been a big question mark. It's been a bit of a cloud over most retailers over the last year. Many of the largest ones seemingly have persevered. Over the years, they have diversified their manufacturing anyway so that they have tried to be as tariff-proof, particularly in some of the most sensitive goods.
Forrester's Sucharita Kodali interviewed on Bloomberg Surveillance. Paramount Skydance, as we have been reporting, has sweetened its bid for Warner Brothers Discovery, including offering a personal financial guarantee by Oracle Chairman Larry Ellison, as it seeks to beat out a rival bid from Netflix. Here's where we stand. Oracle up 2.5% today. We do have Netflix shares declining by 0.9%. Paramount Skydance up 5.1%. The focus of all of this, Warner Brothers Discovery up by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie delivers on the Santa Claus rally. Charlie, there's a rumor, around here that you're working every day this week. Is that true, that Charlie Pellet works the whole Christmas week?
Yes, the answer is yes, but not entirely true.
You are, aren't you?
Taking off Christmas Day, but listen, if they need me, I'm around.
Christmas Day. Okay, so you're the Bob Cratchit.
And into the following year. Always dependable, always here.
You're the Bob Cratchit of Bloomberg Radio. I don't know who the Ebenezer Scrooge is, but I'm working on it.
Well, there you go, and you can think about your role for Bloomberg Radio between here and the next update.
Do you see how careful he was there?
There you go, Mr. Dependable. I got you.
Thank you. No, that part I know. He is hardest working man in show business. The voice of Wall Street and the New York subway. Does Christina know about that? When you get on the subway, that voice you hear is Charlie Pellet.
I did not know that.
No, see,
I did not know that.
Going to be part of your reality when you're living back in New York City. You will hear Charlie Pellet every single day, whether you're at work or not. You can't
I just
hide
can't
from
escape.
it. It's the
See,
voice
even
of
if
God.
we're not here, it's
Exactly.
always Bloomberg is always with us.
Ms. Ruffini is back with us as well today and tomorrow, and thank you for joining us here on the Monday edition of Balance of Power. Yeah, you can't escape Charlie Pellet, and that's for a reason. He'll be back in about 20 minutes, 15 minutes with the latest look at the markets here. It was an interesting weekend. Yeah, do you know, stand clear of the closing doors, please? Do you know that line? That's Charlie.
I do know that. There were a couple policy things that have happened over the last week I'd like to stand clear of as well.
Okay, fine. That's interesting.
You know, we're following Venezuela, and we've got another tanker maybe on the run. Maybe it's empty. We're not quite sure what the rules are there. And Rubio was asked about this at his press conference on Friday. We were just talking about where does this policy go? What I'm trying to figure out is what the administration really wants from Venezuela.
Well, it goes to a third tanker, apparently. We nailed the second tanker over the weekend and then found a third that we're now chasing out of the Caribbean. They turned tail and ran, and I guess we've got eyes on this empty tanker right now that may or may not be soon property of the new U.S. Shadow Fleet. Nick Wadhams is with us to talk about this. Listen to what the Secretary of State said as Christine is referring. Here's Marco Rubio.
It is clear that the current status quo with the Venezuelan regime is intolerable for the United States. The status quo, that they operate and cooperate with terrorist organizations against the national interests of the United States. Not just cooperate, but partner with and participate in activities that threaten the national interests of the United States. So yes, our goal is to change that dynamic. And that's why the president's doing what he's doing.
With us is Nick Wadhams. Nick, your official title is Bloomberg U.S. National Security Team Lead, but you and I have worked together forever, and when we used to work for different networks at the State Department, I just referred to you as guys whose office I would run into when I didn't know what was going on and had questions to ask.
Well,
so
he still has that.
Thank you. Yeah, so I got some more questions, Nick. What's going on here? Because for a long time, anything that hinted of regime change or was regime change adjacent was verbiage that people at the State Department, diplomats, the Americans really didn't want to say. Where is that ball moved?
Well, I mean, your question at the very beginning of this, what's going on in Venezuela, is still something we're all actually trying to figure out. I mean, the administration has moved very clearly. You had Kristi Noem today saying on Fox, Maduro has got to go. So they have been very explicit that they see Maduro as an obstacle to Venezuela's future. Rubio in his press conference was very evasive on this issue, saying, you know, the situation is intolerable, but not openly advocating for regime change. Kristi Noem takes it a step forward today. But we still don't really know the full strategy. So they're putting this pressure on these tankers. They're launching strikes on alleged narco traffickers coming from in the Caribbean and the Eastern Pacific. But what is that strategy moving toward? Is it an anti-drug effort? Is it a desire to boost Maduro from power? The administration has not said how it wants to get from point A to point B. What we do know, though, now is, going back to one of the terms that was famous from the time we worked together at the State Department, maximum pressure, and that really seems to be what it's about.
We're showing some images right now of just there's a wealth of videotape that's coming out of the Caribbean of us boarding tankers, blowing up alleged drug boats. Nick, let's focus on the tankers for a minute, because this third one kind of runs against the grain of the narrative last week in that we were pursuing sanctioned tankers. This one may be under a false flag, but is not on the list of sanctioned tankers. Can we legally take this thing?
Well, I mean, this is the question we are all trying to figure out, because this administration has been so aggressive in pushing the bounds of what is legal and what's not, and what we would consider to have been totally unacceptable in a previous administration. What they're saying on this one is maybe it's not about the tanker, but it's about the oil. So we have so many sanctions on Venezuela. We can't get you on the tanker, the name of the tanker, it being on some Treasury Department list, but we know its cargo is essentially something that Venezuela should not be allowed to trade in, so we're going to go after it on those grounds. There's so many questions here about the legal boundaries and whether a reason like that would hold up in a court of law, but what you see from this administration is they don't care, they're doing it, and you know, a real big question on where things go from there.
The other question I had is, there are still legal oil tankers coming out of Venezuela. I mean, I was reading up today, a fifth of Venezuelan oil is still processed in the United States. Chevron is still operating there in partnership with PDVSA and a lot of places. Is there a risk to those tankers? If you were that company, would you want to put that oil on the water right now?
Well, we have seen a lot of shippers just turning their tankers around because they don't want to face those risks. I mean, it is a sort of fascinating dynamic about this that, yes, Chevron does have a general license that basically gives it not carte blanche, but they are allowed to do business because they have had over the years a lot of operations in Venezuela. And as you say, Venezuelan oil is really sour. It's really sludgy. It's hard to process. It needs to be refined. And the place where that has traditionally happened is in the U.S. So they have kept that channel open through a series of licenses. So it's expected that those tankers would be allowed to pass through this quarantine. They're calling it a quarantine, not a blockade, because a blockade is an act of war. But what we are seeing is that a lot of those other tankers are just turning around or not willing to risk it.
I guess we take all these tankers to Greenland once we get them all together, because he's not letting go of the bit on Greenland.
No.
Nick, the president said last evening he's naming Jeff Landry, the governor of Louisiana, who's not from Greenland, to be his special envoy in this case, because Landry, quote, understands how essential Greenland is to our national security. Presumably, Governor Landry read this on Truth Social and then issued his own statement saying, this in no way affects my position as governor of Louisiana.
Right.
Are we playing around here? Is this just something to distract us from another thing, or are we actually going to annex Greenland at some point?
I don't really believe very often in the distract us from another thing narrative on a lot of these. I think what you're seeing, though, is an administration, when Trump came back into office, there was a lot of talk about Greenland. It was really in the news. There was a lot of tension with Denmark. J.D. Vance went there.
Jr.
Then it kind of faded away, and we all thought, and a lot of Republicans who were very uneasy with the president's desire to annex Greenland and the Panama Canal were, I think, sort of relieved that this had faded from the headlines. But what we're seeing here really is an indication that President Trump has not forgotten about Greenland. He wants Greenland, and he is going to keep pressuring this issue. So where this decision came from at this particular moment, we haven't figured it out yet, but what you can be sure of is that despite the unease, the feeling of queasiness among Republicans about this, the president has not forgotten, is going to keep pushing this issue.
So I was actually in Greenland not too long ago, and
What were you doing there? Was this fun?
There is a new, breaking news, there's a new direct flight from Newark. You can fly 4 hours Newark to Greenland. It's amazing. So they're getting the first batch of American tourists. And they told me, first of all, the first couple of planes did have a lot of MAGA folks who came off the plane with red hats and were walking around looking like they were picking out places to live. So now when you walk downtown in Greenland, they have shirts that essentially say Greenland for Greenlanders and a lot anti-Trump posters.
Wow, yeah.
But the irony is they said they would have liked the economic interest from the U.S., just maybe not at this level of takeover.
I think the level of intensity has made a lot of people very uncomfortable.
The EU weighed in on this, by the way, saying that it stands in full solidarity with Denmark and Greenland. So add this to the list of conversations with our European
what Landry will do as the envoy is very much unclear. We've seen the president propose a lot of these envoys in the past, and then their job description is very unclear. So a lot of questions.
Well, the governor will never buy a drink in Greenland. I guess we can assume right now, if he's confirmed. I don't think that's a confirmable position. Nick, thank you so much. Great to see Nick Wadhams and start things off here in the national security space, because we're going to turn back to domestic politics coming up. America's dad is on his way in. Nathan Dean from Bloomberg Intelligence with the congressional agenda for next year, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 set to rise for an 8th straight month. Right now, we have got stocks advancing. S&P up 41 at 68.76. That is a gain now of just about 0.6%. Holiday shortened trading week with the Dow up 256, up by about 0.5%. Nasdaq up 138 on the Nasdaq Composite Index, a gain now of 0.6%. 10-year at 4.16% with a 2-year 3.49%. Gold now up $98 the ounce, looking at a record $44.37. Precious metal advancing by 2.3%. Silver also up 2.3%. Bitcoin is gaining 1.3%. 89,271 right now on Bitcoin. JP Morgan Chase is said to be considering offering cryptocurrency trading to its institutional clients as large banks around the world deepen their involvement in the asset class. Now, sources tell Bloomberg the Wall Street giant is assessing what products and services its markets division could offer to expand its footprint in cryptocurrency. JP Morgan Chase up now by 1.5%. And Michael Saylor's Strategy Inc. bolstered its cash reserve to $2.19 billion and paused purchases of Bitcoin over the past week as the largest digital asset treasury company appears to be settling in for a long crypto winter. Right now, we do have shares of Strategy Inc., ticker MSTR, up by about 0.4%. Recapping here, S&P up 42, up 0.6. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And Balance of Power continues. Back, we go to Washington once again. Your hosts, Christina Ruffini and Joe Matthew.
All right, Charlie, we're talking about crypto winter again? Gee.
Indeed,
we are. This thing's creeping back up on 90,000. Who said that, Charlie?
The crypto winter... it's just...
Did they talk to Nathan Dean about that?
There you go. Appropriate source. But again, you're looking at crypto, looking at Bitcoin specifically, 89,231, 1.2. But I got to tell you, Joe, the more I know, the more I have learned over the years about crypto, specifically Bitcoin, the less I am able to predict where that price is going.
I get that very much so. Charlie, thank you. He'll be back in 20 minutes with more on the markets. Predicting the direction of crypto has left many people broke. Nathan Dean, of course, talks crypto with us by way of regulation, along with all the issues that are percolating here in Washington. Christina Ruffini, this is the man we talk to when we want to know what the folks outside of this studio are thinking, particularly terminal users. And right now, one of the big questions is, will we be able to fund the government when lawmakers come back? Or are we going to do this whole thing countdown to shutdown again to the end of January?
I mean, that's not just a question for terminal users. That's a terminal question for anyone in Washington.
I see what you did there.
Look at that. We got to, I got to keep up with you guys.
It's perpetual for sure. And, Nathan, of course, does this for a living as our senior U.S. policy analyst, known to some as America's dad. Did you win at flag football this weekend?
We lost in a last-second two-point conversion, but everybody got donuts afterwards, so they were all
going to say...
Also, wait a minute, Nathan, do you want him calling you America's dad?
Well, yeah,
are we on board
100%,
with this?
Absolutely.
I mean, you were just talking to us about taking your kids to Disney World, so it does seem vaguely accurate, but all right.
I got to run with it.
Is that called like the Japan theory or something? Nathan has uncovered a theory and has proven it, that it's actually cheaper to take your kids to Disney Tokyo than it is to Disney Orlando.
Yeah, there was a meme, and we're going to Disney in Florida, so I was like, let's compare and contrast. And
I find that
but there is a Bloomberg piece to this, though, because the Japanese yen did play into part of that.
So this is a currency story.
Had the yen actually been a little bit stronger, then it would have been closer to even, but... I had my monitor up and was looking at that.
Now people are going to start calling you about this to get the plan, because now they know. They've got his number already. Everyone's going to come back after New Year's and be reminded that we just went over a cliff,
right?
A healthcare cliff, and there's no plan to fund the government past the end of January. Although I read that there was very quietly over the weekend an important moment when the two approps chairs got together and carved out top lines. Is there a chance that grown-ups actually engage when Congress comes back to D.C.?
What's the over-under on a shutdown?
We think so. We're at a 30% chance of a shutdown. And we're pretty low on that because, look, it's 2026. It's an election year. Neither party wants a shutdown in an election year. From the Republican perspective, they got largely the blame amongst independents for this past shutdown. And so obviously they don't want to rock the boat there. And from the Democratic perspective, they had big wins in Virginia, New Jersey, Miami, New York City. They don't want to rock the boat there. And so it's easiest thing to do, as you both know from being in the city for a long time, the best thing for Congress to do in this situation is to kick the can. They'll kick the can again in this situation, and I don't think there's a shutdown.
As we come up on the new year, and many of us will be sitting at home, possibly hungover, I was talking to you earlier about the Epstein hangover for the new year and what the repercussions of all of that will be, if it's going to resurface, if you think it's going to stay with us. How do you think that's going to impact Congress's ability to get things done?
Yeah, I mean, what we've told our clients is that, you know, the Epstein case in particular is really no investing angle to it, that we don't cover all that much. But for every day they talk about Epstein in January is not a day that President Trump's talking about affordability. If you go back to his speech from last week, it was all about trying to reset the narrative for next year's elections to try and get this back on affordability. And, you know, for everything that we're seeing in terms of the Epstein, you know, issue, it's going to return back. But for January, really the big things for us is the shutdown, which we're at a 30% chance, and we also think the Supreme Court's going to come back and deny President Trump's IEEPA tariffs, which is something that we're just waiting for.
All right, well, so I guess we buried the lead because no one's going to care about a shutdown or a CR if that happens. I think the words that Kevin Hassett used on CBS Face the Nation yesterday was, we will have a major administrative problem if they're ordered to refund that money. You're saying it's going to happen. Is the refund necessarily part of a settlement?
So we're at a 60% chance that the Supreme Court's going to come back and say that these are unlawful. So we'll follow up on the trade court and the appeals court. But there's a little bit more discussion amongst even our internal team about whether or not the refunds will be a portion of it. Now, Bloomberg News has called this refund chaos, and I love that word because, to the best of our knowledge, there's really no way that a company can say, give me $500 million.
I've got a receipt.
It's got to be piecemeal, you know, individual line items. And also, we can't figure out that there's a way that there's actually an electronic wire here. We're talking about paper checks. Right. So refund chaos is something that companies should just be prepared for over the next couple of quarters and years. Nightmare. But the bigger question is that will the Trump administration say, look, okay, we can't do IEEPA anymore. Let's go back to Section 232 or Section 301. If you don't know what I'm talking about, essentially investigations take time. It takes 3, 4, 5, 6 months. So it'll be easy for the White House to come back and say, okay, we're going to now launch an investigation. But the question is, and we're putting this in one of our black swan categories, is that will the Trump administration say, okay, we've launched this investigation, and now we're going to reapply tariffs, say in June, July, August, months right before the midterm cycle, therefore prices will go back up again? We're not exactly sure.
That's a hard place for the administration to be because on principle, if they lose, especially if they lose in this court, which has been very generous to them, they've got an optics problem. But they've also got an optics problem. They're raising prices right before an election that could be tough for them.
And not to mention trade deals that are essentially deals just on pieces of paper. They haven't been ratified or anything like that. So then you get a geopolitical question here. So, you know, the main message that we've been telling to our clients about 2026 is that forget Congress. I hate saying that because I love Congress. But, you know, every day they're here in Washington next year, their opponent is campaigning against them back home. They don't want to be here. So 2026 is a story about deregulation because the regulators live here. They've got to do something. And it's about these tariffs. The question from the White House is that are they going to reinstitute these tariffs if the Supreme Court deems them unlawful, like we think so? Or are they going to have a political question of are we going to institute policy that's unpopular with the American populace just months before the elections?
You talk around the kids like that, Black Swan event, second half of the year?
No.
Congress doesn't matter? This is a whole different side of Nathan Dean. That said, could we have a full year CR so Congress really doesn't matter?
I don't think so.
No?
I think the appropriators, look, they want to get stuff done. I mean, they want to be relevant here. I mean, if there's one thing that we've seen over since President Trump has taken office is that the White House has really tried to claw back some of the authority on appropriations to the detriment of Congress. And I think both parties want to be able to say, no, we, Congress, we are the appropriators. Let's get this back into our ball side of the court. I wouldn't rule out a short-term CR, maybe to March. But I think, you know, at the end of the day, I think both parties want to get something done to just at least get us through the rest of the fiscal year.
And looking ahead, we were mentioning deregulation in passing. What are your deregulation greatest hits you see coming up next year?
So obviously the banking industry, I think, is the biggest one. You know, the banks have been writing a lot of sentiment since the election on deregulation. Now it's actually happening. We had a proposal that was finalized right before Thanksgiving that's going to return about $13 billion in capital to the big banks. There's 2 more proposals that are coming out the first half of next year, maybe probably in the first quarter. We estimate, back in the napkin math, that you're going to get around $60 billion in return capital to the Bank of Americas and the JP Morgans of the world. Cryptocurrency, even though there's this debate in Congress about a crypto bill, the regulators are still moving forward. The FDIC just launched its new proposal on stablecoin implementation. There's probably another one on that, will lead to a higher institutional usage. And just like JP Morgan announced this morning that they're thinking about getting into institutionalized crypto, the combination of regulation plus Congress next year on crypto is essentially creating this regulatory framework that just both banks and non-banks are going to want to play in.
You know, you start talking about the next steps here in Congress. Jody Arrington was speaking very confidently on the program last week about another reconciliation plan. If Congress is going to be that ineffective next year, is that even possible? He thought that, he even flagged that as a potential to solve the healthcare standoff.
Oh, I mean, Senator Lindsey Graham over the weekend even said we're going to go for it on healthcare. Well, but I go back to the question.
Everyone's talking a big game.
If it was easy, they would have already done it, you know, in Reconciliation 1.0. And I'm not saying they can't. I'm just saying is that, you know, we have to look at the scope of what this reconciliation bill would look like. There's also been talk about potentially giving President Trump IEPA authority through this reconciliation bill, through the $2,000 check. You know, there's a lot of different ideas that are flowing around right now. Back in early 2025, they called this too big, too beautiful. I'm not sure if they're still sticking with that. But I will say
Congress can give him IEPA authority?
That's, you know, that's
How
one
does
of the
that
things.
work?
Well,
what's the parliamentarian going to do with that?
Well, that's it. You know, there's been discussions about if the Supreme Court doesn't give you IEPA authority, Congress has largely delegated tariff authority to the president. They didn't claw that back.
That's
and so if Congress just were to say, look, we will give this authority to you, all subject to the parliamentarian, of course. So, you know, but what we're saying to our clients is that lots of headlines are going to be floating around. Every lobbyist, every lawmaker is going to say, hey, what if we can do this? What if we can do that? But then ultimately, they're going to be hit with the idea that there's an extremely thin margin in the House. If it was easy, they would have already done it. So we're either saying no reconciliation bill or very, very small scoped reconciliation bill with determined issues to be determined.
What are the major stumbling blocks still on healthcare? Because you are starting to hear some of the same things on the right and the left. They just don't seem to be able to get it together on so many levels. But are any of them surmountable? Or to your point, do you think this is just going to be an enduring battle that we have all the way down to the mid?
So there's 2 issues. One, you have the subsidies argument. Now, the subsidies argument, it's essentially people get subsidies right now, and then subsidies are going to go away. Premiums, you know, we've had anecdotally, you know, $1,000 in premiums going up to $4,000. That's not easy for somebody to come in and say that, look, we support that as a policy, which is why a lot of these moderate Republicans have been trying to use discharge petitions to get that through. The second one is just the replacement on trying to get Obamacare, or at least from the Republican angle, trying to shift this a little bit more into the private sector. But again, you're playing with something that people actually see day in and day out. And so it's extremely difficult to get that done, especially in an election year, especially just months before the midterms, when a lot of the politicians are going to say, no, let's try and kick the can on this. We just want to not rock the boat.
You got a podcast up today?
Not this week. We're off till 2026.
Off till 2026, so don't be disappointed, but you'll hear him on this podcast, which is why things all come together on a Monday. Nathan Dean, many thanks as always. If they get donuts when they lose, what do they get when they win?
More donuts.
Really? I thought you were going to say ribeyes or something. It's a Chicago boy. Thank you, Nathan, as always. Merry Christmas.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got a holiday-shortened trading week, but gains for the U.S. stock market. Equities have wiped out their December losses. S&P 500 set for an 8th straight up month, longest winning streak since 2018. Here's where we stand now with the S&P up 41 at 68.75, a gain of 0.6%. Dow Industrials up 263, up by about 0.5%. S&P, by the way, holding close to session highs. NASDAQ up 125, up 0.5%. The Bloomberg Mag 7 Index up 0.6, and the 10-year currently is yielding 4.16%. It is the 2-year at 3.50%. Gold now up $98 the ounce, up 2.3%. The precious metal at $44.37, while West Texas Intermediate Crude $57.90. WTI up by 2.4%. Gains for Bitcoin, 89,400 on Bitcoin, up now by 1.4%. Fed Governor Stephen Myron says he has not decided yet if he'll be voting for a 25 or 50 basis point cut at the next meeting. In an interview this morning with Bloomberg, he also talked about the role of dissents at the Fed.
One positive benefit of me potentially dissenting like this is that it introduces a wider variety of views. I think it's really, really important to avoid groupthink. I think if you fall into groupthink, you stop questioning where you could be wrong, and then it just becomes much easier to be a complacent consensus that is in error. I think we've seen that over and over this year, for example, on tariffs.
Fed Governor Stephen Myron. By the way, you can catch the full conversation on YouTube on the Bloomberg podcast channel. Cintas has proposed a renewed takeover bid for UniFirst Corp, worth about $3.96 billion in equity, and another attempt to buy out the rival uniform maker. Cintas shares, they're up now by 2.6%. UniFirst Corp higher now by 16.7%. Recapping, do have a rally underway. Back to work Monday on a holiday-shortened week with the S&P right now up by about 0.6%. Perhaps a Santa Claus rally this week. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington once again. Your hosts, Christina Ruffini and Joe Matthew.
All right, Charlie, this is as close as I have felt to seeing Santa Claus so far this season. Our little Santa Claus rally this week, maybe we can keep it up. With the good help of Charlie Pellet, he'll have more on the markets coming up at 1 p.m. Eastern Time. Godspeed to producer James. Guys, I just heard from him. He's packed his bags and he's headed to Grandma's house. As everyone starts winding down for the holiday. That goes for lawmakers. They're out of town. President Trump's in Palm Beach. Just me and Christina keeping it real in Washington, D.C. It is a ghost town here.
It is. I have never gotten to this office so quickly. I know I'm new here, but I was here in like 11 minutes.
Really
There's
easy.
just nobody on. It's
the best, though. Park where you want. You can get a restaurant table anywhere. Whatever the city is your oyster for the next couple of days here.
So what you're saying is D.C. functions better when the people who run D.C. are not in it.
100%. That might say something about my own disposition. But of course, everybody's still talking about the same thing. It was this time on Friday we were anticipating the release of the Epstein files. Right. They hit right before the late edition of Balance of Power on Friday, and boy, that was quite a doozy of a conversation. They were coming out in real time with massive redactions. We were scrolling through them live on the air, blank page after blank page. And of course, this is not the full lot. Todd Blanche, the deputy AG, suggesting that there are hundreds of thousands and they will continue to be released in the weeks ahead.
Right. I mean, obviously, they were all supposed to be released on Friday, but as we discussed leading up to that, because we were getting signals from the AG's office, that wasn't going to happen.
Right.
There really is no enforcement mechanism for that. So they've released some, and they're going to release more, and who knows? Somebody online was joking the Department of Justice mixed up their highlighter with their Sharpie because so much was redacted, it was just black lines.
To see full black pages was startling. And of course, look, there's a lot of sensitive information here, and of course, they're looking to protect, as we learned for the first time Friday, 1,200 victims. That's how many names were unearthed from these files. And as a result, about a half dozen photos were taken off of the server over the weekend. One of them included a photograph of Donald Trump. And so there was an immediate outcry of conspiracy. Those were, in some cases, were reinstated. But we're hearing from the lawmakers, Christina, and we've talked to both of them here recently who were on the discharge petition, the Democrat Ro Khanna and the Republican Tom Massey. They want to hold the Attorney General in contempt.
I mean, I think that's interesting. We'll see if it happens or not. But the problem with this issue is there are so many eyes on it that something like that photo you were just talking about, which was a drawer with a bunch of picture frames in it, it
That's
looks
right,
like it might have had a familiar face in there, and all of a
Yes,
sudden
right.
it was up and it was down. You've got too many people too invested in this to really get away with that kind of thing because people noticed it and they noticed that it went away. So all eyes are on it. And as we were just talking about with Nathan, we're going to have to see how much this plays for the next year, because although it was a big deal on Friday, it then kind of fizzled. I'm not sure it got as much coverage, as much pickup as we were expecting, and I'm not quite sure that's.
In terms of public reaction, that's fair. Now, as we mentioned, there's going to be a resolution in the Senate, Chuck Schumer introducing today, that would direct the chamber to initiate legal actions against the DOJ for what he calls blatant disregard of the law. Massey and Khanna, who I mentioned, say they're considering bringing inherent contempt charges against Pam Bondi. Let's see what our panel thinks today. Bloomberg Politics contributor Jeannie Shanzano is with us. Of course, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. We're joined as well by Republican strategist Greta Joins, policy director at Brownstein Hyatt. It's great to see you both. Jeannie, you've had the weekend to consider this, and I know you were with us, of course, late Friday when these files emerged. What's your thought about what is left? We could be getting document dumps any moment now, and we could continue right into the new year, and they may show us a lot more than Bill Clinton. What should we have in mind here as this process unfolds?
Yeah, they absolutely might. By some accounts, there's something like 500 gigabytes of material, and about 3 have been released, so there is a lot more to go percentage-wise. The amount of redactions and the amount of material missing, material that people know should be in there, including the original 60-count indictment against Jeffrey Epstein, and then the memorandum as to why he was only charged with 2 counts in the end, all missing. And of course, as we talked about, heavy redactions, all to come. So people are very frustrated with the amount of material missing and the redactions. But there was some material released on Friday, which is utterly horrifying, including, for the first time, we see the document from Maria Farmer to the FBI September 3rd, 1996, charging Jeffrey Epstein with pornography. He is not even investigated, really, for another decade, and we're 30 years after that. So when we talk about the entire federal government, starting with the FBI, falling down on this, that is a horrifying example. And to your point, Joe, 1,200 potential victims, if not more. So a lot of material released and tons yet to come.
And Greta, those 1,200 victims, the government has said, and possibly there's a point here, and I want to ask you what you think, that one of the reasons they're not able to release everything, the reason it's taking so long, is they do need to comb those files and make sure they're not inadvertently divulging the identity of victims. This is something the victims' families, the victims themselves have been very outspoken about, that there have been, releases in the past that have compromised their identities. But you have that weighed with this feeling, even from, as Joe was just saying, some Republicans on the committee, that the AG is not doing what it needs to do. So what is your take on that? And do you think Pam Bondi could really have congressional action taken against her?
No. And let's be clear, it's one Republican on the committee. It's not the majority of Republicans on the committee. So I think that there is a lot of focus, obviously, on these documents. I think there should be a lot of focus how Bill Clinton is throughout, and I think that narrative is sort of lost, right? There's been a number of opportunities for the FBI to release these documents since they first started combing through the various things that Jeffrey Epstein was and should have been charged with. And so ultimately, it is a little interesting that now ultimately Pam Bondi is the only one that could possibly release these documents over the course of the years, and trying to play catch up and comb through these, which were, very much hidden when President Trump was sworn into office this time, and ultimately make sure that they are releasing them in a proactive, but also a way that protects victims and also people who are caught up in these documents who literally did nothing wrong and don't want to be associated with someone like Jeffrey Epstein.
Well, I think the point is there's a law now, though, right? Jeannie, it mandated the release of these files by Friday. The administration did not meet the deadline and also did not meet the requirement that there would be a searchable database. So there is some accountability here for the Attorney General, no?
There is. I mean, yes. Oh, sorry. The
Sorry,
Epstein
Jeannie
Files
first, and then Greta. Go ahead.
Yeah, the Epstein Files Transparency Act, and they had 30 days, and so if any of us are under the requirement of a law that requires 30 days, Todd Blanche went out this weekend and said, well, we had 200 lawyers working through this, absolutely. But if they weren't going to get through it in 30 days, given it's a law, they had to get maybe 200 more lawyers. Do we know what's going to happen in terms of the Attorney General? Absolutely not. We're hearing things from Ro Khanna. We're hearing things from Tom Massey. I'm not sure that they'll get bipartisan support to take any action on any of this. But the reality is that this is a total political mess for the White House. When Susie Wiles says Pam Bondi whiffed, the entire White House has whiffed on this and continues to, because every day they're talking about Jeffrey Epstein. They're not talking about what they want to be. And so this is a problem for the White House politically. And of course, back to my consistent message for the victims and survivors as well.
Greta, I don't know if you wanted to go ahead with what you were going to say earlier. I also want to ask you, I mean, to that point, the White House knows that this is an issue that Democrats can go after them about ahead of the midterms, leading up to all of these things they're trying to get done. Why not do better? Why not put more pressure on the AG to get this done so they can get it off their plate and move on with their agenda?
Well, I think that they are doing the absolute best they can. I don't know where one would procure an additional 200 lawyers to comb through Jeffrey Epstein documents in a way that ultimately was serving the best interests of the victims and of the other people that are mentioned in these files, while also providing the transparency that Democrats have failed to provide since Bill Clinton was in office and started flying around on the Lolita Express with Jeffrey Epstein. So I think there's a lot of catch up. 30 days is an incredibly short period of time to go through that many documents in a way that is responsible. Ultimately, I'm sure that Democrats would love to just release everything so they could ultimately try to find more victims that they could use as talking points for this narrative that they continue to push when they literally have decades of failing to do anything about this.
So you really seem to think this is a Democrat issue, Greta. Am I reading you right? This is the Epstein thing is a Democrat story.
Well, I think ultimately there is one president who is caught in the Epstein files so far, potentially partially nude with victims of Jeffrey Epstein. So, I think that is certainly pretty newsy. But ultimately, I do think
so the pictures of Trump don't bother you?
Is he in a hot tub with any of the victims of Jeffrey Epstein?
Well, no, but you didn't make that the criteria. You said there's only one president who's photographed in the files, and we've seen a lot of pictures of Trump floating around.
I said
we're not even through half of these yet.
Of the president.
Well, the president who is in office now is in photographs with multiple redacted women. We don't know who they are, do we?
Well, there's Democrats who've redacted some of those photos, and then there are other potential women.
No, this Department of Justice redacted them.
AG, yeah.
Yeah, right. Let me finish my thought. What I was saying was that certainly there are pictures that have been released by the Attorney General who is serving President Trump. In previous administrations, Democratic administrations, they have released nothing. So ultimately, whether these were compelled by law or by not, those pictures of the president were not redacted. They were released. And while there are certainly redactions, which were to be expected as per the law that President Trump signed, there is certainly been a ton released, and there is more to be released, and it will be done in a way that is responsible and keeping the victims top of mind.
Before we go, we don't have a ton of time, but Jeannie, I want to ask you if you've been keeping your eye on the Turning Points USA convention out in Arizona and some of the sound. Do we have time to play the sound, or no? We're just going to ask you if what you're thinking about what's going on about there. You know, you've got Tucker Carlson, Ben Shapiro, you've got all kind. I mean, are the kids fighting? Is this an opportunity for Democrats, or are they going to mess it up again?
Well, of course, I had to follow Christina because Nicki Minaj was there. So she was the special guest. So absolutely, I followed. And yeah, I think the most interesting thing was J.D. Vance trying to walk this tightrope. And it's going to be curious to me. I know we're short on time. It's going to be curious to me as the leading contender for the Republican nomination, early as it is, can he keep up walking that tightrope as we go forward? Or is he going to be forced to pull aside? And I think that's going to be the big question. And Vivek Ramaswamy, he did take a side, which was interesting.
We're going to get into our next hour with our panel on geopolitics, Christina Ruffini and Joe Matthew. This is...
From Washington, D.C., this is Balance of Power with Joe Matthew.
NVIDIA is wrapping chips for China. Welcome to the Monday edition as the company tells Chinese clients It's preparing H200 AI chips for shipment in February after the Trump administration, of course, cleared them for sale several weeks ago. We're going to get the latest on this from Bloomberg's Laura Davison. It is pushing the stock higher, and we'll have insights from Joseph Mycutt from the Center for Strategic and International Studies as we take a closer look at the data center build-out. Later this hour, Bank of America's Brian Moynihan in conversation with David Weston from Bloomberg's Wall Street Week, a conversation you won't hear anywhere else. And it's all after a look at Wall Street. Charlie Pellet has the latest on the markets for us on this Monday, and it looks pretty good, Charlie. What do you have?
Indeed, another leg higher right now, Joe Matthew, with the Dow, the S&P, NASDAQ all advancing just about the best level of the session. Back to work Monday, holiday shortened trading week, and indeed, Santa Claus rally underway at least this Monday now, with the S&P up 46, higher by about 0.7%, 68.80 where we stand on the S&P. The Dow up 307 now, up by about 0.6%. NASDAQ up 0.6%. And the Bloomberg Mag 7 index higher now by about 0.7%. The 10-year yield, 4.16%. We've got the 2-year currently yielding 3.50%. Gold is up 2.3%. Looking at a record right now, the precious metal up $99 the ounce. 44.37. West Texas Intermediate crude higher by 2.3%, 57.82 a barrel, and Bitcoin up 1.3%, 89,270 now on Bitcoin. So bottom line here, broad advance underway. Case in point, Russell 2000 index of small cap shares up by about 1.6%. Paramount Skydance this Monday has sweetened its bid for Warner Brothers Discovery, including offering a personal financial guarantee by Oracle chairman Larry Ellison, as it seeks to beat out a rival bid from Netflix. Oracle shares, they're gaining 3.4%. The focus of all of this, Warner Brothers Discovery up 3.5%. Paramount Skydance surging 4.5%. And right now we've got Netflix, though, in the red on an update for much of the market. Netflix looking at a loss of just about 1%. So again, recapping here, stocks higher, S&P up 45, up 0.7 for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcast. And back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet, the voice of Wall Street and the New York subway. We'll be back in about 20 minutes' time with his read on the Monday trade here. It's going to start getting quiet, right? That's the deal. Holiday light volume, as we like to say in a week like this. But hopefully the melt-up will continue and Santa Claus will make everybody happy by the time we get to Thursday. I'll be with you for the balance of the week, at least on the days the market is open, and I hope that you will be as well. We're still going to have a lot to talk about from the world of politics, this hour being no exception. Although I will tell you, it's a ghost town in Washington. On one end, you've got an empty White House. The president's in Palm Beach, where he's going to be speaking actually a little bit later on today with the Defense Secretary and the Secretary of the Navy as they talk about the Golden Fleet. That'll take place around the time of the closing bell or a little bit later. On the other end of Pennsylvania Avenue, you have an empty Capitol because lawmakers have headed home. And, of course, they were out of here before the end of last week, having whiffed on a health care solution. The cliff is looming. We're all going over it together here, it looks like. The question will be when lawmakers return, what will be the solution? And will there, in fact, be a real chance of a government shutdown at the end of January? That's when government funding comes to an end. We're joined in studio now by our Deputy Washington Bureau Chief, Laura Davison, who's helping to pick up the pieces on our coverage here in 2025 with a couple of important stories still percolating. Laura, it's great to see you. Just for starters, the president's going to be down south, the Florida White House for the rest of the week?
Yes, and he's continuing to do some work. We'll see how busy it actually is, but he has this 4:30 p.m. announcement where he's going to be talking about shipbuilding. He's got some military officials down for that. We also know he's going to have Rick Reeder, who's one of the candidates for the Fed chair, also down in Palm Beach for an interview. So we're continuing to see some of these things happen. I'll note that he did declare that Christmas Eve and Boxing Day are both federal holidays.
Right.
So we'll see if
but
he
you're
keeps
making
those.
Everyone work anyway, I heard. So what's the Reeder interview about? It was all about the two Kevins. Even more so, Kevin Hassett was said to be at the top of the list a couple of weeks ago. But he's drilling down the full list, it looks like. I guess for any late inspiration, what are we hearing about this?
Yeah, so a couple different things are at play. One is that Trump wants to be very certain as he makes this decision. He, had a lot of buyer's remorse when he picked Jerome Powell. Mnuchin was really pushing Powell as the candidate, and Trump almost instantly regretted that decision. He doesn't want to do that again. And also, Scott Bessent, who's running this decision-making process, doesn't want to sort of force Trump's hand on anything. So he's bringing in all the candidates. Chris Waller was also at the White House last week for an interview, sat down and spoke with the president for about 30 minutes. So this is really just Trump kind of checking off all the boxes here. But also, we did hear Trump a couple weeks ago say he'd narrowed it down to one candidate. He had made his decision. And now we see him saying, well, there's a couple I like, which may indicate that Trump sort of made his mind, but maybe is now, has learned more, has seen some of these people on TV. It hasn't been quite satisfied and wants more information before he moves forward.
Interesting. He said at one point pretty recently he had made up his mind, right? He was in the back of Air Force One. He said he knew he was going to pick. So is he going back on that or just waiting for somebody to surprise him?
It could be a little bit of both. That one, he wants to see, does someone come out of the blue? Someone like Rick Reeder, he doesn't really know as well. It hasn't been in his orbit. People like Kevin Hassett, he's known for years and has a very good sense of what they'd be like. We also know that Trump likes to draw out these decisions and kind of create the drama, the suspense. We saw this with J.D. Vance's pick. He was picked hours before he had to be on the floor of the Republican National Convention being, doing all the official things for the candidate. So we could see a similar kind of, really waiting to the last final moment for Trump to make a call here.
Interesting. Important story coming out of NVIDIA today that has everything to do with this White House, Laura. It was a couple of weeks ago we were talking about the administration's decision to greenlight the sale of H200 chips to China. And this would be a generation behind the Blackwell chips that, again, were also floated as a potential bargaining chip in talks with China. But now NVIDIA, according to a report, is in fact packaging them for sale. By mid-February, they're telling clients. This is something that Jensen Huang managed to navigate very effectively here in Washington, isn't it?
This is really in just about a year. He has been able to really, kind of use all the lobbying maneuvers. And NVIDIA didn't have a large presence really before the past year, 18 months. What we're seeing, though, is a lot of opposition in Congress, particularly from Republicans, some of those more national security, foreign hawk members. There's a bunch of different bills that are in the works. Whether those can actually, get up and running, get passed, have any sort of effect. But these would put a lot of guardrails on the president, and this could be a potential big clash we see brewing between Republicans on the Hill and the White House.
I was going to say, but gosh, Democrats have been flagging this as well. When you talk to Raja Krishnamurthy or others on the China Select Committee, for instance, they think we're mortgaging our national security for a trade deal.
Yes, that is essentially where they're coming with, and so there may be, we've seen these bipartisan coalitions come together. We saw this on Epstein. We could see this again on NVIDIA and Blackwell saying, "Look, Mr. President, this is a step too far. We just simply cannot abide by this."
It's great to have you back, as always, Laura. Good luck this week. Something tells me we'll see each other again on the air. Laura Davison, our Deputy Washington Bureau Chief, with us here in our Washington Bureau, getting the week of Christmas off to a start here on Bloomberg TV and radio. The president, of course, has done a lot of talking about AI. When it comes specifically to regulations, the competition between national or federal regulations and state regs, as well the need for clean, uninterruptible power. This is something that we have heard about quite a bit from the President of the United States, in this case back in August. Listen.
Because of the genius and creativity of Silicon Valley, and it is incredible genius. Without question, the most brilliant place anywhere on earth. America is the country that started the AI race. And as President of the United States, I'm here today to declare that America is going to win it.
God knows the administration has put its chips on the AI story, the AI spend, the AI race. And this bit of news from Reuters about NVIDIA finally putting up H200s to China certainly has investors in a good mood. It's got the shares of NVIDIA moving higher here, up a little more than 1%, but the whole space is moving higher along with all of the Mag 7, well, with the exception of Apple today, but that's not so much an AI story. This brings us to the broader conversation about the data center build-out. And if you just get on the terminal or get online, go to whatever site is, search data center, and tell me what kind of headlines you see. They'll talk about NIMBYism. They'll talk about the need for energy. They'll talk about power and electricity rates going up. And they'll talk about the regulations that we just mentioned. That's why we wanted to spend some time with Joseph Micah, Director of the Energy Security and Climate Change Program at CSIS, the Center for Strategic and International Studies, the home of Gregory Allen, who's had some great conversations with us here about AI. And I've been looking forward to this one with Joseph. It's great to see you. Welcome to Bloomberg TV and Radio.
Hey, thank you for having me. A real pleasure.
Everyone's got a different complaint, it seems, at the moment about data center. It went from a story of inspiration over the summer. By the time Jensen Huang got here for the big GTC conference in Washington, we couldn't say enough about how early the innings were that we were in. Now there's a big worry about, boy, we're bumping our heads against the ceiling on energy capacity, on NIMBYism, on just available ground, and of course the fight over regulations. We'll start more broad here, if you would. When you see a story like this and AI stocks are popping up again, where are we in this race?
You know, I think it's a little bit like a tale of two cities. It's the best of times, it's the worst of times.
Wow.
Looking back at 2025, it's been a remarkable year of continued acceleration. You know, industry reports released a couple weeks ago showed that hyperscalers signed contracts for new data centers as large in Q3 of this year as they did in 2024 altogether. And when we think about the build out that we expect to see over the next 5 years, that's going to continue to happen. All of the challenges that you raise, power availability, water use, a general sense that society's not getting the benefits of the data center build out, those are going to almost probably get worse over that whole acceleration period rather than better.
That's really interesting because, you point water use is another one. A lot of people are just hearing about these data centers. If you live in Northern Virginia, outside of Washington, that's been your reality for a while. But somebody comes to your neighborhood, they want to put up a data center, and they say, well, you're going to take my water away and you're going to make my electricity rates go up. And it started a conversation about what can these data centers and these projects do on their own off-grid. And will that be the answer to all of them?
It won't be the answer for all of them, but it'll be a big part of the answer, particularly, I think, for the big ones. So let's say you want to build a really large data center, right? You have to spend a lot of money on the chips. You have to spend a lot of time and effort to get the right software and data in place. And one of the things we're seeing develop in the industry is, so they look at these large sort of gigawatt scale facilities, is you need to probably bring your own power. And then the real question to you, for you as a developer is, can you build the right mix that's going to be reliable? And how much do you trust your on-site generation for providing those chips with power all the time, 24/7? Because you want to be running them. They're so expensive. You want to be running them as much as you can. And that's where we're seeing a lot of really interesting policy development between regulators and developers, so that developers can bring their own power, build quickly, not burden everybody else, but also rely on the grid when they need to.
Really interesting. This talk of nuclear, I think for many people who've sent stocks like Oklo and Constellation to record highs this year, they're starting to come down. And hold on, guys, this is maybe a 5 or 10 years out story. We're not building a lot of new nuclear power plants. You specialize in energy, and I'm just curious specifically how you look at this space now, and if we're really telling a natural gas story for the next several years.
I think the story breaks down into 2 timeframes, Joe. Over the next few years, we have to use what's right in front of us. And that's going to be a mixture of natural gas, solar power, increasingly batteries, a big surprise over the past year, and a really strong outlook for next year. And then, of course, you've read the stories about the few nuclear reactors that are sort of constructed, recently retired, can be restarted. But, we don't have a dozen of those laying around. It's really 2 or 3 projects. Post 2030, that's really where I think the sort of new nuclear technologies could come online, where even older technologies, the large nuclear reactors that we built much of the industrial capacity of the late 20th century upon, could be back on the grid, coming back onto the grid. And then, of course, there's questions around, how much natural gas are we going to be building in the 2030s? What are the price pressures there? For the next 5 years, the story is almost kind of written. It's just how quickly can we do it? And after that, then we get into sort of policy and strategic thinking around energy sources.
I want to ask you about regulation, but with regard to power, just you see Michael Burry, the guy from the Big Short, who's been shorting NVIDIA and really questioning this AI spend, which he says is a circular investing destined to fail. He's specifically calling out NVIDIA today for what he refers to as power-hungry microchips over alternatives, questioning the longevity of, say, a Blackwell or a Rubin, and its give-and-take deals and compensation. The more efficient these chips get, the less power they'll need in a data center. Could we be in a situation where we were overbuilding or overlaying fiber, for instance, a lot of years ago, where we're designing these data centers for this massive intake of power, when at some point they're going to be in a box?
I think there's two ways to look at that question, whether you're looking at it from the firm level or from the sort of societal level. You know, in our modeling, we incorporated significant efficiency gains in the accelerated chips necessary for AI.
So that's already part of your view.
We already see 90 gigawatts of data center demand in the U.S. by 2030 for AI alone, that leave alone traditional web services. And that's a medium to upper end estimate when you look across the range of consulting firms and industry specialists. So efficiency doesn't get you out of the need to build a lot of new data centers. Now, it could be, like, for a variety of reasons, we don't end up needing all that capacity.
Sure.
Maybe it's a bubble, something like that. If you
there
built,
goes $1 trillion.
So say you built a lot of electricity generation capacity, society can absorb that capacity. AI data centers are the big story right now. There's a lot of market correction and adjustment happening because this is just a tidal wave of new demand. But if you look at the next 20 years, we expect to see significant electricity demand growth in the United States for a variety of reasons. You've got reshoring of manufacturing. Chip fabs take 500 megawatts to a gigawatt themselves. You've got electrification of the light passenger duty fleet. You've got electrification of homes and businesses, and you've just got economic growth. You know, the story of the last 15 years in energy and electricity for the United States was one of plenty of new supply and major efficiency gains, mostly because of LED lighting. Over the next 20 years, we need a lot of electricity. It's fundamental for our economic security and growth. And so I'm very sanguine about the risks of overbuilding electricity
it sounds like.
over the next couple decades.
The EO that President Trump signed recently on a federal landscape for AI regulations versus each state having its own and creating a patchwork here. And he says, if you're NVIDIA, you just can't do business easily enough. It slows things down to the point that we'll lose the AI race. Is he right?
I think that everybody, when you talk to, I talk to my colleagues at CSIS, you talk to people here in town, everybody agrees that a federalized system would be better for diffusion than a patchwork. What does that federalized system look like?
That's the issue.
It's a political
They still
debate.
have to write that, don't they?
Yeah, of course. And I think there are big debates about how do you incorporate safety, how do you deal with minors, how do you deal with privacy, and, you know, whether you're a federalist or you look at federal authority as being the key here. We still need to get over these big political debates. The structure of the regulations is only half the battle.
The content side is of course one thing, and we can talk about whether AI is eventually going to eat us alive. But in terms of the data center build out, having a federal policy would hasten the end of this race, would it not?
Sure, and we've seen from the Department of Energy, in particular, a real effort to use federal authority to help speed the build out on the electricity side. They've made significant investments in nuclear power to help deal with the sort of sustainable growth of the industry in years forward. But they've also looked to change the way regulations apply to large loads like new data centers, sort of federalizing the way that works. That's traditionally a state responsibility. There's an ongoing case at the Federal Energy Regulatory Commission, the federal body in charge of the electricity grid.
Friends at FERC.
To figure out how to do that, right? And there again, there's some political debates. Who needs to pay for grid upgrades when you're building new data centers? But FERC's in a good position, I think, to resolve a lot of those things and make sure that the best models are used nationally.
Really interesting. This has been a fascinating conversation. That build out still has another 5 years. Is the first point you made. That's right.
If you're in a second industrial revolution, it might be 25.
It might be 25 years. That sounds like second inning? I don't know. Joseph, don't be a stranger. Joseph Micah, CSIS. Great conversation. Thank you for the insights. We'll assemble our political panel next. I'm Joe Matthew in Washington. Balance of Power. This is Bloomberg TV and Radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We're off session highs, but still gains for the Dow, the S&P, and NASDAQ. Back to work Monday, holiday shortened trading week, and a Santa rally underway right now. The S&P up 40, up by about 0.6%, 68.75 where we stand. Dow Industrials up 255, up now by 0.5%. NASDAQ up 116, gain there of 0.5%. The Bloomberg Mag 7 Index up 0.5, and small cap shares, they're rallying. Broad-based rally today, right now looking at a gain in the Russell 2000 of 1.4%. The 10-year at 4.16%, the 2-year 3.50%. Gold up $98 the ounce. The precious metal is rallying 2.3% to a record $44.37. West Texas Intermediate crude oil up 2.5%, $57.91. All of this on heightened tensions in the Caribbean, a topic we will be exploring coming up right here on Balance of Power. Uber and Lyft reach teaming up with Baidu to test out driverless taxis in the UK as ride-sharing companies race to deploy autonomous services around the world. Uber shares, they're up today by 2.4%. Crosstown rival Lyft, both based in San Francisco, Lyft up now by 2.8%. Again, recapping here, S&P up by about 0.6%, higher by 39 points. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, many thanks. The Santa Claus rally appears to have arrived. Charlie will be watching, and we'll have more on the markets coming up a little bit later on this hour. Also, looking forward to an important conversation that you'll only hear and see on Bloomberg TV and radio when my colleague David Weston sits down with Brian Moynihan, the CEO of Bank of America, just about 10 minutes from now. So don't stray too far from your TV or radio with an important conversation with Brian Moynihan on the way. We are tracking a third tanker. Pretty remarkable developments over the weekend as the United States seized a second oil tanker off the coast of Venezuela from the so-called shadow fleet and then progressed to a third. This one is a little bit different. The Bella One is the name of this ship here. The U.S. forces chasing the Bella One as it was en route to Venezuela. They also boarded Sentries, a ship owned by a Hong Kong-based entity, on Saturday. That was the one that I mentioned we actually intercepted here. But now on the way to a third, it's an empty tanker that is now making its way out of the region. And it reminds us of not only what's happening in the theater there, the president labeling it a blockade only a week ago, although it is technically not the definition of a blockade, which is an act of war. In this place, a quarantine, in this case, I should say. But more broadly, what is the motivation and what's the end game for the United States in Venezuela? Is it, in fact, regime change? We're starting to hear more acknowledgement of that possibility from the administration, but it's been an evolving justification that started with, of course, the war on drugs. That's why we were striking alleged drug boats leaving Venezuela. More recently, it's been about oil, as the president suggested just last week. Listen.
Getting land, oil rights, whatever we had, they took it away because we had a president that maybe wasn't watching, but they're not going to do that. We want it back. They took our oil rights. We had a lot of oil there. As you know, they threw our companies out, and we want it back.
As he said, they took our oil rights. We want them back. Let's see what the panel thinks about it. Bloomberg Politics contributor Jeannie Shanzano is with us, democracy visiting fellow at Harvard Kennedy School's Ash Center. And we're joined as well by Republican strategist Greta Joins, policy director Brownstein Hyatt. Great to have you both with us here. Greta, what's your thought about this? Frequently, we hear different justifications for what's happening. Marco Rubio might have one thought, the president might have another. Is this about drugs, oil, or all of the above?
I think it's about all of the above. You know, I think the president was certainly looking at the flow of fentanyl into the United States and the devastating toll that Americans have had in ingesting these illegal drugs that, you know, are designed not only to put Americans at risk, but also to basically take their lives. So I think that was initially what the president was interested in, is stopping this flow, but also in trying to put pressure on the Venezuelans to stop all of these illegal actions and all of these illegal drugs from coming into the United States. Certainly there was a renewed focus on the Venezuelan government's taking of not only U.S. Companies, materials and facilities in Venezuela, but certainly also what has happened to the oil markets in South America.
This third tanker is interesting here, Jeannie, and we're showing images of the seizure here with the view from a military helicopter. We're pretty good at boarding these vessels and dispatching them pretty quickly, but there have been questions about whether this third cargo ship was in fact sanctioned and what the end game is here, particularly if it's empty.
Yeah, Joe, and that's absolutely the question. What is the end game for the administration? You know, all of the talk about drugs, well, if that was the case, we wouldn't be going after Venezuela, who was shipping cocaine to Europe. We would be going after China via Mexico if it was about fentanyl. We wouldn't be pardoning major drug kingpins like the president has just done. What this is about is what Susie Wiles said and what the president has been clear on. It is about regime change, and that is consistent with a president who wants to take over the oil reserves in this country. If you go back to 2016, Donald Trump said we made a mistake by not doing that in Iraq. And he is saying the same thing here as it pertains to Venezuela. He wants regime change and he wants the oil in this country because Venezuela is an incredibly dysfunctional country. It has been for decades, but it is also one of the most oil-rich countries in the world. And then you look at Marco Rubio, Secretary of State, and this has the added benefit because where is this oil going? It's going to China and Cuba, of helping destabilize Cuba. Because, of course, if you stop the flow of oil from Venezuela to Cuba, you destabilize that economy. They simply cannot continue. And so that is something that also serves the interests of Marco Rubio. So I think we're seeing a conflation of that here, all of which the president is supportive of because he is intent on making deals.
I'm glad you mentioned Cuba, Jeannie, because that's an interesting bank shot here for the administration, Greta. Is that part of the calculation to create an economic depression in Cuba?
Well, I think there already is an economic depression in Cuba. So if that was the goal, mission achieved. But I do think there are certainly ways that Marco Rubio, who is a Cuban American, are certainly looking at opportunities to provide Cubans with the potential opportunity to not be hamstrung by this horrific government that they've been under, and to put pressure on them. So is that sort of the central thesis behind all of this? No, I don't think so. Is it potentially an added benefit? Maybe. But I think that the secretary is certainly looking at this holistically.
Let's hear from the secretary, Marco Rubio. He was speaking about the status quo, if you will, with the Maduro regime in a news conference. Here's what he said.
It is clear that the current status quo with the Venezuelan regime is intolerable for the United States. The status quo, that they operate and cooperate with terrorist organizations against the national interests of the United States. Not just cooperate, but partner with and participate in activities that threaten the national interests of the United States. So yes, our goal is to change that dynamic. And that's why the president's doing what he's doing.
Okay, so it sounds like Mr. Maduro should keep the bags packed, Jeannie, keep a clean set of clothes handy here. I guess when you start to extend this conversation, though, if that in fact is the justification and the grounds for our involvement in a potential regime change, I'm just going to go back to something you mentioned. What does that mean for Mexico, for instance, which, of course, has major drug cartels that are moving way more drugs over our border via land? The president's talked about land strikes. Would that include Mexico?
Yeah, I mean, we haven't heard that yet. We have heard him specifically talk about Colombia. That is always in the offing. What's fascinating, and by the way, Joe, Marco Rubio pulling a Vladimir Putin with that extensive press conference was utterly incredible. What is fascinating is this is coming from an administration and under a president who, when he campaigned, and a huge part of his base is to put America first, not get us involved in endless wars and regime change and the like. He made his name politically in part criticizing George Bush, Hillary Clinton and others who supported invasions in other countries for a variety of reasons. Now he's doing the same thing, and you hear Marco Rubio there. This is very, very popular in southern Florida, what Marco Rubio is talking about. I think a big question, is it popular for the rest of the country, particularly on the Republican side? So you have a lot of questions there about splitting the base on an issue like this.
Yeah, I'd love to get to you on that, Greta, because we've, of course, heard a lot about this idea of the president being at odds with America First, not to mention his own quest for the Nobel Peace Prize to be beating the war drum right now in Venezuela. Means what to you when it comes to that part of the MAGA base?
Well, I do think the Marjorie Taylor Greene, she certainly has a vision for her future that I think differs a little bit from where the president has been. I think the president is ultimately looking at ways to cut deals around the world to make a more peaceful world for Americans first to exist in. And I think that includes stopping fentanyl. I think that ultimately includes certainly keeping the Southern Hemisphere as peaceful and ensuring that there are relationships in these countries that ultimately are beneficial to Americans. I think that there is certainly disagreement on the best way to do that and ultimately to achieve that. But he was elected president, and I certainly think that Marco Rubio and President Trump are aligned in that vision and ultimately working with people like Steve Witkoff and others within the administration to really aggressively go around and end a lot of wars around the world.
Well, productive and constructive were the words from Steve Witkoff over the weekend, Jeannie. He was down in Florida near, of course, or at his resort near Miami, and they were meeting with Russians once again, he and Jared Kushner, about ending the war in Ukraine. How many meetings can be had like this, described as productive and constructive, without anything happening?
Well, I think we will continue to hear that. And I'm all in favor of meeting and talking. I think that is absolutely the right thing to do. I think one of the problems that the president is confronting here is, on the one hand, if you are telling the world that you have the right to engage in regime change in Venezuela, in Colombia, in your hemisphere, how can you then turn around and tell Vladimir Putin with a straight face that he too cannot engage in regime change in his part of the world, right on his border in Ukraine? How can you tell China that they can't go into Taiwan? This creates a problem for the president. I think that is one of the issues they're confronting. But, on this whole issue, Witkoff is talking to Ukraine, talking to Russia. But the problem is Russia has shown no interest in moving. This thing is going to be decided on the battlefield. Unfortunately for Ukraine, they are outgunned and outnumbered, and Europe isn't even showing spine to support them in the way we thought they might. So I don't think that these talks are going to end up constructively at this point.
Starting to feel familiar, as noted by Jeannie Shanzano. And a great panel today. Greta joins Brownstein Hyatt, Jeannie Shanzano, Bloomberg Politics contributor and Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. We thank you both for the insights here on Balance of Power. And as promised, an important conversation now that we want to bring you to World Headquarters in New York for my colleague David Weston, the host of Bloomberg Wall Street Week, with the CEO of Bank of America, Brian Moynihan. David, up to you.
For our Bloomberg audiences worldwide, I'm David Weston. I'm delighted to be joined now by Brian Moynihan. He is indeed the chair and CEO of Bank of America. So first of all, happy holidays, Brian. Great to be with you.
Happy holidays, David. Good to see you again.
So let's start with the year. It's been a very strong year for the markets. By the way, a very strong year for Bank of America in the markets. The economy's done well, not as well perhaps as the markets might indicate. Do you think the economy is in better shape because the markets are really over-predicting what's going on?
Look, as you look at our team, we have a great research team, as you know, David. Their projection for 26 is a strong economy, 2.4% U.S. GDP growth. And that's strong not only on a relative basis to trend above 2%, which is the trend. It's strong that way. But it's also strong relative to the rest of the world in the sense that you see that other, basically, whether it's Euro or Japan, other parts of the economy, we predict those to be flat to down. And so it's strong on an absolute basis relative to the United States history and strong on a relative basis to the other economies. And that's because, frankly, the great American engine of capitalism, consumers are driving it. And the markets are valuing that future growth rate, and that's why they've been very constructive this year.
How much of that engine that you talk about is AI investment? Because that certainly has kicked in this year. How much of the growth is really attributable only to the AI investment?
I think you'd have to get people to parse it, but for this year, frankly, the AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year, but frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus, up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer, and you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
Yeah, and so I think you have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say in the 4.5%, which is very consistent with a very solid growing economy. At the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base. We do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, or 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that, and the consumer's in pretty good shape. Spending more money, employed, and earning more money, but differences between different types of consumers, and then being wise in how they spend. If they trade down, and all the things you're hearing the retailers talk about are true, but the aggregate amount of moving in the economy is still growing.
So you mentioned flattening out in the employment growth. There are always risks to the upside and the downside in any of the numbers that we project. How concerned are you about the downside? Because certainly the Fed is very focused on a softening labor market and whether that may be a problem for us.
So if you look at the predictions for our team and the other economists for unemployment, we're kind of peaking out at this level now in the mid to 4.5, 4.6 range, and then it sort of flattens out. But the Fed has to be wary because they have a mandate to maintain full employment, and we're at full employment now, and they have a mandate to maintain price stability and inflation fighting, and those two mandates can work together sometimes and against each other sometimes. And right now we're in that unusual case where the labor market has softened, and yet the inflation, because the massive buildup inflation after COVID and stuff is now still working its way down. Our team predicts that the inflation rate will get to the Fed's target, through the end of 27, but it's continuing to work in the right direction, which gives the Fed, in our view, latitude to keep cutting rates next year, especially in the first half. That will then provide a stimulus in the second half of the year. Those rate cuts do benefit the consumer somewhat, but in fact benefit small businesses, because in mid-sized business, they borrow on lines of credit, which are floating rate indices, and as rates come down, they get instantaneous benefit. And if you hear our small and medium-sized businesses are pretty optimistic about next year, telling us they expect to grow, they expect to hire more people, and those small businesses are the backbone of the U.S. economy. We're the largest small business lender in the U.S. economy, so we see them being very active.
This year has been good for the markets. It's also been good for Bank of America. I believe you hit an all-time high in your stock price today, intraday at least. What do you need in 26 to continue the growth?
Look, we just need our team that's done a great job for us over the last several decades to keep doing it. And what they need to do is go out and get one more client and do one more thing with every client we have. And they know that across all of business, whether it's our markets teams, whether it's our global corporate investment bank teams, our consumer teams, our wealth management teams, all of them need to go out and just drive more business. And that organic growth engine, which you described at our investor day a while back, that is intact. It's been growing with the market. And now, because of some dynamics and the repricing the balance sheet, we'll get more earnings lift out of it like we did in the third quarter. But that organic growth engine, more customers and more with each customer, has been driving a Bank of America, and our team just needs to do more of that, and they know that.
How sensitive is your performance at Bank of America to what the Fed does on interest rates? I mean, if it actually cuts faster than people think, or doesn't cut as fast?
Look, at the end of the day, if our team predicts, and most of the economists out there predict, that the Fed funds rate will go from where it is now down closer to 3%. And the debate might be 2 3/4, 3.25, but it's a debate. That nominal rate environment from, say, 3% Fed funds rate to maybe a 4.5% 10-year Treasury rate, that's a good normal interest rate curve where banks can do well, and our bank can do very well. We have $2 trillion deposits, and $1 trillion of those are low interest, no interest accounts. And if the nominal rate environment sits in around 3%, it's a very good environment for our company to grow its earnings streams while it's growing its customer and its balances and its deposits and loans.
You recently had Investors Day, and you went through in that your investment in tech, which, as I recall, is $10 billion over 10 years, $1 billion in this year alone. What did you get for that? How do you monitor the return on investment of that kind of tech investment?
Yeah, so each year we have about $13 billion in total tech spending. About 9 or so of it is the running the environment, protecting the environment, and sort of what they call the infrastructure, both the systems and protecting those systems and new software purchases. About $4 billion is what we call initiatives, and that's the new products, new services, the things my teammates love to talk about. And what do we get for it? How do we measure it? We literally look at every project we do and say, what's the payback in terms of additional revenue or additional expense, or expense taken out of either reducing work or simplicity in the systems environment. So we measured all that. It's got to be above our cost of capital. That's a technical way to measure. But what you really see is that deployment of lots of capabilities to help our customers do much greater things with AI, with agents and all the things we're working on, but also our teammates to do great things. So this year we deployed, our 365 Copilot will finish the end of the year with 200,000 people up and operating on AI, and it's just tremendous. And that's all part of that major tech budget. But also, as part of that is just the nuts and bolts of having a better trading system, or enhancing that trading system, or our data. So that $4 billion plus a year is really important to drive the initiatives that we have as an innovation company.
So we are in the early stages of AI, even though you've been doing it at Bank of America for a while now. How far will this go for Bank of America? What will Bank of America look like 5 years down the road because of AI? How transformed will it become?
Well, I think to answer that question, no one knows precisely for sure, but what you will know is we'll be applying more and more of automated intelligence, or augmented intelligence, as we call it, with a person using AI, using that to be more effective, and that'll affect all the businesses. So if you look historically, we deployed AI more than 5 years ago with a product called Erica. Erica was a agent bot, a small language model, and all the words we use today. Back then we didn't. And over the last 24 hours, Erica interfaced with 2 million Bank of America consumers and answered the questions. It went from 200 questions it could answer to about 700 questions it could answer. About 20 million people use it. So we have great experience of how that worked. But what part of that experience was you have to have your data perfect. You have to have the controls around it so it answers the question right, so the customer's getting a good answer. And you have to be able to transmit that answer instantaneously on an inquiry across the 100 systems that touch our mobile banking or our digital banking out to the customer. So it's a lot harder to do. Now, the interesting thing is we took that, Erica, and we put it in our institutional side business, so Cash Pro with Erica, and hundreds of thousands of interactions with institutional customers using it to answer questions about their accounts. Then you took it and put it in an internal environment so people could work with the IT department to get their laptops replaced or passwords changed. So we use that model plus other models, and we believe it has a big impact. Where exactly it goes, we'll figure out, but what we know, there'll be more of it. It'll be helping people be smarter, more efficient, help us take work out that we can get out and invest in work that helps our customers and our teammates be more successful. And we are after it every day, and we have 30 proofs of concept going. We have money we're spending and all that stuff. But a lot of this is really fairly controlled right now to make sure that we can actually deliver what we say when we put AI on it. We just can't let it run and have answers that customers won't have faith in, and that's why it'll be a little slower build out than I think people see, but it'll be a relentless build out.
From your experience so far and what you project out, when you look at the return on that investment in AI, how much of it is from growing the top line, that is increasing revenue, and how much of it is from cost savings because of use of AI?
I think when you look at it in the very near term, it's mostly about process engineering, so embedding AI into discrete processes to take out work, and that we've been doing for years, for several years. So we see it, and before that, we had machine learning and other digitization, and that was a capability that we built, but also the customer would use, and that's an operative term here. Is the customer has to use the techniques and things that we build. I think over time it'll be much more about enhancing the revenue side. And so if you look at our proofs of concept, our projects going in, they're not proofs of concept anymore, implemented. We have a relationship management preparation tools or pitch book preparation tools that allow us to do more faster turnaround, better preparation for meetings, better idea generation for meetings with clients, and we know that that will generate additional revenue. So there's equal parts revenue and expense in the last 24 months, 12 months. It even go back to Erica's start 3 or 4 or 5 years ago, whenever it started. It was more about removing tasks and costs. I think that's moving because people are getting more comfortable with its ability to answer questions and help them prepare for a meeting with a client and what they need to think about, whether it's a wealth management client or a commercial banking client.
Including Bank of America, but going beyond that in general to our economy, because AI appears to be being transformed, and goodness knows there's hundreds of billions of dollars being invested. Can we get the return on investment as an economy without cutting a lot of jobs?
I think the question will be, how fast the jobs will grow around and the new jobs will grow and the shift of jobs. So if you look in the last 50 years or so, we had a lot of technology come in, and we have twice as many people work in the U.S. than we did 55 years ago. So think about, David, in our lifetimes, what we've seen. We've seen, the desktop computer to laptop computer to the phone as a computer, et cetera. Think of all that technology coming in, and we employ twice as many people. So the question will be, will you have more people doing different types of jobs? And so my advice to myself and my advice to my teammates is simple: learn it, harness it, make it your agent to help you be more successful. And yes, does it change the human content of work in areas like finance and audit and legal that we hadn't done it before? Yes, but the people use it effectively will be able to do more and generate more revenue, and then potentially generate more jobs out there, because there's more people earning more money, spending more money, America's making more money. It should all be good, but it's going to be an interesting transition.
Brian, as CEO of Bank of America, an important part of your job, maybe the most important part, is managing risk, upside risk, downside risk. As you look at the risks out there, how do you manage, if at all, for the risk that, in fact, we're over-investing in AI as an economy?
Well, I think as an economy, the issue would be if it got overheated and it retracted, what would the impact flow for us as a company more into, consumers, job loss, things like that. And right now we see that as being relatively limited because it's a narrow group of companies, a narrow group of spending, and the companies are spending and have a lot of money. As a lender, we look at the leverage on these projects and make sure that we're comfortable with that and the duration of the contract by the person who's going to commit to use the data center, and therefore that's a revenue stream. You think about the tenant, for lack of a better term, the quality of that tenant, the length of that tenant. Those are key issues. So we look at all that, and then for the market valuations, our team thinks that you'll see, you could see a debate about the whether the AI stocks are overvalued or undervalued. Our team talks about that. But what people are forgetting is there's a lot of other companies are coming in and producing more and more earnings growth. At the end of the day, the earnings growth is what will drive the market. And so it may move around, but as Chris Heisey, our teammates, has said on on Bloomberg and other places, it's a proud bull. He thinks, the market ahead is very constructive, and our team has, mid-single-digit S&P growth predicted for next year.
So, Brian, one last question as we head into the holidays and into the new year. What's the biggest upside risk that you see in the new year?
Well, I think the risk is that the upside potential is for the series of policies that have come out, taxation, trade and tariff, immigration, and deregulation. I think the biggest one is still yet to come for businesses, the deregulation piece, and it's falling into place. And if that works the right way, then you'll see the U.S. Kick another level of potential growth. And when the U.S. kicks in growth, the world will have growth, because at the end of the day, our economy is the biggest economy, we're the biggest consuming economy. And so if our citizens are employed, working, and earning more money, that's good for the world.
Is there any downside at all because of the uncertainty about policy? Because it's moved around a bit.
There has been a lot this year, honestly. And if you talk to our small business customers, for example, in the most recent surveys, they're now getting an understanding of how the tariffs are going to affect them. It took a while for them to settle in, and they can see the 10, 15, 20% level, and they're adjusting supply chains. That's still work going on, and the ability to pass through those costs and things like that is coming through the system now. Their biggest worry, what they tell us, is to get employees, and that has a bit to do with settling in on the immigration policy and it sort of getting more precise in the minds of a small business owner or mid-sized company. Can I have the labor availability that I need? And so that issue, I think, is straightening out as the precision of the work on immigration policy continues through. And that was probably is more on the minds this year. As that settles in and the trade policies have settled in during the course of the summer, I think they're feeling better about understanding them, and they still have to make some adjustments, but they're feeling better about understanding them.
Brian, as many of us head into a break, I hope you and your colleagues have a wonderful holiday. Thank you so much for being with us. That is Brian Moynihan. He is Chair and CEO of Bank of America. Back to you.
All right, David Weston, many thanks for a great conversation, as always. Live and only on Bloomberg TV and radio. Of course, David is the host of Bloomberg Wall Street Week with Brian Moynihan. We covered a lot of ground there, and fascinating to listen on what has been an up day for the markets, and pretty good so far, with a hint of a Santa Claus rally. The S&P 500 right now is up about 0.5%. Same can be said for all three of the main indexes. The NASDAQ up about 0.5%. Same for the Dow Industrial Average, rising a little more than 220 points today. Even Bitcoin is higher. Not by a heck of a lot, but a little more than 1%, trading back above $89,000. I'm Joe Matthew in Washington. Thanks for spending part of your Monday with us here on Balance of Power on Bloomberg TV and radio. We'll have much more to talk about in the late edition of Balance of Power, starting at 5 p.m. Eastern Time, with our eyes on the White House. An important event that'll be taking place in the 4 o'clock hour after the close. The President of the United States, the Secretary of Defense, and the Secretary of the Navy will be holding forth. This is actually in Palm Beach. Of course, muscle memory points my attention to the White House, but the President is at the Winter White House today at Mar-a-Lago, and will be announcing plans with the Navy to build a new class of warship, the FFX, as part of the President's Golden Fleet, sending shares of HII higher today. Huntington Ingalls right now up about 5.5%. We'll have a lot more on that coming up, as I mentioned, on the late edition of Balance of Power. It's Bloomberg Business Week Daily. That starts at the top. We'll have another check on Wall Street for you starting at 2 p.m. Eastern Time. I'm Joe Matthew. This is Bloomberg.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Welcome to Bloomberg Radio, to our audiences worldwide. Romaine Bostic in today for Carol Masser, and I'm alongside Caroline Hyde.
Hi, great to be here. Carol Masser, Tim Stenivek, off having a nice time with Santa Claus, I think. And meanwhile, we are setting up this hour on this Monday, December the 22nd.
Yeah, and speaking of Santa Claus, a lot of people talk about that Santa Claus rally, which traditionally doesn't really start to the day before Christmas, but we're sitting on 3 straight days of gains right now, Caroline, and this is a bit of a turnaround from some of the sentiment we had coming out of November when we saw a big sell-off to a certain extent of some of the big tech names and maybe a little bit of an embrace of some of the non-tech names as we head towards the end of the
And
year.
instead, now it feels like we've got AI anxiety lifting a little bit as people head towards this, what is a shortened week. We've got some of the biggest names delivering the biggest upside in NASDAQ 100, for example. You got NVIDIA back on top, Broadcom, and all the previous winners. I don't know what the shifted in terms of sentiment, whether it was just they all got a bit too beaten up.
Yeah, I think they got a little bit too beaten up, and it gets down to valuation as well. Nobody's saying the AI trade is over. Nobody's saying that there's no money to be made there, but when you look at the run-up in valuations, it stands to reason, particularly at the end of the year when people have to adjust those portfolios to sort of keep under their caps, why you would see some selling in some of those big names like NVIDIA, and then people piling into others.
And then we've got a bit of M&A Monday. We've got a bit of merger back and forth, Daddy's in Town Monday. We've also got a little bit of what's shining in gold and silver. But what took our show off?
Did you say Daddy's in Town?
Daddy's in Town. Larry Ellison's in town. And he is backing that Paramount deal.
It would be so nice if I had a parent who would just spot me $40 billion.
Yeah, it's a shame mine isn't one of the wealthiest in the world.
Yeah, I mean, I love my family.
Would you like to buy Paramount, though? And then would you like to buy with Paramount Warner Brothers Discovery?
I can say with absolute certainty that if I had $40 billion burning a hole in my pocket, I would not be spending it on Paramount. But, you know, to each his own, as, of course, Larry Ellison, or I should say David Ellison, of course, tries to put his stamp on this new revamped company. And, you know, that was the big story for much of 2024 or 2025. It's probably going to still be the story in 2026.
Oh, yeah. And then I think what's been so interesting is some of the deals being done in not just energy, Alphabet buying Intersect, but also we've got an asset management acquisition of Nelson Peltz's Trine Fund, going with a VC, General Catalyst, to buy up Janus Henderson. We've got so much to talk about, folks. But first, I hear Charlie Pellet is standing by.
Hi, thank you very much, Caroline Hyde, Romaine Bostic. What a delight to have you both with us this afternoon. We've got the Dow, the S&P, NASDAQ all advancing right now, and indeed a Santa Claus rally perhaps underway this week. Holiday shortened trading week, but gains nonetheless right now. Green on the screen, right to the numbers with the S&P up 38. We're off session highs, still looking at a gain right now of just about 0.6%, 68.72 where we stand on the S&P. Dow Industrials up 230, up by about 0.5%. NASDAQ up 115, up by about 0.5%. Broad-based rally. Russell 2000 index of small cap shares pushing higher by 1.3%. Cannot ignore the Bloomberg Mag 7 index up now by about 0.7%. Your 10-year at 4.16% with a 2-year 3.51%. Gold, spot gold up $94 the ounce, $44.33, trading at a record up 2.2%. West Texas Intermediate crude oil up 2.5%. WTI 57.91 a barrel, and Bitcoin right now up by about 0.8%, 88,871. Paramount Skydance has sweetened its bid for Warner Brothers Discovery, including offering a personal financial guarantee by Oracle Chairman Larry Ellison as it seeks to beat out a rival bid from Netflix. Right now, we got Netflix shares down on an update for much of the market. Right now, Netflix is down 1.4%. Oracle shares, they are surging 3%. Paramount Skydance up 4.1%. Warner Brothers Discovery, the focus of all of this attention, WBD on the ticker, up now by just about 3.5%. So again, recapping, equities higher with the S&P up 0.6%. We do have the 10-year at 4.16% on the 10-year. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All Our thanks there to Charlie Pellet for that business flash as we check back in on the broader markets. A third straight day of gains, rounding out what could potentially be for the S&P 500, Caroline, an 8th straight month of gains. And it's been several years since we've seen that happen. You have to go back to 2017 into 2018, the last time we had that stretch of gains.
And this has been a record year. I mean, we're treading very close to an S&P 500 record. NASDAQ 100 less so. Big tech is not managing to eclipse some of its October real highs, but still clawing its way back. And it feels as though energy is back in to what has been a complete equity outperformance throughout this year. The question is, are the same big winners going to be winning next year?
Yeah, a big question here as we set up for 2026. Let's bring Jason Pride into this conversation, Director of Investment and Strategy and Research over at Glenmead. And Jason, talk a little bit about the setup into 2026, but maybe you can do it kind of with the backdrop of what we had or what we knew coming into 2025. Did things shake out the way you thought they would?
Ultimately, I don't think anything shook out the way people generally thought we were going to be seeing things. There is some concern as we head into 2025 about tariffs, but man, the door was completely blown off the hinges on that basis. In April timeframe, people got extremely pessimistic at that point in time. I saw a number of calls for recession in that early April period, only to then have everybody have to dial back those expectations back to something that was actually maybe a little bit more similar to what people had originally penciled in. And then you add on top of it the fact that this very large fiscal bill came together in a way that people didn't expect, and with a magnitude of front-loaded stimulus that'll hit in these first, say, 3 years of its true implementation, which really sets us up in 2026 economically for what we believe is going to feel like an acceleration in 2026. So 2025 has largely been held back by the implementation of majority of the tariffs that we'll ultimately see, with very little in the way of the stimulus coming from the fiscal bill yet in 2025. 2026 will almost feel like a double loading of that same stimulus, and basically a very large stimulus cannon and only a remnant of the tariff impact. And so the math of it switches from a net negative in 2025 to a net positive in 2026.
So Jason, as you run your scenario analysis, at least from an economic perspective, what is the biggest risk that you're at least keeping an eye on that could maybe upend that thesis?
That's a great question, Romain. And we have 3 risks that are on the page for us. Probably what we mark as the most probable is that with all this stimulus, we actually get a little bit higher inflation than what we intended to want to have, and therefore the Fed will have to actually pull back on the magnitude of cuts that they have in place. Now, the biggest magnitude risk that we see on the table that we think is actually still a lower likelihood, but if it hits, it's a big risk, is this magnitude or large, really large bet on AI that both investors and the companies they're investing in are making side by side to the tune where we're starting to talk about numbers in terms of investments now, that it's becoming less and less likely that every single company and every single investor that's making investments in this direction can win at the same time.
Right. So are you expecting the chickens to come home to roost as soon as 2026 in that respect? Or do you think that the AI exuberance can carry on for a little bit longer?
So first and foremost, we think that fiscal stimulus is good because it allows the market to broaden out, right? So that's good for investors on the whole, as long as you're not just invested in the AI bunch. In terms of whether the AI risk will come home to roost, our suspicion, we still think it's a risk. We still think investors need a position around it, generally speaking. But we suspect that the actual outcome of that in terms of when it's truly a risk is more likely to be 2027. I wouldn't bet everything on that, but more likely to be 2027 because the companies are actually doing the investment in this technology cycle are 5 times as more productive with their free cash flow generation and therefore able to weather bumps that come along a lot better than those baby bells were in the internet build-out.
Well, many feel that 2026 will be a year where we get an IPO or two to actually challenge or a bit of a referendum on the AI exuberance. Maybe we get a SpaceX, maybe we get an OpenAI. Is that something you're bracing yourself for, and would you want to be exposed?
we would love to see the mergers and acquisitions, opportunity set just kind of open back up. Like if that happens, that's good for the rest of the marketplace, not just technology, not just these hot companies. Just generally speaking, that is good for the marketplace. Remember, this is an environment over the last, say, year and a half to 3 years, somewhere in that ballpark. We've seen a market that has seen kind of more limited exits from private equity. So you've had this kind of growing kind of questioning of private equity that has occurred. At that same time, that truthfully, the smaller cap and mid cap portions of the marketplace have been kind of left out of having some of those newer companies to own as part of that market cap, that marketplace as well. So we would really encourage and be happy to see a growing or more exuberant M&A environment that actually allows both private equity to breathe and small cap and mid cap to actually have some newer companies come into their mix.
Jason, always a pleasure. Jason Pride over at Glenmead here as we continue our coverage on Bloomberg Television, a look at 2025 and a push ahead to 2026. And of course, the economy and the Fed will be a big part of that. We had a chance a little bit earlier in the day to catch up with Fed Governor Stephen Myron, who talked about his outlook potentially for monetary policy.
If we don't adjust policy down, then I think that we do run risks of rising recession. The unemployment rate has poked up, potentially above where people thought it was going to go. And so we've had data that should push people into a dovish direction.
Stephen Myron speaking a little bit earlier on Bloomberg Television. Let's bring Elizabeth Renter into the conversation, senior economist over at NerdWallet. And Elizabeth, you have a good sort of finger on the pulse when it comes to not just what's going on in the economy with regards to inflation, the labor market, et cetera, but how people are actually feeling about it. And I'm wondering if you could maybe start there, particularly when it comes to the issue of affordability and inflation.
Yeah, well, thanks for having me on today. Consumers are not feeling great about the direction of the economy, and that's true whether you're looking at data from the University of Michigan, the Conference Board, some of our sentiment data here at NerdWallet. We found just this month that 61% of Americans believe the U.S. economy will enter a recession within the next 12 months, and this discomfort is really understandable. Wage growth is low, the labor market is cool, and many Americans are feeling an affordability crunch.
When we talk, Elizabeth, about this idea of the state of the economy, if you look at the economic data, it suggests a labor market that is certainly weaker than what it used to be, but still relatively strong, at least by historical standards. Are you getting the same read?
Yeah, absolutely. And, when we're talking about, why do people feel so bad if the economy seems to be doing okay? This is a story that we've been discussing for the past 5 years now. And when we first started talking about Vibecession a couple years ago, we were asking the same questions, but the conditions were a little bit different. And I think the primary difference now is households aren't as resilient as they were 2-3 years ago. So debt levels have risen and sometimes exceeded where they were before the pandemic. Housing is expensive. It's holding many people out from being able to purchase a home. And, if you would typically want to switch jobs, find a better paying job, you're kind of out of luck right now there too. So while people are still feeling bad when the economy is doing okay, I think there are some real reasons for that now that should be concerning.
Prices on the rise, particularly if you think about energy or electricity. I think of a deal today where Alphabet, parent company Google, is snapping up Intersect Power, which is all about power for data centers. This is about a climate-friendlier version. But how much are we likely to see the economic headwinds still come thick and fast when it comes to just everyday utilities, when it comes to energy, when it comes to groceries, when it comes to the like? Is there going to be any easing by what, indeed, at least the Federal Reserve is going to do? Because that doesn't feel like in any way they're going to be tackling inflation in that way.
Yeah, so it depends. If we're talking about monetary policy and what the Fed sees as easing as reduced inflation, inflation is likely to continue to moderate, albeit slowly, but that's going to feel very different to consumers, right? If you ask a general consumer who isn't in tune with sort of monetary policy and how it all works, they'd probably prefer low interest rates and cheaper prices. While we know there's a trade-off there, having those two together is extremely unlikely, if not impossible. So inflation slowing isn't necessarily going to make people feel much better, particularly when wage growth is slow.
What we'll do is having a job and a well-paid job. At this point, will 2026 beckon new jobs, new productivity, or actually is AI going to take it away?
Well, that's a good question. I think, AI is going to change the labor market, but I do think it's going to take some time. We've seen this with technological advances in history. Probably the most recent one was the internet, and before that computers, and before that electricity and steam power. So AI does have the potential to really reshape the economy as we know it, but I do think it's going to take some time to be adopted and to really displace workers.
Liz, I want to get your thoughts here on just how to invest in 2026, particularly through the lens of the types of clients that you deal with at NerdWallet. You look at the run-up in prices that we saw this year, largely because of AI and tech, and there is a lot of people who maybe did not necessarily get to ride that train. When you start to talk about portfolio allocations in 2026, do you sort of overweight that tech sector, specifically that AI sector, or do you look for something a little bit broader?
Well, that's a really good question. The way I think about it, speaking to the general NerdWallet reader and NerdWallet consumer, is to think long-term, right? We know that less than half of Americans have $2,000 socked away in a rainy day fund. And so primarily, before you start thinking about where should I put my investment allocations, you should be stocking up bare bones emergency fund, right? And then be thinking about retirement and long-term plans. As far as picking stocks, the general public, maybe not advanced enough to start weighing those factors, but I do think really building household financial resilience needs to start at a more basic ground level.
Are you seeing that resilience, though? I mean, I understand there's a sort of an upper echelon of our country, of our economy, that have always been invested in risk assets, but there does seem to be a little bit of a waning interest, at least from what I could tell in the data, once you get down into the middle classes and below.
Yeah, so we recently fielded a survey about plans people are making for 2026, and a fairly good share of people are planning on investing in AI, planning on starting businesses, planning on things that we deemed sort of more high risk. But I do think, at the end of the year, we're all generally year's going to bring. It's why many of us set New Year's resolutions we can't achieve. But I do think, by and large, the waning consumer sentiment is going to lead people to be a little more conservative in the coming year.
I like the way you take us back to the vibe session. That is about vibes rather than data. But for 2026 in January, what is the data that you care most about to be able to signal how we're all going to be feeling?
Yeah, a primary metric I'm going to be looking at in January and February, the first few months of the year, is layoffs. So when it comes to the labor market, we know the cooling is due to both labor supply and labor demand issues, and the magnitude of those two things is a little unclear with the fuzzy data that we've been getting. So I'll be looking at layoffs in the JOLTS report to see, are these big layoff announcements that we've been seeing so much about actually translating into layoffs? That would indicate to me that it's more of a demand issue and maybe more cause for concern.
Is there any demographic this is going to be impacting the most, do you think? Is there any areas of layoffs or particular industry groups that you particularly focus on?
Well, we know the latest jobs data showed that, marginalized communities are seeing an uptick in unemployment rate. And generally, when the unemployment rate starts to rise rapidly, we do see it in the youngest Americans and underrepresented minorities. That's happening right now.
We want to thank you. It's been fascinating talking to you. Thank you for pushing us forward into 2026 and dwelling on some of the trends that you've been seeing. That was Elizabeth Renter, of course. She's coming to us from NerdWallet, and really interesting how she's trying to take the bigger picture, drill it down into a macro impact, but investment impact for those that do read NerdWallet. But it is about how people feel.
It is about how people feel, and we kind of talk about the vibes out there, and it's easy to look at the market gains and think the vibes are great, but a lot of people unfortunately missed out on that ride. Whether they catch up in 2026 remains to be seen.
We're actually going to talk vibes of traveling next.
Yeah.
And maybe if you have
Where
bet
are
on
you
the
going
stock
next
market,
year?
maybe you can afford to go traveling. I don't know. Blue Oak's got a great list, though, we can dig into.
This is a big studio.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all advancing. We're off session highs, still looking at a 38-point advance on the S&P, now at 68.72. That is a gain of just about 0.6%. Dow up 212, now higher by 0.4%, while the NASDAQ Composite Index is up 119, up by about 0.5%. NASDAQ 100 Index up 0.4%. Broad-based rally with the Russell 2000 Index of small-cap shares advancing now by just about 1.2%. Our Mag 7 Index, by the way, up 0.6%. Your 10-year, 4.17%. Gold surging $92 the ounce, up 2.1%. Trading at a record $44.31. West Texas Intermediate crude also rising, up now by 2.5%. WTI $57.94 a barrel. And Bitcoin up 0.7%. 88,800 on Bitcoin. Alphabet has agreed to buy clean energy developer Intersect Power for $4.75 billion in cash, plus its existing debt, marking one of the largest deals by the tech giant in its push to dramatically expand its data center footprint to power AI. Alphabet shares up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Oh, Charlie, thank you so much. Look, we are at this moment where I'm going to ask you if you're going away this holiday season.
We are going local away. Nice. We're going to go skiing on the East Coast, which is always dicey in late December, but we're going to make the best of it. But at some point, it'd be nice to get away. They don't actually let me take vacation here, Carol.
No, we've got you locked.
I know.
Right?
Yeah, I'm surprised they even let me take Christmas.
I lobby for you every day. I put in several words. You're a hardworking man, Romain. But when you are maybe allowed to exit a desk or two, maybe we could go further afield than just up East Coast. There's plenty of places to be going. Maybe you could take a flight rather than a drive. And maybe because flights are actually getting cheaper. That's what our next guest is saying. I was kind of surprised by that. Steve Hafner's in the house. He's co-founder and chief executive officer of Kayak. Of course, this is all about booking, about travel platform, really telling us the direction of travel and what consumers want right now and what prices they're going to have to pay. Steve, I'm really interested that you're seeing that demand is surging, but actually prices pulling back a little bit, particularly on flights.
Yeah, it's an interesting story. And by the way, this is the third year Kayak has partnered with Bloomberg on teasing out travel trends for the next year. So thanks for that. Yeah, it's an interesting picture. Travel demand in terms of flights is up 9% on Kayak, but fares are down. So domestic fares, and you may have seen this, Romain, when you were booking your trip to go skiing, are down 3% year over year. Flights to international destinations are down 10%. So it's a good time to get away.
Romain's not going internationally, though. So where should people be going? Where are people dialing up? Where are people leaning in and looking for opportunities? I'm hearing so much about Eastern Europe at the moment in particular. I mean, a load of my sister-in-laws just hid over there at the moment. They, of course, are European-based, but they had a great time.
Yeah, it's funny. The trends are very solid to go to Eastern Europe versus the classics that are out there. And we think what's driving that is a few factors. People want to go to the new gems versus the classics. Not only is it more convenient to get there than ever before and less crowded, but you're also getting a lot more value for your money, particularly on luxury hotels. So $500 goes a lot further in Sofia or Prague than it does in Paris, France, obviously. And then we also see two other trends that are pretty interesting. One is sports and concerts are driving people to go places that they perhaps didn't contemplate before. And then ecotourism. So despite the lull in sustainable travel that some folks have speculated about, people still want to go see landscapes and animals that might not be around in 10 to 15 years from now.
Okay, that's a little dark.
That's depressing.
Steve, though, you got to help me out, though. As I'm kind of the planner in our family when it comes, not kind of, I am the planner in our family when it comes to vacation. Anyone knows who's tried to plan a vacation, particularly for a big family, it's a pain in the butt. I mean, it takes forever. It's trying to get everybody on the same page, coordinate all the flights, everything else here. Talk a little bit about specifically what Kayak does, if at all, to kind of try to make that process a little easier. I mean, this is, I'm told by Caroline Hyde, who's host of BTech, this has been the year of AI. Is that actually going to help me? Like the next time I plan a big trip, am I going to have to spend a lot less time?
Absolutely, it's gonna help you. And we're at Kayak, we've got AI sprinkled throughout everything we do. But in a nutshell, I've given the same advice to people for 15 to 20 years. If you're trying to save money on flights and you're trying to get a lot of people to agree on a destination, do 3 things. The first one is be flexible on your dates, because that way you've got more opportunities to find deals. The second is consider multiple airports. So not just LaGuardia in New York, but also JFK, White Plains, Newark, heck, even Hartford. And then the third thing to do is set price alerts so that you don't always have to go back to Kayak or any other site anytime you're looking for a flight. Just tell us what you're looking for in broad terms, these kind of destinations, this date range, this price point, and we'll do that automatically for you and send you price alerts, which is it's a great service. But AI will definitely help all of that too.
Yeah, I am curious. And by the way, just as a side note, White Plains probably the best kept secret in the tri-state area.
Don't tell anyone.
I'm a little upset you actually put that out there. But in all seriousness, though, it gets to the idea too that as we start to see the evolution of this technology, I am curious as to whether you think that's going to drive more business, or is it just going to basically be the same customers spending the same amount of money, but just with a little bit more ease in booking?
Well, I think it'll actually create and reduce, it will create more opportunities to reduce friction in the booking path and make it more convenient to travel. And usually when you do that, you stimulate demand and you actually stimulate more usage of the product, right? By taking friction out. So I think AI will make it easier to contemplate strange trips or complex trips, multiple destinations, long time frames, lots of different passenger types. It will help in terms of making the booking so that conversion rates improve. And then where I think AI will really help is in flight disruptions, travel disruptions, changes in your plans. Instead of having 5 different people to call, you can actually do a lot of this in an automated fashion with agentic AI. And that's where I think a lot of us in the industry, Kayak in particular, are focused on.
What's interesting is you hear about sort of the anti-AI bet. The idea that we're all either going to be so productive we'll only be working 4 days a week, or we'll all be so bored of just chatting to our chatbot that we actually want real experiences with real people. And to that point, the idea that we're going out and going to sports events, that we're going to music events, and we're spending around that does take a little bit of extra money. Do you have a sense from the macroeconomy that this is all playing to the hymn sheet that you see in terms of demand surging in 2026, or is it a certain select few who are able to be spending right now?
Well, look, I'll be the first to admit, as well as everyone else in the industry, that travel is discretionary good. It's not like groceries. You don't need to have travel, but it's also something that people just dream about. If you're involved in your day-to-day drudgery, it's really nice to know, even in 6 months, that you've got someplace special to go to. So I think the consumption for travel products and services will still be there, but what is changing is people's spending power has declined. So instead of going to Europe, perhaps for some folks, where the average fare is about $1,000, you'll stay local in the U.S., where the average fare is around $350 to $400. So I think people are shifting where they're going and how much they're spending to get more dollars or more value for the dollars they spend.
Hey, Steve, always appreciate it. And before we let you go, you got to let us know, what is your bucket list destination, that one place you haven't been to?
Yeah, so I've never been to Croatia. It's one of our trending destinations, so I'm going to eat the Kayak dog food, and I'm going to Croatia in June of 2026.
All right, Steve, always a pleasure. Steve Hafner there, co-founder and chief executive officer over at Kayak. We want to keep this conversation going here. We've got, like 3,000 journalists and analysts at this company. There's probably only a couple dozen that I actually subscribe to. Anything they write, I get an alert, and Kate Crater is one of those people. She's our food editor here at Bloomberg, and had a great piece that she's contributed to with regards to where we're going to travel potentially next year, where we're going to eat as well. Kate, I want to start off with travel first, because you guys had a great piece, you and your team, about some of the big destinations for 2026. Argentina, Indonesia were a couple places on there. Sardinia, which I think caught Caroline Hyatt's attention. What jumped out at you most?
Well, I think it's such a good list all the way around, and it makes me think I need to go all around the world and figure out how to work remotely for the next
be a digital nomad, Kate.
Let's do it, Carolyn. Let's do it. The place I went to that I'm especially excited about is Taipei. That is, you've probably heard a lot about it, and where you guys sit in the front row, of course. NVIDIA and all the semiconductor news is coming out of there. So it comes up in a lot of conversations, but it's also a food world favorite because bubble tea, which I know you guys are drinking, was invented there. And then Din Tai Fung, who are the most famous soup dumpling makers and the most profitable ones, it's also where they got started. Now there's a Din Tai Fung just pretty much all around the world. But I've been hearing so much about it, I said, why depend on exports? So I got to go there, and they have these fantastic night markets. And Jensen Wang from NVIDIA, I was hoping I would see him there, but...
Drinking beer with his mates, sending chicken through the roof.
Wouldn't that be amazing if I'd seen him? But he wasn't there when I was there. But just the whole food scene is fantastic, and they have these like billions of dollars in tech money, but it also feels old school. It's got this great sultry vibe. The food's fantastic. So I want you guys to put that on your list, please.
Oh,
Noted.
definitely. Go Asia and other ways in Asia. There's lots of really hot spots. Indonesia was another one that caught the eye on the particular list. Is there themes and like who are the types of people who are going to these particular spots in Asia? Is America a really big area of growth for them?
Yes, no, I think the thing that's interesting about this year, and you were just talking about it with the kayak CEO, is that I think everyone in some ways wants to stay local. Everyone's had a big travel nightmare this year. It's been a tough year to travel. But you do want to put at least one place on your bucket list and then just go as far away as possible. And Indonesia is one of those places. But it's also, if you want to hang out in America, there's a bunch of hotspots here. One of them is Texas. Texas has been making a lot of news. The FIFA World Cup is going to be there. There's the new Wall Street, I guess it's called Y'all Street, is coming. So there's that. And then the Ozarks too, which I've never been to, but I think like with those mountains, it sounds so beautiful. Alice Walton just has a terrific art museum that's about to open in Bentonville, Arkansas. San Francisco's coming back. I think that it really had a tough time during the pandemic. And now they too are going to be home to the World Cup. There's a fantastic park that's opening on the waterfront. So it's just really almost anywhere you want to look
Charleston
in the US.
as well. I love the idea of Charleston. I actually went there for my 40th, not to age me too much. But
oh, you did?
Nickel Hotel, I think, was one of the places. But what an incredible place in the South.
No, it's cool. And then I think another great thing about this year that I feel excited about is how much ecological or environmental, it's early days, but success stories, Gabon, where you can see some gorillas that's actually benefited from Jeff Bezos, who has his $30 million Earth Fund. And that's actually making a difference. In India, there's tiger reserves, and that's a species that's seemed like it was practically extinct, and now it's coming back. There's thousands more. I love that idea.
Yeah, Kate. Yeah, great stuff on here. Don't forget about the butterfly sanctuaries. Our thanks to you, Kate, and your cat there in the background. Kate Crater has one of the best jobs here at Bloomberg of all time here, so leading our food and travel coverage.
It's a tough life for some.
It's a tough life. I hope she gets to go to all these places, not just write about them.
Sounds like she's had a healthy.
7:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. We are close to session highs right now. 1 hour, 20 minutes to go ahead of the closing bell. S&P right now is up 42, 68.77. Gain there of 0.6%. Dow Industrials up 246, now up 0.5. NASDAQ Composite Index up 0.6, while the NASDAQ 100 Index up 0.5. And the Russell 2000 Index of small cap shares climbing now by 1.3%. 10-year at 4.16% with the 2-year 3.50%. Gold up $93 the ounce. Spot gold up 2.1%, 44.32, while West Texas Intermediate crude oil is up 2.6%, just below $58 a barrel. Bitcoin up 0.2 at 88,349. Uber Technologies and Lyft are each teaming up with Baidu to test out driverless taxis in the UK as ride-sharing companies race to deploy autonomous services around the world. Uber says a pilot program using Baidu's Apollo Go RT6 robotaxis in London will start in the first half of 2026. Commercial services expected in the city before the end of next year. Uber up now by 2.3%. Crosstown rival Lyft, yes, based in San Francisco as well, Lyft up now by 2.8%. Again, recapping the Dow, the S&P, NASDAQ all higher, S&P up 0.6. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. Let's talk more about some of the tech stocks that are on the move. We're hearing from Charlie, the NASDAQ is higher. Some of the points contributors, Warner Brothers Discovery.
Yeah.
Unsurprisingly, is Paramount Skydance. Comes in with, it's not a sweetened bid.
Yeah.
It's an amended bid.
I have no idea what this bid is. So, I mean, Netflix has roughly an $80 billion bid on the table, more or less, for Warner Brothers Discovery.
Not all of it, though.
Paramount Skydance has another bid on the table that's over $100 billion, and that includes the cable assets.
Exactly.
Is Comcast in there somewhere?
No, they took a sideline.
Comcast is out of
Brian
this.
stood down. He said,
Okay.
I'll get lunch with you, David, sometime.
Okay, so basically right now, Netflix, Paramount, going after Warner Brothers Discovery.
Yeah.
What's the outcome going to be, and who's going to decide it, Caroline?
Regulators might decide it.
Regulators.
David Zaslav's going to decide
And by
it.
regulators, you mean Donald Trump?
We can ask our next
okay.
guest, as that's who I mean, because let's turn our
I
attention.
mean, it is the elephant in the room.
It is the key elephant in the room. Let's invite him in.
I just
Chris
noticed this big
Palmieri,
microphone behind
Bloomberg News Senior Editor for Entertainment. Like, Chris, we can put the Trump administration and the relationship with the Ellisons to one side for a minute. Remain's going to go there. But first, remind us how this deal's been amended, because it does all come back to Larry Ellison, as basically every single story in media and tech right now seems to.
Yes, it does. Yeah, I mean, there was a lot of questions. How really committed is Larry Ellison to this deal? How much is he standing behind his son? And this response today is $40 billion worth. You know, this takes a big step towards addressing the concerns that Warner Brothers board outlined last week in its filing. So in addition to a personal commitment from Larry Ellison for all the equity in the deal, they've agreed to give Warner Brothers flexibility in the interim so it can make licensing deals over $10 million, for example, and change its executive pay. These are all things that Paramount wasn't conceding to. They also bumped up the breakup fee if the regulators don't approve their deal to $5.8 billion, which would be paid to Warner Brothers by Paramount. That's matching Netflix. So they're a big step toward meeting some of Warner Brothers' demands.
I am curious, though, Chris, about just the structure, potentially, of the deal and the idea that Netflix's deal actually involves lenders, banks, I should say. On the other hand, you have the Paramount deal, potential deal, that at least on the surface seems to be now a personal project that would be pretty much funded to a large extent by Larry Ellison himself. Have we gotten any sort of sense here as to whether shareholders in Warner Brothers Discovery, would prefer one structure over the other, not just the aggregate amount being offered?
Yeah, and I just want to clarify that this is a personal guarantee on the $40 billion by Larry Ellison, not meaning that he ultimately will actually contribute $40 billion in equity. There are other partners that have been identified, Middle East sovereign wealth funds, Redbird Capital, et cetera. So ultimately their plan is not to have Larry write a check for $40 billion. But that said, You know, there are differences in the balance sheet for sure, and that's one of the reasons why Netflix refinanced its debt today, to kind of underscore that it has an investment-grade balance sheet and would continue to do so.
Sorry, let me just rephrase the question a little bit, because my understanding is that right now, with the way that the Netflix deal stands in terms of the financing itself, those lenders wouldn't necessarily be taking an actual stake per se in the company directly, so no dilution potentially for shareholders. What we know about the Larry Ellison $40 billion commitment, would that involve other outside folks taking an actual equity stake in whatever the new entity ends up being?
Yeah, so minor dilution on Netflix part, because they are offering some of the purchase price in stock, Netflix stock, so there is a little dilution there. Huge dilution for Paramount shareholders, because that $40 billion in equity is being put in, and so that means more stock of Paramount Warner Brothers that will be owned by the Ellisons and their partners. So yes, the Paramount shareholder is seeing dilution.
The Paramount shareholders looking on, Warner Brothers Discovery have what, until January the 21st, if they are indeed going to accept this go direct share offering coming from the Ellisons. But we know from last week that Warner Brothers Discovery still stand by recommending Netflix. Do you think basically David Ellison and gang need to increase the price as well as sweeten the deal in terms of who's actually good for the money and indeed what the unraveling price might be?
Yeah, a lot of people have said that. Mario Gabelli, Harris Associates, the 5th largest shareholder, Kevin Mayer, who you interviewed last week, Caroline, not an interested party, but well-known Hollywood deal maker. So yeah, that certainly seems to be the case, particularly because if Warner Brothers abandoned Netflix now, they would have to pay Netflix $2.8 billion, and Paramount hasn't offered more money that would compensate Warner Brothers shareholders for that loss. So yeah, all signs point to Paramount ultimately having to raise their bid.
And I suppose there's then what we were getting at before. The regulatory environment is an interesting one. It's going to be tough no matter which combination, because this has a real impact on Hollywood going forward. The jobs in it, the way in which content's produced, who they're going to sell to. But it also has an impact and has been explicitly or implicitly put forward by the Ellison team that they have a close relationship with the White House. Will that matter? Does that matter?
The Ellisons have certainly positioned their relationship with the Trump administration as a point in their favor. They've said that they're more likely to close, that Netflix has just so much more power in streaming. Mixed messages from Trump himself. He said he's going to consider both. This is how arbitrageurs make a living, trying to figure out the tea leaves here. Right now, I would think it's maybe people would agree that Paramount might have an easier route, but that's not certain.
It gets also to the idea, though, Chris, too. I mean, there was obviously a little bit of controversy over the weekend with regards to a 60-minute segment that appeared to have been canceled at the behest of their editor-in-chief, who at least is presumed to have some sort of ties to some of the folks in the White House. And it gets to this idea as to whether this is truly going to be a regulatory decision or much more of a political one with regards to who gets the rights to end up buying Warner Brothers Discovery.
Well, certainly when you see all of these steps that Paramount and the Ellisons have made, some of them before their time, but Stephen Colbert's show being canceled, the settlement with Trump, all of the changes they're making at CBS News with Barry Weiss coming in, and an ombudsman being appointed to oversee fairness. It certainly is a continuation of actions to try to appease people in Washington. Whether that continues to be the case, I mean, Trump has complained as recently as last week about his coverage there. So always a wild card.
It feels as though 2026 is going to be pretty big on this particular Hollywood story, and maybe it's a Hollywood story in the making as well from a movie potential. Chris Palmieri is going to have a busy run up to the end of the year. Thanks so much for walking us through what is
I think Will
drama.
Arnett should play David Ellison.
You think?
Yeah, I think
you're putting in that call already.
I'm putting in that call. Yeah.